lot more in AI as a country. But the infrastructure build out of that is something that investors like ours will play. I'll answer a question on FIIs.
Yeah.
Look, FIIs are trading in stocks. So they will obviously, because the barriers to FII movement are very limited, as they should be. Our form of capital is FDI, strategic capital.
Yeah.
We're not just investing. We are investing, we are developing, we are building, we are managing. And we are creating large businesses. And that is permanent capital. That will always create a multiplier effect on economy in the country. And once invested, this capital stays for several years.
I mean, it's actually in the ground.
It's actually really in the ground. So the returns of that, form of capital will change. Private capital will make its way into REITs and InvITs and so on and so forth. But the actual capital is in the ground. It's creating jobs to create the infrastructure, the real estate. Then it's creating jobs when people use that real estate. So it's a real multiplier effect. We saw that in China. Over 2 decades of large-scale development of the critical cities, real estate, malls, offices. That is what today has become the envy of the world in many ways, that it has one of the best infrastructure to push the economy in many different directions. And that's a global powerhouse that India is on its way to become.
And people are looking at factors like the currency depreciation, the swiftness of the currency depreciation, and so on and so forth. And all of those are being factored in as people make those investment choices and investment decisions. How are some of those issues weighing on your mind today?
Look, as I said, we are investing for a long time. Nobody would factor in that currency in India will not depreciate.
4 to 5% was the depreciation that was factored in typically.
And I would say that over the last 3 months, we've seen a real oil shock. As we talked about earlier, it will come to a head. It will hopefully, demand supply will determine the oil prices, then an economic blockade. At that time, the currency will go back to its normal 3 to 5% annualized depreciation, and that's just technical. That's just the differential in the interest rates between India and the currency that is benchmarked, which is the US dollar in this case, and that's fine. In fact, we should use this opportunity right now to really push the pedal on our exports and use the opportunity that the world is providing to us by way of a little bit of advantage on the currency side to push the agenda. We should never let a crisis go to waste. And this is our time for India to really push its exports agenda beyond the services as well.
And you're right in pointing out that the depreciation has actually helped Indian exports become far more competitive. But, let's address the big bet that you're making in India, and that is the GCC bet, right? 2,100 GCCs in India today at last count. I don't know if they've added a few since I last looked at the numbers. You firmly believe that there is a structural move towards the offshoring model changing to an onshoring here in India, and that's the conviction clearly that's playing out for you, which explains the largest GCC that you've decided to do here in India in Powai. But again, there are question marks in light of AI or what happens to workforces in general, but specifically also what happens to these GCCs. Are you seeing any indications of a slowdown of growth plateauing as far as GCCs are concerned?
You have to differentiate between growth rate and growth, absolute growth. So absolute growth is on a very firm footing. We are seeing more demand from global companies to set up. I wouldn't distinguish between onshoring or offshoring. I would say global capability centers are about global delivery.
Right.
With AI, that model actually gets much more pruned, simply because you can deliver a lot seamlessly with better technology, which is explaining why companies are today more comfortable than setting up their own centers than relying on third-party operators. So that's a shift in the business model. The demand for quality workforce that's available from India has not slowed down. In fact, it's actually magnified. We haven't yet seen the large AI companies, the big 7s or the big 10 from the US, actually creating jobs for their AI businesses directly. Early green shoots. We still are heavily reliant on financial sector, large insurance companies, etc., medical companies, health companies, etc. But imagine the amount of job creation that the AI business directly will have with the trained workforce that we have in the country. While AI is an amazing term because everybody uses it right now, technological advancement has happened for the last 3 decades. It goes through ebbs and flows, but if you think about what Internet 1.0 did.
Yeah.
The social, internet that almost revolutionized the way people consumed media. And this is another advancement in technology. It needs a massive build out because the compute capacity that was required has suddenly become many times over. But even that will come online over a period of time. It's a $7-10 economy in the opportunity in the world.
Yeah.
A large part of that will happen not just in the US, it will happen in other countries as well. So that will all create need for capital in the infrastructure real estate space. Using that is not just going to impact the country that the technology is based out of.
Yeah.
It's going to impact the whole world. And India has always proven its mettle.
Do you need more workforce at work, or the work from home conversation is back? It's back after the pandemic because the Prime Minister has put out a nationwide appeal asking companies to consider work from home. It is not mandatory just yet, but we've seen many state governments now issuing their own advisories as well. If this were to translate into, at least for a period of a year, because that's the broad number that he's speaking of mandating work from home, or at least nudging, encouraging people to work from home, what could that potentially in the short term mean?
Yeah, so again, we have to differentiate what happened 6 years ago with the pandemic to what the appeal was made. This was in response to what's happened in the geopolitical arena with
fuel prices and
shortage and the impact of all of that. And as I said, it will come to a head soon. We all went through a period of time where there was work from home. That was needed because of the pandemic. You needed to create social distancing, but almost all corporations today realize the benefits of working in an office setting. New models are being created. Businesses have been incubated. People have to work together. The way people worked in the past might have changed a little bit. In fact, I would say most organizations today need more square footage per person than they needed pre-pandemic. You have more dependence on social interactions in office today than they did pre-pandemic. So by and large, work from home, even if it was to be mandated in certain cases or encouraged, is a response to a very different aspect, which is about fuel, and that's specific to India again, because of the way our energy markets are today, and that will resolve itself.
So you're not seeing any nervousness at this point in time on account of that?
Absolutely not.
And as far as the hospitality business is concerned, assuming that your conviction pays off?
We are now in the Leela business itself, more than 20 hotels, more than 10 in the pipeline. So we're going to probably be more than 30 hotels, and across the board, I would say we will do a lot more should the opportunities be available to us.
M&A there as well?
We are a large investor and developer, so M&A is always the way for us to grow, by step functions.
Let's talk about the REIT market as well, and of course that's been something that you've been championing. And 2025 was actually quite an inflection point as far as the REIT market in itself was concerned. What's the story, and how is that playing out, not just for you but as an industry as well?
Look. Our REIT is now more than 35 million square feet, a large enterprise. The regulations in REITs are very, very good in India. And we've always said it that they've taken the best from the world and implemented them in India. The fundamentals are very good. SEBI introduced the classification of REITs into equity, which was always the right thing to do. That led to an expansion of investor universe. We've raised more than $1 billion in our REIT in the last 12 months or so. And I think that program will continue. We'll probably raise capital because capital is the raw material for REITs.
How much are you looking to raise, and when?
We just raised about $300 million this month, early part of this month, or late last month. And as I said, the opportunity for the REITs for our REIT is immense. So the raw material is capital, and we look to either raise capital or issue units to expand. But the program will continue for decades. US established REITs in the 70s and 80s, and it continued for 4 decades, and we are in the first decade of the REIT market. I'll just characterize the market size. The size of global commercial real estate space, the rent-producing real estate space, is $60 trillion. In the US is $30 trillion. which is 1:1 their GDP. In India, our GDP is $4 trillion, and our commercial real estate space is probably $400 billion. So we are a tenth of our fair share of GDP. Our GDP will double and double again over the next 10 years, which means we have to first make up 10x and then double and double again. And that's the market potential that we see. We've only seen office REITs and retail come through. We're going to see hotels, either IPOs or through REIT channels. You're going to see more office REITs. You're going to see apartments, industrial. You're going to see warehousing, business parks, so on. And it's a big market. We can open up the market to talk about mortgage REITs as well, to create more financing sources for the real economy. So it's early days, very bullish on the REIT business. We've seen early days that the government is thinking about creating sovereign programs for asset monetization or creation of holding companies which can become REITs in future. So I think the market just started off.
Specifically, since you brought up the government and the government's asset monetization plan, and I think, again, the pushback there has been that there's been a lot of talk but little action. We've seen some action, at least as far as the InvIT side is concerned, but, it could have been a lot faster, it could have been a lot more. Yeah. What's the ask there, and what's the hope there, more importantly?
The ask is that we are here to help.
Have they asked for help?
In terms of policy matters, in terms of how to do the right things, I think the engagement with industry is very good. I can say about Brookfield and most of the government agencies are supporting the growth of our business, and as a result, supporting the growth of the country. And in that ecosystem, when they have their own programs to launch, it just widens the scope. How we can be helpful, that they have to decide. But I don't look at the past, whether the monetization could have been faster or quicker. That's they're running a country. They have a lot more considerations to take. We are running a small corporation. So whenever they are ready, we are here to support.
With just a couple of hundreds of billions in asset under management, just a small corporation. But, we're also talking at a time where we've got Trump and President Xi in China, along with a whole host of top US CEOs. And since we're talking about comparisons and where India is and the potential for growth, let's talk.
Even as Washington and Tehran continue to engage in ceasefire negotiations, US President Donald Trump says Iran's enriched uranium will be turned over to the US to be destroyed or will be destroyed at an acceptable location. The shift in stance comes even as the US conducts self-defense strikes in Iran, targeting missile sites, mine-laying boats amidst the ceasefire talks. US stock futures climb on a likely US-Iran deal as the markets were shut on account of Memorial Day on Monday. Asian markets have started up on a mixed note, while the GIFT Nifty is indicating a subdued start for our own markets as well. Brent prices continue to hold below $100 a barrel mark but are trading higher today despite hopes of a peace deal. Precious metals build onto the gains supported by safe haven buying. Russia warns foreigners to leave the Ukrainian capital of Kyiv as it prepares systematic strikes targeting specific sites where UAVs are designed, manufactured, programmed and prepared for use. This comes after the hypersonic ballistic missile attack over the weekend. Good morning, you're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off. And it's a mixed picture that's coming up in Asia right now. The Taiwanese index down 0.5%. Most of the markets have now come back on stream after the holiday yesterday. The Taiwanese index, of course, down close to 0.5%. The Hang Seng's down 0.6%. The gains in Asia this morning are only coming from the Kospi in South Korea. Another day, another record high for the index. The Kospi is now above the mark of 8,000 and it's up almost 90% already in 2026, and the index is currently trading with gains of around 2.5%. That's the only index in the Asia Pacific that is currently trading with gains. The Nikkei in Japan, well, opened lower, reversed some of those losses but is still down around 0.3%. And the Shanghai Composite 2 is trading with losses of around 0.6% as well this morning. So it's a negative screen across the Asia Pacific, barring the Kospi. Pull up the GIFT Nifty as well. And after yesterday's very sharp up move, following which the index managed to close above key levels, well, the implied open is suggesting a subdued start for our own markets as well. So likely to see a day of consolidation. Of course, today is a big day. Happens to be the monthly expiry for the NSE contracts. Let's set you up for today's trading session. They tell you the cues that you need to watch out for today, the stocks that should be on your radar, and of course the setup on the F&O side of things as well. And as you just saw, the GIFT Nifty is indicating a subdued start. Now you look at the oil prices as well. There was a settlement holiday yesterday, so contracts could not be settled, but Brent is of course up over 2%. The WTI, well, it was down around 6.5 this morning, and now it is recovering some of those losses. It's still down close to 5%. The contracts will be expiring soon for the current month, so you need to keep that in mind. US-Iran negotiations, well, that continue to remain the key monitorable because there is a lot of back and forth, there is a lot of flip-flop that is happening, and it is a headline-driven market, so you need to keep that in mind as well. As we mentioned, it's the monthly expiry of the Nifty contract today, so that will bring around its own fair share of volatility. And of course, you need to keep monitoring the progress on the currency and the bond yields as well. The currency has appreciated significantly over the last couple of days, and the fall in bond yields yesterday had an impact directly on the PSU bank. So the PSU bank index was the top gainer on the market yesterday with gains of close to 3%. Now I look at the index, the Nifty closed above 24,000 yesterday. The bulls will be happy with that. Not just that, the fact that it closed at the day's high is also going to please them. Now the trend on the upside remains intact until 23,800 on the downside is protected. That is the main important level to watch on the downside now, 23,800. The next level of resistance on the upside, of course, 24,250 first up, then go to 24,350, and then the most important level on the upside is going to be the 21st April swing high, which was 24,601. Of course, we are a fair distance away from that, but that is the most important level on the upside that you need to monitor. For the Nifty Bank, well, that 53,000 to 55,000 range is, of course, in just 2 sessions as the index has added almost 2,000 points. But for on the downside, 54,750, 54,500 should be a support zone. That is what needs to be monitored. But for now, the GIFT Nifty is indicating a subdued start to the monthly expiry. We'll wait to see how the day unfolds. Well, Upasana is now here to tell you the stocks that should be on your radar today. Upasana, good morning.
Good morning. First up, let me start with Hitachi Energy. Overall, it's been a strong beat across the board with the strong performance given by the company. The revenue has seen an uptick of 46% on year-on-year basis. EBITDA margins have also expanded at 154 basis points at 15.11%, and order inflow also stands quite strong with a growth of nearly about 10% on year-on-year basis. Next up is RVNL. The PAT plunges 60% on year-on-year basis and 42% sequentially to 187 crores, while the revenue grows at 4% on year-on-year basis, and sequentially the company has reported a strong revenue growth of nearly about 43%. ABFRL is the next one on our radar. The Q4 sees the highest organic growth in the last 12 quarters, while sequentially it might be a weak quarter post the festive season, that is the Q3 and Q2 saw quite a sharp demand pent up. Now revenue has seen an uptick of 16% on year-on-year basis, and sequentially it is down 16%. Pine Labs, overall it's been a stable quarter for the company. The company has reported a net PAT of 59 crores versus the loss reported same time around in the last quarter. Revenue has seen an uptick of 17% on year-on-year basis, and margins stands increased from 9.5% to 15.2%. Next up is Amara Raja. Overall, it's been a good quarter for the company. Net profit up 95%. Revenue has seen an uptick of 15%, and margins stand at 10.9% versus 11.1%. Concor, overall it's been a stable performance, but the domestic market stands impacted. The net profit is down 12%, revenue up 1.1%, and margins stood at 18.9%. Overall, Premier Energy stand in focus on the back of the block deal. The promoter sells nearly 5% stake in the equity for 2,291 crore. And lastly, coming to BEL, remains in focus on the back of the order win. The company has received order worth 608 crore since 5th of May. So all in all, these are the stocks that remain on our radar.
Upasana, thank you for that update there. Over to Sudarshan now, who's here with updates from the F&O space. Sudarshan, good morning. We're finally above the mark of 24,000, but is the F&O data saying that we'll sustain above it?
Good morning, Harma. So it's Nifty monthly expiry day, and we'll have all the ingredients currently at place for Nifty to move higher. If the last week was about IT, this week banks are strongly placed. Yesterday, we have seen Nifty Bank crossing 20 DMA, 50 DMA, and now looking at the levels at around 57,000 after crossing 55,000 comfortably. And now, if you talk about the indicators also, Rupee continues to hold the levels below 96. Crude today overnight has gained but remains below the level of 100. FI flows continue to remain positive. They have bought in index futures, they have bought in stock futures, they have added long positions, they have reduced short positions, and now their longs exposure has increased to 14% from the previous level of 12 to 13%. Look at the options data. Now 24,050 to 24,100 is a minor supply zone. So if Nifty crosses the level of 24,100 comfortably, we can go to as high as 24,500. So on the put side, 24,000 and 23,900 were the most active ones, while on the call side, 24,050 and 24,200 have seen maximum addition in the open interest. So first support for Nifty, 23,876, that's your 20 DMA. Next support comes around 23,700, that's your 50 DMA. First resistance 24,200 and second resistance 24,600. That's your recent high. Stocks in the focus, two stocks remain in the band, SAIL and Keynes, and some of the stocks that have seen fresh longs or fresh shorts, Adani Power and ICICI Bank have been seeing fresh longs. On the fresh short side, Siemens ahead of earnings.
Sudarshan, thank you for that update there. And as Sudarshan was mentioning, oil prices are slightly higher this morning, at least on the Brent front. So let's get you all the updates from the commodity space. Manisha Gupta is joining in with just that. Manisha, good morning.
Morning, and thank you for that, Armas. Well, yes, it continues to be very, very volatile. After 6% of decline on Monday, Tuesday opened 2% on the higher side. We are holding a percentage point of a gain right now. This is after the markets are reacting to two different things. One, of course, is the rising optimism over a potential U.S.-Iran agreement. U.S. has said that the negotiations are progressing well, but fresh attacks could follow if talks collapsed. In the meanwhile, the U.S.-Iran also are discussing a framework that would extend ceasefire for 2 months. There are certain unresolved issues as well because the Iran nuclear program and authority over Strait of Hormuz are yet to see clear definitions therein. And then we are also reacting to the U.S. military carrying out strikes in southern Iran which they are calling as defensive actions. And that is what has led to prices moving higher again. So it continues to be choppy, but the important point on the charts is that we are still trading below $100 a barrel. In the meanwhile, we also have seen metal prices continue to gain up. So gold is trading a percentage point higher overnight. Silver gained 4% in the markets yesterday. Copper is trading at a one-week highs, and it is also about other agricultural commodities which have seen a decline because of crude coming off. So cotton, sugar, rubber, all these industrial commodities are off their recent highs.
Manisha, thank you for that update there from the commodity space. Oil price is slightly higher on the Brent crude today. Take a short break. On the other side, get you all the developments from the US-Iran war and the subsequent negotiations. Stay tuned. Welcome back. On to the latest in the US-Iran war. US forces launched self-defense strikes in southern Iran, even as efforts to reach a peace deal continue. The strikes targeted missile launch sites and Iranian boats seeking to lay mines. And President Donald Trump, in his latest Truth Social post, appears to be changing his stance on the Iran deal. Trump said that Iran's enriched uranium will be turned over to the US or to be destroyed, or will be destroyed at an acceptable location. He said that this decision will be taken in conjunction and collaboration with Iran, with the Atomic Energy Commission or its equivalent being witness to this process and event. Meanwhile, Iran's Foreign Ministry spokesperson Ismail Baghei said that the country has resolved major issues, but some sticking issues are still under discussion, adding that the progress doesn't mean that the deal is imminent. He said that the nuclear issues are not on the table right now. Now, here's some opinion also coming in from the experts on the impact of the ongoing conflict on markets and macros.
That there's this tremendous asymmetrical response from especially institutional investors. Any time that there is a breakdown in talks or what looks like further fall into conflict, the worst that investors have been getting has been, sort of cautiously optimistic. Maybe they haven't gone full defensive at all. But anytime there is any hint or any statement that we're going to resolve this, the risk just comes pouring back. So we see where investors want to be.
There's a lot of inertia, I think, in what's happened to supply chains and commodity prices. So some of the increases in costs for fertilizers, for example, are baked in the cake. So that's going to take quite a while before that eases off. The big thing I would say, Sherry, is if we get a severe El Nino event later this year, on top of already rising agricultural costs, that's what could really cause food prices to surge higher. And, the work we've done at Nomura, we have a food vulnerability index for around 150 countries. And I think what's interesting is it really is the EM and frontier economies that are so much more exposed to a surge in food prices. So it really would open up a wedge between advanced economies that they suffer but not as much, and EM economies, frontier economies that are very vulnerable.
We'll take a short break. On the other side, the Ebola checks widen in the Democratic Republic of Congo. Stay tuned for more on this. Welcome back. Now, Tata Sons is scheduled to hold a board meeting today. The directors are expected to discuss concerns raised by the Tata Trust chairman Noel Tata in the last meeting. Sources say that the group chairman Natarajan Chandrasekaran and senior leaders are likely to be present and they are likely to present business plans for major verticals such as Air India and Tata Digital. Now, the long pending issue of a potential listing of Tata Sons is also expected to be taken up. Now, electric mobility player Green SM is set to enter India's ride-hailing market in early June. The VinFast-backed company will launch its services in Delhi and then expand to other cities in a calibrated manner. Shivani Bajaj joins us now with more. Shivani, take us through the company's plans.
Well, yes, India's ride-hailing market is about to get a new challenger, and this one is betting entirely on electric vehicles. Vietnamese player Green SM, backed by EV manufacturer VinFast, has officially confirmed its India entry, and CNBC TV18 has learned that the company is gearing up for an early June launch. Now, unlike traditional cab aggregators like Ola and Uber, which run mixed fleets, Green SM's model is fully electric, meaning every cab on the platform will be an EV, and powering that strategy will be VinFast itself, which will act as company's strategic vehicle partner in India, just like the other markets. The company's India journey will begin in the national capital in Delhi as its first launch city, followed by a wider rollout in phases. The company has confirmed to CNBC TV18 that driver hiring and training has already begun, and signaling launch preparations are in full swing. And to attract drivers in India's highly competitive gig economy, Green SM is making a strong earnings pitch. The company is offering a guaranteed monthly income of 35,000 rupees in the initial phase, with potential earnings rising to 50,000 rupees a month depending on trips completed and revenue generated. Globally, Green SM already operates in Vietnam, Indonesia, Laos and Philippines, making India its fifth market globally. But the big question is, can an EV-only challenger take up the dominance of Ola, Uber and Rapido in one of the world's toughest ride-hailing markets? We'll have to wait and watch. Back to you.
Shivani, thank you for those updates there. Now, more than 900 suspected Ebola cases and over 200 deaths have been reported so far, according to the World Health Organization. This outbreak has become the third largest in history since the virus was first discovered in 1976. The WHO has now raised the national risk assessment from Congo from high to very high, even as the global risk level remains low. Take a look at this report.
In Eastern Democratic Republic of Congo, a health worker says rumors helped the spread of an Ebola outbreak. That comes as authorities in the city of Bunia are tightening health screenings at checkpoints. They are focusing on travelers from the mining town of Mongwalu, the reported epicenter of the outbreak involving the rare Bundibugyo strain. John Mackey, a public health expert in Bunia, explained how that confusion took hold.
We are more afraid of those coming from Mongwalu because it started with rumors. Supposedly that coffins were killing people, and that made many people coming from that side believe it was something mystical, when in reality it was the disease, an epidemic. And that made the epidemic spread as far as Bunia. We are afraid of Mongwalu because of that. And we consider Mongwalu as the very epicenter of the epidemic.
He said that concern is driving stricter controls for people entering Bunia from Mongwalu. At the roadside, health workers like Sephora carry out hand washing and temperature checks on everyone passing through.
If we see someone with a very high temperature, we hold them here. And we call the ambulance, which will take them to the hospital for appropriate care.
The World Health Organization has declared the outbreak a public health emergency of international concern, as the virus spread across eastern DRC and its neighboring Uganda. So far, the virus has been linked to more than 900 suspected cases and over 170 deaths. The WHO warned that those numbers could rise as the virus circulated undetected for weeks before being identified. Health workers say the Bundibugyo strain has no approved vaccine, and that ongoing conflict, displacement, and misinformation in the area is making the response more difficult.
That's the update from Congo with regards to the Ebola outbreak. Just before we call time on the show, let's also take a look at how the Asian markets are doing right now. The Nikkei has recovered some of the losses in the initial ticks. The Kospi, in fact, has now extended its gains. It's now up 3%. And the Taiwanese index too has reversed some of the initial losses. The Hang Seng has also reversed losses. So the Asian markets are recovering from their opening lows. The Hang Seng is now at the flat line. The Shanghai Composite still remains around 0.6% lower, but the Nikkei is just below the flat line. The Hang Seng, in fact, has now turned positive as we speak, and the Taiwanese index, of course, too, just below the flat line right now. Taiwan's market cap is now nearing $5 trillion, and incidentally, only one stock is contributing to 42% of the entire market weightage of Taiwan, and that is TSMC, and that is a result of which the rally seen in TSMC has taken Taiwan's market cap to close to $5 trillion now. That's the report that has come in just this morning. And let's pull up the GIFT Nifty. I'll show you how our own markets are likely to start off. Well, still around a 20 odd point downtick. So we still open above the mark of 24,000, at least as of now. But the question will remain whether that will sustain in today's monthly expiry session. We take a leave on this edition of Power Breakfast from me and the team. Thank you for watching. Bazaar Morning Call on the other side.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Reema and Nigel. Guys, hi, good morning.
Hi, morning.
Hi, good morning. Tuesday morning, US markets were shut yesterday. Indian markets have been in a nice groove for the last two trading sessions. Do we continue? Does the momentum stick on?
Well, that's right. And today is the final day of the monthly series. So volatility will be sky high, I think, in the final 60 minutes or so. But we're in a better place in comparison to a few days ago. At least I would like to believe so.
Well, I think we're past 24,000, back above 24,000 once again. And, you know, it's a range. I mean, the levels are broadly, I mean, 1,000 point. If you want to believe that, 23,300 on the downside, 24,300 on the upside. And basically, you're going to be knocking at the upper end of the resistance. You're close to the upper end than the lower end now. So optimism on US-Iran, I mean, just to take it from the top in terms of what came through, is, of course, dominating price action once again. Of course, I mean, the US markets did not reflect it because cash equities were shut. But futures were up. Futures were up about, I think, at 1.5%, 1%. Brent is under 100. We're about 98 or so. So not very different over the last 24 hours or so. But importantly, we're down about 20% from the highs, from the peak. Trump said once again on Truth Social, I mean, the same thing in different words, basically saying that the negotiations with Iran were proceeding nicely. But you also had US attacking, the Central Command saying, well, they've attacked targets in southern Iran. I mean, basically, the version is that, you know, there were Iranian boats which were trying to lay mines in the Strait of Hormuz. US sunk those boats. They were attacked with missiles by Iran, and then, of course, US proceeded to attack these targets where these missiles were being launched from. And of course, I mean, the CENTCOM, the Central Command, saying, well, these attacks are defensive strikes in that sense. So they're being very, very. I mean, what they said was that during the ceasefire, we're being very careful only to be very defensive in terms of our posturing, etc. So in any case, that's what happened. As I said, US cash markets, of course, were closed due to Memorial Day holiday. Now, Trump, and he said this over the weekend as well, but he's now really pushing hard for, you know, Saudis and a whole host of countries to join the Abraham Accords, basically recognize Israel as part of the Iran deal. It's a bit of a tricky, googly kind of a thing, whether he will insist that this be the precondition for any deal with Iran. I mean, it's not come to that, but in any case, this is a very, very sensitive issue for the bulk of Middle East. And of course, there are countries like Pakistan, etc., which are being said, well, everyone needs to come on board, sign this together, historic agreement, etc., etc. But we'll see. As I said, this is not a precondition to an agreement, but he's thrown it out there. Now that Truth Social post, if you can just quickly put that back up, I think is interesting. So, you know, what it seems like, at least to me on the first read, so far, President Trump, and this is just 3 hours back, so far President Trump was saying that the real point of disagreement is what happens to Iran's nuclear program, its capability to enrich uranium, what happens to the existing stock of enriched uranium, etc. That's where everything is stuck. So in that regard, President Trump just a couple hours back saying that we are okay if that enriched uranium needs to move out of the country, or and this is the new part, it can be in Iran, it can be destroyed together with the US officials, by Iran, monitored by International Energy Agency. So they're not insisting that this material be taken out of Iran, which Iran has been extremely opposed to. They're saying, well, we need to get rid of it. It can be done outside Iran, but it can be done inside Iran as well. We're okay with both options. So, and that's the reason why I'm saying maybe this is a bit of a softening of stand with regards to the one issue which has been a problem point. And you know, everything else perhaps is number 2, number 3, number 4. This is number 1 with regards to the sensitivity as far as negotiations are concerned. And many would say this is where things are stuck. So we'll see if this is that. In terms of softening of a stand. Now, Finance Minister in response, and just to come back to the local stuff here, in response to a question. She was here in Mumbai, and she was at 2 events, and at the second event, at the end of it, as she was going out, she was asked by reporters a bunch of questions. I mean, we were there. We asked about the RBI dividends, and of course the fuel price increases, and on the gold front. So there were lots of questions posed to the finance minister. And in response to a question on the capital gains taxation, the finance minister essentially saying, on this issue, and that's the quote, on this issue and on every other issue, we're always ready to listen to people. We will take their inputs. Now, how much, do you blow this up and kind of sort of, start to rejoice saying, well, this is it. They're looking at capital gains taxation in a very serious way. I don't think so. I mean, something happens, that's great. And we all, of course, want something to happen on that front. But the reading of this is it was a bunch of sort of reporters and asking questions and on. And the answer says it, well, on this and every other issue. So essentially saying that we are willing and open to taking suggestions, and, we'll see what we can do. So that's I think, the right way to look at this in terms of lots of stuff on social media. Well, this is coming and that is coming. We don't know, but this is what the finance minister said, so we'll stick to it. Now, the rupee continues to, the rupee rates collapsed yesterday, by the way. The rupee itself came up very, very strongly, 95.68 yesterday compared to, on Friday compared to 95.23. So there's a big appreciation, almost from 97. Now we're in the 95 handle. So that's quite something. It's a bunch of things. It's the RBI dividend. It's the RBI governor saying the rupee is now undervalued. It's expectations that maybe something will happen. Is of course intervention as well from the RBI in the markets. Nifty, I'll just leave you with levels. As I said, the range 23,300 on the downside, 24,300 on the upside. But very, very near term, the resistance is that, which is 24,300 on the downside, 23,800, which has been a pivot which we've sort of crossed and fell back under so many times. Is the support level. GIFT Nifty gives you a quick sense of how we're likely to start. We've had a bunch of good days. So this morning, the start is slightly lower, 50 points down to begin the session. Nigel has worked across with the F&O positioning. Nigel, take it away.
Well, after yesterday's rally, the Nifty and the Nifty Bank, they have turned positive for the May series. It's the final day of the May series, and good to see that we have clawed back. And now we're positive for the May series. But I'll tell you what, the bulls will want to end the series on a high. So let's see whether or not they can drive home the advantage. The FI participation, though, yesterday was muted. You had the global markets that were shut, various global markets, and also flows actually were skewed because of some large trades. So yes, we had institutional net buy number in yesterday's trading session, but we need to look at this data more closely. Though the FI flows are positive, yesterday most of the markets were shut and there were a couple of large trades. But more of the same will be something that the bulls will love, particularly since the rupee has pulled back from close to 97, closer to 95, which helps the FI portfolios when you see some strength on the rupee. It helps them, get some kind of gains just on the forex aspect. Moving to the rollovers picture, well, it's pretty much in line. Look at the Nifty, rollovers at around 60%. The Nifty Bank at closer to around 65%. That's more or less in line with what we have seen in the past. What did the FIs do on the future side of things? Well, they covered some shorts. Some mild shorts were covered on index futures. There was some long addition out there. And on stock futures as well, there were some shorts that were covered and there was some long addition out there as well. So there was clearly short covering on both the index as well as on stock futures. And now the FI short positions, I'll tell you what, it's dipped below that 84%. And it's the lowest we've seen the entire of the series. Remember, at one point in time, the series, they'd gone closer to around 90%. So the short positioning in percentage terms has come to the lowest in this series. The Nifty PCR, well, it's moved up to around 1.26. And from around that 0.8 odd mark, it's moved all the way up. How does that happen? Well, there's a lot of put writing that we've seen, particularly from the FIs in yesterday's trading session. There was a good amount of put addition in the ratio of close to around 4 puts that were written for every 1 call. And if you look at the options data, yesterday, the calls that were written earlier, they packed their bags, they got out of the market because suddenly the markets have moved very, very swiftly from around 23,500 all the way to around 24,000 odd. And there was some put writing. You look at it, 24,000 put, 23,900 put, both of them, a fair bit of open interest build up. Tell you there was writing in trade yesterday. And someone taking a bit of a punt in case the markets got up, in case the war suddenly gets totally called off. Then there's some out of the money call buying 9 rupees. That's all you lose, if in case you go ahead and buy that strike. But that appears to be a bit of a punt. So in terms of levels, going by the options data and the kind of writing you've seen at puts, the 20 DMA, which was a resistance, that becomes the first reference point. Then the 50 to around the 20 DMA, you don't want this band to get broken on the downside. And you'll be hoping that the markets can go ahead and scale the recent highs, which is ballpark around 24,254. That's the high that we saw earlier this month itself. So we'll keep an eye out on that mark. And the Nifty Bank, it's found its way to get into its own. And yesterday it pulled out the 20, it took out the 50 DMA as well. You'll want to see more of the same, and if it can hold on to this mark, then maybe it can drive home the advantage and in turn be good for the Nifty. But as I've been seeing the entire series, headline index is consolidating, broader markets, plenty of stocks doing a thing of their own. And I expect the broader markets to hold on to this mojo and the good rhythm that we have seen all of this series. So let's see whether or not the bulls can end on a high.
Well, we'll wait for that. For now, let's just quickly take stock of the Asian markets this morning. The Korean markets, Kospi, opened up after a day's break. And they've opened up strong. It's a 3% rally on Kospi, so consolidating above that 8,000 mark. Taiwan is on the flatter side. The Taiwanese market capitalization has crossed that of India, with TSMC alone having a market cap of more than $2 trillion. Hang Seng also was shut yesterday, so that's opened up mildly higher. Nikkei is slightly lower, about 0.25% lower on the Japanese markets, so retreating after crossing that 65,000 mark in yesterday's trade. The GIFT Nifty is suggesting that we could be mildly lower. Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investment, is now joining in. Thank you very much for joining in. Prashant, in 2 days, exactly 28th of May, it will be 3 months to date since the conflict in West Asia began. And now there is this whole Abraham Accord. You want to share your views and the implications for markets and investments?
Yes, it seems like it's 2 steps forward, 1 step backwards. Obviously, the good news is it looks like the Iranians were in Doha and they were talking, and their central bank governor, I think, was there as well. So it seems like at least there's some finality coming or some conclusion coming to the process. And President Trump also tweeted that he's open to Atomic Energy Commission overseeing their nuclear enrichment. So it looks like both sides are kind of moving towards some sort of conclusion. From India's perspective, we just need the Strait of Hormuz to be opened. Some of these issues might take a longer time, but if they have sort of the Strait of Hormuz open up, we'll get the oil and LNG supplies, and that will be a sign of relief for everyone here.
No, you're absolutely right. But Prashant, here in India, I think ships are coming, ships are passing through. And by the way, India is one of the 6 countries which is not paying Iran anything so far as they pass. I mean, I'm assuming most ships, there are 40, 50 ships now passing. That was the number we got, I think, yesterday, day before yesterday as well. Most are I'm assuming, paying something, maybe in Bitcoin or whatever. But I mean, I think, so yeah, there is this, in that sense, stealth normalization, which is already underway. So what will it take for the view to turn slightly more positive as this situation normalizes, Prashant?
I think it's only people will probably wait for commentary as this situation normalizes, and once I guess there's some sort of finality with the US and Iran, I think a lot of people have penciled in inflation pressures towards the back half of the year. If some of those ease and maybe rate hikes are not going to happen, then it would ease, at least for a large part of the benchmark, which is financial services and banking. It will ease some of the pressures on that sector. And I think that will kind of fuel some sort of stabilization and rally across the Indian market.
Hi, Prashant. Good to see you in. Indian markets have gone through a phase of underperformance. Maybe the rupee has overshot on the downside as well when we reached almost 97. Do you think the time has come when the Indian markets actually pull back, maybe attract some flows? Hopefully this end of the war spells good times, particularly with the drop in crude oil prices, which otherwise, puts our fiscal math into a bit of a tizzy. Good case for India to outperform in the next 18 to 24 months?
Yes, and one thing, Nigel, that we should look into is, at least for the US market, as you know, even the US market has been very narrow with AI stocks
Yeah.
kind of leading the pack. But there's a lot of supply coming in. So you'll have SpaceX IPOing, then there are talks of OpenAI IPOing. And I think that would, and these are all very mega cap companies, over $1 trillion in valuation. And as this new supply comes in, we think that a lot of the AI stocks might take a breather as people digest these news flows. And that will look for investors to look for opportunities that haven't really participated over the last 18 months. And India definitely comes into picture then.
We were chatting with Matt Orton exactly about that. And his view is, he said, he's not very worried about these large big tech IPOs cooling the AI tech trade. And his argument was that the retail in the US has been on the sidelines, so SpaceX will look to tap into that. And secondly, he said that while the valuations of these big tech companies are large, the amount that they're looking to raise is not that much. So if you just take a slice out of these big tech companies, it's enough to fund the IPO. So he was not too worried, but of course, that's going to be the litmus test for the entire AI trade. But Prashant, great chatting with you. Thank you very much for joining in. Here's what we will do. We will quickly tell you what the interactions we've lined up on the show today. So first up, 8:35, we've got the management of Suzlon to talk about Q4 numbers. 9 a.m., Amit Anwani of PL Capital will put the focus on the capital goods sector along with our defense. 9:20, we bring you a special discussion with UBS's Divya Nagarajan and Sunil Tirumalai as their Asian Investment Conference 2026 kicks off. 9:40. The management of Poly Medicure joins in to talk about the FY26 outlook. Following that, the management of Indigo Paints will be chatting with us at 9:50. Towards the end of the show, Lata will speak to IIFL Capital's Rikin Shah and puts the spotlight on the bank. Stay tuned for that.
Time to slip in a quick break. We've got a lot of stock-specific action to track for you. Get at that in just a bit. For the time being, I give you a sneak peek. Hitachi Energy, Travel Food Services, Amara Raja, JSW Energy, Premier Energies, all of them will be reacting to positive news flow. BEL, Pine Labs, and Aditya Birla Fashion and Retail. All of them react to positive news flow. Concord Corp as well as RVNL will react to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Asia is a mixed picture of trade. The Korean markets are holding up well, 3% up, but you've got slight softening, flattish negative bias coming through on other markets like the Taiwanese markets and the Japanese market. The GIFT Nifty is suggesting a start with cut of about 35 odd points, but we had a monster 300-point rally in yesterday's trade where the banks outperformed. The Nifty Banking Index had a 1,200-point surge, so maybe there will be a bit of a give back. And today is the monthly Nifty expiry, and in terms of earnings, you've got ONGC. That's going to be the Nifty stock to track today in terms of earnings. But our entire research team is now standing by with CNBC TV 18's list of top stocks for the day. And Vinny joins in first up here in the studio on Hitachi Energy. How are the numbers, Vinny?
Hi, good morning. So good numbers again that have come in from Hitachi Energy. Strong beat across all the parameters. So revenue, PAT, EBITDA margins, all of them are a beat. Order inflow continues to be above that 2,000 crore mark for Q4 as well as at 2,422 crores, which is up 10% on a year-on-year basis. Order backlog for the whole year now for the next year, what we are keeping an eye out on is 29,500 crores approximately. So strong order book, which it stands at. Export orders, that's coming at around 36.8% in Q4 is what it accounts to for the order book. Gross margins, bit of a compression that we're seeing in terms of gross margins. Why? The Mumbai HVDC project that came online and the execution took place in Q4. So there was a bit of an compression because of that. Forex loss that came in at around 31.5 crores. But all in all, good numbers that have come in from Hitachi Energy. We'll expect green here.
Okay, got it. All right. Thanks a lot for that, Vinny. A big outperforming stock, but Vinny says numbers pretty good. Hopping across to Ananya, she's here to tell us about Pine Labs.
Pine Labs reported a strong and confidence-boosting Q4, we can say, with a clear sign that the company is now scaling profitably. When we look at the Q4 numbers, revenue came in at around 700 crore, up 17% year-on-year, while adjusted EBITDA surged 73%. EBITDA margins expanded sharply to 21% from 14% last year, and the company reported a profit of around 59 crore versus a loss of around 29 crore a year ago. So this was one of the key highlights for this quarter. Now, cash flow was another major positive, with operating cash flow jumping nearly 8 times to 395 crore, indicating strong earnings quality. Now, when we look at on the business side, online payments remain the fastest growing segment with 56% growth, driven by enterprise wins, D2C merchants and quick commerce expansion. Now, international business is also scaling well and now contributes nearly 15% of revenue. Now, another key highlight was the strategic OMC wins with IOCL, BPCL and HPCL, strengthening Pine Labs' leadership in the fuel payments infrastructure. Now, management also remained optimistic, guiding for 21% to 23.5% revenue growth over the next few years, supported by AI-led commerce solutions, affordable products, international expansion and new NBFC and underwriting opportunities through the Agya Technologies acquisition and a Signal platform. Now, overall, this was a strong quarter for the company, even though valuations are pretty expensive now, but the growth seems good going forward.
Okay, all right. Thanks very much for that. Well, Container Corporation and Travel Food Services are the next two we want to focus on, and Mangalam has got these. Mangalam, morning.
Well, as expected, it was a soft performance coming in from Container Corp. I'm going with mild red on that one because the EXIM business did well. The domestic business saw an impact. And EXIM business actually did well despite the disruption from the West Asia crisis. Revenue was down 1%, the EBITDA was down 3%, net profit down 10%. If you look at the segments as well, EXIM grew about 1% on the revenue. The margins were a lot better, 23.5% out there. And the domestic business out there was a sharp cut in the EBIT performance out there. Good performance coming in from Travel Food Services. I'm going with green on that one, largely because, you know, the business was led by net contract gains of 17%, even though like-for-like growth of 6% was impacted by the West Asia crisis. Overall revenue growth of 25%, EBITDA grew by about 38%, net profit grew by just 15%, but that's on account of a higher finance cost, and there hasn't been any increase in the debt of the company. This is mostly on account of Ind AS accounting. You know, the big triggers for them obviously are the new airports ramping up, which include the likes of Navi Mumbai and Noida.
Thank you very much for that. Over to Devyani now for Aditya Birla Fashion and RVNL.
Now, Aditya Birla Fashion posted its highest organic growth in 12 quarters. That's led by a 14% like-for-like growth in pantaloons and a 45% jump that was seen in the digital-first portfolio, TMRW, albeit on a low base. Now, revenue as a result rose 16% on a year-on-year perspective, although EBITDA did see a 4% fall with a margin compression of around 200 basis points, but that was led by a ramp-up that was seen in the luxury segment this time around. Yet going with a green for ABFRL. Now, on the other hand, RVNL posted a weak quarter, with PAT plunging 60% on a year-on-year perspective, hit by lower other income, weaker joint venture and associate contribution, and higher operating costs for the company. Now, EBITDA as a result has fallen 38%, while margins have compressed from 6.7% to 4% this time around. Now, silver lining though is the execution recovery, with revenue up 4% on a year-on-year perspective, and on a quarter-on-quarter perspective, a whopping 43%. Yet, considering the margin weakness, going with a red on RVNL in trade today.
Got it. Okay, all right. Thanks a lot for that, Divyani. Well, going across to Sudarshan, he's here to tell us about Amara Raja. Morning, Sudarshan.
Morning, Nigel. So it was a strong showing for Q4 FY26 earnings by Maharaja Energy Mobility, and of double-digit volume growth that four-wheeler OEMs have seen. That have led to a healthy increase in the revenue that Maharaja has posted. Revenue has increased by 16%. EBITDA too has seen a jump of 13%. And despite an increase in the commodity prices, margin has held on to levels around 11%. It has come at 10.9% versus 11.1%. On the bottom line, there is an increase of 95% on the back of one-time income of 181 crore on the insurance claims. One segment that forms 95% to its total revenue, that's the lead acid business. Their revenue has increased by 12%, and EBITDA margin too has seen a jump of 50 basis points. I'm going with green.
Okay, thank you very much for that. It's over to Vivek now for more stocks in the news.
Well, that's right. So quite a few stocks in news, and when you're looking at JSW Energy, the first one on the radar, remember JSW Energy, after the block deal in JSW Steel, went ahead and raised close to 4,000 crore rupees via the QIP. The allotment was done at 525 rupees a share, and the anchor book is very, very strong. SBI Equity Hybrid Fund picking up close to 50% of the entire QIP proceeds at 1,920 crore. GQG Partners Emerging Equity Fund picking up close to another 960 crore. Other investors included BlackRock as well as insurance companies. So the company says that post the stake sale in JSW Steel as well as QIP, a balance sheet will be stronger on back of both deleveraging as well as the company gets growth capital. Premier Energies, yesterday, remember, a little over 5% equity exchange hands. Again, the list of buyers came in post-market hours yesterday, a good set of buyers. Quant Mutual Fund picking up a little over 40 lakh shares. Nomura India Fund has picked up 25 lakh shares. Small Cap World Fund and Edelweiss Mutual Fund picked up over 20 lakh shares respectively, and other buyers included Canara Robeco, Tata Mutual Fund. And lastly, Bharat Electronics, order win flow continues over here. Company post Q4 results had received orders worth 600 crore rupees, orders across multiple segments, including communication equipment and radars. Order book, remember, at the end of Q4 stood at close to 74,000 crore rupees.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Hitachi Energy, Travel Food Services, Amara Raja, JSW Energy, Premier Energies, BEL, Pine Labs, Aditya Birla Fashion and Retail. Stocks with negative news flow are two of them, Container Corp and RVNL. Well, that's equities. What about commodities? Manisha is now joining in for a complete roundup of all the action. Manisha, over to you.
Well, thank you so much for that. It has been a very, very volatile crude oil prices that we have seen. It did see a decline of 6% on Monday, but Tuesday morning, that is, we saw 2% of gains come in as well. It's quite all over the place when you look at the statements coming in from various countries. To begin with, the US says that they're negotiating and that it's progressing well, but fresh attacks could follow if talks collapse. The US and Iran also are discussing a framework that would extend ceasefire for 2 months. But there are a lot of unresolved issues as well, like the Iran nuclear program and the authority over Strait of Hormuz. In the meanwhile, the markets also are reacting to the U.S. military carrying out strikes in southern Iran, which they are calling it as defensive actions. So while the crude oil price is still trading below $100 a barrel, there is some gain that we've seen come back in case of metals. Gold, silver gain between 2 to 4%. U.S. copper futures are trading at a 1-week high. And steel, iron ore price is also trading nearly 1 to 2.5% on the higher side. So while energy is slightly back, so is the case with most of these metals as well.
All right, Manisha, thank you very much for that. Well, that's commodities for you. We'll come back and chat with the management of Suzlon to talk about their fourth quarter results in just a bit. Rahul Jain is going to be with us here in a bit. Stay tuned.
Welcome back. Well, let's go across to Hormuz. He's joining to tell us all the big movers in trade and some of them that were backed by delivery. Morning, Hormuz.
Morning, Nigel. And the IT names have been in the spotlight over the last entire week, but the one name that has continued to outperform has been Wipro. And yesterday's session as well, the stock did well. It was up for the 8th day running in yesterday's trading session. And in fact, it is up 11% now during this period. And in fact, in today's, the current month, the call option of the 210 call option, the premiums were up almost 60% in yesterday's session. Monday's volumes were the highest in over a month, where 7 crore shares were traded. That's almost 3.5 times its 20-day average, and 56% of those shares were marked for delivery. So over 4 crore shares are marked for delivery. The 20-day average is just 1 crore, and it was among the most traded Nifty 500 stocks yesterday. And there has been buying in the stock, considering the fact that the record date for the buyback has been fixed as the 5th of June for Wipro. The other one that did well yesterday was Eicher Motors. It was the top gainer on the index yesterday, the biggest single day gain in over a month. Third straight day of gains. The premiums for the next month call option on the 8,000 call was up 65%. Volumes were the highest in nearly 4 months for Eicher. 13.5 lakh shares were traded. That too was 3x its 20-day average. A third of those were marked for delivery. So 4 lakh shares for delivery. That too was double of its 20-day average. The stock, after yesterday's move, has turned positive on a year-to-date basis, but still down around 10% from its 52-week high levels. And lastly, one stock that has been on a tear all through the years, HFCL. The fourth straight day of gains, the biggest single day gain in a year yesterday. The stock was up 10%. Volumes were the highest in the last 10 sessions, close to 11 crore shares traded. It was almost at par with the 20-day average. A third of those were marked for delivery, so 3.5 crore shares for delivery. That was double of its 20-day average. It was the third most traded stock on the Nifty 500 yesterday, and the stock from its March 30th low of 67 rupees in just 36 sessions, the stock is up 142%.
Thanks very much, Hormuz, for that. So that is the picture as far as big movers from yesterday are concerned. Well, Suzlon Energy is the first management we're speaking with on the back of earnings today. Rahul Jain is Group Chief Financial Officer at Suzlon. And here the story, of course, is top-line growth is strong, but there's margin miss, 200 basis point sort of margin miss. And Street was expecting about 19%. Margins have come in at about 17% or so. Rahul, great to have you with us here. Thanks for joining in. Prashant this side. So just sort of take up the margin bit. What happened? Was this commodity-led inflation which hurt? And second, also talk to us a little bit about the order book, because the book itself has declined on a quarter-on-quarter basis. Are newer orders the flow becoming a little more muted now?
Hi, Prashant. Thank you for calling me on the show. Much appreciate your inviting me here. Let me just talk about our overall financial performance first. Our year-on-year growth for FY26 has been pretty robust. We are at a 54% increase in revenue to about 16,700 crores. Our EBITDA increased about 63% to about 3,022 crore, and our PAT increased to about 3,100 crore. Overall, I think the margins have remained strong, but I would really say that it is a question of the mix in terms of the way we are looking at it. Some of the businesses perform better in terms of the overall margin profiling, and therefore the mix is the one that has created slight dip in the margin. We had always said that the margins will remain in this range, and I think we've delivered that.
What about the order book, Rahul?
The order book, again, we have closed the order book at about 6 gigawatt. Again, what we believe that 66% of these orders being from the PSU and the commercial and industrial sector, I think it is a pretty strong order book given the industry position that it is. We believe that we will continue to grow going forward as well. Thank you, Prashant.
Rahul, the point is, all this is, so what are you really saying? I mean, let me ask you to put out a guidance for the full year, if you will, from both margins and where will you be by the end of FY27, if you can, or maybe what's the inflow you're expecting this year in 27? So margins and order inflow this year.
I think margins will remain where we are. I think stronger than here is a possibility. I do believe that the industry will remain strong. We've seen about 6.5 gigawatts of installations. We will continue to remain industry leaders. And therefore, we believe that the order book at the end of FY27 will be higher than what we've seen in FY26 as well.
Would you like to put a number to it? In the ballpark, we won't hold you to it. It's obviously never exact, but give us a
really,
sense.
Prashant. Again, I would like to leave it at the fact that we will be a stronger position going forward. Our balance sheet remains very strong. We will continue to deliver higher growth going forward as well. That's how I would really look at it, Prashant.
Rahul, hi, morning. Just to talk a little bit more on margins. You're confident about maintaining margins or perhaps even expanding them from here on, but steel prices have gone up significantly. So what is going to be the impact of that? And while you have said the fixed price contract in your overall share is only 15%, for the variable part, is it easy for you to pass on these higher cost escalations to your customers, or is there some renegotiation which can, just slow down the entire process? So tell us a little bit about how you're confident about navigating this commodity inflation.
Rima, commodity inflation, largely if you're talking about steel is one of the largest things by weight in a wind turbine. What we believe and the way the contracts are structured, majority of it based on an index is passed on to the customer as well. I would really say that when I look at it from an overall perspective, the margin positioning that we have today is a strong one. The mix will continue to shift and that will have some impact, but I don't think there is a negative trait around it.
Okay, and on collections, what is the quantum which is stuck on NTPC or overall PSUs, and what is your collection target for first half in full FY27?
Rima, when you look at our balance sheet, even from an FY25 to an FY26 perspective, our cash has added to about 400 crores positive. I think that trend can continue going forward. Again, I would not like to name any single PSU or a single position in terms of the cash that is stuck. Yes, there is some cash trap. The idea is to be able to release cash going forward as well.
Can you put a number to the receivables? Not from a particular, but the overall receivables, and how much do you think you'll be able to collect?
Again, as we are growing, receivables will be higher. But whether there will be cash that will be... So let's say our cash cycle should be better by the end of FY27.
All right. Hi, Mr. Jain. Good morning. Good to see you in. For the industry, I believe you're looking at installations of around 8 to 10 gigawatt. Would that be fair?
Yes. Thank you, Nigel. And good to talk to you as well. Yes, 8 gigawatt to 10 gigawatt over the next 2 years is pretty much a possibility. Okay. We are market leaders. And again, we have to also understand energy security becoming a key element of it. We also believe that renewables will have a very large part to play. And therefore, necessarily wind has a very large part to play in this. I do believe that we will remain market leaders on that side as well.
And you have ballpark 30-35% market share. So in all probability, you should be executing around 3 to around 3.3 gigawatt. Fair, right, to assume?
Again, I would not like to put a number, but yes, that's a decent assumption, I would say.
Okay, got that. Last year you had guided for 60% revenue growth. You've ended, somewhere in that vicinity. For this year, on that sort of a base, what are you looking at?
Again, like I said in as an answer to a previous question as well, Nigel, I'm not guiding exactly the number. What I'm only saying is that we will continue to grow at a pace that is in line with the market growth as well.
Okay, all right. Nuvama, they put out a note and they were quite positive earlier on the stock. Last year, you did an EBITDA number of around 3,000 crores. They're talking about 4,300 crores in FY28. Do you think it's gettable?
Why FY28? I certainly
do you think you can get to that in the coming year?
I am saying that given where we are, the position that we can create in the market is very strong. Our deliveries are going to be strong. We are targeting much higher positions. Our cash capabilities are much higher. Our balance sheet is on a strong wicket. Given all of that, why can't we grow fast is the question that I am
asking. Then in the near term, so for this year, they're estimating 3,800 crores. Can you do better than that also? Why only 3,800? Would that be the reply?
Again, I don't want to put a number, Nigel,
but gettable.
In the ballpark, I would say.
What about exports? You launched the Blue Sky platform at Win Europe 2026 in Madrid, where you're targeting Europe's 17 to 20 gigawatt of repowering opportunity. What is the realistic opportunity from exports in FY27, FY28?
Okay, Rima, the way we are thinking about it, when we think about the, let's say the revenue recognition happening from an export perspective, we will probably see revenue recognition coming in more from an FY28 perspective. Again, the market is strong. We have had great discussion with some of our customers. That continues, and the opportunity seems large for us, not just for our newer models that we've launched in Europe, for the existing India and the repowering opportunity in Europe as well.
So in FY28, how much?
Again, I'm not putting a number, but let's say it's going to be sizable over the next 3 to 5 years.
All right. We'll leave it there. Rahul, thanks very much. Good speaking with you. Appreciate you joining us here on CNBC TV 18. Thanks for taking out the time. Okay, we'll take a quick commercial break here. We'll come back. We have Mayuresh Joshi of Marksmith India joining in for some fundamental stock conversation. Stay tuned, coming up.
Welcome back. Well, as promised, we have Mayuresh Joshi, Director Research, Marketsmith India, who joins us on the show. Hi, Mayuresh. Good morning. Good to see you. Well, it's going to be interesting times, I think, in the next 10 days or so. A lot of conferences piled up in Mumbai as well. So, interesting times. A lot of managements coming down. Let's see what the mood is like. That said, we just had the management of Suzlon. One of the stocks that moved from 5 rupees to around 90 rupees came back down to around 55 rupees. Now, in the past quarter, it appears they had some execution issues, but the management is sounding reasonably optimistic about the path ahead in terms of installations and their product mix. What would you make of the stock at around 55 rupees?
Well, I think hearing the management, I think the expectations largely being laid out is that FY27 stroke FY28 should be better years in terms of execution. That's one. Second, in terms of the mix itself, both from a product perspective and a geography perspective as well, the expectations is that it should be pretty stable as we go along. And therefore, I think as execution improves, going by the management here, say, I think the expectations in terms of a strong revenue growth, the EBITDA number in absolute terms can be far higher from what they have posted on an annualized basis this year. And therefore, I think both cash flows and return on equity, which remain equally strong for Suzlon, looking at how their business model probably is shaping up and is positioned as we speak. I think it all depends and hinges upon execution. So I think if they're able to execute well, I think the absolute numbers go significantly higher, leading to better cash flows and EPS rating and rankings as we see it at markets today. So it's making a very good base. Anybody holding so is not sure, Katu.
Mayuresh, Hormus was just telling us about Wipro being one of the momentum stocks. Stock has rallied 11% in the last 8 trading sessions. The record date for the 15,000 crore buyback is 5th of June. So there is some buying seen ahead of that. The price is 250 rupees, buyback price. Would you recommend tendering into and participating in Wipro's buyback?
Morning, Rima. So I think that seems to be a multi-million-dollar question, because I think what probably happens is that they've not been executing well in terms of their core business itself, and the lag in terms of execution, specifically in terms of the guidance that they've probably given for their IT services business, which probably has not improved quite significantly, except a quarter or two in the previous 2 or 3 years, where they probably beat street estimates. I think it still lags not just their own expectations, but the industry growth as well. So clearly, I think from a longer-term perspective, you probably draw a longer-term chart. I think the kind of returns or the ROI that Wipro has probably generated to its investors has lagged quite significantly. IT as a sector, Rima, I think we still remain a little bit circumspect when we speak to our colleagues back in the US. I think the kind of dynamic transitional changes that are probably happening within the sector itself are pretty huge. But it might still be a laggard, in my opinion. So I think if somebody has, and we believe that there are better options around, I think tendering might be a better option.
Tendering might be a better option.
Yeah, absolutely. Well, lots of movers yesterday in that sense. Mayuresh, hi, morning. Max Health has lost about 8-9% in the last 2 sessions. Post numbers, Mayuresh. Any thoughts? Actually, on Max, if you have, or on the space, we had Narayana Hrudayalaya yesterday. That was up about 5% again, post numbers. Any thoughts on the space?
Morning, Prashant. I think as a space, obviously, I think there is much to be done, because if you probably look at the organized healthcare providers and then the kind of opportunities that they probably have, that's pretty large, both in terms of expansion in sheer bed capacity, but also in terms of the offerings that they've probably got in terms of these servicing that they can probably do across a lot of critical segments. And therefore, I think a lot of the healthcare stocks actually have reported very decent set of numbers. Narayan had a decent set, Apollo Hospital had a decent set of numbers across all parameters in terms of expectations of bed capacity additions happening in a calibrated manner, which does not lead to significant leverage onto the balance sheet. The average revenue per operating bed in significant clusters, and important clusters for them, including Chennai, Hyderabad, probably have delivered well. And the pharmacy business itself, I think the kind of numbers that have probably come through in terms of the majority of stores that have probably achieved a significant amount of saliency, I think that probably leads us to believe that numbers within the space can continue going well. A couple of risk factors. One, in terms of whether the government probably caps some elements of rates in terms of offerings that hospitals probably give. And second, I think in terms of medical tourism, I think a lot has been spoken about it. I was hearing it in Max Management yesterday as well. But I think it is not translating into significant amount of numbers in terms of absolute growth. And therefore, that remains a very healthy space in terms of how opportunities can come through in terms of medical tourism. But in terms of absolute growth, I think that is not probably translated. And therefore, I think as a space remains very, very attractive. Leaders like Apollo Hospital, in our opinion, can continue to.
Yeah, Aisha continues to do room, Mayuresh. It's just, amazing, right? I mean, saw a sharp dip recently and it's pulled back very sharply in just 2 or 3 sessions from there. So 7,400 was the top Nifty gainer yesterday. Thoughts here, Mayuresh?
So I think as a disclaimer, we continue holding these stocks in our global portfolios. Our own sense is that the product mix that Aisha probably has and the dominance that it probably still continues to have, our belief is that it might still have a lion's share, though I think competition is obviously growing up in the entire space itself. But again, the diversification that Aisha is probably doing, they're probably looking at export markets. the spares component has now gone up to 10 to 12% in terms of their overall revenues. And therefore, I think a mix of all these three factors put together, I think a healthy product mix as far as the domestic markets are concerned, diversifying into export markets, and the proportion of spares where the margins are relatively higher, and where the stickiness in terms of that number probably remaining far more stable going forward, irrespective of what probably happens, makes us believe that it is well positioned in the space that it operates out of. So again, with the bias that we continue holding in stock in our global portfolios.
Stay on, Mayuresh. Need to slip into a very short break. We'll come back with the pre-opening and we'll continue chatting with you. We'll also be joined by Amit Anwani of PL Capital to put the spotlight on the capital goods sector and some technical trading ideas coming up with Mitesh and Sudarshan Zakhani. Welcome back. We've still got about 20 minutes to go before the rates kick in. Mayuresh Joshi is still here with us. Mayuresh, which stock would you watch today from the earnings that came overnight?
So in my opinion, again, I think some decent set that I probably came through, but Suprajit Engineering is something that I was just monitoring early in the morning. Decent set of numbers on a year-on-year basis. And therefore, I think this is one stock that I would probably keep on my radar. Generally, I think our own sense is that a few of these domestically driven engineering capital good companies should continue doing well, which probably have more saliency in terms of earnings growth remaining far more stable compared to a lot of their peers in at least Q1 and Q2 going forward.
What about Premier Energies? Big block deal yesterday. The promoters sold 5.3% equity for about 2,200 crore rupees. But lots of buyers, Quant Mutual Fund, Nomura India, the Small Cap World Fund, Edelweiss, and others like Canara Robeco, Tata Mutual Fund. Any view on Premier?
So could not get into the detail of the numbers, Rima, but I think it's a strong balance sheet. It's a strong company as well. And therefore, I think the kind of move that it has probably exhibited yesterday, I think the expectation is that earnings will continue. But again, honestly, did not have a chance to look at earnings.
Okay, all right. Anything from the chemicals pack that you're looking at closely, Mayuresh? Something that you like? You know, I was looking at Sudarshan Chemicals. Those numbers actually look quite good. I guess there is some, inorganic as well. But massive growth, I think, on the top line is what I can see. The EBITDA number as well has ballooned up. Margin performance at around 8.5%. Any view at this name? Last 1 month, it's up 20%. But do you have a view?
So I think the space looks pretty interesting for Sudarshan. I think the acquisitions that they've probably done, Nigel, I think that would have probably added on in terms of top line. But how do the synergies probably be built in? Because I think they've got a lot more to digest in terms of ensuring that the stability probably comes through in terms of not just the European operations, but also ensuring that the North American and the South American dealer distribution network is also well balanced out. And therefore, I think the top line growth will be purely based, in my opinion, again, I might be wrong on this, in terms of the acquisition that they've done. But for operational efficiencies to probably kick in, how do they probably stabilize the overseas operations is critical. The space looks interesting. I think within the space, Naveen Fluorine is something that we continue liking at Markets with India. Our own sense is that numbers were absolutely fantastic in all three verticals that they operate out of. The capex that they're expected to do in the HPP segment, I think that could significantly add in terms of the fixed asset turns over the next few quarters. The MPP and the specialty chemical segment will add to those EBITDA margin numbers as we go ahead. And a combination of all these factors put together might ensure that the margins probably remain far higher than one probably expects within the 32 to 34% range as we speak. Very strong balance sheet, strong return ratios, strong cash flows. And the management commentary was equally strong as well. So I think this is one of our top recommendations as far as the specialty chemical space is.
Naveen Fluorine. Mayuresh, you've been doing a lot of research trying to identify some niche AI-related small cap tech companies. Do you want to share some of your early findings?
So I think better judge is you. But again, I think we're probably looking at Explio Solutions. And again, it's very, very preliminary. This is not a buy or sell recommendation. I think our own sense is that it's a German MNC. They're probably catering to a lot of Forbes 500 clients across the globe, whether it comes to Europe, whether it comes to North America. Primarily, part of the business probably goes through in terms of ensuring two things. One, in terms of the back-end infrastructure for the entire BFSI space globally for all the Fortune 500 global clients. And the second element also becomes in terms of the critical applications, in terms of the cybersecurity related issues, to all the aspects probably banded together. Strong numbers probably coming through. We've got a very strong dividend yield as well, 5.5% in terms of the yield that they probably give out. And therefore, I think early exploration, as I said, in this space, again, not a buy or sell recommendation.
Okay, got it. All right, Mayuresh, request you to stay with us. We have Sudarshan Sukhani as well, who's joining in to give us his trade of the morning. Hi, Sudarshan. Good morning. Good to see you in. We had a nice trading session yesterday. Some technical levels got taken out. Do you think the markets are good for more? What would your trade be?
Yeah, good morning. See, we took out 23,800 because of the gap. And now we are at 24,000. We are on the verge of confirming a breakout above it. Once we break above 24,000 with decisiveness, and that should happen either today or tomorrow, then there is a clear run to 24,500. So the trade is be on the long side. Don't panic if you see small dips. And there's a suggestion also, once we start a trend, then intraday trading doesn't make money because the markets open with a gap. Throughout the day, they drift when intraday traders don't make anything. And the next day, again, they open with a gap. You have to become a positional trader, keep long positions, and accept small dips in the way.
Yeah, no, absolutely. I mean, got to take a view and then sort of, maybe this is one of those times. Sudarshan, point taken. Mitesh, what about you? How are you looking at things and what's the advice this morning?
Morning, Prashant. So I think a couple of things. One, yesterday also I mentioned that getting past 23,800, 850 is a positive event, and it should eventually propel us to either 24,350, 400 as a minimum, possibly 24,600 looks like to be a logical near-term target. So I'll maintain that positive view. Today I think it's a subdued opening, but in case you get an intraday dip, I would be a buyer. Second, I think the Bank Nifty is also looking quite strong to me. The Bank Nifty reversal, along with a lot of components, have reversed on the banking side. Yesterday, we had a buy on Axis Bank. Today, also, there are some buy calls from banking news. So the Bank Nifty could also head towards around 56,100 to begin with, and maybe even higher. So maintaining a positive short-term view on both the indices.
Okay, got it. What about individual stocks? Mitesh, you go first.
As I said, I have a couple of banking names. ICICI Bank features on the list. It's a buy with a stop below 1274. Look for targets of around 1325. The second banking name is Bank of Baroda. There's a buy with a stop at 267 for targets of 285. I also have a buy on Eicher Motors with a stop at 7310 for targets of 7650. And one sell call, that's Colgate Palmolive or Colpal. That's a sell with a stop at 2121 for targets of around 2040.
Got it. Okay. All right. Sudarshan, coming across to you.
Yeah, I have 3 buys and 1 sell just to keep it a little tempered. BPCL is a buy with a stop under 300. HDFC Banks now suggests after that huge decline that it may be making, sort of a comeback of some kind. Buy HDFC Bank with a stop under 770. NHPC had a sharp correction. Perhaps that correction is over. Buy with a stop under 75. And Colgate had a bad day yesterday. And also FMCG starts, retreating when the markets really take off. It's a short sell with stop above 2140.
Okay. All right. Got that. Mitesh, I want to ask you about the Royal Enfield, Eicher Motors. Yesterday, it had a big breakout. It was up, I think, close to around 5.5–6% by the time we wound up. I recall when the new entrants were coming into their segment, people were getting nervous. But what a way that one has been thumping ahead. From 7,400, what are the levels you're looking at?
So the first level is around 7,600 to about 7,650. And then I think, a good chance that we are looking at 7,900. So quite a positive chart setup in the short term. The stock is also corrected from 8,200 to about 6,600 in the last few weeks. And now is again, getting into some kind of an up.
Got it. Okay. All right. Sudarshan, coming across to you in terms of big boys. Yesterday, you had, most of the stocks that were firing. Reliance Industries, I recall last week when it was, when the market was a little bit jittery, that one did that spike from around, I think, 1,300 closer to around 1,400 odd. Your view on the charts?
My view is that Reliance should now outperform, not just perform with the Nifty. The chances are that it's coming out of that correction, breaking to, say, sort of a consolidation. So it's independently a buy, apart from, of course, the fact that it's part of the Nifty. But independently, it's a swing trade. Look to buy it.
Got that. Thanks very much, both of you, for joining in with that assessment, the view, and of course trades as well. The rupee started, I think it's slightly weaker this morning after the one-way pullback we've had over the last 3 trading sessions now. So there's about a 17-odd paisa pullback from the yesterday close. And I think the GIFT Nifty, the rupee, the Nifty is also in the pre-open starting slightly lower, as the GIFT Nifty was indicating earlier. We've done about 50–55 odd points again here in 3 days. We've rebounded nicely to back about 24,000. Hitachi perhaps is one of the stocks in focus. GE Vernova, when they reported numbers a few days back, created quite a flutter, and that showed up in stocks of Hitachi and other transformer companies as well. I mean, the conference call was pretty instructive. Will Hitachi do something similar? Vinny is here with the numbers first. Vinny, take it away.
Hi, so for Hitachi Energy, the numbers overall are good. A beat that came in across parameters, order inflow above the 2,000 crore mark, which they've maintained over the last 2–3 quarters as well. So 2,422 crores is what the order inflow came in for Q4 FY26, which is an uptick of 10%. As well as in terms of the order backlog, as on 31st of March, it stands at around 29,500 crores. They have a good exposure in terms of the export market as well, of around 37% in their order book as on Q4. Gross margins, a bit of a contraction because there was an execution that came in of the HVDC project as well. There's a forex loss this time that's come in of around 31.5 crores. But all in all, good numbers. But do not forget, just YTD performance, when you look at it in terms of the numbers, the stock price and the stock move, that's up almost 93%. So maybe that is why we could see a bit of a fall. But otherwise, the numbers were good for the company.
Got it. Thanks, Vinny, for giving us that quick analysis. Well, let's discuss the capital goods space and some of the stocks out there. Amit Anwani, the Vice President, Institutional Research at PL Capital, joins us on the show. Hi, Amit. Good morning. Thanks a lot for joining in on this call. What do you make of Hitachi's numbers? Bombastic, right? I mean, but the stock has already seen a big run. What do you do at around 35,000 rupees?
Yeah, Nigel, good morning. Thank you for having me. So As we saw, quite a strong set of numbers as expected. They carry a very strong order book after winning the two large HVDC projects in past 12 to 18 months. And we saw, I think, the quite interesting thing is the further capex announcement. So earlier they announced more than 2,000 crore. Again, yesterday they announced 2,000 plus crore to add the capacities in India. And I think broadly, the multiple trends which is driving the T&D space, one locally, where there's a renewable integration and grid expansions happening. And we saw the CA report talking plan about till F35, and we're talking about multiple HVDC orders in the pipeline. And I think that is driving, plus the very strong exports, which is probably driven by the data center demands in US, which also requires electrical equipment, and a lot of MNCs, which are already driven in the US market, have subsidiaries in India. They're expanding here to further increase the exports. So multiple things driving the performance. Of course, the valuations are quite rich, and given the kind of rally which has happened in the stocks, so there is something which is concerning in the near term, but I think performance is very strong.
Yeah. No, it's pretty strong. What are stocks factoring in, Amit, if you will, both I think GE is now at about 50 times. The last I looked at it when numbers came out. This is FY28 earnings. What about Hitachi?
Yeah, so I think G is also close to 6365x plus F28. Hitachi would be about probably 80x by that time. So what is happening is that there are a couple of more LCC orders in the pipeline, which will be each worth probably 25,000 odd crores, and they might be tendered in next 12 to 18 months. And as we have seen in the past, obviously, once this lumpy orders comes in, there's a lot of EPS upgrade which will happen beyond F29, considering these are all 4-year executable, 5-year executable orders if they win now. And we have seen that happening with the previous order wins. They are really panning out in a strong numbers for Hitachi, especially since they won the orders early. And I think with these two HVDC LCC orders, where probably Hitachi and GE will have the stake, is something which can really upgrade the EPS beyond F29.
Of fun, say, Amit.
So I think probably currently what is getting factored in is about 25 to 30% odd growth over next 2 years. Yeah.
Okay. So if you're managing, if you're running money, if you're managing money, would you invest here right now?
So current valuations definitely, as I said, are kind of rich because the stocks have gone up by 50 to 100%. But considering that there's a multi-year cycle, which we're talking about T&D in domestic, and all this MNCs, as I said, there's a data center tailwind from US where these companies are also exporting in the US or the other markets in the globe, being a global feeder factory. I would be invested for a longer period of time, but for I think near term the valuations are kind of done currently. There are at least 3-4 years of tailwinds which companies are talking about, driven by domestic renewable integration and data centers in the outside market and India market. Yeah.
No, in a few months we'll have all these IPOs, Anthropic, OpenAI, etc., which will become public, right? There's a fair bit of debate whether this will. Already we are starting to see report. I mean, it's like one big giant circle, right? Everything feeding into everything else. So the cost of tokens, for example, going through the roof. Actually, humans perhaps cheaper than AI. Maybe that'll change as time goes by. But I'm just saying, if that situation changes, if that equation changes, and that'll change first in the US, right? And this big AI boom. I mean, I'm not saying it completely reverses, but gets derailed a little bit. You think that perhaps is one risk which is kind of difficult to quantify because this is all demand for on the data center side.
All right. So I think if you see broadly currently, what is driving is, as I talked about, the renewable integration and HVDC for whether it is GE, Hitachi, Siemens. But as I said, they also carry the export. So I think in terms of export, which probably is about 27-30% odd with all these companies, they have not reached to a point that probably there will be kind of setback if the orders are not happening in the US market, if there's a moderation in terms of data centers. So I think immediately for next couple of more years, the India market itself is very, very strong. These companies are localizing for the domestic market and few other markets where they can export as a global feeder factory. Given the data center currently is probably just 7, 8, 10%, the immediate impact may not be as strong since currently we are just seeing the tailwinds driven by the US market, where we are talking about at least 8-9 gigawatt installations of data centers happening each year. And they are kind of full for next 2-3 years in terms of product supplies for the data centers in the US. So even if there's some setback, at least for the Indian entities, should not be a challenge, but who knows, yeah.
Amit, great conversation. Thank you very much for joining in.
Thank you.
It's 9:10, so let's just get in some 9:10 calls. Sudarshan?
It's HDFC Bank. Buy HDFC Bank with a stop under 770.
HDFC Bank. Mitesh, what would you go with?
Banking name as well. ICICI Bank is a bank.
All right. The two large private sector banks perhaps will do the work for the markets today. Thank you, gentlemen. We'll come back to you. For now, let's go across to Sudarshan for some brokerage calls of the day. Sudarshan.
So first one is on Indus Tower. CLSA maintains high conviction outperform call with a target price of 580 rupees per share. It says growing tenancies are being led by Bharti, Airtel and Vodafone Idea for Indus Towers. And over FY 26-29 see tower additions of 36,000 and tenancy additions of almost 77,000 units. And even it believes that there is an upside potential to its forecast of a 10% CAGR in EBITDA over FY 26-29 to 11-12% CAGR, and with its high FCF, its dividend yield should continue, and also valuation on the valuation front, it's looking cheap as per CLSA. Nomura maintains buy call on Lloyd Metals and target price is increased to 2,050 rupees per share. It believes that value-added mix and strategic diversification should drive the next leg of growth, and it has raised FY 27-28 EBITDA estimates by 31%, 40% respectively, and also raised valuation multiples for MDO business to 8 times and raised valuation multiples for non-ferrous business to 14 times. It believes that ROC should improve from 12% FY 26 to 16% by FY 29.
Okay, all right. So thanks very much for that. 3 minutes to go for the market open, and you know, there is a quick recap coming up for you in terms of stocks that we put out since the morning. So Hitachi, of course, is right on the top of the list, is down a little bit flat actually. Travel Food Services is up 3. Amar Raja, which saw a very large move yesterday, is up about 1%. There's JSW Energy, Premier Energies, both which are starting higher, 0.5% on JSW. Premier Energies is up about 2.33%. BEL is flattish. Pine Labs will come up. I think there's a Pine Labs is up 3.6, so not bad. And AB Fashion is up about 1.25% or so as well. Container Corp, RVNL, other names. Container Corp is starting about 4% down. RVNL is starting about 3% lower as well. So that is the sort of, you know, overall picture as we begin to start today's session. There's just a couple of 2 minutes to go. Nigel, you want to come?
Well, that's right. No, just a few more stocks, Prashant, that are reacting favorably. Numbers, Superjit, those numbers actually look very, very good. I think we had the discussion with Mayuresh as well. Stellar set of numbers. Stock up more than 10%. The con call is at 11 a.m. We are at CNBC TV and we'll try to get you the management before the con call. So that's a stock you should keep your eye out on. You have Uniparts as well. That stock is up close to around 10%. So this is another stock from the broader markets that's reacting favorably. And IIP Industries, the volumes are lower, keep in mind out there. But that one as well, up close to around 6.5%. So individual stocks doing a thing of their own. The lesser known names, some of them, some good positive earnings reactions.
Actually, I mean, this is a flattish start after a decent up move over the last 2-3 days. I mean, 30 points is neither here nor there. So we'll just sort of, you know, take that and move on with regards to the opening itself. So lots of stuff happening. It's not as if, I mean, you know, war, peace, whatever. I mean, you know, markets have done their own thing. Stocks which have, companies which have which are in the rice segments, have delivered earnings, etc., have been rewarded. First bell going off, so 23,996. It's absolutely flat, nothing. And the Nifty Bank is starting flattish as well. The small cap index is up 0.33%. The mid cap index is up about 0.1% right now. So, I think this is a perfectly okay start. Let's see what happens from here, though. 23,987 now, so about 45 odd points lower, and about 200-point cut on the Nifty, on the Sensex, which is about 0.25% lower, 76,282. Nifty heat map gives you a sense of how we are likely to start, how we're starting, and then we will take it from there in terms of broader markets. Nestle, Tata Consumer are the two top gainers. There's BEL there as well, and on the other side there's Bharti, Indigo, and Adani Enterprises, which are down, at least at start. Rima.
Well, it's a very quiet range-bound start. So market consolidating after 2 days of gains and now drifting slightly lower, 60 points down. The Nifty is at the 23,970 mark. There is no sectoral index to call out. You've got the defense index mildly higher, up close to about 0.3%. The IT index opens up in the green on the way down. Some softness visible in the Nifty Consumer Durable Index, while the Nifty Oil and Gas Index too is mildly lower. Along with that, you've got the Auto Index. But again, no big moves seen on either sector. Again, just to go over some of the large cap movers, Interglobe Aviation is under pressure. That's down 1% ahead of numbers later this week. Ultratech Cement, Bharti, Airtel. You've got an M&M, SBI Life, Titan under pressure. The Nifty Banking Index also down 50 points. And here you've got ICICI Bank weak. Reliance Industries opens with a cut of nearly 0.5%. On the way up, IT is, seeing there's so much rotation taking place. So IT is seeing some buying today. LTM is a mover. Along with that, you've got TCS. Wipro continues to be up and about. HCL Tech, Tech Mahindra in the green. BEL has moved well for the last, including yesterday and today. BEL has added nearly 2.5%. SBI is seeing buying now. Coal India, Nestle, Tata Motors also in the green.
Well, that's right, Rima. And just take a look at some of those stocks actually in the broader markets that are really bucking the trend. Pull up a few of them. Suprajit, the stock that we highlighted in pre-open, that's moving higher on solid volumes. Uniparts, that's up close to 10%, again on very, very solid volumes. Office, AWFIS, that's up more than 10% in today's trading session. So big move out there is what we are seeing. And also a few more names actually that should come up for you on the screen. KSH, I think that's one of the newly listed companies, if I remember correct. KSH International, 5,000 crore market capitalization. That as well is up close to around 13% as we speak. So big move on that one. IFB Industries, one of those big underperformers from the recent peak, but that one's up and about in today's trading session. So good move on that name as well. Net broader markets, well, there are quite a few stocks that are doing a thing of their own. Let's put up even Sudarshan Chemicals. That's another stock actually that's gapped up in today's trade. Good move is what we're seeing out there. On the flip side, there are some earnings reactions actually that should come up for you in the screen. Some of the stocks are taking a hard knock. Techno Electric stock down more than 10%. Hard knock out there. I think we have another stock, Poly Medicare. The numbers came in the final few minutes of trade. The stock was down. It's gone further down today. So the stock has come in for profit taking. In the next few minutes, we'll have the management joining us. So net, a bit of a start, softish to flattish start on the headline index, but individual stocks doing a thing of their own.
They are doing a thing of their own. So lots of action actually coming through. Premier Explosives, if you can just quickly put that up, I think seeing more action, more move this morning. So that is something to sort of look at right now. So 4.5% after yesterday's deal. So 33 odd rupees, and it's done very, very well yesterday. And of course, I think yesterday it was up, locked up 20%, and it's up another 4% or so right now. Well, the UBS India Investor Conference, of course, gets underway, and we are very pleased to welcome in Divya Nagarajan, Head of India Research at UBS, and Sunil Tirumalai, a Global Emerging Market Strategist at UBS, joining us to sort of kick this off. It's a series of conversations over the next couple of days. Divya and Sunil, great to have both of you here. Thank you very much for joining us.
Thank you for having us. We are at the Asia Investment Conference.
Asia Investment, yes. So what, if you were to take a temperature reading, Divya, with regards to interest in India, where are we at? 100 being the highest and maybe 90 being normalish. Where are we?
I would say about 45 to 50. I think what we are beginning to see is that the earnings season has been pretty good so far. And I think people who have stayed away are now trying to see, can we look at some bottom-up ideas? So we are definitely seeing pockets of interest emerge, especially from an FII perspective. They're looking at value bottom-up stories that can be earnings compounders over a long period of time. So it's still early days, but I would say I would put it at an optimistic 45 to 50 compared to where we've been in the last couple of months.
Sorry, I said the range was 90 to 100. When I heard 45, I had a mini heart attack. I think you meant it in. You're saying it's picking up. That's basically what you're saying. All right. I mean, it's
yeah,
looking
it was.
the trajectory.
I would have put it lower a couple of months ago, but I think with the strong earnings season coming through, we're definitely seeing more incoming requests from foreign investors.
Yeah, and guys, we're speaking to you on a morning when Taiwan has overtaken India's market capitalization. So we just looked at the live numbers, 4.95 trillion, and we're at about 4.92 or so. So it's quite incredible, right? But there's one stock there, and TSMC, which is outsized part of the index. I mean, same thing with Korea as well. Actually, both a few weeks ago, both Korea and Taiwan were within 10% of India's market cap range. And Taiwan, of course, has now bridged that. Sunil, so come in there. Is that the main challenge? This entire AI trade and all these large stocks like TSMC, which feed into the big AI boom in the US. And so far, we don't have a foot in the door there, at least in the listed universe.
Yes, so I think just to take a step back and get a broader perspective, for the last 2 to 3 months, we've actually seen meaningful outflows of foreign money from all of EM, all of Asia, not just India. It's, Korea has seen big outflows, Taiwan has seen big outflows as well. But the drivers for those outcomes, in spite of that, we've seen, as you mentioned, Korea and Taiwan have done well, and India has, kind of underperformed. So there are a few, angles to that. AI is a very important aspect, as you mentioned. There does not seem to be any letting of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. While even the two markets in the North Asian markets that we are discussing are also dependent on imported energy. They're not energy surplus economies. They are importers. They've been able to manage it probably a bit better, and for sure for these specific industries, they are being considered as strategically important, and a lot of support being given to those. So yes, I think AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out anytime soon.
Sunil, the reason why there have been large outflows, I mean, actually, out of markets like Korea, Taiwan, etc., is it? I read that for large active EM investors, there is like a 10% limit on a single stock, and because these are essentially, such large trades, TSMCs, right? So is that the reason why perhaps there has been some selling out of those? So occasionally we see these kind of sharp outflow numbers, and then they come right back.
Yeah. So absolutely right. I mean, it's not that. I think it's because of the single stock limits. TSMC is beyond 10%, and Samsung is less than 10% for an EM investor, but it's catching up pretty soon. So there would be some funds which are above who would have been overweight Samsung, for instance, and they are being forced to sell. So I mean, I think that is definitely there. So it's not that. So which also means that if there is any correction for some reason in some of those stocks, you could see some buying coming back immediately. So that would also provide some floor to those stocks. So there is this technical factor at play as well.
Sunil, hi. And Divya, hi. Morning. This is Rima here. Sunil, can India have a bull market in the absence of an AI play or the AI ecosystem? What is your own view?
Well, okay. So I think a bull market for India is an absolute return concept. It's not a relative return. So it's possible that EMs do well. India may underperform because of whatever AI trade that's happening elsewhere, but it can still have a positive return year, right? So I think the two are not really mutually exclusive. If you have decent earnings, if you have it is a domestic story for India given the way the index is. So if you have decent earnings growth, if you have you're beginning to see banks pick up on credit growth after a while, they're gaining market share against the bond market. And if they are able to manage their margins, and probably see some increase in margins in a rising rate environment, all of that is good, right? You have other themes like defense, renewable energy, etc., that are picking up across the market. So I don't think and importantly, keep in mind that after COVID, the foreign investor, the impact of the foreign investor in determining the direction of the market has kind of reduced a bit. It's not gone away, but it has reduced a bit. And if the domestic money is supportive and if the earnings start recovering, there's no doubt why India can't have a positive return year. And outperformance versus underperformance versus the rest of EM can be for various other factors.
Okay. Divya, you said that the foreign interest in India is picking up, albeit slowly, but it's still picking up. There are certain themes, bottom-up ideas that they're looking at. Do you want to tell us a little bit what is catching their interest? Are there any sectors or themes?
I think as Sunil spoke, Rima, I think financials is definitely an area we're seeing a lot more interest, both on the banking and non-banking side, surprisingly. And again, it's for the reasons that he mentioned earlier. I think the credit growth is picking up. We were also, I think, just coming out of a few years of cleanup on the NPA side. So the sector is actually in a good place and in a much better place, I would have said, than if this crisis had happened a year ago. It would have been a different story. But now the sector is actually in a much better fundamental space. So I think banking financials is definitely a place that we're seeing interest. But also smaller mid-cap names, which have been, again, out of favor from a foreign perspective for a while, where there are compounding stories, sustainable earning stories. We're definitely seeing interest. There's a lot of questions around what's going to happen around energy security. What is India doing on renewables? Will you fire up thermal? Will you fire up nuclear? So there's definitely a lot of interest around energy security as a theme and renewables as a theme. So definitely in areas of interest there.
Divya, you'll also believe as a house that the AI theme has still a lot more legs to go. How long do you think this can run? Can it run for another 1 year? We're talking about 3 years, because that in a way determines India's relative performance. What is your own view, or the emerging market view at UBS? Divya?
Yeah, so let me sure, let me take that. So I think the way we would look at it is that the timeline or looking at when this trade ends essentially depends on when the revenue monetization hope for the US hyperscalers disappears, right? I think there is some level of monetization that's happening today. Not a whole lot, but it is picking up. Every new model release that comes out and disrupts a particular industry, like we've seen the legal industry being disrupted, consulting industry, and so on. Every new model release that comes out is basically a motivation for those model developers and the infrastructure providers behind them that there is revenue to be made. As long as that hope is there, I think money will continue to flow into those markets. Now, at the end of the day, keep in mind that the entire AI value chain, from the hyperscalers to the providers at the semiconductor providers on the upstream, they're actually making, as a group, a lot of free cash flow. So they're not burning money in the traditional sense. They're not. It's very different from the dot-com period when the cable make companies were investing a lot of money, getting into a lot of debt, and so on. That's not the situation. So that basically means that this could have some room to go. The opposite scenario, which would be relatively positive from the Indian markets perspective would be, if the very quickly these companies realize that the revenue upside is just not there. People are not willing to pay, and the token budgets are getting exhausted, but the token costs are not coming down. The unit costs are not coming down, just like technology costs normally fall, and hence, there is a big challenge in revenue monetization. I think that's what I would watch out for. Right now, it seems like they are making decent FCF as an ecosystem, and that should give them some room to continue with this.
You said, Sunil, that AI boom in India is not a prerequisite for markets to do well. But let me flip that. Is a AI sell-off elsewhere a prerequisite for foreigners to come back in a large way to India?
So to a large extent, global equities are kind of geared up and leveraged to this AI trade. So if you're talking about a serious unwind, that would be bad for equities globally, right? So you could see a relative outperformance of India, but I'm not sure we can be very confident of India having big upside.
It's not my case that we see a global sell-off in India is up, but generally, relatively, we'll stop talking about this for a bit. We'll start talking about, the good old, all the sectors that there are top sectors here. That's what I meant.
But I would just add at the starting of the of this question you mentioned about the AI trade not being there in India. India can still benefit if AI diffusion and adoption happens 100%. At an economy level. It's a very solid 5-year story. And hence those things will start showing up in our market in other sectors over time. But I just want to point that out.
Yeah, no, 100%. Divya, so run us through, so banks is one, right? You said that energy security comes up, and I think you've got positive views on names like ONGC and some of the others there. So just talk to us about where to which are pockets you'd pick out and sort of look deeper, study more for ideas.
So I think there are two parts of this conversation, right? The here and now versus what happens if the conflict drags on. So let's leave the conflict dragging on situation aside for now. So I think banks we've talked about, energy security we've talked about. Actually, if you look at the consumption stories, I think consumption's also been picking up. I think if you look at the consumer sector, especially the big staples names have actually done pretty well compared to our expectations. So that's another bright spot right now, assuming that story doesn't get derailed. But I would argue that if inflation comes back, then some of these big, large consumer names could be a little bit more resilient. We also like the short cycle industrials because there's been inventory replenishment, and I think we're seeing that inventory ordering pick up. And that's, I think, a place that we like as well. Long cycle capex could get pushed out more because we have uncertainty going on, but I think the short cycle industrial capex is where we expect to see continued positivity. The last place I would also say is defense. I think we are in an increasingly uncertain multipolar world, so I think that continues to be a secular area of spend for governments across the world, and the Indian government, I think, is no different there.
And Divya, on IT, not in the near term. In the near term, the market narrative is very simply put that Indian IT is an AI loser. But we've seen the Indian IT industry navigate through various technological changes. And if, as Sunil said, that AI diffusion takes place, then and AI adoption picks up, maybe the Indian IT companies do have a role to play. Which side would you bet on, Indian IT over the medium term, valuations aside, just purely on the basis of a business case, on the kind of growth numbers that we have on account of AI 3 to 5 years down the line? Would you be bullish or bearish on IT?
That's essentially taking a call on whether generative AI succeeds on its promise or not and how it plays out. But I think taking a balanced view here, I would say that the companies are much more faster this time around in preparing themselves and disrupting themselves. So you have many large companies have already started reporting AI revenues. So you can see how they're investing in it, how those revenues have started to grow. We're seeing very healthy double-digit QOQ growth in what these companies report as AI revenue. That being said, there will be some disruption on the existing base, which I think will have some impact over the near term. But overall, I think the companies are definitely preparing themselves to see how they can stave off being disrupted to the extent that they can. The caveat here is the technology itself, because the technology, as I said to you when I was there last, is still very young. And as the technology evolves, I think its capabilities seem to be evolving by leaps and bounds. And that, I think, adds a little bit of uncertainty to the level of preparedness that the industry can have on this. So net-net, I would say we are slightly cautious and we like the smaller names because I think they're a little bit more nimble and agile compared to the large caps.
Sunil, say the same. I mean, I just want feedback from foreigners on IT. What do you hear? IT services in India.
I think that's a uniformly negative view right now from a foreign investor perspective. Sorry, Sunil, go ahead.
Yeah, I would agree. It's generally negative, and I think there's also a lot of people are looking forward to just the IT companies themselves messaging and clarifying what their strategy is better. And I think that would really help if over the next, let's say, 1 or 2 quarters, their own strategies are more clearer and put out there. But yeah, I mean, I think there is a lot of skepticism.
Divya, at a slightly high level, I mean, if you pull back a little bit, right, with if AI really is going to change the world, I mean, we thought technology will change the world, now AI will change the world. AI technology did change the world. So if, there's generally, we don't know, right? I mean, it's a debate. Will it create more well-paying jobs? Will it sort of, create, what will it do to effective demand, right? Demand at a certain price point in countries like India. Is that a question which comes up at all? I mean, it's a question which everyone is there somewhere, but no one is really sure how to answer it or how to frame it. Divya, if you can take that.
So let's look at the bull case, right? The bull case is that the IT outsourcing exports. It's not just the Indian companies anymore. We have these big global GCCs that also export IT services from India. If that story remains intact, we don't have to worry about consumption. The sector adjusts. There's a short-term blip, and then we move on. And then the India story, the consumption story, everything continues. If you go to the other end, the scenario there is that if it disrupts jobs, and the white-collar jobs in India are largely concentrated around some of these sectors, then what happens to the ripple effect on the overall economy? Then you could have second-order, third-order impact. So I would say these are the two ends of the outcome. We would hope that we end up towards the positive end of the spectrum, where the industry and the export services say adjusts, and therefore we find some way. Sunil, I think, please feel free to jump in. But we've also seen how India's leapfrogged technological advances and moved. Like, for instance, I never had a landline because we moved around a lot, and then we went straight into mobile phones and mobile payments and everything else. Could we have something like that benefit India? Could AI actually end up being a benefit for India, where we leapfrog certain parts of our evolution?
Yeah.
I think that's an interesting question as well.
No, I think that's Sunil, if you want to come in. I was talking to someone in a top consulting firm who consults in the digital AI kind of adoption thing. His perspective was there's a lot of FOMO right now as well, especially if you're listed. What is your AI strategy? What are you doing? So maybe but it's real, but there's also some level of FOMO. But yeah, Sunil, jump in if you want to.
I mean, if I may quickly add, I don't think we have the kind of confidence or visibility that we'll get into a situation where large corporations suddenly come around and say, I'm firing 90% of my staff. No, I don't think that's so that economic disaster where there are no jobs and companies are just focusing on cutting down staff. I mean, that's a very, very far away, low probability event where we stand right now. What is more likely is that companies use the available AI tools and the upcoming AI tools to become slightly more productive. Cost of delivery of products or services to their customers comes down, and hence their addressable markets go up. That's how I'm thinking about it, at the moment, because that's what is visible right now. That's what we are seeing, within the companies that we study or within our own organization. But I don't think we should, start factoring in situations where 90% of white-collar staff in India will get fired and it'll all be done by AI. No, I don't think that level of confidence we have on the technology right now today.
Okay, all right. Hi, good morning, Sunil, as well as Divya. Divya, you just briefly spoke about consumption. I wanted to understand about how you approach gold as an asset class and also in terms of theme. Some of the jewelry stocks, they pulled back because of those duties that were imposed. But otherwise, the gold appeal seems to be quite strong. So your take?
Well, I don't claim to be an expert on gold. I think India has always been a gold-hungry country. But I think the gold is also, as long as there is uncertainty around what the Fed is going to do, I think the gold prices will remain volatile. That's our house view. I think Bhanu Bhaveja, our strategist, when he was here, and I will quote him, he said gold could have, we've seen a lot of volatility and a spike up in the last few months on gold on all these concerns. But we do think there's some upside left, but in the short term, I think the uncertainty around interest rate hikes in the US will keep gold volatile as well.
So Divya, my question was on the jewelry stocks. Do you believe that they fall well into this consumption basket? Some of them are not very, very cheap. The largest player in there, which is Titan. And the other ones, at some point of time, they're given a bit of a heartache. So your view on the stocks?
So I think it's, as you correctly said, very stock specific. There are some that are well-managed companies and have navigated gold prices very well. And there are others who are still kind of finding their feet in terms of managing those idiosyncrasies. So I think it's going to be very company specific then.
Sunil, if the war comes to an end tomorrow, do you think the Indian markets rally hard? Will foreign investors, because energy security is one of India's vulnerable points. So if the war comes to an end, what kind of upside do you see immediately in the markets?
There will be an upside, yes, of course. But I would go back and see how much has the market actually fallen since February 26th. When we had no clue that this war is going to happen, right? So I'm not sure if anything beyond a 4-5% kind of a upside, based on this. Then you come back to fundamentals. Then you come back to relative earnings growth. India versus other markets, and within India with sectors and so on. So it is definitely a good sentiment positive, but I don't think. Just like tariffs last year, which was a big headline news, but the markets largely shrugged it off. I think that's been, what we've seen in the markets across global markets when it comes to oil price impact as well. So yeah, that will be a positive, movement, of course, but I don't think it'll be a whole lot.
Divya and Sunil, when are we seeing the first AI agent sectoral researcher? At one of the sell-side firms? Will it be in UBS? At UBS, I'm sure there is one already somewhere. Divya?
Well, I think the way I would think about it, not to alarm any of our population or sell-side brethren, I think it is definitely a good helper. I think it can definitely help us kind of get to the market faster. And I think we do at UBS have a lot of programs that help analysts kind of publish faster, respond to market reactions faster. And we also have AI avatars. So the next time, hopefully, my avatar is speaking to you and not me. But that being said, I think for regulatory and for whatever logical reasons, I think I would like to hope that human brains don't get replaced. And therefore, our analyst community and our sell-side brethren, I think, can rest in peace that there is the human value and the logic that we bring that still continues to be accelerated by AI rather than replaced by AI.
When I heard that rest in peace, no, but point taken. I hope we're all here, a year from now, and you sort of join us for the next leg of the conference next year. Thank you very much. Great start, and wish you all the best of luck at the UBS Asia Investor Conference. Thank you for joining us.
Thank you. Thank you.
Okay, well, there's Divya and Sunil with perspective on markets and a little bit of sort of, looking ahead from just the here and now as well. We'll take a quick commercial break here. We have the management of Poly Medicure joining us on the other side. Fourth quarter numbers with Himanshu Baid in just a bit.
Welcome back. Let's focus on management then. Polymedicare, that's the next management on the show. Remember, they reported a rather muted set of numbers in the past quarter. Margins remained under question, under some pressure, actually. However, the management is optimistic on the growth outlook. They are guiding for domestic business to grow by 20%, international business to grow by 15% into FY27. To discuss this and more, we're joined by Mr. Himanshu Baid, the MD of Polymedicare. Hi, Mr. Baid. Good morning. Good to see you. Well, it appears in the near term there are some challenging times. Now, we're going by the guidance that you have given. You're guiding, I think, for around 2,300 crores of revenues. Could you tell us infusion therapy, which has come down to around 50% of the total mix, towards 50% from, I think, 65, 70%. How much will it contribute in FY27? And also the receivable day cycle, that got a little bit elongated because of export weakness, customer support as well. What steps are you taking to bring back some working capital efficiency?
Good morning, Nigel. I think, let me tell you first, I think quarter four was much better for us compared to the other quarters. And if you remember when we had guided around quarter three, that, we will start doing better from quarter four onwards. And I think that has already started happening, in terms of revenue, in terms of margins. In fact, the EBITDA margins have been the highest in quarter four, around 27% odd% on a standalone basis. Of course, when you look at the consolidated numbers, of course, the margins have decreased because of some one-off expenses in the subsidiaries. But overall, I think the trajectory is fine. On the infusion business, I think it will be around 50% even for FY27 because, we are focusing on other businesses right now. I think it's a transition for the company, moving from low technology to medium and high technology products. So I think that transition is driving this change. And I think that's what we are planning over the next 4 or 5 years, how this company is transition, from a low technology platform to a high technology platform. Okay. So that's where we are. In terms of working capital, yes, there was some stress last year because we have extra credits given to our customers, India and overseas. But I think now more or less at a level which shouldn't be, further, we'll not see more, let's say, cash flow cycles, going down. But I think maybe we'll be able to recoup more from where we are today.
Okay. All right. But do you want to give us a number on receivable days?
See, the receivables currently around 95 to 98 days. Hopefully, we should be able to bring it down to around 90 days, roughly in that range.
Okay, all right. Now, let's take one of those points that you spoke about. You've spoken about these several high-end products under development, such as IVL, advanced cardiology devices as well. Could you give us, what kind of commercialization timeline are you looking at? And say, what kind of revenue potential can you look at from these products, say in the next 2 to around 3 years?
See, basically, if you look at cardio business, that's a high TAM business. India again depends a lot on imports other than the stents and some basic products. So I think that is where we are focusing on, and I think like drug balloons, IVLs and some other high-end devices. So we are working on them right now. Some products are going to be launched shortly. Some are scheduled for launch end of this year. And of course, based on regulatory clearances and overseas markets, it'll take few years to be in those markets. So, but I think the important thing is to develop internally those devices and focus on R&D. That's been the key area here. And then the next one is orthopedics, where we are focusing on trauma right now and completing the whole range on the company we acquired in Europe. And then, of course, going to focus more on joints in next couple of years. So I think it's already a movement, moving towards high technology products, where India still has import dependence and moving in global markets where we see a larger TAM on these kind of products.
150 crores of revenues in 3 years should be possible.
Yeah, correct.
Mr. Baid, hi. Good morning. Prashant here. So the India business, if I look at FY26 growth compared to 25, is largely similar, 18-19%.
Yeah.
It's the export part of side, especially in Europe, where growth has come off meaningfully.
Yeah.
How much of this is due to cheaper Chinese imports or dumping into Europe?
See, I think Chinese dumping is happening everywhere. I think it's India, it's happening everywhere in the world. So I think that's not a new phenomena. But I think for us, I think it was more of a supply chain mismatch. Most of our products were going through Red Sea and then it got closed. And then, we were using the alternate routes and suddenly Red Sea opened again. So I think there was an inventory mismatch with most of our customers. And I think it was a 1.5, 2 month inventory mismatch. And that led to a lower revenue. And I think
we were caught a little off guard on that. But I think now, I think last 3-4 months, we have seen that picking up. We have added more distributors in the European market, and I think things look much more positive. And I think if you see, we have already guided now, and that is ex-India revenue, international revenue, 15% growth. We are not talking about a global revenue here. It's India revenue, ex-India. So I think now we are in a much better shape. The business is, we have seen Q4 ramping up already.
Yeah, Mr. Beth, so international revenues will grow 15%, consolidated 20%.
Yeah, that's correct.
And Europe will go back because 25 growth was, FY25 growth was 25%, was 7-8% in 26. I mean, that'll go back after these, now that the situation, as you say, is not...
Europe, if you look at it as a whole, when we look at our acquisitions and ex-India, then we should, because our current subsidiaries will also grow. The companies we have acquired and the company we had earlier acquired a few years ago. So I think that will again grow. And I think there we could see growth. If you look at consolidated growth, we may see close to around 20%.
Mr. Baird, morning, Rima here. So just on that point about commodity inflation, now you have said crude-linked raw material prices are up about 20%. In your guidance that you've given, what does it assume in terms of crude prices? They stay over here, it gets worse for how long? And secondly, is there going to be more from you in terms of a price increase? You've already secured a little bit from your customers, but will you push for more?
See, I think, first of all, I cannot predict what is going to happen in future. I think every day is a new day. But fortunately for us, Q1, because we had, reasonable amount of inventory. So I think we didn't have much impact in Q1 on the raw material pricing. It's a very marginal impact. But yes, from Q2, we may see a small impact. And I think, but the most important thing is as we export around 70% of our products, so I think currency depreciation is going to help. That's 7-8% currency depreciation, which has happened from, February onwards till date. I think that's going to help, and some price increases. Currently, we have assumed that prices, if they remain where they are today, I think we may see a little bit of margin erosion, maybe 200, 250 bips on gross margin level. But I think we are trying to do some cost saving projects and ensuring that, we can recoup that back. And we may do one round of price increase further, maybe in Q2, end of Q2 or early Q3.
Got that. And one more point about the West Asia conflict. You spoke about you get 6 to 8% of revenues, demand is intact, but there are certain shipping and pricing issues. There are some pending orders, which you spoke in the conference call, which you're waiting to execute. Could you put a number to that? What is the deferred revenue we're talking about?
See, basically, it's around 20 to 30 crores of revenue, which got deferred in March. And also we are seeing a similar revenue getting deferred in Q1. I think the biggest challenge is the cost of shipping. It has almost become 5x, 6x or 7x, and even it's taking few months to products to reach because people are using alternate routes and shipping lines are not confirming deliveries right now of products to customers. So I think that's a big challenge, but hopefully, gradually things get eased out a little bit, but still I think situation is very fluid. I think exports to West Asia.
All right, final question, sir, before we let you go. Renal care, I think, that was around 190 crores in FY26. What is the growth you're looking at in this year? And if you could help us out on the number of dialysis machines that you're looking to sell. I think last year it was around 450. This year, what does the number go up to?
Right. So this year we are looking at renal business to grow around 20% odd. Again, Nigel, why I'm giving this muted number is because we still are suffering from the Chinese dumping. Because many Chinese companies are using the FTA route and pushing products in India at zero duty. And I think that is where we have been telling the government to curb that. And if that doesn't happen, I think then we'll still have a muted growth of around 20%. We have managed around 22% growth over last year numbers from FY25 to FY26. I think similar number. In terms of machines also, I think we should be able to see a growth of around 20 to 25% in machines also. On 450, we may go between 550 and 600 machines.
Got it. And renal revenue goes to around 230 crores. Just a quick word with regard to this dumping. What is the price of your dialysis machine if I compare it with, say, the Chinese machine or, say, the European machine as well? If you could, give us the closing comments with those price ranges.
So I think Chinese machines, of course, China, being a very large manufacturer of equipment, I think their price is always lower, maybe around 10% or so than what we are quoting today. But European machines are probably around 20-25% expensive than what we manufacture in India.
Mr. Baid, great conversation. Thank you very much for joining in. And hopefully the next time we speak, the conflict is behind us and things get back to business as usual. Thank you.
Thank you. Thank you so much.
All right, let's move on now. Indigo Paints is the next management on the show. They reported a decent set of Q4 numbers. The growth has come in ahead of peers, but margins are flat. Hemant Jalan, CMD of Indigo Paints, is now joining in. Mr. Jalan, how has raw material inflation been for you so far? You've undertaken price hikes of about 12%. Is that enough, or are you looking at another round of price increases? And then if you could tell us, what is your expectation for revenue, volume and margin guidance for FY27?
So as far as price hikes are concerned, I think the industry is more or less done with it. The major portfolio, which are water-based paints, I think the price hikes that have been taken kind of offset the increase in raw material costs. Maybe there is still some uncovered gap in solvent-based paints, but as crude oil is coming off, the price of mineral turpentine oil from the Indian refineries is also reducing. So if that continues for a few more days, I think even for solvent-based paints, we should be fine. So I don't think that immediately the industry is looking for any significant price increase unless the situation in West Asia were to change for the worse. And let us hope that that does not happen.
Okay. And what is your expectation, sir, in terms of revenues, volumes and margins for FY27?
Well, in our case, if you find right from the last 5 years, we report volume and value growths individually for 4 different segments of paints. And you'll find that the volume growth numbers and the value growth numbers are pretty similar. Now, because of these price hikes that have happened, I would expect that in FY27, if these prices were to sustain, the value growth would be a little in excess of volume growth, should be by maybe 10 percentage points. We really look at value growth numbers, and given the fact that 10% of growth will come by simple inflation of raw material prices, I think we would be looking at doing something like a 25% minimum top line growth in terms of value.
Okay, so 25% value growth. So volume should be about 10% less. So about 15% volume growth could be a fair assessment. And on margins?
Roughly, yes.
On margins?
Margins, I think, would be flat. I mean, I think our margins are very good. Our EBITDA margins for the whole year were in the range of 18 to 19%, which are the second best in the industry after the market leader Asian Paints. So I don't think that there is too much scope or an interest in driving that EBITDA margin further up. We are happy if it remains in that range. We are more interested in pursuing top line growth rather than protecting EBITDA margins at this point in time. So I would say that EBITDA margins would largely remain flat, and we look forward to very high top line growth in the coming year.
Okay, got it. Mr. Jalan, good morning. Good to see you. And that's perfectly ties in with your strategy. You have been growing at a faster clip than the industry, and market share would be on your mind as well. So have you gained some market share in the past year? If you could give us a number. In the coming year, since you're again focusing on top line growth, where is that market share headed? And Berger, they were indicating that they are eyeing some market share in various geographies like in South India. Have you seen some kind of move over there?
Well, Berger has been typically weak in some of the southeastern states, not all. I think traditionally they were weak in Karnataka and Tamil Nadu, and I think they have gained a lot of ground in both of those states. Of course, they have a long way to go given their overall number 2 position in the country. As far as we are concerned, as long as we grow faster than the industry, obviously the market share is going up. I don't have a specific number to it because one of the recent players does not disclose any numbers. So it's hard to put a firm number on what your market share is, but I would roughly estimate it to be in the range of about 2.5%, which is not very high. And therefore, pursuing top line growth, for which there is a lot of scope and headroom for, is the number 1 priority as far as the company is concerned.
And if I had to give, a target or an aspiration in the next 3 years or so, you should be what? More than 3%?
Too far away to think, to give a number. Let us take it year by year, and every year, if we are able to outstrip competitive top line growth by a factor of 2, I think we would be happy.
Okay, and you have some, let's focus on your business then. You have some expansion plans, right, that will come on stream. So if you could tell us at peak levels, what kind of revenues can you do and how you see the scaling up of this expanded capacity coming on stream?
Well, see, capacity in paint industry has got nothing to do with sales. You increase capacity a couple of years earlier than when you expect you will hit a bottleneck. So just because your capacity goes up does not necessarily mean that your sales goes up by that proportion. I mean, we are not losing any sales for want of capacity even today. So this capacity increase that happens in the paint industry is really forward looking. And I don't think that yes, we are having a major capacity expansion at our Jodhpur facility. That is partly a capacity increase and partly a modernization effort to mechanize a lot of the operations, which were quite of a legacy nature. So I don't think that that per se makes a difference in sales. Sales is determined by your marketing inputs and the way you go about adding your network and growing your existing network, installing tinting machines, etc. So I think that that is somewhat independent of capacity increase that any company may undertake.
And how are you thinking about expanding your distributor profile in FY27, FY28? What is the kind of spend that you're earmarked? Because as you said, your sales really depends on that.
Yeah, so more than increasing the headcount of the number of dealers, which does happen organically every year, the greater thrust is on increasing the throughput per dealer that we already have. With the amount of dealers that we already have, which is touching, active dealer count touching close to 20,000, we can possibly do a revenue which is 2x of what we are doing. Now, of course, that's not going to happen overnight, but that is where the potential is. And therefore, the attempt is to increase spends not only on dealers in terms of dealer schemes, but more importantly on the influencers, the painters and the painting contractors, who are the ultimate determinants of the brand choice of the customer. So the effort is going to be to increase spends on all of these things to drive up the top line at a faster pace than competition.
Mr. Jalan, we leave the conversation here. Thank you very much for joining in.
Thank you.
Well, that's Indigo Paints for you. Absolutely flat for the markets, but individual mid-caps are doing well. So Bliss, GVS Pharma, it's a 15% up move on that stock. Yesterday also, stock was up by nearly 5%. Today, it's added on some more. Superjeet reacting to numbers. Premier Explosives was up 20% yesterday. It's added another 8% in today's trading session. And you've got big gains coming through in Ather Energy, Shriram Properties, Office, Campus Activewear came out with numbers yesterday, and that's been a big mover. Chandan Taparia, Motilal Oswal Financial Services is now joining in. Chandan, a little bit of a recovery from the lows and now back above the 24,000 mark. What's the trade on the index and individual stocks?
Good morning, Rima and Nigel. Thanks for having me. So Nifty has given a consolidation breakout on the last day after the range-bound move between 23,250 to 23,850 marks. Yesterday it consolidated, then gave a breakout, and today is holding at higher levels. We have a monthly expiry and sustained put writing is clearly visible at lower strike at 24,000, which is supporting the index to hold the higher levels. However, we are looking the move in next second half of the session due to the short covering. But as of now, the stance is buy on decline. View remain positive as index started to form higher tops, higher bottom, and now heading towards its 50-day exponential moving average. So 23,850, which earlier used to act as a hurdle, may act as a support now. And with that support, index can head towards 24,200, 24,200 to 24,400. For day point of view, use any small dip for a bounce of 50 to 100 points in the Nifty index. Looking at the Bank Nifty index, it negated the lower top, lower bottom on the weekly chart. It witnessed a decent recovery in most of the banking counter. Put writing is clearly visible. Short covering is seen. So looking for an upside move as of now, 54,750 is support for a bounce towards 55,555 to 55,750 in the Bank Nifty. Now talking about the stock wise, positive on the power and energy sector. And here we like Adani Power, one of the strongest name, which has been moving upwards with sustained long build up. In fact, we have seen a consolidation breakout on the daily and the weekly chart with positive placement on the mechanical indicator. So looking for the extension of the upcoming rally towards 245, one can buy with support of 231. Second trading area, there is buy on Vedanta from the metal pick. Pole and flag pattern, consolidation breakout of last 7-8 days, given a decisive hold about 340. So looking for a next move. One can buy with support of 336 for an upside target towards 358. Last trading idea that is from the wire and cable, that is buy on Polycap. Strong setup, supports are gradually shifting higher, moving upwards. Longs are intact, better rollovers are indicating fresh leg of rally. So one can buy with support of 92.20 for a upside move towards 97.50 to 9800.
Thank you, Chandan, for joining in. Get into a break. On the other side, Manisha Gupta will talk about monsoons and their progress. Stay tuned.
Okay, welcome back. 18 points higher. So, the initial dip got bought. We are up 24,000 plus. So it's a pretty decent looking screen, all told, so far. And look at the market breadth, which is also clean 2:1, a repeat of what we had yesterday. And of course, let's hope this stays this way all the way over the next many hours. Well, the other big corporate story which is underway is the Tata Sons board meeting, which is happening today. And the meeting is likely to take up issues raised by Noel Tata in the last meeting. My colleague Shireen has got a close watch on this. Shireen, take it away. What should we expect?
Well, thanks very much. Yes, this was a board meeting that, remember, was postponed, was deferred to a later date. Today is when the Tata Sons board will meet again to take up issues that were raised in the last meeting by Noel Tata. Now, the issues that Noel Tata had essentially raised were about capital deployment, capital allocation to specific businesses, to specific companies, and asking questions about the returns on those investments. So the companies that will present their plans today include companies companies like Air India, Tejas Networks, the EV business, Agastya, Tata Digital, and Tata Semiconductors, so those Tata Electronics. So those will be the companies that will present their plans in terms of the capital deployed, capital allocation, as well as what they expect now in terms of a growth trajectory, as well as a return on investments. Separately, the other issue that is likely to be taken up is around the Tata Sons listing issue. Remember, this is an issue that has divided the board. People like Venu Srinivasan, who is a board member, has publicly stated that it makes sense for Tata Sons to be listed, but there are concerns on what the listing could potentially do to the ethos and culture and structure of the Tata Group itself. In fact, it was articulated in a comprehensive opinion piece put out by the former vice chairman of Tata Sons, N.A. Poonawalla, recently, where he talked about how this will change the very nature, structure and culture of the Tata Group, which has been in existence for over 100 years. So no specific decisions perhaps are likely anyway. The listing decision is also incumbent on the decision that the RBI takes on whether it exempts Tata Sons as an NBFC from a listing or not. And that decision, we are given to understand, has not been communicated so far one way or the other to the group. So that's still a question mark. That is still an uncertainty that the board will have to deal with. But, there is difference of opinion on whether Tata Sons should be listed or not at the board level itself. The issue of N. Chandrasekharan's reappointment is not part of the agenda for the meeting today, so that is a separate matter that is not going to be taken up today. We've already started to see board members like Venu Srinivasan arrive, and of course we'll keep you updated on this corporate story.
Yeah, the shots are there, running parallelly, Shireen. So, yeah, interesting one, as you said, perhaps no decision as such, but of course we'll keep you posted with what we can pick up in terms of the discussions at that meeting and more as well. Shireen, thank you very much for that. So that's a story we continue to track and get details from as we go on. And there are, maybe... as Shireen said, there is, of course, the listing issue, but there is also capital allocation issues. Names like Tejas Networks, they're listed companies. And, we'll kind of sort of come back to some of them. Tejas, of course, from a share price point of view, has been a bit of an underperformer over the last few years, despite the recent run-up that we've had. Well, that's the Tata story. The board meeting gets underway. Well, Manisha is now joining in with... an eye on the monsoon season and how that is sort of progressing and what are indications looking like. Manisha, morning.
Morning. Thank you for that, Prashant. The reason that we're talking about monsoon today is because today is the onset date as prescribed by IMD for the onset of monsoon in Kerala. So what we do understand till time is that you already have seen Andaman and Nicobar Islands and parts of South Bay of Bengal already see a monsoon onset. That is on 16th of May. And this is quite ahead, in 10 days as well. You could be looking at an onset coming in today for Kerala. When you look at the actuals and the forecast, though, there is a very slight variation that we've seen coming from IMD onto that one. But as you can see, in the last 6 years, it really has been 3 times that you've seen the onset happen in June and 3 times that it has happened in May as well. And when you look at the earliest of monsoon in last 6 years, that was in 2025 on 24th of May that we saw onset in Kerala. And the most delayed in last 6 years clearly has been in 2023 when we did see the onset happen in June 8th. So for this year, it's May 26th, which is today, that we are expecting an onset. But it also really is about an El Nino year and a lower than normal monsoon that we are preparing for as well. So when you look at IMD, they're talking about 92% of long period average, while Skymet has forecasted 94%, both basically below normal therein. India is in midst of a Northapa, and this is what it's traditionally known as well, is what we are looking at. So this is the monsoon percentages that we've seen in last few years. Last year was 108%. It was the wettest June, by the way, in many, many decades. 2024 was also above normal at 108%. And it was in the second half of the monsoon time that you saw very, very heavy rains come in. 94% in 2023. This was also an El Nino year and is the reason we saw a below normal monsoon. 106% in 2022 was above normal again, and 2021 was just about normal monsoon. So this is what we've done in last few years there. But coming back to heat wave as well, that's exactly what India is dealing with right now. What we are looking at right now is not up. I mean, this is being talked about very, very much in the Indian scenario right now. This is traditionally the 9 hottest days that you see in summer, and that is between May 25th to June 2nd is what we understand. IMD, in the meanwhile, also has issued various alerts. There are red alerts and orange alerts as well for 26th to 28th therein. Most of that in Northwest India, Punjab, Haryana, parts of Chandigarh, Delhi and West Rajasthan as well. And then you also have Central India, which is East Madhya Pradesh, Uttar Pradesh, Vidarbha and Maharashtra, which in any case are looking at temperatures as high as 45 to 48 degrees in some places also. Now, when you look at the progress onset itself, if today we do see Kerala monsoon onset coming in, then you could be looking at next 10 days. This is all IMD's estimates, that if that happens today, then Mumbai could be looking at monsoons between 5th to 10th of June and Delhi, of course, by 27th of June. The delayed, of course, is by 4th or 5th of July that you could be looking at in Chandigarh as well. The IMD criteria for official onset of monsoon that the markets will watch out for today are, of course, based on 3 things. One is that 60% of the 14 designated Kerala and Lakshadweep stations must log in 2.5 mm rain. That is straight for 2 days. If the rains have happened yesterday and today as well, is when the onset would be declared. And then you have westerly winds. That's the second criteria that the IMD watches out for, at a height of 4.5 kilometers and speed of 28 to 37 kilometers. And the third thing is the outgoing long wave radiation, which has to see a drop, and you have to have a heavy cloud forming, and that is when it's a monsoon. So these 3 criteria, if are met, you could be looking at IMD announcing onset of monsoon today itself.
Fingers crossed. Thank you, Manisha, for that. We will get into break. On the other side, Lata will speak to IIFL Capital's Rikin Shah and put the spotlight on the banking sector. Stay tuned.
Our focus today is on the banking sector. Now, whether you look at the performance year to date, that is from Jan 1st, month to date, or just this week, the Nifty Bank has been nose ahead of the Nifty. This week itself, for instance, Nifty Bank is up 2.5%, the Nifty is up 1.3%. For the month of May so far, Bank Nifty has risen 1%, Nifty has risen 0.1%. If indeed the markets have bottomed out and banks are a safe bet, then which banks? I'm joined by Rikin Shah, Senior Vice President, IIFL Capital. Rikin, good morning. Thank you very much indeed for joining me. First, a question actually for your Head of Research, but you would be privy to it. If one assumes that the market is turning, after all, we have seen it go past the 23,000 mark and now cross 24,000. The war appears to be in its last legs. If we are on an uptick, where does banking figure for y'all in terms of sectors? Is it one of your top buy sectors?
Yes, Lata. So the financials is one of the preferred sectors for IFL as a house. And that has been the case for the last few months as well. Within that, of course, we have some bottom-up picks within the financials, but we clearly think that financial vis-a-vis other sectors offers a unique combination of inflection in earnings. Earnings growth for especially the large private banks, which is at par or better than broader market, and where valuations are at a significant discount. So on account of these three reasons, it is one of the most preferred sectors for us as a IFL house.
Okay, I'll come to the within the banking sector in just a minute. Can you tell us what is this difference? I mean, what is Nifty trading at? What is Nifty Bank trading at in terms of standard deviation from normal? And likewise, earnings. What's the non-financial earnings forecast? What is the financials earning forecast?
So if you look at, and I'm just going to give a slight backdrop as well, in the last few years, the bank's earnings were steadily decelerating. Now looking ahead for the next 2 years, the large private banks are expected to deliver about 15% earnings CAGR. Of course, the PSU banks will be lower. And the Nifty, as we stand today, we are forecasting it to be delivering low double-digit earnings CAGR. So earnings growth for the large private banks at par or better than the broader market. And when it comes to the valuations, Nifty is trading at about 18 times forward PE, which is about slightly above the average. On the other hand, if I look at the banking sector as a whole, they are trading at 10 times PE, which is one standard deviation below. And even within that, if I bifurcate between the private banks and the PSUs, private banks are trading at about 12.5 times 1 year forward PE. So similar or better earnings growth and cheaper valuations, which is where the backdrop for banking looks a lot more favorable, especially in the context of impending rate hikes as well.
That is a cast iron case you're making for financials. Thank you for that. Now let me come within the banking sector, and that's where I'm raising some issues with what you have argued. You have argued that the 5-year outperformance of PSU banks versus private banks comes to an end, and now you're seeing public sector banks at a compounded annual growth of 6% versus 14% for private banks. Now, what makes you so sure? 5 years is a very decent record of outperformance. And mind you, most of the analysts in those 5 years did not tell us that PSU, the good run of PSUs will run for so long. People thought it will be okay, 1 or 2 years. What makes you think that it will not surprise yet again?
Fair question, Lata. So, we need to just dissect this higher earnings growth and hence outperformance of PSU banks vis-a-vis private banks for the last 5 years. So if I look at the core PPOP growth for PSU banks in the last 5 years, barring 1 year, they were always trailing private banks. In all the last 5 years, the core PPOP growth of PSU banks was lower than private banks. But what was helping this PSU banks was a very significant acceleration in the non-core income. So just to put these things in perspective, the non-core income basically constitutes two parts. One is the treasury gains and second is the recoveries from return of pool. Now, both these items put together, they constitute 30% of PSU banks PBT. And if I have to contrast it versus the private banks, it is only 9% of private banks PBT. Now, the reason why we say that going ahead for the next 2 years, the PSU banks' earnings will now trail private banks is essentially premised on these 3 simple points. First, core PPOP growth was already weak for PSU banks relative to private banks. That doesn't meaningfully change. Number 2, the loan growth market share that the PSU banks were gaining in the last 2 years for the first time in many, many decades. Now we are saying that they will grow in line with the system. And the simple reason behind that is they have been drawing down on their excess liquidity rather very rapidly. So in fact, in our conversations, when I flagged that the SLR holdings of PSU banks as a percentage of their liabilities is now even lower than private banks, many people find it very surprising because they have been selling down this excess liquidity and deploying it into loan growth. And that is how they have been able to deliver those loan growth despite very weak deposit growth. FY27, my simple call is that the market share loss of private banks now stops. I'm not calling for private banks to gain any market share. And that's also an extension of reason that RBI is no longer constrained or looking at CD ratio, but is more focused on liquidity. The third and the most important point, which makes us feel confident that PSU banks' earnings will trail, is this non-core income. And even within that, I'm focused only on the treasury gains. So 15% of PSU banks' PBT, even in the last 3 years, was coming only from this treasury gains. The way the bond yields have moved in the last few months, it is amply clear to all of us that this treasury gains are now going to evaporate. And the sensitivity of this to the PSU bank's earnings is significantly higher. So a function of slower core PPOP, end of loan market share gain, and the dissipation of the treasury gains is why we think PSU banks' earnings growth will finally trail private banks. We are still not saying that PSU banks' recoveries will come to an end. They can continue for maybe another year or two. It's anybody's guess, but it's not going to accelerate. That's also clear. And within this construct, when factoring in all of these things, it tells us that PSU banks' earnings growth is likely to be 6% CAGR, whereas the large private banks are expected to deliver 15% earnings CAGR in the next 2 years. And the valuation-wise as well, the private banks have seen significant derating, and now they are trading at around 12.5 times forward PE. And that's
I take the point about valuation completely about private sector banks, but it is just that I'm not able to accept the 6% when State Bank just the other day is posting something like, 12% and 15% in terms of loan growth. I agree their margins were under pressure, but the 6% came as a bit of a shock to me.
What was the PAT growth, Lata, right?
PAT growth was bad. Yeah, PAT growth was...
in the end, all we care about is the EPS growth, right?
I agree. No, I agree. But what may constitute the turnaround for the private sector banks? See, there are significant headwinds for the economy itself. Growth is not going to be as good as we thought earlier in the year. And more importantly, it doesn't look like NIMs are going to be that good. Yes, there is a talk that there could be a rate hike, and we may get one later in the year, going by the way crude prices are. So that will be a relief, but that will be a relief for everyone. Do you actually expect higher NIMs this year, FY27, for your three private sector favorites?
So Lata, coming to the NIMs, in our numbers, we have not built any incremental rate action, be it a rate hike or rate cut. Having said that, if I look at the OIS rate, it is already pricing in about more than 100 basis points of potential rate hikes in next 12 months. But let's keep that aside for a moment. And if we just frankly look at what could be the NIM trajectory in absence of any rate action, rather than painting everything with the same brush, we have developed a very interesting framework which tells us bank-wise what is going to be the residual cost of deposit trajectory for each banks. And within that, for banks like Kotak and Bank of Baroda, the cost of deposit should start rising. ICICI is largely done. And on the other hand, some other private banks can see some further improvement, but that's not meaningful on cost of deposit side. The simple point here on a FY27 to FY26 basis, my margin forecasts are broadly flattish for the sector, but there is a clear divergence within the individual banks. We think that the likes of Kotak, Bank of Baroda will see margin compression, meaningful margin compression. The other three private banks which we prefer will be flattish. And some mid-sized banks who have got some recent capital infusion will see some margin expansion. But the discussion becomes a lot more interesting if we were to think about what happens when the rate hikes come through. Clearly, the private banks will be a bigger beneficiary rather than PSU banks because 50 to 60% of private banks' loan book is linked to repo. On the other hand, this number is about 35 to 40% for PSU banks. And as a result, when the rate hikes start to come through, private banks' margins will see a bigger leg up vis-a-vis the PSU banks. And that's an upside.
Yeah, go ahead. Sorry.
Yeah, and that's an upside optionality on our numbers, both for private and PSUs.
Okay. No, point taken. If the margins are going to be flat, the loan growth is the only reason, then we should expect private sector banks to get a leg up. And I think HDFC's traditional problems are also over, having to match their HDFC book with an additional number of deposits. That problem is over. Now they should deliver at least industry-leading or even better than industry loan growth. Point taken. Actually out of time, but a more detailed discussion as we get closer to the next result season. Let's see what the Reserve Bank delivers on June 5th. The consensus now is no... it's not even a consensus. The majority says no to rate hike, but it is not a consensus. Even now, there is a minority expecting a rate hike. So things can get interesting for the banking sector. Thank you very much, Rikin, for whetting our appetite. We have to wrap up on Bazaar out of time. Chartbusters off the break.
Amara Raja delivers strong revenue growth led by healthy volumes. Margin sustains at around 11% despite higher input costs. A one-time insurance claim also boosts the bottom line. Stock surges nearly 4%.
CNG prices hiked by 2 rupees a kg as distributors partially pass on the impact of higher input prices. Stocks of IGL and MGL rally close on 2.5 to 4.5%.
Suprajit Engineering reports an operationally strong fourth quarter. Stock up nearly 10% as the company posts record quarterly revenue and EBIT. Don't go anywhere because the management joins us shortly on Chartbusters.
Office Space Solutions' fourth quarter profit nearly doubles as strong demand from GCCs and enterprises fuel growth. The stock rallies more than 5%.
Container Corp down 5% as profits fall 10% in the fourth quarter. The domestic business is the underperformer. Revenues fell 5% while margins out there contracted sharply.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel and with me is Mangalam Malu. Hey Mangalam, markets holding on to good gains and it seems, the bulls will want to end the series with a bit of a flourish.
Absolutely, Nigel. It's a big move that we're seeing in the markets right now. Big given the context that we had over the last couple of trading sessions. And for me, the most important number right now is the India VIX. That's the one that should come up for you. Yesterday, after the markets rallying, the India VIX fell to a 3-month low. And today, straight off the bat, down about 5.5%, closer to 6% lower as well. That tells you that bulls are feeling a lot better today than they have over the last few trading sessions. But one stock which is doing extremely well is Suprajit Engineering. Good performance coming in. K. Ajit Kumar Rai, who's the founder chairman of the company, joins us now to discuss the numbers, but more importantly, the outlook going ahead as well. Thanks a lot for joining in, and congratulations on a very strong set of numbers that you posted. I was looking at some of the details that you've reported. The one thing that stood out is that SCS has turned EBITDA positive in the fourth quarter. You had guided for that. And it's double-digit growth led by cables and both electronic divisions as well. The question is whether this revenue growth continues for both of them. And secondly, in light of higher input prices, do the profitability metrics continue for them as well? Or do you have to pass it on to clients and you're speaking to them right now?
Good morning, and thank you for having me on your channel. Indeed, it has been a good quarter for us. I think just to touch base on that, one of the things that we had guided in the beginning of the year is that the insolvent entities of SCS that we have acquired will turn EBITDA positive. I think that guidance we have met. And that has been largely one of the reasons why the numbers for the Q4 has been good, with a run rate of 1,000 crore for the quarter. And EBITDA also growing pretty nicely. So that's good. In terms of the outlook, as you rightly said, the commodity price issues do affect the numbers going forward. But at the same time, we will also be approaching our customers for necessary price corrections.
Okay.
Typically, there is a lag in this, but we feel that we will be able to pass it on. That's why we have given a fairly, clear guidance for the year that we will grow in double digits, and that the EBITDA margins, thanks to the restructuring that we have done in our international operations, the turnaround of SCS entities, will lead us to increase our EBITDA margins from the last year's about 10% on a consolidated basis to about 12 to 13.5 or 14%. So it's a significant change. In the international operation, which was a single-digit EBITDA of 5-6%, will, I think, go towards 10, 11, 12% in the current year. So these are the things that is significantly changing the color of how we will operate in this financial year.
Okay, all right. Hi, Mr. Rai. Good morning. Good to see you. If I look at SED, that's Suprajit Electronics Division, over there you're clocking close to around 440 crores approximately on a quarterly run rate. Could you tell us what utilization levels is it at, and how do you see scaling up of this particular vertical?
You are talking about the electronics division?
SED, correct. Suprajit Electronics Division.
Electronics division, we are not at that run rate. I think we did about 160 crores or so last year.
160 crores, beg your pardon, sir. 140 crores for the quarter, 160 crores for the year. Yes.
Correct. So, the growth rate there would be very robust even for the current year. I think we expect to grow at 20+% at least in this year. And the EBITDA margins will be in the double digits. So it's one of our fastest growing divisions, although the base volumes the size is not that big. But we do expect continued robust growth in that business. And the same thing, I think, also applies for our controls division, which is our largest division, really speaking. That itself, despite the global business being, automotive industry being in flat growth, we still expect to grow in double digit with a significantly higher EBITDA margin. So I think the whole, outlook for the year changes with some of these underlying improvement in performance of some of our divisions.
So, Mr. Rai, so around 180, 190 crores is what you'll do on the SCD business, and you're seeing margins will be maintained at these levels. Is that correct?
Yes.
Okay.
Yes.
I want to focus on margins of two verticals, sir, particularly the domestic cables and Phoenix lamps. Their margins are a little bit under pressure. In quarter one, they'll be a little bit lower as well, because there is a compression on margins on both these two verticals. Or have you managed to pass it on?
Yeah, I think on the domestic cable division, it's more optical change that you're seeing as reduction in margin. The underlying cable business is on a very strong footing. We are delivering the same EBITDA margins. But what happens in the domestic cable division, our other expenses of corporate as well as our Suprajit Technology Center, these are the two significant expenses which has been actually growing due to our STC expansion and product expansion, newer projects that we are launching. That sits on domestic cable division. So I think that is the reason why you would see slight tempering of the margin. It is not because of the division's performance, it's because of the other overheads relating to the overall group, sitting on top of the domestic cable division. Now, coming to Phoenix Lamps division, you are right. I think last year has been a slightly muted year. Top line growth has been actually slightly negative, and so is the margin. It's largely due to, as we have said in our press release, I think the Trifa brand sales have been down for the year, thanks to the Middle East conflict, and also a little bit of a downtrend in the aftermarket. But as we see this year's number, I think with the insolvency of one of the major global halogen lamp manufacturer, we are working on significant new projects. So we expect this to be completely reversed in this year. And added to that, the world's largest, retail, distribution entity has started buying, and the initial pilot lots have been very successfully launched. And this year, that business is expected to multiply. And that will also add to the overall growth of Phoenix Lamps division. So we expect a pretty good Phoenix Lamps division this year.
All right. Good performance on Phoenix Lamps division this year as well. Just two numbers before we let you go, Mr. Rai. One thing is on your SCS business. It's broken even in the fourth quarter. What is the likely margin trajectory from here on? At what point does it settle? That's one number. And the second one, you've guided for double-digit top-line growth. Can you be a little more elaborate on that?
On the controls division, of which now SCS will be a part of it, I must say this to all the listeners that controls division works as a single entity for our entire global operations. So that means to say that we could manufacture any product anywhere within the group, whether it is LDC, SCS, Suprajit Automotive, Unit 9, Westcon, wherever it is. And the customer will be delivered from another operations of our own group. So the distinction between these entities of SCS and LDC no longer exists. So it works as single entity. And as we said, Suprajit Controls division, including SCS last year, was a 6% EBITDA business, which will go to double-digit comfortably this year. That is a significant change in our international operations.
Okay. And the revenue? Will it be mid-teens, high teens? Double-digit is, so it's a big number.
I think, international business, they say in auto component business, anybody doing 10+% is an excellent business. So we are talking about 10 to 12%.
Okay, very quickly, sir, what about leverage in the books? The gross debt number has perked up a little bit. Could you tell us what is the number?
I think our total debt, including working capital and long term, is about 750 plus crores.
Okay.
Our overall debt to equity is 0.5:1, and long term equity debt to equity is about 0.15. So it's we are very comfortably leveraged.
Okay, 750 crores, got that. And that SCD business that will do 180, 190 crores, that will be at what utilization levels? At peak, what can it do?
At the electronics division, I think we are talking about, as I said, about 20-25% growth. So
what is the utilization level, sir?
Grow by another 20-25%. But what is more important is that the outlook we have for the next 3-4 years is very, very significant. Significant new businesses have been won. So in fact, we are now planning on an expansion of our capacity at Suprajit Electronics division. The utilization of our 2 of our SMT lines probably will be hitting peak by end of this year or beginning of next year.
Okay.
So not only that, even overall infrastructure of Suprajit Electronics division will be completely upgraded and scaled up to the next level of our business at the electronics division.
We appreciate you joining in, sir. All the very best. Thanks for giving us a brief preview. Analysts are waiting to ask you some questions on the con call as well, but you've given them a bit of a base that they can work on. Thanks for joining in.
Thank you.
Well, time to slip into a short break. On the other side, we have the management of Ganesha Ecosphere that's waiting for us. Welcome back. You're tuned in to Chartbusters here on CNBC TV 18. As promised, let's focus on Ganesha Ecosphere. The company delivered actually a good set of numbers. The stock has seen some weakness though. So let's find out more with regard to what's the way ahead. We're joined by Mr. Yash Sharma, the director of Ganesha Ecosphere. Hi Yash, good morning. Good to see you. Well, I believe, after a good showing in the second half of last fiscal, you're expecting an EBITDA number of around 225 to around 250 crores for the coming year. Could you break it up for us? How much of that will come in from the RPET business and how much of it will come in from the traditional business? Please go ahead.
Hi, Nigel. Good morning. Thanks for having me here again. So yes, in the overall EBITDA guidance of 200 to 250 crores, we are expecting, so we have two parts, the traditional business and the new business. The new business, which is our subsidiaries, involves the RPET capacity, the value-added filament yarns, as well as the value-added fibers, where we are performing, much better margins than our traditional business. So from traditional business, we are expecting overall EBITDA of about 65 to 75 crores for the year. And from the new business, we are estimating between 150 to 170 crores of EBITDA overall.
All right. And what are the kind of volumes that you're factoring in from both these businesses over the next year?
The traditional business volume should remain flattish because we're not having any capacity expansions on that side. Whereas in the subsidiaries, we are expecting a volume growth of about 50% to 60% for the current year.
Okay. That would be entirely led by the regulatory certainty that has come by, right?
That's right. The regulatory certainty and the on-stream coming of our new capacity expansions that we've already put in place and the brownfield expansions which have come online already.
All right. Yash, if I got that number correct, from the RPET and the other subsidiaries business, you're expecting 150 to 170 crores. So the newer business, which is the margin accretive business, will do more EBITDA than the entire company did in the past year. Is that correct?
That's right. Yeah, that's what we're expecting.
Got it. So let's focus on that business then, because that's the margin accretive business, and you've been focusing on increasing your, capacity there as well. I'm looking at your presentation. You're at around 64,000 tons. That's post the expansion that you're going to be doing, I think, in next month or in the coming few months. Could you tell us how big is the industry? The RPET industry is how big? What kind of a market share do you have? And given that you're now going to be focusing on that business and increasing capacity over there, what kind of market share are you looking at?
So, Nigel, the overall RPET industry is dependent on the regulatory usage of the mandatory RPET content in the rigid packaging applications. So currently, India uses about 1.4 to 1.5 lakh tons of overall PET in the rigid packaging applications. So 40%, which is the mandatory content of that, translates to about 400,000 tons of RPET required to be used in this industry. The current capacity in India stands at 2.5 lakh tons, which will very soon increase to about 4 to 4.5 lakh tons with the new approvals coming in, including our capacities coming in. So as of today, Ganesha is at about 20% of the market share in the RPET industry, and our long-term targets are to increase this market share from 20 to 30% in the long term.
All right, 20 to 30%, 25% would be more realistic, and that happens by 2027?
We are expecting to achieve that in the next 3 to 4 years, so by 2029, 2030.
Got that. Just a two-part question on this itself. With what prevents others from joining this? Because if that were to happen and everyone's committed to sustainability, then your moat gets arrested. And the second part, if the EPR rules tighten, then scrap prices inflate materially. Does that impact your margins? Because then everyone's chasing the same scrap.
So yes, definitely already many others are already joining in this business, and I think the size and scale that we as a country are at of using PET for rigid packaging, we need multiple players also to cater to this capacity and the demand which is upcoming. We're not really afraid of that. Ganesha differentiates on a couple of factors and has a definitive moat in the industry in terms of the supply chain access, the supply chain capacity that we have created for collecting more and more waste across our businesses, and then producing the RPET at a very, very good quality level, which is required by the global brands for their food contact and beverage packaging applications, and doing it much more efficiently than our competitors today, which puts us in a very, very good advantageous position to capture a strong market share in this industry. That's what differentiates us. And going forward, see, I think the scrap prices are really dependent on demand and supply. And looking at the rPET business, how it really works is that the industry is able to pass on the increases or decreases in the raw material prices to the end customers in the packaging segment. So I think that honestly, there's a pass-through mechanism which helps us really preserve our margins in the long-term agreements.
And demand is strong enough in this rPET business. Do you have enough orders for the next visibility for 12 to 24 months?
Yes, we have already, good commitments and good understanding with our long-term customers, which we are already working with for the last 2 years, and we are slowly increasing our volumes, supplies and capacities as well, in accordance and in conversation with our customers. So we have very good visibility for this year, and we are also already in talks to finalize for the next year as well.
Okay, got that. Final question: the stock has come down considerably from the top. You had taken warrants earlier. Is there a temptation at the sub 1,000 rupees to go ahead and, in fact, increase some stake in the company?
Definitely, Nigel. I think the stock prices are at a very, very, good price point today. We have already taken warrants last year, and we've very recently converted all of those warrants into equity at a price of 1,035 already.
All right, 1,035 already. The lows on the stock in the very recent past in Jan itself was closer to 700, sub 700. Now has seen a spike to almost 1,000, but still over 50% below its earlier peak of nearly 2,300 odd rupees. We'll take your point. Thank you, Yash, for joining in and giving us your details, but wish you good luck. And let's see whether you go ahead and, get to the numbers that you've guided the street out here as well. Take a short break, come back, get you more on the markets and a lot of stock-specific action. Keep it with Chartbusters. Welcome back. You're watching us here on Chartbusters as we speak. This is the state of the market right now. On your left, the Nifty and Sensex marginally in the green, but what happens on the right will impact what happens on the left as well. The rupee has weakened a tad from yesterday's level of 95.2 thereabouts to about 95.4, and that's because Brent, that too, has increased a smidge from sub 97 levels, 98 levels to now sub 99 levels. So those are factors that we will be tracking as we go along trade. With that, we wrap up on this edition. You stay tuned to CNBC TV 18. Good morning. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Manglam Malu. With me, Ritu Singh joining in from Bangalore. It's looking like a decent screen on the frontline indices at least. The Nifty is up 45 points, continuing its gains from yesterday. The Nifty Bank up around 200 points as well. The India VIX falling to levels seen last 3 months ago should make bulls feel a lot better over the last two trading sessions. It is the end of May series today, so there will be expiry that will play out in the last hour. The only couple of flies in the ointment. Rupee has weakened a tad, 95.4 from 95.2 levels that we saw yesterday. And the other part is Brent as well. From levels sub $98 per barrel, it's moved closer to $99 per barrel. So those will be important imponderables as we go along. Hi, Ritu. Good morning.
Hi, good morning, Manglam. Those macros are reflecting what's happened, over the course of overnight, the US strikes into Iran. That spooked the markets a little bit. So it's been a bit of a cautious start. But that said, the Nifty is holding on to that 24,000 mark. And let's see, with the expiry, where that goes from here. But apart from that, the India VIX that you spoke about, that's also down again today. That's good, which is showing us also the market breadth. You have more than 2 stocks advancing for every 1 stock that is declining. The IT pack is holding up. The Bank Nifty above 55,000, up 200 points as we speak. The broader market's also doing well. What's lending support to the Nifty is, your names like Coal India today, Infosys, HDFC Bank, even State Bank of India. But on the flip side, what's exerting some bit of negative pressure is names like Bharti, Airtel, Reliance, Sun Pharma, and so on. Energy pack doing well, metals doing well, media, IT, all of that is holding up. The pharma pack, though, seeing a bit of a red on the screens as we speak. But as always, let's put the spotlight on the top movers and shakers for the day. And Hormaz Fatakia joins in with that list.
It's a good start, and the bulls will take that after the 300-point up move that we saw yesterday. It's a 100-point range, yes, but we are at the highest point of the day as of now, nearing that mark of 24,100. The positives, as you just highlighted, the VIX is down. Oil prices are not falling, but they are not rising significantly either. So the bulls will take that as well. So take a look at the metal names. They are the ones that are the top performers in today's session. Vedanta is now up 4%, and incidentally, the stock is its first full month after the demerger, and it's turned out to be the best month since the stock had since 2024. So SAIL, Hindustan Copper, Welspun Corp, all of them doing well. Some earnings reactions today, not many, but the ones that are on the extremes as well. Travel Food Services is up almost 6%. IFB Industries is up 14%. Office Space Solutions has given up most of its gains. At one point was up 14-15%, is now down to 6%. And Techno Electric on the negative side, 12% lower on the stock. You take a look at the newsmakers today, some more earnings reactions, but Balu Forge is one of them. That stock won an order earlier in the day. The stock is up 7.5%. Campus Activewear after its results, and Concor too, a negative reaction, 5% lower. Now, the Tata Group companies in focus today after the board meeting is underway for Tata Sons, and most of these names are doing well for themselves. The stock gains anywhere between 2.5% to 5% in today's session so far. And lastly, stocks at 52-week highs today. Lloyds Metals, a positive brokerage note that came in earlier in the day from Nomura, 2.5% higher on the stock. Adani Power as well at a 52-week high, and Acuitas Chemicals continuing to make new highs as well, 4% higher on that stock.
All right, Hormaz, thanks very much for putting the spotlight on those. But let's shift focus back to the macros, because after 3 straight days of gains, the rupee has opened down about 0.16% today. It is now trading at around 95.41 to the dollar. That's down almost 20 paise as we speak. So, markets are really reacting to the news of the US strikes in Iran. That caused the crude prices to jump more than 1%, and that's putting some downward pressure on the rupee today. Crude prices at about 98.46 to the dollar. Now, RBI also has scheduled a $5 billion currency swap auction today to boost liquidity. That's also another key trigger for the markets to keep in mind. But Jefferies has put out a note now on the rupee, arguing that it is not the current account deficit, but rather the all-time low capital flows that is the main culprit for our weakening currency. Now, they argue that India's external balances are still manageable, but they warn that persistent FPI exits are now becoming the bigger macro risk. Joining us now is Mahesh Nandurkar, MD and Head of India Research at Jefferies India, who's authored this report and is with us now. Mahesh, thanks very much for speaking with us. And let's start with that central argument in your report on capital flows pressuring the rupee more than CAD. Have the markets not fully grasped this kind of a shift?
Yeah, hi. Thank you for inviting me here. Yes, clearly what we have always known is that India is a current account deficit country, but that has always been more than compensated for by the capital inflows or the capital surplus. And if you now look at the numbers for the last 2 to 3 years, India's current account deficit is actually very well behaved, well under 1% of GDP. So that's on the lower side of the historical range. But what is really the problem is the capital surplus. And as compared to almost 250 to 260 basis points of GDP, or 2.6% of GDP, which was the average capital surplus for the last 10 years. Last 2 years, which is FY26 and FY25, the capital surplus has gone down to just 0.5% or 0.6%. So that's a big shortfall in terms of capital surplus. And one of the biggest contributors to the capital surplus going down is the outflows that we've seen by various entities, but routed through equity markets. And those various entities are the foreign portfolio investors, foreign promoters, who have sold down stakes in the listed Indian companies, or a few that have underwent IPOs. But once again, it means that the promoters have sold down their stake through the listed entity route. And finally, the private equity investors. So if you put all these three types of entities together, we've seen almost $80 billion of capital flight over the last 2 years. And and that, I think, is one of the key reasons why the currency is under pressure.
Right. Mahesh, the RBI governor says that the Indian rupee is undervalued, and your report says the same. Has the market simply become too negative on INR at this point? What's the outlook from here on? What changes it?
Definitely think that the currency has corrected enough, and as you rightly mentioned, our analysis shows that barring the global financial crisis as an example, the rupee has usually stayed strong, or as usually kind of tended to bottom out at levels like these, and levels like 91 or 90, which is almost 9 to 10% undervaluation for the currency, definitely looks attractive. In the context of historically over the last 10 years or so, the rupee has actually on an average been at 105 level, meaning like 5% overvalued. So the rupee levels are looking attractive. And if we really end up seeing some kind of an end or some kind of a resolution to the Middle Eastern war, then I think there are reasons to believe that rupee can actually strengthen from here on. So to that extent, I would say that the outlook for rupee looks interesting. The only other thing that we need to keep in mind is that the capital flight, especially from the equity markets, is a function of one, what's happening in the other Asian markets or happening in the other global markets, wherein the dominant investment theme for global capital is actually AI. And at this point in time, the global capital is actually chasing this theme, this AI as the investment theme, in obviously the markets like US, but also the other markets like Korea and Taiwan. So the second leg, or the second factor that we need to keep in mind outside of the Iran war, is what happens to AI as the global investment theme. And if that theme continues to remain very, very attractive, then on the foreign portfolio investor side, we may not necessarily see any quick reversal in the immediate future.
All right, so the AI trade is another factor to keep in mind for the rupee, but you've also linked part of the pressure to this downside of SIPs. Essentially, you're saying strong domestic inflows have enabled foreign investors to exit, but even at these valuations, these rich valuations, you think even strong SIP inflows could eventually struggle to counter the sustained outflows that we're seeing?
I mean, I would definitely say that the ease with which the foreign capital has been able to, sell the Indian holdings is because the domestic sources are really absorbing that selling with ease, and because of which the valuations haven't really gone down enough. If you look at in a pre-COVID era, this type of foreign selling would have resulted in market correction, and at the lower valuations, then the foreign selling goes down automatically. But that automatic correction has not happened over the last couple of years because of the strong domestic flows, which, as I said, includes not just mutual funds, but also the other kind of flows like provident fund and insurance schemes as well. So my sense is that given the valuation differential, or let's say the valuation premium that India still enjoys today versus the rest of Asia. I mean, Indian PE multiples are roughly at about 20 times, whereas the rest of Asia, the rest of emerging market multiples are still in the range of around 13 to 14 times. So India still trades at a good 60 to 70% premium to the other emerging markets. So my sense is that if the strong domestic inflows sustain, then I think we might see some some more of foreign capital exit as well.
Right, and you've highlighted that net FDI too has collapsed in part because of promoter exits, PE sell downs, and outbound Indian investments. Is that the more worrying trend here for India? Are foreign investors basically telling us that valuations in India have just become too expensive to commit fresh long-term capital? What will it take for foreign flows to come back? I mean, that's the million, billion, whatever number you put, dollar question.
Sure, that's a very good question. So, see, at this point in time, or maybe actually at any point in time, the foreign investors always have various options, right? I mean, they can invest in India, they can invest in China or Korea or Taiwan or any other part of the world. And clearly what has happened, just to kind of recap what we just discussed is, AI as an investment theme has driven strong corporate earnings growth in many of these markets. I mean, if you look at the EPS growth in Korea or EPS growth in Taiwan, those numbers are actually upwards of 50 to 60% in US dollar terms, right? So in the context of very, very strong corporate EPS growth, and that too coming in at a valuation which is actually much lower than where the Indian P multiples are. So that has created risk reward to actually move away from India into some of these other markets, which is what exactly these foreign investors are exploiting at this point in time. And that arbitrage, or I would say that that risk reward equation is still unfavorable for Indian equities at this point in time. Because our EPS growth, or Indian corporate sector EPS growth, which is say between 13 to 15% in rupee terms. In dollar terms, that number would be lower because of the currency depreciation, but in rupee terms, that number is about 13 to 15%. And dollar terms, that number would probably be in like single digits. Doesn't compare favorably with, as I mentioned, this 50, 60% type of EPS growth in dollar terms that we're seeing in the other markets. And that imbalance has also been created because, as I mentioned, AI, and because that AI, in turn has driven the upward revision in memory pricing, DRAM pricing, which has been leveraged by several sort of companies, large companies in Korea and Taiwan. So my sense is that unless and until that equation changes, or AI as the key investment theme changes, the risk reward will probably continue to be sort of not so good for Indian equities. If one looks at it from the lenses of a typical foreign investor.
Take that point, just to conclude the thoughts on the equity market outlook from here on, the fuel price hikes coming through, the risk of tighter rates returning, many people now talking about that in the market as well. Do you think the market may have to start factoring in some downgrades? The near-term outlook for the markets, do we expect, this range-bound kind of a trade, similar kind of returns, or where does the market go from here?
Yeah, we have seen some earnings revisions, but that's quite natural, right? With the oil, the way the oil prices have moved, and the kind of some of the shortage that we've seen on the gas side, etc. And we also seen the statements made by the Prime Minister, advising some sort of austerity as well. So all these kind of things are bound to drive some earnings revisions, and which are happening. So in fact, when we started this financial year, we were looking at almost 16% EPS growth for FY27. That number has come down to in the range of 13 to 14% as we speak, and maybe 1 or 2 percentage point of further revision on the downside is likely, but that's not too alarming in my view, because even an 11-12% EPS growth on an absolute basis is actually a pretty respectable number in the context of what has been happening in the Middle East. So my sense is that yes, I mean, to answer your question, yes, earnings revision on the downside is happening, but the underlying strength or the underlying developments in the economy or on the corporate earnings side are on the positive side. I mean, we are seeing that in the form of credit, growth improving, and we are seeing this in the form of the auto demand growth and certain other consumption demand growth. Drivers or indicators are looking reasonably good. But yes, there is this Iran factor that is driving some EPS revisions on the downside. Hopefully, we will see end of the hostilities there sooner rather than later.
All right. Thanks a lot for joining in. Quite a conversation this, but let's see what happens from here on. We all hope for the foreign inflows to return. We all hope for the rupee to appreciate. And we all hope for things to be a lot better on our capital account and current account deficit front as well. With that, we'll take your leave, but talk about what's impacting all of this. It's the bond market, right? We have Manisha Gupta joining in on the other side.
Welcome back. As promised, let's shift focus to the bond market action. And Manisha Gupta joins in with that. Manisha, bond yield staying above that 7% mark. What's going on in the market?
Oh, well, yes. It's a relatively calm market for a second straight day for that, for sure. The geopolitical front, we're not hearing anything very, very strong or aggressive therein. And the crude oil prices have continued to stay below $100 a barrel as well for a third straight day. And that in terms seems to be keeping the market steady there. But as you said, traders and most of the banks do not expect that the 10-year treasury yield will see coming off in sense of 7% there, unless there is a peace deal that is signed and on the dotted line between US and Iran, we perhaps are going to be staying with those numbers therein. Having said that, the weekly state bond auction is something that seems to be weighing onto the prices right now. The states are expected to raise something like $134.5 billion through bonds in the day-to-day. The auction size absolutely is lower than what the street was anticipating at $239 billion. And that seems to be indicating that there's going to be, for the June quarter that is, and that indicates that perhaps there's going to be stronger and better demand therein. Also, when you look at the spread between 10-year yield in Treasury and the Indian 10-year government, that seems to be quite narrowing there. Historical average has been 450 basis points. We seem to be trading at 244 basis points. Yet another reason, because of this narrow yield differential, that has reduced India's debt attractiveness there. When it comes to private bond issuances, there are a couple of companies looking to raise money via the debt way. One is Kotak Mahindra Prime Limited. They are looking to raise 7 billion rupees. And the other one is Bajaj Housing Finance. They are looking to raise nearly 20 billion rupees as well via the debt market therein.
All right, Manisha, thanks a lot for that. We'll take a short break, come back. Market fundamentals with our market expert will be on the other side of the short break. The market continues to hold on to 40 points gain on the Nifty, a little under 24,070. The Nifty Bank doing well as well. Take that break, come back.
एमपी देख लीजिए, राजस्थान देख लीजिए, आप कहीं चले जाइए, आज हर साउथ इंडिया में आप चले जाइए, लोग हिंदी में बात करना एक गर्व महसूस करते हैं। और आप लोगों ने अगर मदद नहीं की होती तो ऐसा नहीं होता।
सर थैंक यू सो मच। मैं तो खुद इंग्लिश चैनल से हिंदी चैनल में ट्रांजिशन किया मैंने, और मैंने बिल्कुल हिंदी जर्नलिज्म की पावर देखी है। बट थैंक यू सो मच, आपने इतने शानदार शब्द कहे हमारे लिए। लेकिन ये मंच अब आपके लिए है, और मैं आपसे जानना चाहूँगा कि हम मेक इन इंडिया की बात कर रहे हैं, विकसित भारत की बात कर रहे हैं, देश की एनर्जी सिक्योरिटी की बात कर रहे हैं, तो उसमें आपके हिसाब से अब तक कितनी प्रोग्रेस हुई है? 1 to 10 में आप कितने उसको स्केल पे रखेंगे, और आगे क्या करने की ज़रूरत है?
देखिए, हम लोग कंफ्यूज हो जाते हैं कि एक तो पैसा कमाना पैसा कमाना एक दोष हो जाता है। ये एक हमारे हर चीज कहीं ना कहीं पैसे से जुड़ी हुई है। ये पैसे से जुड़ी हुई, अगर हम देखें तो हिंदुस्तान में एक ऐसी कोई भी चीज़ नहीं है जो हमारे पास नहीं है, चाहे वो ज़मीन के नीचे हो चाहे ज़मीन के ऊपर हो। हमने जब हमारी आज़ादी हुई, हम लोगों ने एक साथ हम लोग जुड़ गए, और जो हम लोग अनाज इंपोर्ट करते थे, खाने पीने की चीज़ इंपोर्ट करते थे, हम सेल्फ सफिशिएंट हो गए, क्योंकि हर आदमी साथ में जुड़ा उस आंदोलन में। हम जमीन के नीचे सारी दुनिया चाहती है कि हिंदुस्तान एक जहाँ की मैं फ्लाइट से उतरा हूँ तो मेरा माइंड 2-3 मिनट टाइम लगेगा, जहाँ पे कि मार्केट है, हिंदुस्तान एक मार्केट है। हमारे मिडिल ईस्ट वाले का एक ही काम है कि तेल को, गैस को हम हिंदुस्तान में दें। गोल्ड काउंसिल का एक ही काम है कि हिंदुस्तान में गोल्ड प्रोड्यूस नहीं हो। गोल्ड जितने भी मिनरल्स वाले हैं, चाहे वो ऑस्ट्रेलिया में है, अमेरिका में है, कहीं भी हैं, उनको हिंदुस्तान 150 करोड़ आबादी वाले लोग जो आगे बढ़ रहे हैं, उनको लगता है कि हम मार्केट इसको बनाएं। और ये जितने भी गलत ढंग के जो NGOs हैं, लोगों में कहीं ना कहीं तकलीफ़ें पैदा करें, हमारी ब्यूरोक्रेसी में, हमारे पब्लिक सेक्टर में कहीं ना कहीं कुछ ना कुछ हो रहा है, जिसकी वजह से जो हमारे पास है उसको हम, जैसे हमने ज़मीन के ऊपर किया, वो का वो आज आप विश्वास कर सकते तो $50 में हम फॉरेन में भेज देते हैं वो इंपोर्ट करने के लिए, और उस दुनिया में वहाँ पे लोगों को रोजगार मिल रहा है क्योंकि वो उसका प्रोडक्शन कर रहे हैं, और हम हिंदुस्तान से वंचित हो जाते हैं। हम अपने आप में ही अपने दुश्मन हो जाते हैं। उसमें जितना भी हमारी इस सरकार ने इतना काम किया है और इतना आगे बढ़े हैं, अब ये बहुत इम्पोर्टेंट है कि एक लक्ष्य होके हम अपनी ज़रूरतों की जितनी भी चीज़ें हैं यही हम पैदा करें।
All right, that was Anil Agarwal. Insightful answers out there. Commentary coming in on, making things in India. CNBC Awaz Bharat exclusive. What we'll do is we'll get you some important comments from what he's saying with regards to business going forward. But for now, we'll take a short break and focus on the markets. The Sensex has just moved into the red as we speak. The Nifty too marginally off highs. So let's see where that goes along. No problems with the Midcap index. The Sensex chart comes up for you. We've seen that dip marginally into the red. What is it that has taken it lower just in the last few minutes? Well, we do have the PSU banks. BPCL is lower. The PSUs are lower. And we've seen some, decline in SPI as well. So all these indices, which are seeing some bit of a decline, including OMCs because of a mild rise in crude prices, we've seen the Sensex dip into the red and the Nifty come off highs as well. Take that break, come back, focus more on the markets and a lot of individual stocks. Welcome back. You're watching us here on Trading Hour. Perfect time to actually get you the FNO update of the day because the market's marginally off highs. We have the Sensex, which has moved into the red, and even the Nifty, which has moved off highs, largely led by the Nifty Bank. No problems with the Midcap index. Let's split this into two. What's working for the market right now and what may be a bit of a pressure point at higher levels. What's working is that the broader market is doing well. The health of, the advanced decline tells you that the bulls are feeling a lot better today than what they have felt over the last few days, including yesterday. They were, the advanced decline was fairly well positioned. And then you have the India VIX, which is at more than a 3-month low as well. So these are factors that are working for the market. What may be putting pressure at higher levels is the fact that the put-call ratio just before the market fell from highs moved to around 1.31. Typically between 1.25 to 1.31 is where that tops out, and now that's cooled off a little bit to 1.22. And the macros, we spoke about this at the start of the show. Brent has inched marginally higher and the rupee has weakened a tad as well. So those are factors which may be putting some lid on the gains that we're seeing in the frontline indices. 24,000 put and 24,050 put, both of them fairly well written in today's trading session, tells you that despite the market having fallen from the highs, we will see some strong support at the 24,000 mark, a level which we crossed yesterday and now becomes a psychologically important mark to track. But at higher levels, 24,100 call. Those writers are fairly active as well. Premium of 20 rupees telling you that around 24,100, 24,125, we might see some supply come in for the market as well. So narrow range after a big up move. So the range has consolidated, which is not particularly bad ahead of expiry.
All right, Mangalam, thanks very much for setting that up for us. On that note, let's go across to actually Rohit Srivastava, the founder of India Charts and Strike Money, who's joining us now to discuss these market fundamentals and his top sectoral picks. Rohit, thanks very much for your time here. We appreciate it. For the markets, it's been pretty volatile. Now we're holding on to those 24,000 kind of gains. But where do you expect the markets to head from here? I mean, those who've been waiting on the sidelines to buy the dip, is that window now closing?
Thanks, and a pleasure to be on. And what I think is that the index has possibly bottomed out at the lows that we made in the month of May. So we did get a pullback. I think the extreme bottom still remains the one we made on the 2nd of April. So we've moved up from there, made a higher bottom here in May, and have started another leg to the upside. So I think this is a slowly progressing bullish market. April. The speed may be making us feel, a little bit concerned. Maybe the news flow is not exactly helping. But if you see the strength of the broad market, it is a sign that you are, in an uptrend. Because when you see strong strength in the broad market, the market internals come in after a bottom and a rally, it's usually a sign that, monies and liquidity started to flow right back into stocks. And that's a very good sign. So I think eventually the Nifty does take out the high that we made in April, which is close to around 24,500, 600. And we should go well beyond that 24,600 mark eventually and towards 25,800, I think, in the months of, June and July.
Right. If I look at, the Nifty Bank and some of the technicals, yesterday, it did, after that big up move, cross the 20 and the 50-day moving average, which were proving to be resistances for a very long time. Do you believe that after this, despite the near-term volatility that we're seeing, the road opens to levels upwards of 57,000? Or maybe yesterday's crossing was just a flash in the pan?
No, we've definitely opened up to higher levels. Yesterday's cross just doesn't go above the averages. We even have if we can take a trend line from the high we made around the 21st of April, down to the top we made on the 7th of May, then we closed above that. So that's a very clear breakout from the downward trend that has happened. We would be looking at around 60,700 as the next target over the 1 to 3 month kind of time period for the Bank Nifty to achieve.
Rohit, that's the banking pack. What about IT? The other big one in the market. Last time again you were on the channel, you'd spoken about some of the risks associated, and we've been hearing from many people. But have we seen the bottom? Is there further downside from here? How do you expect it, to behave in the near term?
I put it in two parts. One is that if I invest in the IT sector with a 2-year, 3-year perspective, I'm not sure whether I can really beat the Nifty. In fact, if we just look at large cap IT or the IT index relative to the Nifty, even for the last 2.5 decades, it has underperformed. We haven't gone, the ratio chart doesn't even go above the Y2K high. So that's been the typical performance. IT does come in as a defensive play when markets are weak because they still have earnings growth. But the slowing of earnings and the higher valuations we were giving it have started to cool off because of the AI trade. And I don't think that has ended. I can't see clear trend reversals on most of the IT stocks, so I don't think I'll start betting on them. It's possible that because the markets pick up, you end up getting a trade. It's not like in a bullish environment, you sometimes end up lifting all boats. So you can end up getting a trade on the upside in IT, but I think still be in a downtrend and eventually end up being sell on rise. So
Nifty Bank, we've discussed IT. The third one in the pack obviously has to be Reliance with the kind of sheer weight that it has on the frontline index. Typically around this period of the year is where we see some traction build on the stock because it's ahead of their annual general meet as well. So fundamentally it ties in too. Where the stock is positioned right now, 1362, it's a little under the 20 and the 50-day moving average and fairly under the 100 and 200-day moving averages. But it's not too far away. One big up move can take all these out. Do you think that's in the offing?
So we can just look at how it has moved since March. Initially we made a bottom at around 1290, and after that we have made a second bottom at 1311. So that's a higher bottom. And in the recent sell-off, we were actually watching the 1311 very closely because if something had to go wrong, we could have broken 1311 last week when bond yields were rising and there was risk in the markets. And fortunately, it did not do that. So in terms of trend, what we call that is a higher high, higher low structure, which is not broken. So therefore, on a classic Dow theory trend, it remains bullish. Our own RMI proprietary momentum indicator is bullish on the weekly charts, and on the daily charts, maybe giving a bullish crossover today itself if we close around the current levels where the stock really is trading. So I think overall it is looking like slowly turning from down to up. There's not been any trend reversal to the downside since the bottom in April.
Rohit, quickly, on the PSU banking space, a bit of a pressure these last few days because of bond yields staying high above that 7% mark, and we've seen the PSU banks react. Any thoughts on that, in particular SBI as well?
So yes, PSU banks led by SBI were showing considerable weakness. It does make us think as to whether the PSU bank trade is really coming back or not. But I wouldn't look at further downside in SBI. I think most of the decline looks like it may be done. But having said that, within banking, I may have a shift in preference from PSU banks towards, the private banks and NBFCs, and that also the second line of private banks and NBFCs.
All right, Rohit, thank you so much for joining us here with your thoughts. Pleasure having you. We'll sip into a short break on that note, but up next, we're going to be joined by Siv Ramakrishnan Ganpati of Gokaldas Exports on their fourth quarter numbers, so stay tuned for that. Welcome back. You're watching Trading Hour. Let's focus on Gokuldas Exports. Their shares have slumped in trade after posting what was a weak set of fourth quarter numbers. We're now joined by Siva Ramakrishnan Ganapathy, the Vice Chairman and MD of Gokuldas Exports, to talk more about the quarter that's gone by and the way forward. Thanks very much, Mr. Ganapathy, for joining in here. You know, typically fourth quarter is the stronger quarter, but you've reported profits that are down almost 32%, despite a full year revenue growth as well. What's hurting profitability most right now? And, on the whole, what's happening in the US and the geopolitical tensions there? To what extent has the situation stabilized? And, again, to what extent is the Africa book, your diversification strategy working, against what you have in the US and the slowdown that you're seeing there?
Okay, good morning. There are many questions here. I'll answer them. See, if you look at the fourth quarter numbers, we've had US tariff impacting us for a significant part of the fourth quarter. So we were managing customers by giving them discounts to share the tariff burden. If you recall, the 50% penal tariff was prevalent well into mid-February. So until that period for exports, we were managing with giving some price discounts to our customers. Post that, we have normalized our pricing. So a significant part of our fourth quarter revenue considers that additional burden, which is why fourth quarter margins took some bit of a hit, which is no longer valid post middle of fourth quarter. So if you look at the revenue for fourth quarter, it is it's as high or a notch higher than the previous fourth quarter. And the reason for that is we have managed to keep the business, we have managed to grow the business regardless of the high penal tariffs, which was prevalent in fourth quarter. So the company, on the contrary, in my opinion, has managed to address some of these significant concerns which was impacting India. As far as the Africa business is concerned, fourth quarter was a strong performance in Africa. That performance momentum is going to be maintained, and we will develop further on it. In fact, the performance is going to improve quarter on quarter linearly in the quarters ahead. So in FY27, we'll see Africa operations and its profitability bounce back pretty strongly in the year ahead. So overall, I would say, we did manage even for the whole year, we faced a humongous amount of headwinds in terms of penal tariff. As you recall, 70% of our exports go to the US, and that was impacted by a 50% tariff, which was only applicable on India, not to any of our competing countries. We managed that. We grew our revenue despite that, and we held our margins. In fact, if we adjust our margins for the kind of tariff burden share or tariff discounts that we offered, our margins are more or less intact. So that's how we manage the business. And now that the tariff is off and there's a level playing field across the world, we have started, performing strongly again.
We take that point. You've done well despite the headwinds. Shiva, I just had a two-part question. One is what proportion of FY27 orders have been locked in? How many of them are FOB? Because, the transport costs, etc., have increased a fair amount. And secondly, while you've got some, reprieve when it comes to tariff, the other kicker is currency as well. So what's your hedging policy out here, and how much benefits accrue to you because of the weaker rupee?
Sure. So almost all of my revenue is FOB. So the entire, transport burden is on the customers. However, inbound transport, if we have imported raw material like imported fabric, imported trims, etc., those costs are borne by us. So of course, there is some degree of cost pressure thanks to petroleum price increase, etc., but we're managing it well. As far as the FY27 orders are concerned, we have fully booked until second quarter, and we are working on third quarter booking, and that is also going well. So the prognosis of orders seems to be good. And as far as the exchange rate situation is concerned, while the rupee depreciated sharply, we have a policy of hedging almost 80% of the forward 2 quarters revenue. So we do book forward covers. And for the subsequent 2 quarters, that's the third and fourth quarter at any point in time, we hedge almost to the extent of 50 to 60%. So given that our hedge rates are of the order of 88, 89 rupees or 90 rupees, whereas the actual prevailing currency is of the order of 95, 96 rupees. So it's a lost opportunity, but we don't speculate on currency. We have hedged our receivables, which means that if the currency stays weak going forward, we should be able to take benefit of it. But in the forthcoming 2 quarters, we may not get that benefit as we have already hedged.
To what extent would you say the apparel demand globally has been impacted by what's happening in West Asia? I mean, because of inflation going up, transport costs going up, to what extent has demand been impacted? And are you seeing any early signs of revival in your conversations from your clients in the US and Europe, especially in the US, after this tariff situation seems to have eased a little bit compared to what you saw in FY26?
Right. So if you look at US retail demand in whole of calendar 25 and the first part of early 2026, retail demand has been fairly robust. So US retail demand has always been on an increasing trend. Partly it could be because of the big beautiful bill, which put some extra money in terms of tax savings in the hand of middle class Americans. So that has also helped keep the retail sales fairly strong. The cost, the inflation or inflationary pressures due to oil prices may hit the American consumers going forward. We have to see, where the oil prices stabilize and how much will it impact U.S. consumption. Consumers have a way of confounding economists. So we got to see how consumption, plays out in the second half of calendar 26. In fact, we have already sold out up to Q2, and in Q2 we produce for the holiday season, which is Christmas, Thanksgiving to Christmas. So we have booked all the way up to that period. And at the moment, we are looking at, spring, summer 2027. So that's the bookings that we are discussing with our customers. So far, we have not seen any major headwinds from a booking standpoint. And again, time will tell whether, how US consumers react and hence how much of, bookings how much will it translate in bookings. But keep one thing in mind, that from middle of calendar 25, US retailers have already started tapering down their purchases. So while retail demand is up, US imports have been showing a downward trend. And our order book has been growing regardless of that downward trend in US imports, which means that even though the retailers are buying less, we have been growing more, which is primarily because of supplier consolidation. So we have been able to still hold up revenues and consolidate the market and take market share. And I think this means that US retail inventory must be coming down sharply as retail sales are doing well and imports are coming down. So that also provides an added cushion for us in the event retail sales do trend down if the inflationary pressures remain high.
All right, Shiva, thanks a lot for that. 12 to 15% revenue growth for FY27 along with 13.5% margins is what you've guided for in your conference call. You've given us some more color on how demand in the US is fairly strong as well. Notwithstanding the lost opportunity on the rupee over the next couple of quarters, business for you looks good. We will continue our conversation through the quarters as we go along. Just before we take that short break, pull up the intraday chart of Container Corp. Container Corp has actually slipped to the low point of today's trading session. The management in the conference call has given some guidance. They've said that the EXIM volume growth for the year is seen at 8% and domestic volume growth is seen at 15%, which some would view as conservative because earlier the company keeps guiding for double-digit sort of volume growth coming by. But the important part here is that this is conservative guidance and the management said that they may revise it mid-year. Street should take heart from the fact that they're more realistic than optimistic about demand going forward. So that is a good thing. The stock is adjusting lower, but these numbers look a lot more achievable than what the company would guide earlier. We take a short break, come back, hear more on the markets and stock-specific action on the other side. Welcome back. We do have the markets moving around in a bunch of directions, but let's look at, vehicle registrations data, because that's the more forward-looking number when it comes to the economy. With, the Vahan monthly data set to be the best in the last 8 years, Sudarshan joins in to tell us what he's been picking up. Sudarshan.
So it's going to be another strong month as far as Vahan registration data for auto companies is concerned. And if you talk about for the month of May 2026, it's going to be the strongest May that we have seen since 2018. And most companies' registrations have already crossed the levels that we have seen in May of 2025. And if you talk about the growth, it's going to be almost double-digit growth, with the outperformance coming in from passenger vehicle segment, where the growth can be as high as 23 to 25%. Now talk about the growth. So total vehicles so far from May 1 to 25, the growth is around 12%. It's 11.6%. Two-wheelers growth is around 9 to 10%. For passenger vehicles, as I told you, growth is seen at 23%. Commercial vehicle this month too is seeing a healthy growth, and it's more than 10%. Growth is seen at 14%, with M&HCV is seen outperforming with growth coming at 15%, and three-wheelers are expected to see a growth around 20%. Now talking the segment in details, for two-wheelers, it continues to perform and see a good growth, healthy growth, and companies that are going to see a gain in market share, those two companies this month are TVS and Bajaj Auto. Hero Moto continues to lose market share, and this month too is losing market share around 100 basis points. And due to production loss, Royal Enfield too is seen losing market share this month. And if you talk about electric two-wheelers, it's going to be another strong month for Ather Energy. For Ola Electric, it's going to be third straight month where the registration can be more than 10,000 units. For passenger vehicles, all OEMs registrations for May 2026 have already crossed the levels that we have seen in May 2025, with Maruti and Hyundai are seen outperforming, and even for Tata Motors PV and M&M Auto, growth remains healthy. For commercial vehicle, both Ashok Leyland and Tata Motors CV have crossed May 2025 levels, and for tractor, it's a mixed reaction. M&M is seen doing well, while Escorts, Kubota and Eicher Motors Eicher tractors are seen underperforming. So we still have few days to go. Let's see how exactly registration goes on.
All right, and we'll watch out for that one, Sudarshan, and have you back to give us that update. Thanks very much for joining us here today. And with that, we run out of time on this edition of Trading Hour. Manglam and I take your leave, but stay tuned. Halftime report will be up next.
and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. Well, let's get to our first topic on the show. Let's cut across to Ashmit, who's in conversation with the Vedanta Group Chairman, Anil Agarwal.
Well, thanks a lot for that. We have with us a very special guest, the chairman of the Vedanta Group, Mr. Anil Agarwal himself. Mr. Agarwal, a busy day. Glad you could take out time to join us on CNBC TV 18. Let me first talk about the one issue that's been on all of our minds, demerger. This was a big issue on the agenda. You seem to have finally crossed that threshold. Tell us one question that we're all asking. What's next?
Thank you very much for inviting me. CNBC is my favorite channel. And you have been above board. Very nice. We have grown in our natural resources. Since I left Bihar till now, I only looked at below the ground. So we have developed very beautiful business, and it was very important to each business is so good, so that can be by itself, Vedanta by itself. So we have demerger has already happened. I'm thankful to all the regulator or whoever was there and the court and everybody. So we have 4 big company. One is the Aluminium Vedanta Aluminium, which is a phenomenal company. This will be world largest company in the private sector. We started with the 1 lakh ton of aluminium production from Bharat Aluminium. Now we are producing 30 lakh ton and going to produce in 3 years' time 60 lakhs ton. The lowest cost of producer. That story doesn't end there. We will create 1,000 industry downstream. We are creating an industrial park because aluminium users are tremendous. So all the downstream 1,000 industry will be developed, so people will come and set up the industry, and we'll support them in every respect. Then we have oil and gas. Oil and gas, my heart and soul is there. India has tremendous reserve and of oil and gas, hydrocarbon, and we were the only people in India producing oil in private sector. It was not an easy job. We are looking for producing 500,000 barrel to spend $5 billion in 3 years' time, 3 to 5 years' time, to produce 500,000 barrel at the lowest cost. We will have producing sweet crude. We have a complete pipeline. We have every kind of opportunity. We have a tight oil, I have a shale gas, I have a shallow water, I have a deep water, I have a big block in the Assam northeast where the first oil was produced. We are in the process, we are looking for government to give us a lease, long lease. So we are comfortable because then we can make a big investment. So aluminium, oil and gas, power is very important. At the moment, our power company produce about 4,000 megawatt, going to produce 20,000 megawatt. For that, all brownfield. All brownfield. We are looking forward. One of the best company. We have all coal linkage. Coal is not going anywhere, and we should be very proud of our coal. We have coal what India has is sulfur free, and I have always been advocating that coal is not going anywhere. We are a poor country. We are going to make sure environmentally we 100% take care of that. But we will make a power company about 20,000 megawatt power plant. That's what we are looking at. We have a iron and steel company, which is a phenomenal company. It is around Tata Steel, Bokaro Steel. It has infrastructure. We have a gas pipeline to produce 15 million ton of steel. At the moment, we are producing 3 million ton. We have another million ton in Goa, so 4 million ton we are producing. And we are going to produce 15 million ton, all green steel, electrical steel or special steel. So we are the largest producer of iron ore. We will 100% backup of coke and the iron ore. So looking forward, this steel company still has a great demand in India. And then we have Vedanta Limited, which will have Africa largest zinc company. Very, very, very proud of having a zinc company. We have a 65% of Hindustan zinc. We have a FACOR, which make we also critical metals. So this is a Vedanta Limited, again very flagship company. So these are the company demerger. All the share will be in the process of issuing. By next month, all these 4 companies will trade by themselves. It will have a very strong management, and this will be company which is what we require in natural resources in India, and we will proceed in that direction.
I don't want to come in there in the middle, but that's an important clarification that you're giving. Can we take it as a confirmation that perhaps by next month we'll see these individual demerged entities also being listed?
Absolutely. By next month, all the individual entities will be listed.
Fantastic. You've given us a very comprehensive roadmap about how each of these companies in their individual spaces can grow up to be bellwethers. You talked about subject to support from the government, you're looking to make big investments. So tell us, can you give us some glide path, some indication as to what is the kind of capex that you're looking at, say, over the next 3 to 5 years?
They're looking to spend about $20 billion. And we have a very good internal profit generation in the company. Internal accruals are very, very good. Some equity, some debt we might have to take, but $20 billion investment will be there, and probably we will increase our production by 2.5 times of everything.
But you're saying mostly through internal accruals, any numbers that your team has run by you?
No, we will be having about $10 billion EBITDA. $10 billion EBITDA. So I don't know that financial detail, but I was not ready. But $20 billion we spend. Fund will never come on the way. Government is with us, and this all will be India. And by this, I'm looking forward at least 5,000 downstream industry to come in with our product. For me, most important, which give me joy, to develop the downstream industry.
You spoke of government support. I just want to take on that. You've talked about previously, we've heard you speaking when you say that Make in India push has been very good. It's yielded results when it comes to smartphones, electronics, even the defense sector has done very well in terms of indigenization. But that you classify as above ground Make in India. The question that you asked previously is, what about below ground Make in India? Again, tell us, is there a need for perhaps a Make in India push even for below ground resources that you manage?
But we're talking at a self-certification, what government, I'm very thankful to Prime Minister Modi, Amit Shah ji. They always think how the business can be developed, the employment can be developed. And but we are looking at simple policy, trust-based policy, trust-based and court also has to, what Indian courts are there is worldwide, people are very proud of. It's very important. The time is the essence, because India can't wait now. Time is the essence. All economic, whether it's a court, whether it's a regulator, more and more trust-based it be given. Entrepreneurs should be given a recognition. Manufacturing people must be given a recognition. You know, because they pay the highest tax. You will not believe, every year I'm paying 60,000 crore tax. When I set up all this industry, I raised $35 billion abroad and brought the money here and invested all the money in all these companies. So these are the, and it's not me. Every individual is like me, because we have the DNA of entrepreneurship. We have a DNA of the women working very differently. So these things were being encouraged nowadays. Tremendous opportunity. We will, as far as Vedanta is concerned, we are very clear how we demerged identity will work. Very strong management. For me, it's a very inclusive. Because for me, last person working in my company, I cannot ignore him. He's also very, very important for me. And I'm very proud of my people and my team. We are ordinary people. Vedanta means what? Ordinary. But we deliver extraordinary result.
But ordinary, Mr. Agarwal. But let me follow that up with another question that's close to your heart, what's on import substitution. I came across some very interesting numbers. We have an import bill of roughly around $800 billion. Half of that are below ground resources which we end up importing. So whether that's oil, gold, bauxite, for example. So we're talking about nearly $400 billion every year. What is the missing from our picture? Take oil, for example. We've not been able to build up capacity here within the country. What is the rationale? What's required from the private sector, from the government?
We have to be very, very careful of the world. World does not want us to produce. They want India to be a market. Middle East, all they develop 2 hours away to supply into India. The Gold Council, they just want to supply to the gold, whether it's a copper. We have a tremendous bauxite. I just read in the newspaper, you know, the largest company has gone to Guinea to produce alumina. Why? India has the largest deposit and the best bauxite because we have to simplify our policy. Land is required, everything to be digital. Seller is ready, buyers are ready. We have to address three. I'm just thinking big way. Is our system. Our bureaucrat officers are very qualified. They are most intelligent people, but they have to let go. They have to rethink inclusive. How do we recognize is very, very important. Your government companies, what is it called? All the government companies? Public sector. Public sector, very important. Government has to take a decision. Everything has to be privatized. Everything has to be privatized. No one person will be retrenched. I can see 5 times more production can come up. It is very important that we take decision. In fact, I'm for gold company, nothing producing, copper company, I'm ready to take challenge on anything. Let the parliament decide and trust. And I will do everything for my country. So, and the courts are, judiciaries are very important. Time is the essence. We have no other in the world, the judiciary, what we have, nobody has. But for to take country forward, to create job, to develop the economy, is very important. The decision, we don't waste time, we move forward. Where else we'll find Prime Minister like Modi, Amit Shah, these people, what they have done in West Bengal. West Bengal was the hub for the industry. What they don't have. It is all, everything, Bihar, this, you talk about Assam, these things, what they are addressing now, will develop.
You spoke of reforms. I want to get in your reaction on one particular aspect. You've previously spoken of how this 50-year lease that we currently have is not quite working. We need a lifeline. As long as the life of the mine is, that should be the duration of the lease itself. Are you calling for a complete overhaul of the current mechanism that we have for auctioning, for allocation of mines, of resources, of natural resources?
Beautiful question. You know, government has all the powers. Give a long rope. What is this short leave, 50 years taking back? People will run away. Nowhere like this is in the world. You are unnecessarily hanging the short. Tata Steel, we will, huge plants are there. and then you make a policy that you'll take back the mine and you re-auction. Does it work? We have to come out with a long, long lease, whether it's oil, and there should be one policy below the ground. For the oil, you have a different policy, and for mineral, you have a different policy. Below the ground, simple policy. For us, only one objective. How do we stop import and start producing? And this can only produce by the private sector. It's very important. And public sector must be privatized. And the court must be very conscious that time is the essence, whatever it comes to, whether any NCLT or this, they're doing a fantastic job, but time is the essence.
You mentioned privatization twice, so I'll just labor on that point. You talk about completely privatizing as far as all the PSUs are concerned. Will you be?
There can be exception. I'm saying generally, because no democratic country run government doesn't run the business.
So if the government were to take up on your suggestion, which is greater divestment, greater public sector assets put on the market, would you be in the market in line for perhaps some of these?
See, my shop is open. I'm not going to go to hunt, but something comes to my shop. Any customer comes, any opportunity comes, for my shareholder, I will look at.
Fair enough. Just a couple more questions, Mr. Agarwal. One question is that you've talked a great deal about privatization. You've talked a great deal about regulatory reforms. One low-hanging fruit, to your mind, that you will recommend to the government can be put into action as early as tomorrow. What would that recommendation be?
Anything which we are importing. Anything which we are importing, and there is a black and white, there is nothing left. What entrepreneur can do, we have proven from, one example is Bharat Aluminium, one example is Hindustan Zinc. They are the only two companies I have taken. Anything, and if you see the privatization of the airport has happened, privatization of anything, then you have trust. I really salute all my industry, they were from where to where, whether it was a telecom, whether it's airport, airline, any steel production, anything you entrusted to the or corporation,
right,
whoever trusted, they have delivered.
Sure. That brings me to my one final question. I'll end you by asking, we're living in tumultuous times. There's geopolitical sensitivities. There are factors, some beyond our control, some in our control. With all of these multiple moving parts, one commodity that you're bullish on for perhaps the next decade or so?
I'm very bullish on aluminium, copper, oil and gas. All three critical metal, very, very important. And fourth is, we can be the largest producer of arm and ammunition. The kind of factory we have, massive, if they can be modernized and privatized, we will be the largest producer of today's digital technology given. But we have to be, Parliament has to be together. Everybody has to be together, one way, one goal, to make sure that we will produce arm and ammunition here. And we run our, whatever strength we have, we leverage that 100%.
Fair enough, Mr. Agarwal. We'd like to thank you for joining us, for sharing time with CNBC TV 18. You've given a lot of insight as to the recommendations for the government, but clearly close to your heart, import substitution, and of course, perhaps some form of regulatory changes as well. Mr. Agarwal, we'd like to thank you for joining us and sharing time with our viewers right here on CNBC TV 18.
Thank you very much.
And with that, it's back to you in the studio.
Welcome back. You're still tuned into Halftime Report. Let's get another corporate conversation going now. Puravankara is the company on our radar. The company secured a 14.57-acre parcel in Bengaluru with a gross development value of 2,300 crore rupees. Malana Sasalu, who is the CEO South at Puravankara, is joining us now. Mr. Malana, good afternoon. Thank you so much for joining in. Well, you know, this land acquisition that is happening, it is a JD, a joint development. So how much are you investing into this? How will you be funding that? Because it is a total land which is measured at 14.57 acre, out of which you will be taking up 6.65 acres. So how are you valuing that?
Good afternoon, and thank you for having me here. And it's a 14 acres, 14.95 acres is what we have acquired this land, out of which 6.65 acres is purchased by us, and 7.92 acres is on joint development agreement. And the total value is at 2,300 crore rupees is what we estimate that the final value, the GDV, would be. And around 1,800 crore rupees is for us, and the 600 to 700 crore rupees, the 500 to 600 crore rupees would be for our joint development partner. This is funded from our partners, financial partner HDFC Capital has funded this program, and so far we have invested around 225 crore rupees, and we will be further investing another, let's say, around 1,000 crore rupees on construction and all other things that's going to happen.
So just following up on that, you said some of it will be done by HDFC platform, the rest will be done by you. Can you give us an exact split of that? And how will you be funding your part in this particular investment? Will it be debt? Will it be internal accruals?
No, this will not be on debt. What happens is that when we are acquiring the piece of land, the money is HDFC is funding the acquisition part of it, and also that from internal accruals, that up to the launch program that we have, internal accruals which we are going to be deploying, and the rest of the things are going to be coming from the customer sales, and wherever that there is a deficit, and that's going to be funded by us from our internal accruals.
Okay. Internal accruals and HDFC is what will be the funding through. Your cash balance and bank balance as on 31st of March is around 1,695 crores. So what is the expectation in terms of projects, different project collections that you will be seeing coming in as well? Surplus cash that is expected from here on, and the support that will come in from this as well.
Yeah, so we have a surplus of around 1,600 crore rupees currently in our balance sheet from receivables from various projects. And this is going to add to that. And basically what happens in this is that we have our 1,700 crore rupees as our cash flows coming in, taking into consideration all the expenses, and we should be making somewhere around 25% margins on this project. So that will add to the cash flows of the business.
Okay. While this is a new project that you're investing in, just wanted to understand what exactly the demand situation stands at in Bengaluru right now. Has there been any kind of dip in demand? Have you been stagnating in terms of prices right now?
So far, and if you look at what has happened since 2022 to 2025, we did extremely well, and the industry did well, and the sales were really all-time high from every farmer you can see. In 2025, 26 now, that we have seen that there is a robust supply and demand which is there, but it's not the frenzy that what we saw earlier. So it continues to currently that we are not seeing any slowdown, and recently one of our launches did extremely well in Bangalore, where we did 1,400 crore rupees of sales in less than 1 month in Bangalore North. Whereas the project that we are talking about is in the northeastern corridor of Bangalore, which is really all happening place currently from the perspective of it is closer to Whitefield and it's closer to Hoskote industrial area, and also that it is closer to the airport, and also on the old Madras Road back it is connected to Bangalore. So I think the supply and demand is currently really well balanced, and we expect it to continue. And also in Bangalore, we can see that large technology companies taking up large spaces, so which in turn is saying that there's going to be a job generation at a higher rate, and that's what we're seeing at this point of time.
Okay. What we are dealing with is a crisis which has impacted supply in a lot of ways. In your presentation, you did indicate it hasn't impacted the real estate sector so far. But general ground indication also is that, yes, supplies are coming in at a higher price. How much have raw material prices increased by? Are developers able to pass it on to customers as well? And are you facing a labor shortage? Because that's what's happening in some parts of the country.
Yeah, the labor, first let's talk about the labor shortage, and probably the labor shortage got a little bit more than what it usually is. We always have labor shortage across the country in the construction industry. This time around, because of the elections in West Bengal, and also the holiday season came together, because of which then the labor traveled back to the eastern part of India. And now I think slowly they're all coming back. Still, there is a shortage of around 20% in Bangalore at this point of time.
Okay. Thank you, sir, for joining us this afternoon, giving us an understanding about the GDA as well as the outlook for the company as well going forward. But on that note, we're going to slip into a very short break. After the break, we'll have Jay Thakkar of ICICI Securities who will join in with some trading strategies on the other side. Stay tuned. Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is at 24,034 levels. Obviously, we've recovered from the day's low, but in the last hour, you've seen a flip-flop between the red and the green. So we'll wait out for it to pick up some direction in the second half of the day as well. Obviously, today is that expiry day as well. So that is something as an important level key triggers to watch out for as well. On that note, let's also bring on board Jay Thakkar, Head of Derivatives and Quant Research, ICICI Securities, to answer, what levels you should keep an eye out on, monthly expiry, weekly expiry, all of that comes in today. Volatility, is that something we'll see furthermore in the second half of the trading session, Jay?
Good afternoon to you, Viri and Sonal. Volatility index is something which is, has dropped significantly today. Viri, it's down below the levels of 16 and a half. In fact, on 20th April is when we saw these levels of around 16 and a half. And then for the entire May series, we saw the India VIX consolidating within this band of say 16 and a half to almost 20 and a half, because of which we saw for most of the part of May series, the index actually traded with a negative bias, and we saw consolidation happening, and because of which we saw Bank Nifty also underperforming quite a lot, and there was a good amount of shorts that were built up on the private sector banks as well, which actually weighed heavily on the index, and because of which Nifty, in fact, kept consolidating within that band of 23,850 to 23,200, 300 on the downside. But eventually we have got this breakout now on the upside. So according to me, 23,800 positionally now becomes a very critical support until we don't see a close below 23,800 levels. Nifty should be heading towards 24,600 on an immediate basis, and India VIX close below 16 is clearly hinting that it's trading somewhere around the levels of 15 and a half, Vinny, and close below 16 would indicate that 16 and a half to 13 and a half would going forward be the range for India VIX, indicating that the fear or maybe the volatility going forward may be less going forward, and which will help the index moving higher. So my targets for the June series, the conservative target on Nifty would be 24,600. The aggressive target would be 25,000. The recovery in the Bank Nifty indicates that 54,000 is likely to be held going forward, and I think that Bank Nifty is heading towards 57,000 in June series, and having a positive view for the June series now, I have three buy recommendations, Winnie. The first one is a buy on Tech Mahindra. I think the IT stocks can also bounce back on account of short covering. There are a lot of shorts out there. So Tech Mahindra can inch towards the levels of 1520, 1550. One can place a stop loss below 1400 and go long on Tech Mahindra. The second buy recommendation would be on Zydus Life. The Nifty Pharma Index has done phenomenally well in the May series. And Zydus numbers were also good, and we have seen good long build up out there. So one can target around 1200 to 1260 in June series, placing a stop loss below 1020. And a final buy recommendation would be on Cummins. Now, Cummins has been one of the star performer, has been consolidating for some time now, but I think 5600 levels is what one can watch out for going forward. Vinny, and 5380 will be the stop loss out there. So these are the three long recommendations.
Okay, all right, Jay, we're going to leave it on that note. Thanks very much for joining in and giving us all of that perspective on the technicals. In fact, for the markets, given up all of its gains, so the Nifty is absolutely flattened out, now showing a cut of around 15 odd points, and the Bank Nifty in the red quite firmly, so down around 154 odd points currently for the Bank Nifty. Midcap still holding up, but have shaved off gains from the top as well. So the Midcap index marginally higher with a gain of around 0.4%. We'll take a short break on that note, but Manisha Gupta will join in next. She's our commodities editor. She has with her Neerav Desai of GGN Research, and will be focusing on the edible oil sector. Stay tuned. Welcome back. Well, we've been pointing out that there is some shave off from the top for the markets, but the advance decline ratio has still been holding in the positive terrain. So 2,300 stocks advancing to around 1,720 stocks declining at this point in time. Adani Enterprises continues to gain. So that stock has gained around 22% on a month-to-date basis and is managing to build on to gains today. We also have a couple of others such as Coal India, which is doing well, so up around 2.5% for that particular counter. But Manisha Gupta now joins in to tell us what she's tracking today. Manisha, over to you.
Thank you so much for that. Well, I'm looking at edible oil as a space, and Nirav Desai is managing partner at GGN Research now joining in for that. Nirav, hi. I won't talk about the prices, but first of all, there has been a stakeholder meeting with the Department of Consumer Affairs, and this is about the weightages. There seem to be some issues there, and we've been talking about this for more than an year now, but I do understand that various associations have met, put on to their expectations and requests therein. What is it that we can expect from that?
No, I would say it's been a very good meeting, Manisha. The government for the first time shows very positive indications for this, and we might go back to the standard packaging and from 200 ml to half liter, 1 liter, 2 liter, 3 liter, 5 liter, 15 liter, 20 liter, and 20 kg. This is the kind of set that they are agreeing to do, which is very good because actually there was a lot of variety of grammages and weight that were going into the market, and I think the consumer was at the losing end. Also, the more organized players were also at the losing end because an organized player cannot write something and give something. So I think there's a very, very good development from the government side, and they have showed the positive indication for that. I think the consumers will be benefited with this.
And you believe there would be a transition period for all to get in, and even before that, we would see a notification to that effect?
Yeah, there will be a notification to that, and I think they would give a grace period because just now all the brands have been manufacturing different grammages. So to align all that and to get everything aligned on the product side will take about, I think, 2 to 3 months, which will be given to them.
The other issue I want to speak to you about is, of course, Indonesia, where we are looking at Dhanatara now that would be exporting palm oil. We understand there's a lot of clarity, statements still coming in on that one. But what is the latest and what is the impact that you see on India as Indonesia now starts to export from a state agency?
So I think nowadays governments really like to confuse the market, and that is one of the steps that Indonesia did. They said that they will be the government body will be the central body which will export every oil out of Indonesia, and exporters cannot directly sell to importers. But I think as it looked like also initially, it's not a very easy program for Indonesia to run, and that is why they have extended it for a bit. And for that, the market also was confused and rallied by 200 to 300 points on the BMD. On the C&F terms, we had a rally of about $30 to $40 in palm oil, but market has again subsided and come down. As far as on long term, as an importer in India it is concerned, it will not have a big impact to us because whether the exporter sell to us or a government body is there in between, ultimately they want to sell oil and we want to import, so fundamentals will prevail the same. But yes, the whole mechanism for the trade to practice all that is going to be very tedious. And it is, I think, not a very easy thing because it's a very subjective trade that happens. What will happen to the LCs? What will happen to the logistics? There are a lot of challenges, I think, which the Indonesian government will have to first figure out and then come back with a solid plan.
On screen, we are showing the Indian edible oil consumption, where we have seen 2020, 21, 22, 23. All of those years actually see a strength. When you look at this current year now, the previous financial year, what is the overall Indian edible oil consumption now? Because perhaps we've seen a peak at 28.9. Are we beyond that, above that right now?
No, we are. See, the population growth that is happening is adding up about 700,000 to 1 million tons of oil consumption every year. But I'll be honest that the growth overall per capita growth is not growing. Since last 2 years, we see there is a little slowness in that. So we talk about 2005 to 7, we were at about 12 kg per capita consumption. Now we are around 17.5 to 18 kg per capita consumption. So already we have grown quite a bit, though definitely this is lower than the world averages like 22 or 24 kgs. But we still have to understand we are 14.4 billion people. and there is still a lot of diversity where east of India and a lot of rural population consume less, and a very affluent west part of the country or urban area consumes more of edible oil. But on an overall trend, we have kind of reduced on edible oil consumption, and we as GGN Research are considering the growth to be flat this year. It's only the increase in population that will bring in more consumption.
Okay, interesting there. Maybe flat growth this year for edible oil. Consumption and volumes, that is something that is could lead to the growth. But Nirav as well as Manisha, thank you so much for taking us through that conversation there on edible oils. On that note, we're going to zip into a very short break. After the break, we'll have you, we'll get you an exclusive conversation with Abhay Soy of Max Healthcare. Stay tuned in.
Welcome back. Well, Max Healthcare has recently launched a new wing at its Nanavati Max Hospital. Abhay Soy, the CMD of Max Healthcare, told me that they've added around 570 new beds in this new wing. We also spoke on the role of private equity in the hospital space. Listen in to a slice.
So it seems to be a popular narrative on social media that, you know, Indian healthcare is owned by private equity and so on and so forth. I mean, I can tell you the largest chain, Apollo, is not. We are not, you know, Fortis is not, Narayana Dale is not. I mean, these are plenty of sort of examples out there. Look, I think it's important to sort of put it in perspective. There's been a massive shift towards private hospitals in India. If I look at anybody perhaps over the age of 30, everybody was either born in nursing homes or largely in government hospitals. But today, if you were to do a survey of perhaps even your people who watch CNBC, majority of the people would be going or visiting private hospitals, and over a period of time is less and less people towards disorganized sector and nursing homes, etc. Yet, I think in the private sector, tertiary care beds, we perhaps have less than 100,000 beds for the whole country. Today, we have demographic dividends, which is playing out for us. The average age is 29, but let's make no mistake. A couple of decades down the line, you're going to be closer to the European age, and we just don't have the beds. I mean, it's 100,000 beds
for the whole country that you have in the tertiary care. I mean, let's look at the Delhi NCR market. In Delhi NCR, we are the largest players, by far. If you add up locations with the next three largest players, we're probably twice as many locations as them. But we have 3,500 beds, 10% of which are totally free. Another 40% is catering to upcountry business. This is patients which are coming from outside of Delhi NCR. 10 to 12% is catering to international patients because the larger amount of international patients come to Delhi NCR. And really it leaves us with 1,500 beds for the National Capital Region. We've got the next three players which have a similar amount of beds, and then the entire tail. So it's literally 5,000 beds for a population of 45 million people, which is 85% of UK's population. And the UK, where the NHS is collapsing, literally, I mean, you have more than 200,000 beds. I mean, how are we going to leapfrog from 5,000 beds, to 200,000 beds if you don't have private, public, charitable, all kinds of money come in? I think it is the need of the hour. It is something which is to be encouraged. Do keep in mind, private equity has a particular, sunset period. It's 5 to 7 years of investments, and then it comes back. It comes back into the market. It comes back in the hands of local management, promoters, and so on. Such is the case. I mean, I'm a case of point of that. Also, I think it's a little naive to believe that, in the private sector, a private equity player would have a different sort of aspiration as any other shareholder. I think, to say private equity is making it expensive, maybe a little egregious on that front on them. So I think that's a little unfair.
So, Mr. Soy, tell us a little more about the capex which has come on stream. We're standing in a new wing at Nanavati. Tell us how many beds have come on stream here, occupancy, and the other, hospital beds which are coming through in possibly FY27.
So this is, we're standing at the new tower. There's Tower 1 and Tower 2. Essentially, it's supposed to be 570 new beds. This tower represents 280 of those beds, and so far we've operationalized about 110 to 120 beds in this tower. Gradually, I think over the next few months, we would have operationalized, when I say few months, 2 to 3 months at best, we would have operationalized all the balance beds in this particular tower. Similarly, Delhi at Saket, it's a 400-bed hospital that we've started very recently in the first week of April, in fact. And we've operationalized about 80 of those beds. But in the next, I think, 3 to 4 months, we would be operationalizing the rest of the beds in a phased manner. We'll completely complete the commissioning by the end of the third or fourth month.
So just give us a sense in terms of these new hospitals which are coming on stream. Are they EBITDA positive? By when do they start generating and adding to the margins?
So that's the beauty of the brownfield. We're adding about 1,000 beds between Mumbai, where we stand today, Delhi, Saket, Mohali, which we've just started. And these are all brownfields. So from day go, they are EBITDA positive. So there's no real drag on the EBITDA, so to say. But having said that, they're obviously lower margins. This is very, very early days. And every incremental bed, as you open up, you get operating leverage and it comes straight to your margins. So your margins should expand, in the quarters to come quite significantly.
Welcome back. Well, the markets have fallen sharply from the highs of the day. We are at that 23,985 mark, comfortably below 24,000. It's a sharp fall, around 100 points from the highs of the day. It attempted another recovery, so we are back close to that 24,000 mark. Continues to be very, very volatile. Bank Nifty is the one which continues to make those moves as well. So it did fall sharply and then again recovered, leading to the recovery that we're seeing in the Nifty as well. We do have some stocks which are at the day's low in the Nifty pack. ITC is one of them. We do have Kotak Mahindra Bank not doing so well. It is at the day's low. Titan, SBI. So these are some names which are pulling the Nifty lower by seeing some losses from the highs of the day. And earnings, they are coming in thick and fast. So we'll keep tracking that for you. Marks and Pharma on the back of numbers is up around 5%. A lot of action in the mid-caps and the headline index and all other spaces. So we'll keep tracking that for you. For now, we'll take your leave on this edition of Halftime Report. Business Lunch comes up next.
Stocks trade in a narrow range after US strikes Iranian vessels and missile sites in claimed defense. Even as talks continue, utilities and metals notch some gains while healthcare and consumer durables drag.
The board of Tata Sons is meeting today to discuss listing the Tata Group Holdco, a subject with strongly divided views. Also on the agenda are presentations on 5 businesses, including Air India, Tata Digital and Tejas Networks.
UBS says Indian equities will underperform as it lacks AI plays, a theme that global investors are leveraged on. And while the investment bank is cautious on Indian IT, it does not foresee large workforce impact in the near future.
Privatize all public sector undertakings and no one will be laid off, promises Vedanta Group Chairman Anil Agarwal. He also bats for long leases for mineral blocks, arguing that taking back allocated mines isn't the practice anywhere in the world as it deters investment.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios, and I'm Hormuz Patakia. And back from her sojourn is Arundhati Ramanan. Arundhati, welcome back and good afternoon to you.
Good afternoon, Hormuz. Thank you so much. It was a great break, but it's great to be back as well. And if we take a look at the markets, they've come off the highs of the day in the red now. The Nifty below that 24,000 mark as we speak, right?
Indeed. And of course, today being the monthly expiry as well, so we need to keep that in mind. Of course, we've been in a very narrow range all through the day. Is no significant moves. It's a 110-point band that the index has been all through and through. We are now at the lows of the day, but the good part so far has been that every dip intraday has been bought into. Although right now no signs of that are emerging just yet, but as we head into the final 150 minutes of the trading session, we wind down the series as well. There are important factors that we'll have to keep monitoring as well, right? The fall in oil prices or the developments that are happening in West Asia as well. All of that will play a part in it. And of course, the Nifty Bank, which was the outperformer yesterday, leading the charge on the index in yesterday's trading session as well. The index closed above the mark of 55,000 yesterday, still holding on to those levels by just at the lowest point of the day. So as of now, well, the bulls would hope that the dip gets bought into, or they would look to defend at least the 24,000 or more importantly 23,800 on the downside.
Absolutely, and the last hour of trade will be key to watch, especially since it's expiry day. On the sectoral front, metals are leading the up move. That index is up over nearly 1%. Vedanta is up over 4%. Nalco and SAIL, both of those stocks are up over 2% as we speak. We've got even those energy names that are doing well. Adani Power up over 4%. Coal India and Tata Power, both of them up nearly 2%. And as Hormuz pointed out, it's the banks that are keeping, the gains falling. So PSU banks, that index not doing well. We've got PNB, Union Bank, Bank of Maharashtra, all of them down in trade. And we've got even those private banks not doing very well. We've got Kotak Mahindra Bank and Axis Bank, which are also the top sectoral losers on the Nifty.
Well, let's begin the show by focusing on the latest in the US-Iran war. US forces launched self-defense strikes in southern Iran, even as efforts to reach a peace deal continue. The strikes targeted missile launch sites and Iranian boats seeking to lay mines. CNBC's Ritika Gupta joins in with the latest update.
Now, the US has carried out strikes on targets in southern Iran in what is described as defensive moves to protect troops. Targets included missile launch sites and boats attempting to lay mines. CENTCOM said the military continues to defend its forces whilst using restraint during the ongoing ceasefire. The strikes come amid negotiations between the US and Iran to end the 3-month-old war. US President Donald Trump said on Monday that talks are proceeding nicely, but reiterated warnings of a return to military action if a deal is not reached. Trump also appeared to complicate peace talks by linking a deal to the Abraham Accords. The US president said it should be mandatory for countries including Saudi Arabia, Qatar and Jordan to sign onto the initiative, and that any nation that declines should not be part of a deal as it shows, quote, bad intention. Key sticking points remain between the US and Iran in negotiations, including the fate of Tehran's enriched uranium. In a Truth Social post, Trump suggested it would either be handed over to the US or destroyed. Iran has not indicated it would accept either option. The future of the Strait of Hormuz is another key hurdle. Reports over the weekend suggested there could be a deal to extend the ceasefire by 60 days, during which time the critical waterway would be reopened.
And here's some opinion from experts on the impact of the ongoing conflict on markets and the macros. Take a look.
That there's this tremendous asymmetrical response from especially institutional investors. Any time that there is a breakdown in talks or what looks like further fall into conflict, The worst that investors have been getting has been, sort of cautiously optimistic, maybe. They haven't gone full defensive at all. But anytime there is any hint or any statement that we're going to resolve this, the risk just comes pouring back. So we see where investors want to be.
There's a lot of inertia, I think, in what's happened to supply chains and commodity prices. So some of the increases in costs for fertilizers, for example, are baked in the cake. So that's going to take quite a while before that eases off. The big thing I would say, Sherry, is if we get a severe El Nino event later this year, on top of already rising agricultural costs, that's what could really cause food prices to surge higher. And, the work we've done at Nomura, we have a food vulnerability index for around 150 countries. And I think what's interesting is it really is the EM and frontier economies that are so much more exposed to a surge in food prices. So it really would open up a wedge between advanced economies that they suffer but not as much, and EM economies, frontier economies that are very vulnerable.
The latest developments there from West Asia. Take a short break, back with more on the other side.
Welcome back. You're still with us on Business Lunch. A whole host of stocks were buzzing on the back of news flow. Upasana gets us the details. Upasana?
Well, first up, let me start with some of the stocks that are in focus on the back of the Q4 earnings. First up, let me start with IFB Industries. Strong performance here. Revenue has seen a growth of 12% on year-on-year basis, and sequentially, the growth stands at 6%. And also, the company has managed to report a double-digit revenue growth across its segments with a margin expansion as well. Now, if I talk about the gross margins, it's down about 152 basis points at 36% due to the adverse product mix that the company has undertaken this time around. Next up is Astra Microwave Products. Overall, it's been a strong performance of the company with the net profit uptick of 44%, revenue uptick of 20%, and margins have also increased from 29.3% to 33.4%. Mind you that the Q4 is a strong quarter in terms of execution for these kind of companies. Next up is Concor. Overall, the profit has seen a downtick of 12%. Revenue has seen a downtick of 1.1%. And company also just held their con call in which they have mentioned that it is planning a capex of 945 crores for FY27, which may increase going forward as well. And it is expecting good volumes from GAIL and Petronet LNG, which are the key clients. Next up is RVNL. The PAT plunges 60% on year-on-year basis and 42% sequentially. This is backed by the lower other income, lower profitability of the JV that led to such a fall, and even higher operating expenses, which impacted the overall profitability of the company. Now, the key positive in today's result is the execution, improved execution in Q4, which has led to a revenue uptick of 4% on year-on-year basis and 43% sequentially. Next up is Office Space Solutions. Good numbers. The company has recorded highest ever annual revenue. And if I talk about the Q4 revenue, there has been a growth of 21%. Operating margins stand stable at 14.2%, and PAT has nearly doubled on year-on-year basis. Now, let us look at some of the key stocks on the back of other news. Balu Forge in focus as it secures order in the aerospace sector. And lastly, coming to Stovecraft, the board has given a nod for a China JV 50-50% to make a tri-ply sheets for the cookware. So all in all, these are the stocks that are buzzing in trade today.
Thank you for those updates there. Many other names doing well as well. Bliss GVS Pharma is up 20%. The announcement that came in over the weekend with the Anupam Rasayan acquisition, the stock didn't do much yesterday, but is now locked in a 20% upper circuit and is among the top gainers on the small cap index in today's session. Now, Tata Sons' high-profile board meeting is underway. Madhya is joining in now to tell us what is on the agenda. Madhya.
So we are outside the Bombay House in Mumbai, the headquarters of the Tata Group, where some of the biggest names have arrived for a crucial board meet that started at around 10:30 in the morning. And what we understand is that the meeting is expected to continue through the day. So a very big day for Tata Sons. Who's inside? Tata Sons Chairman N. Chandrasekaran, Vice Chairman Noel Tata, Group CFO Saurabh Agrawal, along with Venu Srinivasan, Harish Manwani and Anita George. These are the board members that are inside, and the board meet is underway. So what are the issues that the board is discussing right now? So as Shireen has been reporting, the board members are likely to discuss about the business plans for 5 companies, Air India, Tata Digital, Tata Electronics, EV Infra Company, Agratas and Tejas Networks. Tata Digital, remember, is investing heavily in its consumer business. Tata Electronics is spending billions of dollars in building semiconductor projects in Assam and Gujarat. Air India, as we all know, is posting huge losses. It posted a loss of $2.5 billion, so a big loss maker for the Tata Group. So the members are likely to discuss a turnaround plan for the Tata, for Air India as well, is what we understand. The members are expected to ask some tough questions. How much more capital is required in these companies? When will these companies turn profitable? And when will these companies start giving returns to the group? So these are some issues that are likely to be discussed by the board members. And another important issue is the listing of Tata Sons, though the board is divided. But as Shireen has been reporting, the board members are likely to discuss the issue of the listing of Tata Sons. So we may not get any major announcements immediately today, but some of the decisions that are being taken inside the Bombay House today could be reshaping the future strategy of some of the biggest companies of the Tata Group. So a big day for Tata Sons as the board meet continues through the day today. With video journalist Parmeshwar Shinde, this is Madiha Mujawar for CNBC TV 18.
Right, Madhya, many thanks for taking us through those details. Now it's time to get important market opinion on AI trade and the markets. Earlier today, Sunil Tirumalai, a global EM strategist of UBS, says that there is no let-up of the AI trade and India is missing out on that. He adds that there won't be any major employee cuts from the AI disruption. Take a look.
AI is a very important aspect, as you mentioned. There does not seem to be any letting of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out, anytime soon. India may underperform because of whatever AI, trade that's happening elsewhere, but it can still have a positive return year. I don't think we have the kind of confidence or visibility that we'll get into a situation where large corporations suddenly come around and say, I'm firing 90% of my staff. No, I don't think that's so that economic disaster where there are no jobs and companies are just focusing on cutting down staff. I mean, that's a very, very far away, low probability event where we stand right now. What is more likely is that companies use the available AI tools and the upcoming AI tools to become slightly more productive. Cost of delivery of products or services to their customers comes down.
Financials is definitely an area we're seeing a lot more interest, both on the banking and non-banking side, surprisingly. And again, it's for the reasons that he mentioned earlier. I think the credit growth is picking up. We were also, I think, just coming out of a few years of cleanup on the NPA side. So the sector is actually in a good place and in a much better place, I would have said, than if this crisis had happened a year ago. It would have been a different story. But now the sector is actually in a much better fundamental space. So I think banking financials is definitely a place that we are seeing interest, but also smaller mid-cap names, which have been, again, out of favor from a foreign perspective for a while. Actually, if you look at the consumption stories, I think consumption's also been picking up. I think if you look at the consumer sector, especially the big staples names have actually done pretty well compared to our expectations. So that's another bright spot right now, assuming that that story doesn't get derailed. But I would argue that if inflation comes back, then some of these big, large consumer names could be a little bit more resilient. We also like the short cycle industrials because there's been inventory replenishment, and I think we're seeing that inventory ordering pick up. And that's, I think, a place that we like as well. The last place I would also say is defense. I think we are in an increasingly uncertain multipolar world. So I think that continues to be a secular area of spend.
That's UBS on the markets and, of course, the sectors that they like currently. But on to autos now. Vehicle registrations are on a tear with the month set to be the best since May of 2018 in terms of growth. Sudarshan is here to tell us what he's picking up from the data. Sudarshan.
Another month, but the same story that we have been seeing for the last few months. That's a strong registration data we are expecting for the month of May 2026. And if the current trend holds, May 2026 is going to be the strongest May that we have seen at least since 2018. And all the most of the companies have already crossed the registration levels that they had seen in May of 2025. And with the growth, we are expecting near double-digit growth, and the outperformance is expected to come from passenger vehicle segment, where growth can be as high as 23%. So talking about total vehicle registration growth so far, it's almost 12%. Two-wheeler growth is seen around 9%. PV, as I told you, it's almost 23%. Commercial vehicle segment continues to do well, and it's been led by M&HCV segment, where growth is seen around 15%, and three-wheelers too can see a growth as high as 20%. Now talking the segments in details, as far as two-wheelers are concerned, growth will continue to be healthy and seen around 9%, with outperformance or say market share gain can come from two companies this month, and those two companies are TVS Motor and another company is the Bajaj Auto. Hero Moto continues to lose market share, and this month they are expected to lose market share of around 100 basis points, and due to production loss, Royal Enfield too can lose a market share. If you talk about electric two-wheelers, it's going to be another strong month for Ather Energy. For Ola Electric, for the third straight month, their registration can be more than 10,000 units. In four-wheeler, all the OEMs have already crossed registration numbers that they had seen in May of 2025. With outperformance this month can come from Maruti and Hyundai, and other two companies, M&M Auto and Tata Motors PV, continue to see a healthy growth as well. In the commercial vehicle segment, both the major companies, Ashok Leyland and Tata Motors commercial vehicle segment, have already crossed the registration levels of May 2025. Lastly, in the tractor segment, it's a mixed performance. M&M Tractor continues to do well, while other two major companies, Eicher Tractors and Scott's Kubota, continue to underperform. So we still have few more days to go. Let's see how the next few days pan out. But so far, registration trend is looking very strong.
Absolutely, Sudarshan. Many thanks for taking us through those details. So registrations pointing to a very strong month in May for those auto companies in terms of sales. But on that note, it is time for us to head into a short break. But as we slip into a break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screens.
Welcome back. Now, the foreign ministers of the Quad met in New Delhi earlier today and held discussions on various issues, including the West Asia crisis, critical mineral supply chains, and more. Abhimanyu is here with more details on this. Abhimanyu.
Well, several pending issues were discussed during the Quad foreign ministers meeting pertaining to energy security, maritime security, geopolitics and port infrastructure. Now, Quad members have decided to jointly help Fiji develop port infrastructure in the Pacific area, in the Pacific region, to strengthen the overall cooperation within the region. They also spoke about maritime cooperation and maritime security and stressed on the need for free and open seas for unimpeded unimpeded trade through global sea networks. They also spoke about several issues, several concerns which have been raised of late, including the West Asia situation, and reaffirmed the support for ongoing diplomatic efforts and a hope for a lasting peace in the region. They also expressed concerns on economic coercion, non-market practices like price manipulation, arbitrary export restrictions and disruptions on critical minerals which impact economic development across different geographies. They also spoke about energy cooperation and energy security across the globe, and the US Department of Energy has announced that they will host the Quad partners in 2026 itself for a fuel security forum. Now it remains to be seen what further is going to emerge post the joint statement which already has been issued, even as concerns were expressed in the joint statement also on the situation in the East China Sea and the South China Sea. Remember that region also comprises of several vessels which often have faced concerns due to disruptions which have been faced of late, something which was strongly opposed by Quad members, and they opposed any destabilizing or unilateral actions. They also spoke about the Indo-Pacific Maritime Surveillance Cooperation Initiative, which is going to leverage the maritime security protocol in the region and possibly is going to support unimpeded and uninterrupted access for vessels in high seas. So several deliverables have emerged from the joint statement. It remains to be seen how early the implementation is going to be worked upon by all the four Quad partners.
All right, Abhimanyu, many thanks for taking us through those details. Now, let's also listen into what External Affairs Minister S. Jaishankar had to say about the bilateral summit.
Understandably, much of the discussions and indeed the bilateral exchanges were devoted to the current state of the world. We spent some time on the question of safe and unimpeded maritime commerce and reaffirmed the significance of scrupulously observing international law. Our four nations are also market economies. We believe strongly that economic resilience should be promoted, that supply chains should be strengthened, trusted and secure technologies diffused, and production capacities enhanced. Our deliberations touched on the current energy and fertilizer availability, as well as that of critical minerals and resources.
And with that, we take a leave on this edition of Business Lunch. We leave you with the markets looking to hold on to that level of 24,000. We get into the final 2 hours of the monthly expiry session with Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Continues to be a very volatile market. We slipped sharply below the 24,000 mark, then made a recovery. So yes, the market's fluctuating, but we don't have a sustained trend for now, except for the fact that mid-caps are outperforming. We do have the metals index, which is doing well. We'll have to see whether that continues or not. It is a truncated week, so that is something that the markets would cheer for sure.
Good afternoon, Sonal, and it's expiry day as well, so I expect the volatility to continue, especially in the last couple of hours as we begin the last 2 hours of the trading session and the last 2 hours of this particular expiry week. But a lot lined up for the show, so let's start off with the top headlines. Stocks trade range after US strikes Iranian vessels and missile sites and claimed defense even as talks continue. Utilities and metals not some gales, while healthcare and consumer durables drag.
The board of Tata Sons is meeting today to discuss listing the Tata Group Holdco, a subject with strongly divided views. Also on the agenda are presentations and five businesses, including Air India, Tata Digital and Tejas Networks.
Container Corporation is under pressure, down over 5% as profit falls 10% in the fourth quarter. The domestic business underperformed. Also guides for total volume growth of 9.5% as they are conservative on FY27 guidance.
Suprajit Engineering fires up in trade after reporting a strong fourth quarter. Company reports highest ever quarterly revenue. In fact, the management tells us that consolidated EBITDA margin will rise 12.5% to 13% and price hikes will be passed on with a lag. Okay, all right, those are the top headlines that we are tracking. As far as the markets are concerned, 50 points lower on the Nifty as we speak, while the mid-caps are up around 194 points. We do have the small-cap index also, which is outperforming the markets today. They have come off from the highs of the day, but there's a swift recovery which is underway, so we'll have to see whether that continues or not as far as the mid-caps are concerned. Metals, energy, IT, they continue to do well, but we do have drags in cases of PSU Banking Index, Realty, Infra. All of them are under a lot of pressure. And we are almost towards the end of the earnings season, so a lot of mid-caps continue to be in focus.
That's right. Whole host of results coming, but generally the market cap of these companies is quite low. So in terms of the volatility is high, but in terms of volumes, quite thin. But these names and a whole host of other names is what Upasana has on her radar. She's standing by the big wall. This is our special segment, Midcap Movers.
Well, if we talk about the Nifty mid-cap, it's up nearly about 0.3% as we speak right now. First up, let us focus on the top gainers in trade today. Coming first to Ecos Mobility, mind you that the stock listed in 2024 has seen a decent run up more than 10% in today's trading session. Next up is Tejas Network, continues to remain in focus and surging in trade, up more than 5%. And if we look at the 1 month performance of the stock, it's up more than 20% this month. Next up is Stovecraft. The board has given a nod for 50-50 China JV to make tri-ply sheets for the cookware, up nearly about 2.7% on the back of that. Balu Forge also in focus on the back of aerospace order that it has received. And lastly, coming to Astra Microwave Products, it has reported a strong set of numbers some time ago, up nearly more than 8%. Now let us look at some of the key volume buzzers in today's trading session. Most of them are the result reactions that we are seeing. Pace Digitech up nearly about 7%. Uniparts, more than the volumes are surging 28 times the average volumes, up 9%. IFB Industries, strong set of numbers reported by the company. All the segments have reported a double-digit revenue growth, up more than 11%. And in terms of volumes, it is trading at 32 times the daily average. Suprajit also trading on high volumes, 31 times the daily average, and up more than 7%. Now, on the flip side, let us look at some of the top losers in today's trading session. Concor remains in focus on the back of that weak result. The soft performance was impacted by the company's domestic business, down nearly more than 7%. RVNL also down more than 3%, and Ajmera Realty continues to remain under pressure, down about 8%.
Okay, all right, some interesting names there. Thank you so much, Upasana, for joining us as always. So these are some mid-cap movers on our radar. It's a good time to get Ajit Mishra from Religare Broking for a technical check on the markets. Ajit, good afternoon. Thank you for joining in. It is the expiry day, the monthly expiry. Will it continue to be very volatile? What are the charts suggesting now?
Yeah, good afternoon, Sonal. So yes, in fact, we have back-to-back expiry. Tomorrow we have BSE Sensex expiry also scheduled. So we are seeing that after yesterday's move, means we were closely eyeing this 24,000 mark. We have reclaimed 20 EMA level at 23,800. So market was anticipating there could be a follow-up buying in today's session. But I guess due to expiry, we are seeing this pressure continuing at the higher levels. So close to around 24,100, 200 is the area basically where we have the immediate resistance place. But broadly, we feel that it's a buy on dip market with 23,800 now being the immediate support. And gradually index should inch toward 24,400, 24,600 mark. So one should look for buying opportunity on dips when it comes to the benchmark. And banking looks comparatively better. Means 56,200 is what we are eyeing in the banking index.
Well, Ajit, thank you so much for that. And Ajit, what are your individual trading ideas for the session?
So Vivek, despite this consolidation, we feel that on the stock-specific front, also one should look for buying opportunity in the sectors or themes which are holding well. So L&T from the capital goods theme, wherein we see traction after this recent consolidations. 4250 is what we are eyeing in the immediate target, with stop at 3950. And then we have fresh breakout in VETL. The stock is already at the record highs. Metal momentum is already in place. So we expect 365 in the near future with stop at 335.
Okay, all right. Thank you, Ajit, for joining in. So those are some technical picks and overall levels on the benchmarks as well. We'll step into a short break. Up next, we'll connect with the management of Office Space Solutions to discuss their Q4 numbers. Stay tuned for that. Welcome back. You're still tuned in to Midcap Radar. Office Space Solutions reported a good set of numbers. FY26 was the highest revenue that the company reported this time around. The stock opened higher by around 8%, is now up 4.5%. They have seen a 21% growth in revenues in the quarter gone by. Let's welcome Amit Ramani, who is the chairman and MD at Office Space Solutions, joining us now to talk about the business outlook going forward. Amit, good afternoon. Thank you so much for joining in. Record high revenues in the fiscal year gone by. Your co-working revenues have seen a growth of 35% on a YOY basis. Give us a sense of how much of the margin expansion also this time around came from occupancy improvement. Did you see pricing gains? And is this a trend that you'll continue to see in FY27 as well? What kind of guidance are you penciling in?
So if you look at our overall numbers, we did about 1493 crores of revenue and an EBITDA of about 550 crores on an Ind AS basis, which basically is an improvement of about 350 basis points from last year.
This is also on the back of occupancy improvement because the overall occupancy over the last 12-month period has gone up by 300 basis points from 73 to a blended occupancy of 76. Our overall centers, which are more mature centers of 12 months or more, are sitting at about 84%. This is one area where we feel that there can be further improvement, and FY27, our focus would be to improve the overall occupancy from 76% north to even higher. But I think the 84%, which is the mature centers, seems to be an area where we can improve further, and that's where we'll put our effort to overall improve the occupancy by FY27 as well.
Well, you said you want to improve the blended occupancy rate. Can you quantify the target that you're looking at, Amit? And also, in terms of top-line growth, can you give us a guidance, top-line, what kind of blended margins can we see in FY27?
So, Vivek, in terms of, growth in terms of revenue, the co-working revenue, we are looking at about 25 to 27% growth. The design and build fit-out revenue, we're looking at about 22 to 24. Overall, we are looking at about a 25 to 26% growth in terms of revenue. In terms of margins, I think we will probably stay similar to what we were this year. Because we are, as we had spoken on our earnings call as well, we are focusing on a lot more on premiumization of our overall supply, which is adding more managed aggregation centers in grade A plus supply, also adding more gold and elite centers, and doing partial managed office as well as managed office as well. So all of this will drive the growth in FY27 and also the margin improvement.
Okay. You added around 41 centers, 30,000 seats in FY26, and GCCs now contribute around 23% of the total rental revenue. How do these GCC contracts compare with, say, traditional clients? Is there a difference in realizations? Is there a difference in how contracts are made? Because GCC continues to be the big growth story across flex working spaces. So is there something different in terms of contracts here?
So clearly, I think from a GCC standpoint, you have to see a lot of these, what we call as nano and mid-tier GCCs, right? Which are typically coming for the first time. So they are trying to dip their toe in the water before they come in. And hence our product of gold and elite works really well because they can start with 50 seats and can scale up extremely fast, right? I mean, I'll give you an example without giving the name of the client. The client about 18 months ago started with us in incubation space with 150 seats. Today, it occupies about 2,200 seats in Bangalore with us in less than 18 months. These contracts obviously are in better quality buildings. GCCs coming to India want to give the same experience that they would give at a global level, either in Europe or North America. So as a result, your grading of the building itself is a grade A plus building. And hence, obviously, the rentals are higher and the fit out cost is higher. And ultimately, the realization is also higher. This would range anywhere between, I would say, 5 to 10% higher than our typical, let's say, local multinationals or even also enterprise clients in India.
Amit, you've also highlighted, like you just said, 500 plus seat clients as well as MNC clients are now dominating a lot of your portfolio, almost 37% portfolio from that particular space. Does that also involve a little bit of client concentration risk, and does that reduce your negotiation power, especially when it comes to renewing rents at higher premiums?
So Vivek, we have 3,500 client companies that are our clients. And the way I joke about it is tell me the client name and I'll let you know if he's not my client, right? So I think clearly there is no concentration risk. We continue to see a healthy growth in our client base. Also, another important point, less than 100 seats, 50% of those clients are enterprise clients. So clearly, I think even smaller cohorts are being taken by enterprise clients. So I think from a concentration risk standpoint, I would say we are one of the most diversified co-working operators in the country with 3,500 plus client companies and 250 plus locations. So there is no demand concentration risk or supply concentration risk.
This time construction and fit-out revenues declined 8% in FY26, but third-party DNB revenues grew strongly. What's your strategy here? Is the ancillary services going to be a big part? Are they lower margin revenue businesses? Give us more sense of anything other than co-working, because that's also been growing so far, but then FY26, a part of it did see a revenue decline.
So DNB by itself is not an ancillary for us. It's a hardcore business line for us today. I mean, we delivered close to about 270 crores of revenue. The dip, as we had also mentioned earlier, happened only because we added a less number of seats. And that impact is basically the side of the business where we fit out our own centers and obviously partnered with the landlord. So as that became smaller, there was a bit of a dip. But if you really look at the third party, that has gone up from 48% to almost 59%, and that will continue to grow. Design and build for us is a key ingredient to being successful, because clearly I think as we grow managed office and our own centers, and as we do more premium centers, having the full control of the delivery, which is basically the design as well as the fit out, is extremely important. And we are glad that this has become a standalone business for us, and which continues to grow and will grow in FY27 as well by at least 20 to 25%.
Amit, what I want to get from you is FY27, FY28, total number of seat additions. What is it that you're targeting? Which are the geographies that you're targeting? And if you could just give us a sense of, if there are any revenues that you're making from the F&B side, what kind of margins do you enjoy there?
Sure. So I think from a growth standpoint, we are looking to add about 22 to 25,000 seats in FY27. And Vivek, the key difference that we have done now is that the per seat realization is more important than the number of seats. So I think rather than having a headline number, we would want enough seats in enough micro markets so that our revenue continues to grow. So the seat realization becomes important, but 22 to 25,000. FY28, we have not given a guidance as yet, so I would like to keep it at that. In terms of food and beverage, it's a key part of our allied services revenue. Almost 30% of our allied services revenue comes from food and beverage. Those obviously depends on the type of food beverage offering being done, but typically would range between about 25 to 30% is the margin profile there.
Let's talk about the balance sheet as well. Operating cash flow conversion remains very strong as well, 1.01 times to EBITDA. Now that you're talking about more seat addition that would come by, occupancies would increase, and this is a growing business now, right? What happens to cash flow? Would you sustain this level that you're seeing? Because with more cash generation, there could be more investments as well. So how do you balance both?
No, so clearly, I think our cash generation this year was almost equivalent to what our capital investment was. And at FY27 also, it looks into that similar direction. We are, as you are, for the balance sheet, we are a net negative debt company, and we'll continue to maintain that. So I think from that standpoint, a strong balance sheet gives us opportunities to continue to grow our businesses. This year, our focus also, in addition to co-working, managed office, and design build, is also on frame, which is a furniture business. So I think a bit of obviously growth will happen in that business. Obviously, it's a capitalized light business that we have built. It is completely based on contract manufacturing, where we are providing modular chairs and obviously multiple loose furnitures, etc. So that business is something where we might obviously need to grow that engine as well. And there might be a little bit of small investment that might go in there with the free cash flow.
Amit, one last very quick question from our side. Any pre-IPO investors, any lock-ins ending, any of them have communicated to you that they want a part exit?
I am not aware, Vivek, of any of those discussions at this stage.
Okay, thank you so much, Amit, for joining us, giving us a sense of how Q4 FY26 panned out and the way ahead as far as FY27 is concerned. Thanks once again. Well, we now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Markets have come off sharply from the highs of the day. We are below 23,950 as we speak, and at the day's low as well. So the volatility that we were talking about on expiry day, that continues. Banking index, of course, a big pressure on the Nifty as we speak. We do have a lot of these banking stocks which are at the day's low. Even some of these insurance stocks not doing so well. So look at that. Nifty Bank is the one which is one of the reasons for the fall from the highs of the day. In the broader markets, though, we do have a couple of stocks which are doing really well. Bliss GVS Pharma, after their acquisition announced by Anupam Rasayan yesterday, continues to hit upper circuit. We do have Marksans Pharma, which reported numbers just a while back. That stock is up 15% as well. So keep an eye out on these stocks. But let's talk about Container Corp as well. That stock is in focus on the back of conference call takeaways. Mangalam is joining us now to tell us more about that.
Well, the stock is under pressure today. You know, the reported numbers didn't inspire much confidence. Also, the quarter that we're currently in continues to reel under pressures of geopolitical tensions. But despite that, their overall business did extremely well. On the EXIM front, the margins were expanding. The domestic business was a bit of an issue. So to that extent, what the management had to say about this year is extremely crucial. And there, they've guided for 8% EXIM volume growth in FY27 and 15% domestic volume growth, taking the total volume growth to about 9.5%. Now, this is a fairly conservative guidance, and the management has said that they may revise this mid-year. My sense is that the investors would perhaps like this more than what would happen earlier. You know, at the start of the year, Container Corp would guide anywhere between 15 to 20% volume growth and struggle to meet that through the year, and that's happened for the last many years. The fact that they've lowered that guidance itself should make it more realistic than conservative. So despite today's cut, let's see where this goes. Because apart from that, the other parts in the commentary were fairly crucial and positive as well. They said that the DFC, Dedicated Freight Connectivity to GNPT, will be commissioned by the 1st of June. This was supposed to happen last year in November, December. That it's been pushed to June. But thereafter, this could propel volumes going forward. They have a capex plan of about 950 crores for this year. This may increase going forward as well, depending on how volumes pick up post GNPT. And they've also won a lot of orders for dry bulk and coal, etc., being traveled along with cement. So those businesses could do well for them. But the current crisis and the quarterly numbers not particularly going down well with the street, and the management guidance, which a lot of the analysts are thinking of as conservative, may perhaps prove to be the biggest benefit for Container Corp if they go ahead and meet that guidance after missing their guidance for the last few years.
Well, it's a story where it's been aggressive guidance at the start, but then missing the guidance, and especially in terms of street estimates, this particular quarter has been quite a disappointment. And as Mangalam just pointed out, that particular stock under quite a bit of pressure. Well, the other stock on the radar, of course, is Astra Microwave. The company just delivered its results around an hour ago. And with the limited estimates that we are working with, especially Motilal Oswal, the numbers are a strong beat. And that explains the kind of up move that we've seen in the stock. In fact, the stock has been quite a strong outperformer even in the week or month gone by. Revenues up by almost 20%, margins up 400 basis points. And when you're talking about the EBITDA as well as net profit, both up by 36% and 44%. That has been the reason why this particular stock has been a strong outperformer in the session today. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello and welcome to MF Corner. We are coming to you live. I'm Sonal Bhutra and with me as always Vinny Motiwala. Multi-asset allocation funds, that's one of the categories which has a combination of different asset classes that has been doing well. In the month of December though, we did see a fall. Of course, Vinny will talk about it in greater detail. But there is an NFO here from Bandhan. We'll discuss that and get some questions going with our guest today as well, Vinny.
Absolutely. So multi-asset allocation fund, that's been the trend over some period of time as well, right? And as of now, when you look at it, the allocation obviously that goes into multi-asset allocation fund, for Bandhan it's 50% equities, international equities is 10%, arbitrage is 15%, gold and silver is 15%, as well as fixed income is 10%. Let's discuss more of this category as well going forward with Viraj Kulkarni, who is the Vice President Equity at Bandhan Mutual Funds, joining us right now. Viraj, good afternoon. Thank you so much for joining us on the show. You know, Viraj, we are at such a time where there's so much global uncertainty. You don't know what to be doing. Investors are always worried about this situation. So at a time like this, one, what is your advice to a mutual fund investor? And how do you see this shaping up the multi-asset fund category?
Hey, thank you both for having me on your show. Just to get to the point, so see, we are living in a world where the level of uncertainty and disruptions need to be quite high. Because if you look at the last 5, 6, 7 years, there has been COVID, there have been 2 wars, and we thought that at least the second war between Iran and US would be short-lived, but now it's almost 3 months since the war has started and doesn't seem that it's ending in a hurry. Even if it ends in a hurry, it doesn't seem like oil prices are going back to $65, $70 very soon as such. So what matters to India is the level of oil prices, because I think that's the biggest worry factor for India. Oil at 100, 110 increases our current account deficit and causes a number of other problems like inflation, higher interest rates, etc. So I think we should keep an eye on where oil lands. Does it settle at 90, 80, 70? That's anybody's guess. As of now, the consensus will be that oil prices will be higher for longer than what they were before the start of the war. So I think that is where we are. Now, what investors should do is, in such global uncertainty and volatility, the best thing that an investor can do is stick to his discipline, which is look at your asset allocation, stick to your target asset allocation. Also, such events result in dislocations in the market, or in some parts of the market. See, markets today have enough liquidity that we know, because domestic flows are so strong, markets haven't crashed like 30-40% for the last 2 years. But there are always pockets in the market, either some sector or some market cap or some small subsegment of the market wherein value emerges from time to time. And investors can look at those segments of the market in such geopolitical dislocation to allocate incrementally as such. So I think that is how I look at it.
Okay, take that point, Viraj, and I beg your pardon. Of course, it's not an NFO from Bandhan AMC. You have a long-standing fund here with an AUM of more than 3,000 crore rupees here. So you have seen multiple cycles come by as well. So what would you suggest? Is a multi-asset fund a good fit for a first-time equity investor? Or would it be better suited for someone who already has a portfolio, has an equity portfolio, pure equity play, and then can move the investments there or do fresh investments into multi-asset funds?
Yeah, so just to take a step back, so as we all know, multi-asset funds have multiple asset classes in one fund. So for example, our fund, we call it the 50-25-25 approach as such. So 50% is domestic equity, around 20 to 25% is dollar-linked assets, wherein we have 7% gold, 7% silver, and 8 to 10% in international equity. So that makes it around 20 to 25% in dollar-linked assets. And the rest 25% is in fixed income, of which 10% is in bonds and 15% is in arbitrage. So such a fund, especially for first-time investors, I would say, is a good way to get an allocation to multiple asset classes through one fund or through one category as such. Because if you invest in this fund or any multi-asset fund for that matter, you are getting exposure to domestic equity, international equity, gold, silver, and fixed income. And the other advantage is that the rebalancing is done by the AMC. So, for example, though we had a static asset allocation in this fund, if gold goes up and the weight of gold in the fund goes beyond 8, 9, 10% because of the price move in gold, we would rebalance it back to 7%. And such rebalancing for an ANC is tax-free because, as you know, buying and selling of stocks or securities by mutual funds doesn't incur any taxes. Also, the investor, whenever he redeems, he will get equity tax. It's a very good product for a first-time investor. You get diversification across asset classes. You get rebalancing in a tax-free manner, in a tax-efficient manner. And you don't have to take a call next year, which is that asset class which will do well. Because we all know it's very difficult to time the market. We don't know next year whether equity will do well or gold will do well or international equity will do well. So such a fund gives a good exposure to all asset classes. So we call it a strategic asset allocation. This fund can be used as a long-term asset allocation solution by investors, both new as well as existing.
Okay, sure. Point taken there. When we talk about your fund specifically, right? Strategic allocation as of now, 50% equity, 15% arbitrage, 10% international, 15% gold, silver, and debt also comes in here. Would you like to increase, or would you be looking to increase allocation maybe to international and commodities at such a time when the world is looking at it and everyone's quite excited in terms of the investor community? Is that something you would look at?
Well, see, the key word for us is discipline. So idea is to maintain this asset allocation. And there have been instances in the past where, so let me give an example. So when we launched the fund, I think in Feb of 24. At that point in time, gold had a good run, but not as good as it has had today. But what I remember is gold had already moved up from $1,600 in the international market to around $2,300-2,400. So good 40-50% up move in the 12 months leading to the fund launch. At that point in time, we got questions after such a sharp up move in gold, does it make sense to have gold as a part of a portfolio? But what we have done is we have back-tested this asset allocation for the last 10, 15, 20 years. The back-testing tells us that in every year, there is some asset class out of these 4 asset classes that does well and takes care of a reasonable performance for the fund. So the idea is not to take the asset allocation forward, but to maintain a disciplined fixed allocation for the fund. When you do dynamic allocation, since any of the stock portfolio we manage actively, if we do dynamic allocation for asset classes as well, we will be increasing the risk because there are 2 sources of risk. One is from getting the stock falls wrong. The other is from getting the asset allocation wrong. And if for some reason we get both these wrong in a particular cycle, the outcome will be quite bad for our investors. So idea is to avoid extremely bad outcomes. The idea is to have a fixed asset allocation, and within that fixed allocation, manage the equity portion actively. So we won't be increasing or decreasing allocation to any asset class. The allocation will remain static as is mentioned in this asset.
Take that point. We do have a lot more questions on the commodity bid because that is one cycle which is working in favor of investors if they are invested in commodities. But we have to take a quick commercial break. When we come back, we'll continue our discussion on the other side about the multi-asset allocation opportunity and a lot more with Viraj.
Welcome back to MF Corner on CNBC TV 18. We still have with us Viraj Kulkarni, Vice President, Equity at Bandhan Mutual Fund. Viraj, what we were talking about is also commodities. We want to take that point forward. A lot of other peer funds of yours are looking much beyond gold and silver. While you are still more on gold and silver, is anything else on the commodity side that you would be looking at, or you would want to leverage that benefit in this commodity cycle?
Just to put it honestly, we think that gold and silver, or at least gold is a commodity which has been a asset for the last 1,000, 2,000 years. It has been a store of value across the world as such. So that's a very, very relevant or a tangible store of value for a long period of time. So that is an asset class we feel very safe with. Beyond that, or beyond gold and silver, we just don't have the expertise as of now to either go into oil or some rare earths or other precious metals, etc. So that is why we have taken a call to stick with what we understand. Gold is a store of value. It's a popular asset class, and it's very easy or very liquid to get in and out of both these asset classes. So we stick to what we understand, and we avoid what we don't. I think that's the principle.
Okay, so stick to what you have and avoid the others. But if we talk about multi-asset allocation funds, we do see some allocation changes based on market conditions. Yours is a more strategic, stable approach. So tell us, what is the investment philosophy behind that, so that a viewer who's trying to understand your particular multi-asset allocation fund can make a decision basis that philosophy that you follow?
Yeah. So I think the whole thought process is, so if an investor comes in this particular multi-asset allocation fund, at any point in time, he can be rest assured our asset allocation will be within the ranges that we highlight. So that there could be 1 or 2% swing here or there, depending on the momentum of the markets, etc. But broadly, if an investor comes into this fund, he will get 50% domestic equity, 25% dollar assets, which includes gold, silver, and international equity, and 25% in fixed income with equity taxation, because out of that 25% fixed income, 15 is arbitrage. So 50 plus 15 is 65% in domestic equity. So you get equity taxation. Even within that domestic equity, we get half is large cap, 1/4 is mid cap, and 1/4 is small cap. So this is the asset allocation that investor gets at any point in time. He can be rest assured that the fund manager will not take a call to either go 20% in gold or 20% in silver or 20% in international equity. So discipline is the key of this fund. The other thing is, when we back tested this asset allocation for the last 10-15 years, we saw that in a passive way, the fund can generate 12% compounding over 3 to 5 year periods of time. Or this asset allocation can generate 12% compounding. If we see Nifty has compounded at around 13% over 3 and 5 year periods if we take the last 15-20 years of data. So the idea is, if the equity can be managed actively and we can add some alpha of 2%, 3%, 4%, that's anybody's guess, then the total returns of the fund can be Nifty-like or marginally higher than Nifty. But the volatility of the fund should ideally be much lower than Nifty, because it has only 50% domestic equity, 50% are other asset classes. Also, if there is a Nifty collapse, the hope or the assumption is that the other asset classes will protect the fund from falling, or it will fall much lesser than that of Nifty to that extent. So we saw that in the initial correction of September 24 till Feb 25, where Nifty corrected 15%. I think the fund corrected some 8.5%. So that's the idea. Nifty-like returns over the long run. But during bad times, hopefully the fund should fall much lower than the market.
Absolutely. During bad times, hopefully it falls lesser than that. But otherwise, average ways, you're expecting better return when we're in an up move versus the Nifty. Viraj, you all normally do this rebalancing quarterly as well in terms of caps for domestic equities. And how do you all adjust it between that? So for sure, will it be like 50% in large cap and then 25% between mid and small cap is what you're saying?
Correct. So come to the rebalancing bit, it's more of an ongoing process, Because, for example, what happened when we remember in Jan, gold and silver really went through the roof. You saw significant returns in gold and silver from 1st of Jan to 31st of Jan. So by the end of the month, we noticed that the weights of gold and silver in the fund had crossed 8, 9, 10% even. So we sold some to get the weight back to around 7%. So that rebalancing is an ongoing process. We don't wait for a quarter end or month end or 6 month end. Whenever we see that the weights have been too much away from our target weights, we go ahead and rebalance to that extent. And within the equity, yes, you are right. Large is 50, mid is 25, small is 25. That is how we run it.
Okay. So the biggest question, of course, sometimes there's no direct answer to it, but if an investor is planning to invest in a multi-asset allocation fund, do you think an SIP is best or a lump sum better given the diversified nature of the fund, right? Because it's not one asset class that you're investing in that you need more averages to come by. What do you suggest here?
Hey, you are right on that. For a multi-asset fund, because there are multiple asset classes, lump sum and SIP both are okay. Because even if one asset class might be at the peak of the cycle, there are several other asset classes which are not. So lump sums in such a fund are generally okay. It's not a no-no. But SIP is also okay because it's a good way of saving and allocating your long-term capital as such. So I will be agnostic to SIP or lump sum in a multi-asset fund.
Okay. For someone who is looking to invest in your fund, what would be the ideal holding period that you would say for the, everyone says long term, but ideal period where they would maybe make the best sort of returns from your fund?
See, ideally the long term, as you rightly said, but pure equity, we would say at least 5 years. But since it's a hybrid, 3 to 5 years seems like a reasonable time horizon to invest in this.
Okay, all right, take that point. This is about multi-asset allocation funds, but we did see that this time around in the month gone by, there was a fall in the data. Of course, it's a monthly data. We keep getting a lot of volatility month by month in this. But is this a category which would make a comeback big time, considering that we are seeing equities go down? There are some questions around rate hikes as well, and commodities at the same time are doing well. Do you think this could be a secular trend going forward, since one category in itself is not doing so well?
Yeah, you are right. So see, month on month, there could be some variations. There could be some seasonality also to it. And we saw that when gold and silver had a big rally in Jan-Feb, the flows into multi-asset funds also picked up quite dramatically. Now that gold and silver have cooled off, the flows also have cooled off to some extent. But you are right, over the medium to long run, this is a good way to get exposure to all these asset classes. Now, there are a lot of theories going on in the market. People are saying maybe now is the time for hard assets over soft assets. Previous 10-15 years were tech and soft assets and equities. Maybe the next 10-15 years will be about commodities, real estate, hard assets, etc. So the point is, no one really knows the answer to these questions. People, different commentators and experts will come and give you different theories and theses about how they think the future will pan out. But given the level of uncertainty, it's a good fund to have because it has equities, it has international equities, and it has hard assets like gold and silver, and it has fixed income in case there is a big market correction. So it's a balanced mix which can do reasonably well over a 5, 7, 10-year period.
Viraj, I have a question in terms for the valuations for India's, when you look at it as of now, that something is a bit of a concern, right? So you being the fund manager, large, mid-cap, small cap, in this last 6 months, how have you, managed to balance all of it in terms of valuation as well as in terms of sector moves or allocation that you all have shifted? Anything specific you could talk to us about that as well?
Valuation has been a very hot debate in India for the last 6 months, 12 months, and there is no right answer. Everyone will have their views whether a certain PE is right or not. But the way, at least I look at it, is that there are now some pockets of the market where there is value emerging. So if we look at the top 10 stocks of Nifty, so there is an index called the Nifty Top 10 Equivalent Index, which I keep on tracking. That index is now trading at a PE of 15 times. So obviously we are looking at 2-year forward PE because that is the number that everyone likes to look at. So that number is 15 times. If you look at Nifty, the 2-year forward P is 17 times. So 15 and 17 PE is by no means a number which looks very expensive or obnoxious to that extent. Someone can argue it is marginally expensive or marginally cheap. No one knows the right answer. But a PE of 15 is very, very reasonable in my view. If we look at the mid and small caps, maybe the valuations there are not yet as cheap, though a lot of froth is out of the system. So if we go back to 24, mid-cap are trading at a PE of 30, 35. That P is now down to 23, 24. So the froth is definitely out, but are they very cheap? The answer is definitely no. They are reasonably priced, but the earnings have to come because the whole premise is that the growth in mid and small caps is higher. That is why their multiples are significantly higher than Nifty or the top 10 stocks out there. If the growth doesn't turn up to be 18-20% as is forecasted, there could be downside over there as such. So valuations are okay, but lot depends on growth. But when you move to Nifty or top 10 stocks, the valuations are so cheap as of now that even some growth disappointment might be okay. The downsides in those stocks will be quite limited as such. And we like to compare India to other global markets. We say India is one of the most expensive markets in the world, etc., etc. If you look at the Dow, the P for the Dow is around 19-20 times, and the Dow is the old economic companies in the US, similar to how Nifty is the 50 stock. So versus 19-20 P for the Dow, Nifty today is at 17 P, and the top 10 stocks today are at 15 P. So I think there is definite value in that segment of the market at least. The rest of the market may not be as cheap. As long as earnings are there, it's okay. But if we have earnings miss in mid and small caps, then there could be some downside.
Take that point. As you said, valuation continues to be the big debate that we are having, right? But thank you so much for your time today and joining us, talking all things multi-asset allocation funds and the big talking point, that's valuations for Indian markets. It was a pleasure speaking with you. Well, with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
The Taiwanese index down 0.5%. Most of the markets have now come back on stream.
US, the Central Command saying, well, they've attacked targets in southern Iran.
But we had always said that the margins will remain in this range, and I think we've delivered that.
So 23,996, it's absolutely flat, nothing.
So yes, I think AI trade is pretty important for this divergence where India has underperformed.
I mean, we are not losing any sales for want of capacity even today.
The reason that we're talking about monsoon today is because today is the onset date as prescribed by IMD.
Looking like a decent screen on the frontline indices at least.
And that, I think, is one of the key reasons why the currency is under pressure.
Month of May 2026, it's going to be the strongest May that we have seen since 2018.
Probably we will increase our production by 2.5 times of everything.
10 to 12% is catering to international patients.
What we understand is that the meeting is expected to continue through the day. So a very big day for Tata Sons.
Continues to be a very volatile market. We slipped sharply below the 24,000 mark, then made a recovery. So yes, the market's fluctuating.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Rima, and we've got a very exciting final 60 minutes as we wind down the May series, where the bulls have tried to fight back, but as of now, it's more or less a flattish series. Pretty much even Stevens, both on the Nifty as well as the Nifty Bank. Hey, Rima.
Hi, but just for the day, I think bears have a little bit of an upper hand. The way the markets came off, we opened up on the flatter side. Then there was this intraday recovery which took place in the first 1 hour of trade. The Nifty almost went to that 24,100 mark. But since then, there's been a slide, a grind down lower. And as we speak, we're down about 0.5% on the Nifty and the Sensex. Lots of numbers coming in. We'll talk more about it. EID Parry, Q4 numbers for you on your screen. Astra Micro has been a big mover on the back of numbers. As Nigel said, it's the Sensex monthly expiry. So the last 1 hour is going to be very, very exciting. So how should you position yourself? Mitesh Thakkar, as always, is joining in. Mitesh, what would you make of this intraday slide from the top?
Good afternoon. So I think, slightly surprising. I would have expected some continuation, but not kind of on the negative zone, because both the Nifty and the Bank Nifty remain above their 10, 21, 30-day averages. So pretty okay. I think for the Nifty, what's important is that we were finding it difficult to get past 23,800, 23,850. And now I think on this pullback, we should not start closing below that. Otherwise, the breakout will be negated. But till then, I think, hoping that the market will remain on the positive side. On the stock side, I have a few buy calls. I have a buy on Excite with a stop at about 355. Look for targets of around 375, and Container Corporation Concord. That's on the negative side. That's a sell with a stop at about 481 for targets of around 455.
So Mitesh, since we still haven't negated the up move by closing or trading below the 23,850 mark, would you go long at this level, or it's still a wait and watch on the Nifty?
Well, for me, I think, one could possibly attempt a long over here with a 70, 80 point kind of a stop loss. That's the idea. Or maybe, buy partly now. If you get another 40 point lower index level, buy more. And yes, keep a stop maybe 23,830, 835 on this spot. And most likely this trade should work on the upside.
Okay.
Yeah. Okay. All right. Mitesh, thanks a lot for joining in and giving us those details. We'll come back to you soon. EID Parry, they've reported a loss in comparison to a profit. I think the margin is more or less, at around 7.5%.
It's a one-time loss.
One-time loss, yeah. So that's why, in fact, we are seeing that operational performance appears to be steady. The reason that we're seeing the net loss is because of a one-time loss that compares with the gain. Revenue growth of close to around 15.5%. I think we have margins. So let's get that up. I think it was 7.7% if I saw that number correctly. And the reason that the net profit is up, is down is because of the one-time loss. Top line as well as EBITDA number growth as much. Margins flat at around 7.7%. Yes, I saw that correctly. One worry today has been the crude oil prices. That's spiked up again. It's almost moved to around $100 per barrel mark. So that's a bit of a worry because just yesterday overnight, it had gone all the way to around $95, $96 per barrel. So we can keep an eye out on that. That's one worry that's playing out. Besides that, its expiry, the monthly expiry is playing out. So that's why the volatility actually is playing out here. And I'll attribute some part of the fall that we're seeing in today's trading session to the expiry-related factor because the India VIX is still cooled off. That's a good sign. I want to see that number go to around 15. If that's the case, I think we'll have the next round in terms of the up move. So the India VIX cooling to sub 15 is extremely important. Today in a market which we're down 100 points, it's not moved inversely in comparison to the market, which is good. Cooling of the VIX, positive sign. Moving to the options data then. The 23,950 call out there. The premium, I don't think we've got the correct strike out there because I think it's, there is some writing being seen at around this 23,950 call. We should get that one up for you on screen. Yes, that was a 23,900 call actually that was up for you. The 23,950 call, there is some writing that is being seen at that particular level. So we'll keep an eye out on that. On the downside though, the 23,900 put. Remember, the premium at the start of today was around 35 rupees approximately. That's come down to around 20 rupees. So if you look at the 23,900 put, there is writing being seen at that level. You have the 20 DMA as well that's coinciding with that. So this 23,860 ballpark is an extremely important support zone. Going by the options data, going by the technical levels, I don't expect that one to break in today's trading session. Moving to individual stocks, JSW Energy, good amount of buying out there. There was some shorting that was seen early in the contract. Well, that in fact, we are seeing some buying out there. And KPIT, so a bit of short covering is what we're playing out there. On that one. One big rank underperformer. There were some short rolls as well. So keep an eye on that. And Tata Motors PV, well, it seems the shorts are scampering for cover as the contract winds down because that stock as well has moved up. Net, 20 DMA, extremely important because of the 23,900 put where we're seeing a good amount of writing. However, any kind of bounce around 24,050 will be met with some resistance. So keep an eye on that front. That's about the F&O action. Let's focus on Astro Microwave. That stock is surging after reporting its fourth quarter numbers. Ria joins us to fill us in with details on that front. Ria?
Well, yes, Astra Micro up nearly 12% today, making a fresh 52-week high as well. And this on the back of very strong set of numbers reported in quarter four, well ahead of the estimates that the street was working with. The revenue has seen an increase of around 20% on a year-on-year basis versus estimates of just 11% growth. And this has been driven by very healthy execution of a strong order book for the company. EBITDA and net profit also seeing increases of 36% and 44% versus estimates of a 3% and 4% decline respectively for each of them. And margins also seeing a very strong expansion of 400 basis points at 33% this time around. And the material costs have come down to around 50% of sales this time around versus 54% in quarter four of last year. So that has aided the profitability for the company. And even if you look at the overall performance, the full year performance, that has also been ahead of estimates with the revenue, EBITDA and net profit increasing by around 11% and 25% each. And the revenue growth, however, has been slightly lower than the guidance that the company had given. They had guided for a 14% revenue growth, but nonetheless, the overall numbers are very strong for the company, which is why it is surging in trade today. In terms of the order book, the current order book number has not been disclosed yet, but at the end of quarter three, the company had a very strong order book of around 2,226 crores. And going forward in the earnings call, we will be watching out for any commentary on ordering on the defense and the non-defense side, the EBITDA margin sustainability, and also updates on large orders like the QRSAM component orders, the AESA radars, and other large system orders as well.
When's the conference call?
That will happen tomorrow at around 11 a.m.
Okay, we'll come back and watch all these points. But what a strong move coming through on Astra Micro. Sudeep, you want to comment on defense in general in that? How does Astra Micro fit?
Well, of course, defense is a great space to be in from a long-term perspective. The only challenge in defense has been the valuation has been really rich for most of the companies. So, it's not, I think, for the faint-hearted because there is a lot of volatility. But if you are an investor from a long-term perspective, it's a great space to be in. I've been liking BEL, Bharat Electronics, for a very long time. And I think even now, at 400 plus levels, it does look good from a long-term perspective. Astra Micro, I think the commendable performance. I think this is much, much better than what was expected. I've been monitoring Bharat Forge from a defense perspective and also looking at what L&T is doing as far as their defense businesses are concerned. And I think it's a good story all around. Whether we want to consider it within defense or not, I think the shipyards are also a good proxy for the defense play. And all the shipyards, 3 shipyards, which Mazagaon Dock, you can talk about Cochin Shipyard, as well as Garden Reach. All 3 do look good from a long-term perspective.
Got it. Okay. All right. Sudeep, got that. Sudeep, just a quick word on a couple of other big movers. Tejas Networks, that's a stock that's bucked the trend. Remember, this is a stock that was 1,200 rupees, came down to around 300 rupees, and now, in fact, it's seeing good amount of traction. Would you bet on it at around 500 rupees?
Not really, Nigel. I think there is some excitement because today there is a Tata Sons board meeting and some probably plan is being worked on for this company. But unfortunately, they have got into a space where they're not able to come out. They've been trying, but they have not been able to come out. The BSNL contracts are not really that great anymore. And somehow they haven't been able to move on from those BSNL contracts and get more contracts to kind of sustain the momentum. I will wait and watch. I don't think I will enter the stock now.
We've been all trying to unravel this, unpack the move behind STL, Sterlite Tech and HFCL. What a phenomenal gainer. STL itself is up nearly 400% since the start of the year. It's now being seen as a data center play. With a very large order of $1.1 billion coming through just earlier this week. Do you have a view on Sterlite Technologies? People have burned their fingers in the past in both STL, HFCL. There have been execution challenges. It was more of a commodity play, so it was that cyclical element. But any view here?
Well, STL definitely does look good, but I'm not saying from a point of view of buying. I think the run-up which had to happen based on that $1.1 billion data center and other order has already happened. But the pivot towards data center and pivot away from telecom, I think, is very, very timely. There is significant opportunities in the data center business, and they're trying to grab that. So I think the strategy-wise, it's great. Whether to buy the stock at this stage or not, my answer is no. It's already moved up quite a bit, and all the good news is already factored in.
Moved up and how? In fact, actually, getting back to the Tata Group point, all of them are higher today. So Tejas is one, we spoke about it, 5.5%, 6%. Tata Communication has moved up nearly 5%. On the, you've got a Tata Chemicals, Tata Power also up 2%. So there has been some excitement surrounding the Tata Sons board meeting later today. But let's talk about IFB Industries surging after a strong quarter. Upasana is now joining in to fill us in with the details here. Upasana.
Well, it has certainly been the volume buzzer for today, trading at 32 times the average volume. Now, if I talk about the Q4 numbers, overall the company reported a good quarter, and the growth was mainly driven by company's home appliances segment that saw double-digit growth of 11%. Now, overall, if you look at the revenue has seen an uptick of 12% on year-on-year basis and 6% sequentially. Now, if I talk about the segments, the company has reported a double-digit growth across its segment, be it appliances 11%, engineering 14%, motor 21%, and steel at 11% on year-on-year basis. Coming to the gross margin bit, the company's gross margins are down 152 bips at 36% because of the adverse mix that the company has undertaken this time around. And in terms of other expenses, if I talk about as compared to a percentage of sales, the other expenses have also come down because of the various cost control measures taken by the company, which has certainly aided the margins. EBITDA margins stood at 5.5% versus 4.2%, and the reported PAT has more than doubled 1.2x times. Now, coming to the key segments, home appliances revenue growth here stood strong at 11% as mentioned earlier, and here it is one of the key segments that reported a margin expansion of nearly about 90 bips at 1.9%, while other two segments have seen a margin contraction here. Engineering revenue growth of 14% and margins have also come down from 13.7 to 12.2%. Motor has turned nearly neutral in terms of its EBITDA. And lastly, coming to steel, it has reported a growth of 11% and the margins here are under pressure from 4.9 to 3.6%. So overall, if we look at the results, the key growth driver here was the company's home appliances segment.
Got it. Okay, all right. Thanks a lot, Upasana, for that. What's your view, Sudeep? IFB Industries, I remember there was a large trade that was available at 1,100 rupees. That got cleared out. And now the numbers look pretty okay, post the recent underperformance. Your view?
No, I completely agree with you, Nigel. The numbers do look good. And I think there has been generally a surge in demand as far as home appliances are concerned. They have also pivoted production towards where the demand was higher. But in this entire, consumer durable segment, we do like Eureka foams quite a bit, and our preferred pick is Eureka foams. They don't directly compete with IFB Industries, but there are some common spaces, and we like Eureka foams much more than IFB Industries.
Okay. Any other stocks, Sudeep? So many numbers have come through.
Well, I do like LIC quite a bit. I think I did like the numbers. And we strongly believe that they are probably at a stage where they're going to take off from this stage. The investors in LIC have suffered quite a bit, and they have struggled to reach that IPO price and reward the shareholders. But I think now they're at a takeoff stage. And, we have been, penciling in a target of around 1,200 in a year's time. All the parameters do look good and are poised for takeoff. That's what our belief is. So that's our, that's one result which we really liked.
Got it. Okay. All right. What about Poly Medicare? Did you have a look at those numbers, Sudeep? In the past, there's been a lot of focus on this medical equipment. I think you're suggesting already that that's not a company that you've had a look at, right?
No, I did have a look, and the results were not at all good.
Yeah, and the guidance as well is not too good, and receivable days have moved up. So I think the street is getting a little bit skittish. At one point of time, the street was willing to pay top dollar, top PE because it was a company that was growing very well and margins were high. Now, suddenly the stock has fallen off the cliff. You were making a point, Sudeep. Please give us your view. The stock is down 7% today from the recent peak. I think it's lost close to 40% of its market capitalization. Please go ahead.
Absolutely, Nigel. I think the results were pretty disappointing, and the guidance was even more disappointing. So I think I will stay away from this stock and definitely not recommend a buy because the stock has come down, it's definitely not worth buying. Let's see how they move going ahead. And if things recover, then only it's worthwhile looking at it. Otherwise, it's better to stay away. There are other companies in similar spaces which are much more preferred at this stage.
Sudeep, view on auto stocks. The Vahan data for May so far is actually very strong. So, research seems to suggest that May 2026 could be the best May since May 2028. And already the registration numbers are higher than what we had last year. And all segments are likely to see double-digit growth, with passenger vehicles itself showing a growth of more than 20%. And you've got names like, of course, Tata stocks are doing well today for different reasons. But there is a Maruti which is in the green, Tata Motors passenger vehicles higher. M&M, though, has corrected. Any view on autos? So far, at least, the numbers seem to be holding up.
Well, I think I like the Eicher Motors numbers. I think the numbers came yesterday and a day before, and a fantastic set of numbers, considering particularly the way they are going about their business. And I strongly believe that the currency depreciation would have helped them significantly and will continue to help them going forward as well. A lot of their revenue comes from exports. So that's one space where we tactically believe is definitely worth looking at this stage. We do like Bajaj Auto, and we've been liking it for quite some time. I mean, leave aside the buyback and related, trading opportunities and things like that. But fundamentally, also from a long-term perspective, we do like Bajaj Auto. Based on the data and based on what is coming out, I think we do also like Maruti. It's not a stock which is available at a cheap valuation. It is valued reasonably well, and but from a long-term perspective, based on the way they are pivoting their business, I think Maruti also can be a long-term bet.
Okay, all right. Sudeep, wanted your view on Concord for the time being. Just going across to Mangalam. He'll give us a quick analysis on those numbers that look quite poor. Mangalam.
Well, those numbers were expected to be soft, and they were soft, and which is exactly why the stock is lower in today's trading session. The important part is that, even the current quarter is laced with a fair amount of geopolitical uncertainty. So EXIM business, which saw margin expansion in the fourth quarter, the question is whether that sustains in the first quarter and this year itself or no. But the other reason why the stock is also lower perhaps is because the street was expecting blockbuster sort of guidance coming in from the management this time around, because every time over the last few years the company has guided for at least double-digit volume growth, if not between 15 to 20 odd %. But this time around, the change of the management, the new MD has guided for 9.5% overall volume growth, with 15% coming in from domestic and 8% coming in from EXIM. To my mind, this is a more realistic guidance, because over the last few years, every time the stock has moved on blockbuster guidance, over the next 4 quarters, the guidance has not been met by the company, which includes the guidance for FY26 as well. So to that extent, conservative/realistic guidance as per the management, and they said that going forward, they will revise it if need be. The triggers for Container Corp going forward will also be the fact that the DFC, the Dedicated Freight Corridor, all the way up to JNPT, will start from June 1. This was something that was expected to start in October, November last year, but now that it will start from June 1, it will be a volume positive for them. Add to that, they're also, they do have some capex plans which they will revise later in the year, about 940 odd crores. And importantly, they said that there are other businesses for which they won orders from, Coal India and the others, cement players as well, should do well for them in the dry bulk business. But having said all of this, the fourth quarter numbers were weak. The guidance is on the conservative side, and the first quarter also has a fair amount of uncertainty, which is why the stock is among the top F&O losers today.
Okay, all right, Mangalam, thanks for that. Sudeep, what's your view on this one, Concord? I recall when the company was going to get divested, there was so much of interest. Who's going to bid? What's going to happen? You're looking at the closest peer as well, Gateway Distriparks, I recall. Now the stock, the numbers, as Mangalam said, were disappointing, but they were expected to be disappointing. Your view on the name?
What's happening in West Asia? The EXIM part of it was under significant pressure. But what I'm banking on is the DFC, which I think they will start getting the benefit from 1st June. So I will definitely keep watching this space very, very carefully, because that's supposed to bring in significant benefits for Concord going ahead. The dedicated freight corridors are the way forward, and Concord is moving towards that. So I think that's one good news. Double stacking has been allowed, and that's also a good news for Concord. So going forward, I think things should start improving, but not in the first quarter. So, we are, definitely expecting another set of subdued numbers for Q1 current fiscal as well. Things will and should start improving from Q2 in the current fiscal.
Okay, thank you very much for that. The Nifty is now just dipped below the 24,900 mark. As Nigel said, partly maybe to do on account of the Nifty monthly expiry, but Coal India has dipped into the red now. It's lost about 2% in the last 1 hour or so. Wipro is seeing some profit booking. It's a stock which moved up 11% in the last 8 trading sessions as the record date got announced of 5th of June. So there was some buying ahead of that. But today, along with the rest of the IT packs, even a TCS is subdued in trade because the rupee has been resilient. So IT is on the back foot, and Wipro in particular is giving up some of the recent gains. Private sector banks have been on the back foot. So HDFC Bank is a cut of more than 1%. Axis Bank, ICICI Bank, all down nearly 1%. And other notable drags include a Bajaj Finance. You've got a Bharti Airtel with a cut of 1.5%. Shriram Finance. So many of these NBFCs too, along with the large private sector banks, are seeing some pressure. So 23,890 on the Nifty. But Nigel, you had a chat with Anil Agarwal?
Well, that's right. Our channel had a chat with Mr. Anil Agarwal earlier today, and he gave us his comments with regard to the demerged companies. He also said that they'll actually all get listed in the next 1 month or so. He also gave us a sense in terms of the capex spends. He adds that he's extremely bullish on copper, aluminium and oil and gas. Please listen in.
All the share will be in the process of issuing. By next month, all these 4 companies will trade by themselves. It will have a very strong management. And this will be company which is what we require in natural resources in India. $20 billion we spend. Fund will never come on the way. Government is with us, and this all will be India. And by this, I'm looking forward at least 5,000 downstream industry to come in with our product. I'm very bullish on aluminum, copper, oil and gas. All three critical metal, very, very important. And fourth is, we can be the largest producer of arm and ammunition. The kind of factory we have, massive, if they can be modernized and privatized, we will be the largest producer of today's digital technology given. But we have to be, Parliament has to be together. Everybody has to be together, one way, one goal, to make sure that we will produce arm and ammunition here. And we run our, whatever strength we have, we leverage that 100%.
Well, Mr. Agarwal, always pro-India, pro-development, talking about the immense scope that India has, and we need to dig into those resources. Longer leases, becoming self-sufficient as well. Vedanta, actually, that's the holding company of Hindustan Zinc as of now. So bulk of the SOTP comes from there. But the stock, what a beautiful listing, right? 290 rupees, I recall it listed at. It's at around 350 rupees, which makes the equation very easy when the other listed entities come into place. One could easily make up their money going by the current prices on aluminium. Should expect around 450 rupees in terms of the aluminium business listing itself. Well, we'll slip into a short break. Come back. We'll get chatting with Anuradha Naha of PGIM India Asset Management. Stay with us. Welcome back. Well, the markets are a little under pressure right now, but remember, we're going to an expiry-related move as well as we speak. That said, let's welcome our guest. We have Aniruddha Naha, the CIO at Alternates PGIM India Asset Management, joins us on the show. Hi, Mr. Naha. Good afternoon. Good to see you. Well, how are you all feeling about the current market setup? Hopefully, we're coming towards the end of this war, and de-escalation seems to be the way we're headed in. That's the hope, at least. And if that's the case, then what would your deployment strategy be? What kind of cash are you all sitting on? And are you gradually deploying, or are you waiting for a better entry opportunity?
Sure, Nigel. Thank you for having me here. With the assumption, as you mentioned, that the conflict is more or less coming to an end, we've gone ahead, assumed it internally also, and literally we aren't sitting on cash, more or less completely deployed. I think this quarter's earnings also was very visible in terms of the strength of earnings across the market, especially in the mid-small micro segment. Large caps were not great, but they were okay. But if you start looking at the earnings playing out from the mid-cap to the small-cap segment and beyond, I think the earnings strength has been exemplary. We haven't seen this kind of earnings strength play out probably in the last 8 odd quarters. Going ahead, the next 2 quarters will get impacted because there would be logistical chains, the value chains across a lot of industries getting impacted due to availability of natural gas, diesel, the logistics chains itself getting disrupted. But if someone takes a view beyond into the second half of FY27 and beyond, I think a lot of normalcy will come back, and we believe the small cap segment will continue to demonstrate very strong earnings growth. And that's where we've been positioning our portfolios.
Aniruddha, hi, afternoon. Many companies seem to suggest that they will be able to manage the margin pressures on account of commodity inflation. At least when we chat with them, what has been the overall feedback on which companies will be able to, manage it, pass it on through internal cost-saving measures or some sort of a price increase? What will be the extent? Are we getting panicky? Is the fear about commodity inflation overblown to some extent? What is your analysis?
So actually, our view is if the conflict gets over, if there is some decisive news on that, irrespective of what the impact is in the next 1 quarter or 2 quarters, the markets will continue to remain in a bullish tone, because I think that a lot of uncertainty goes away. India's reliance on the Middle East is extremely high. So any sort of resolution on that front would be taken very extremely positively. So our sense is, yes, there would be converters. Probably they would get impacted by a quarter or so. They pass it on. Real branded plays like paints, etc. They have always, through the history, been able to manage margins and pass it on, and they never reverse it. So there will be a segment. Anything which is branded will be able to hold on to its brand. But generally, we wouldn't be too worried about margins. We believe there is going to be some impact into the next couple of quarters, but normalcy should start coming back. And I think the bullishness, in spite of the markets knowing probably the next 2 quarters will be a little, unpredictable. Markets continue to show the resilience purely from the fact that we believe the conflicts are probably getting over.
All right, Aniruddha, one of the sectors that will be waiting for this conflict to cool off will be the alcohol beverage sector, right? Because out there, the glass costs have spiked up, packaging costs as well have moved up. And otherwise, though people talk about consumption going down, in India, there appears to be a trend that you move towards premiumization. So some of these companies will gain. And I'm looking at it, I believe that consumer discretionary is one of your top sectors. And within that, United Spirits. So cheers to that. Tell us more about why you like this theme.
We generally, so glass, our interaction with the management generally across, some of them will be able to mitigate it with a quarter or this thing. So there will probably be a 1 quarter pain. So that's a very small, going to be a blip for many of these companies. Generally, the spirits part, whether it is, the large caps or we've got names even in the small cap segment, we believe the penetration levels of branded alcohol, if you take a longer term view, is definitely on the lower side. Premiumization, just as you mentioned, one of the names, they've vacated the full lower end. So that the focus on top, as you know, India premiumize, some of these players will benefit. The margin profiles get better, and the smaller guys who are probably there on the more commodity side probably get a chance to move up the value curve. That is one. Secondly, among the smaller guys, there is a mix of ethanol play along with alcohol. So it is a double engine working out there with the government's focus on bringing ethanol up as a percentage in the fuel consumption bucket. We believe generally alcohol and especially on the smaller side, alcohol plus ethanol could turn out to be a very interesting play over a period of time.
Anything else that you'd like to flag off? Any interesting research from your end?
See, we've generally looked down the market cap. We go down to almost 1,000 crores of market cap. That's really small. But when we look across, capital goods, textiles, agrochemicals and chemicals is a segment which literally people have discarded it over of course, the last 6 months, things have started coming back. I think any cost pressure release on the raw material side would see some benefits play out there. One interesting fact that we looked at is when I look at the Nifty per se, there is a segment of IT and then there is the segment of lending, which are the banks primarily. They constitute together a large segment of Nifty, and the earnings in that bucket will continue to remain subdued. So the alpha generation in the Indian markets, I think a large part will start coming from either mid-cap onwards and lower. So our sense is Nifty might continue to do whatever it is, but the real action will probably continue in the mid-cap and the small-cap sector.
And what about tech? Very divergent views, a lot of news flow. The situation is very, very fluid. My gut is that either those that are brave will make a lot of money, or in fact, the sector is going to get even more bombed out, even from these levels. It won't be a very short range. It could be a big outsized reaction on the index itself. And within that, I believe some of these ER&D companies like KPIT, they are on your buy list. How are you viewing tech? And within tech, what are you looking at?
So our view on tech, we've been very underweight with no leading tech names actually in the portfolio, completely zero sitting out there. We've picked up certain ER&D. We believe those sub-segments in the markets would continue to do well. If I look at the overall pure IT names, our sense is growth there will be probably 8-10%, not more than that. For an 8-10% kind of growth, either, I wouldn't play India for an 8-10% kind of growth. To be very frank, it's an emerging market. From that perspective, if I have to play it, IT, I would want to play it when either the growth is beyond 12% or the dividend yield itself for these stocks go up to 7-8%. It has to be in one of those baskets. Today, it's somewhere in between, frankly speaking. And hence, we've stayed away from this basket for now.
Well, 8 to 10% on the top line, at least for now, looks like a stretch given the FY27 guidance. At least on the top line is of low single digits, but there will be some margin benefit on account of the rupee depreciation. But thank you, Anirudh. Great chatting with you. Let's talk about auto. The vehicle registration numbers are out for the month of May, and it's going to be a good May. 2026 could be the best since May 2028. Sudarshan joins in to tell us what he's picking up. Sudarshan.
The month might be different, but one thing is common. Like previous few months, this month, that is May 2026, is also going to be very strong as far as Vahan auto registration data is concerned. And if the current trend holds, May 2026, as you said, is going to be the strongest May that we have seen since 2018. And so far, that is from May 1 to 25, majority of the auto companies have already crossed the registration numbers that they had seen in May 2025. And the numbers are being led by the segment that is passenger vehicle, which is expected to see a growth of at least 23 to 25%. Talking about the total vehicle registration growth, so far the growth is around 12%. For two-wheelers, the growth is around 9 to 10%. Passenger vehicle, as I told you, growth can be more than 20%. Commercial vehicle segment 2 is seeing a double-digit growth, with M&HCV segment continues to lead the growth. And for this month, they are expected to be more than 15%. And as far as three-wheelers are concerned, their growth can be as high as 20%. Talking about all the companies, starting with two-wheelers, two companies that are going to outperform and that are seen gaining market share this month. Those two companies are TVS Motor and Bajaj Auto. One company that continues to lose market share is Hero MotoCorp, and this month too they are expected to lose market share of around 100 basis points. And one surprising factor this month is Eicher Motor, that is Royal Enfield 2, is losing market share mainly because of the production loss. Now, if you talk about electric two-wheelers, for Ather Energy, it's going to be another strong month. For Ola Electric, for third straight month, their registration units or registration numbers can be more than 10,000 units. Talk about passenger vehicle segment, two companies that are gaining the market share. Those two companies this month are Maruti and Hyundai. Even Tata Motors PV and M&M Auto continue to do well, and they too are seeing very healthy growth. In the commercial vehicle segment, both major names, Ashok Leyland and Tata Motors commercial vehicles, registration numbers have already crossed the levels that they had seen in May 2025. Lastly, in the tractor segment, it's a mixed picture. M&M Tractor continues to outperform, while if you talk about the underperformers, and those are Eicher Tractors and Escorts Kubota. So still we have few more days to go, but if the current trend holds, we are expected to see another strong month for Vahan registration numbers.
All right, thank you very much for that. Get into break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned for that.
Welcome back. Well, a few stocks are bucking the trend as we speak. Bandhan Bank, seen a bit of a subdued move in the last couple of weeks. I think from 210 it went down to around 185, 190. But I've seen this in the past. 185, 190 seems to be the zone where there is some interest out there. So keep an eye out on that name. The other one is Vikran Engineering. In the last couple of trading sessions, the stock is up close to around 18%. And if I saw that correct, I think Black Box had come out with a set of numbers. We'll try to get in the management. That's a stock as well that's reacting favorably to its numbers. We'll keep an eye out on that one as well. In fact, it's seen some bit of profit taking because initially there was a bit of a spike up, and that one in fact has come in for some profit taking. Well, let's get Mitesh Thakkar back on the show. Mitesh, it appears right now the index is under pressure. You could attribute it to the higher crude oil prices, but I think it has an element of expiry related drawdown as well, because otherwise the broader markets are in good form. Your view at around 23,900 on the Nifty, and then a couple of trading picks.
Yeah, view remains same. I think that if we can sustain 23,800, 850 zone, we should possibly be heading higher in the coming days. That's the level which I'm watching. I'm still hoping that the bank Nifty will participate strongly. In fact, I have a BTST on IDFC First Bank. That's BTST with a stop just below levels of 69.2 for targets of around 72. And the other one is a BTST on IOC, which I would recommend taking a long position with the stop just below levels of 141 for target of 145.
I just want to ask you one call with regard to Polycab. Any view on that stock? You know, everyone was worried about, I think there was some regulatory issue earlier. Then the promoter entity came in there, they sold a little bit of stake. But just take a look at the stock. It's almost a 10,000 rupee stock. What a beautiful move out there.
Well, I think, one movie clearly the stock is hitting all-time highs, which means that the historical levels have been cleared. In fact, I have a medium-term view because in the short term, the stock has done the targets. But as long as we are above this levels of 8,700, I think the stock possibly can even head towards 11,000 plus levels. So quite positive on the medium to long-term charts.
Okay. All right, Mitesh. Thanks so much for that. Well, we have Jay Bala, CMT of CashTheKiosk.com, who joins us on the show. Hi, Jay. How are you feeling about the markets? We're almost at around 24,000 odd. So give us your updated levels on the Nifty as well as on crude. You're saying it's going down, down, down. I think the last time also we chatted, you said maybe a bit of a spurt, but directionally it's down. So levels on that, Nifty and crude.
That's right, Nigel. Thanks for having me on the show. See, the Nifty has had consolidated in a sideways fashion within 100 points range for 7 consecutive days and 7 consecutive sessions, not days. And then it broke out about that consolidation zone. That's a signal for the short term that the markets are, traversing higher. The medium term to long term picture again, it's bullish from the April lows, April 3rd low. The markets have traveled in a bullish fashion, what we call as a 5-step move, and then pulled back to important support levels, and then the short-term breakout has occurred. So I'm anticipating fresh record highs to come through, probably by end of June or mid-July, and then by middle of August and late September, I would expect the Nifty to be about 29,000 plus.
Okay, got it. 29,000.
The structure is yeah.
29,000 is what you're looking at. It just lost you a little bit. By when?
By summer of 2026. That's English summer, probably about mid-August and late September.
Oh my God! Wow, that'll be fabulous if your words true. I think some people are writing Jai ke muh mein ghee shakar. All right, Jay. What about crude? Where is that one headed? I think you've got some better news.
That's right. And see, I anticipated this news to come through. The price action was telling me this, and I'd said that the real peace deal was due to come through, and the frameworks are getting worked out. And the important support level for WTI crude is 88.6, and that's not yet broken. The markets came very close to that in the overnight sessions and the weekend trading for the crude. Once 88.6 is taken out on a regular session basis, I anticipate crude to crater to somewhere about 78 first, and then from a 3 to 6 months perspective, I'm anticipating crude to be trading below 54 to 45, and take out the December low resistance last year. So the trajectory is downwards. I'm quite bearish on crude.
All right, a little bit of a scratchy line. We'll try and fix it, but bearish on Brent crude prices. Let's get in another story. The insurance regulator has moved to link remuneration of key managerial personnel of companies to policyholders' outcomes and insurers' performance, amongst many other KPIs and measures. Yash joins in with what he's picked up. Yash.
Well, this is a very interesting development which came in the form of regulations notified by the insurance regulator today morning itself. Imagine the regulator coming out and saying that the KMPs, not just the MD and CEO, but all the KMPs, the remuneration which they receive would be linked to the policyholder goals and the policyholder outcomes and the insurance goals in terms of the business performance. That's exactly what IRDAI seems to have done with its latest set of regulations. IRDAI has specified parameters for deciding the remuneration of KMPs, and these parameters would be listed on the insurance company's website. The nomination and the remuneration committee of the insurer, in consultation with the risk management committee, will form the remuneration policy, which is in this particular substance. Now, as far as the nomination and the remuneration committee is concerned, they will ensure that the remuneration shall be assigned to policyholder outcomes. It will adjust to all types of risks. Also, it will be symmetric with the risk outcomes. It will be sensitive to the horizon of the risk, and the mix of cash and equity should be consistent with the risk alignment. For life insurance companies, what IRDAI has said is that the minimum parameters to be taken up by the insurers for payment of variable pay and incentives would be linked to certain aspects like AUM to total premium ratio, renewal premium to new business premium ratio, proportion of total policies issued during the year to the number of total policies exited from the books, expenses of management to gross premium ratio, such different parameters. Also, for general insurance companies, it would be linked to line-wise net incurred claims ratio, the loss ratio, line-wise renewal premium to new business premium ratio, also expenses of management to gross direct premium ratio. Not just that, the IRDAI has also come out on guidelines with respect to product disclosure. They've said that the features, premium, performance and returns of any particular product should be displayed on the website of the insurance company. Also, commission payments, average commission payments, maximum commission payments and line of business wise commission payments, the policy for which should be displayed on the website of the insurance regulator. They've also come out and said that the insurance company should give specific details on how claims are being settled within 15 days, 30 days, 60 days, not being settled. All those details should be provided. Also, with respect to grievances, how fast are they getting settled? All those details should be provided in a move to, really bolster corporate governance regulations within the insurance sector.
Thank you very much for that, Yash. As we slip into a quick break and we wind down today's market, let's get you some important market opinion on AI trade globally in the emerging markets, because India is seen as a bit of an AI loser. So earlier today, we caught up with Sunil Tirumalai, global emerging market strategist at UBS, he said. And their view is that at least as of now, there is no let-up in the AI trade, and India definitely is missing out on that. He also went on to say that the fear is that we are going to see a lot of job cuts on account of AI. He says there won't be any major employee cuts on account of the AI disruption. Listen in.
AI is a very important aspect, as you mentioned. There does not seem to be any letting off of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out anytime soon. India may underperform because of whatever AI trade that's happening elsewhere, but it can still have a positive return year. I don't think we have the kind of confidence or visibility that we'll get into a situation where large corporations suddenly come around and say, I'm firing 90% of my staff. No, I don't think that's so that economic disaster where there are no jobs and companies are just focusing on cutting down staff. That's a very, very far away, low probability event where we stand right now. What is more likely is that companies use the available AI tools and the upcoming AI tools to become slightly more productive. Cost of delivery of products or services to their customers comes down.
Welcome back. Well, I think the markets have now, are more or less going to definitely defend that 23,900 odd mark. We're only 6 minutes away from the close. By the way, KPIT Technologies, we just spoke to Mr. Naha, PGIM. He was saying that on tech, one of the stocks, I think, in his portfolio was KPIT Technologies. Coincidentally, we're seeing a bit of a spike up on that particular name. So keep an eye out on that stock. Jay Bala is still in conversation with us. Jay, give us two solid ideas.
Yeah, I have two. Yeah, well, the first one is on Ultratech. I'm bullish on it with a stop loss of 11,075. I'm expecting this to cross 14,000, if not 16,000. And the second one is on Muthoot Finance. A stop loss at about 30.42, and possibly heading to 4,200 to 4,400.
Got that. Those are some. What's the call on private sector banks like HDFC, ICICI Bank, Kotak, Axis?
Yeah, I think the private sector banks are likely to lift the markets in the next leg of the move. HDFC Bank is shaping up very interestingly, but it still needs to take out 815, 820. But if it does that, it's going to be a very powerful breakout. And interestingly, ICICI Bank and Kotak Bank are also poised interestingly. But, a little more short-term up moves to come. Like you pointed out a couple of weeks ago, this leg of the move within the banks is going to be led by the private sector banks, not the public sector banks like it did in the last leg. SBI, though, has got probably one more lower low to come through. Once that's done, I think the private sector banks will lead the markets higher.
Okay, all right. Private sector banks will lead the markets higher. I think we've got that. By the way, just keep an eye out on the broader markets. You have Deccan Gold, a company that's been promising about that gold. I think that's finally been commercialized. Deccan Gold is up 20% as we speak. There are pending buy orders as well, so keep an eye out on that. Last 6 months, stock is up close to around 50%. It's seen a big move, and that's one of the stocks that in today Sunny saw a spurt, and now the shop is closed. It's locked up upper circuit, so keep an eye out on that. Jay, any view on gold? What are the levels you're tracking there?
Yeah, see, gold's price movement is tied to crude's movement. And I think both gold and silver are in a medium-term uptrend. But in the short term, they could be consolidating in a sideways fashion, either as a triangle, or they could probably have, which seems a bit not possible, but that's what the chart structure is saying. There's a possibility of one more low below the low of 4,100 gold registered in COMEX a few weeks ago. But that seems less likely. But, in either case, gold and silver are in a medium to long-term uptrend. So if it were to drop below the 4,100 mark, it will be a bullish opportunity.
Okay. Adani Group stocks have seen some phenomenal buying this month. So Adani Enterprises up 23%. This is all in the month of May. Adani Ports is up 10%. Adani Total Gas is up also close to about 12%. Adani Power is up 10%. And of course, year to date, we're seeing even bigger moves with Adani Power up 70%. Any view on any of these?
Yeah, see, like I said, I've been liking the capital goods space, but generally I avoid Adani names. But yeah, so within Adani names, Adani Power and Adani Enterprises both are starting to look good. In fact, now they've been looking good for quite some time. But just as a personal measure, I avoid Adani names. But they are looking quite bullish, and the momentum is quite strong.
About the rupee, where's the rupee headed?
Yeah, see, like I pointed out last week, the level of 96.75 was very important, and the markets exceeded that on intraday basis, but closed below it. So that's a bit of sigh of relief for the rupee. And there's a possibility that the rupee is reversing for the medium term. We just need one more lower low for the rupee below 95.1 before it touches 96.2. So watch for a move. If it just does turn below 95.1, we have an important turn for the rupee, and rupee is likely to strengthen. If that is a conditional, I'm still watching. If the conditional move satisfies, I'm anticipating the rupee to strengthen to about 87 to 83 from a 3 to 6 months perspective. But it's conditioned that it should not print 96.2 first, but it must print 95.1 first.
And then a big pullback to sub 90?
Yeah, much 87 to 83.
Wow. Oh, okay. Cool. I'll not be booking my ticket so soon then if I'm traveling overseas. Thanks, Jay. Always a good chat with you. Well, time to wind down the markets. The Nifty goes on with a cut of around 100 points, but not to worry. It's more expiry driven, and that's why, in fact, the markets ended lower. And I say that because the India VIX cooled off. Remember, that's normally gives you a sense in terms of fear in the system and volatility in the system. The India VIX as well goes down. The Nifty as well goes down. And the real strength was in the broader markets. The Midcap index went up close to around 0.5%. And there were plenty of stocks that were gaining in trade today. Let's pull up a few. Marks & Pharma up 15%, reacting to its numbers. Wipro Engineering, 2 days, up 20%. IOL, up 10%. Adani Total Gas, up 8%. Bharat Coking Coal, up close to around 5%. Big moves out there. Mr. Anil Agarwal, always bullish on his company, always bullish on India. He says it the way it is. And that stock, in fact, was up close to around 3.5%. On the flip side, Pine Labs was down 5%. RBNL was down 4.5%. Aditya Birla Fashion, well, that as well was losing out in today's trading session. That one, in fact, was down considerably. A few other names that were under pressure. Techno Electric was down close to around 13% in today's trading session. Your Ajmer Realty as well, that did come in for some profit taking. And Gujarat Themesis Biosyn, I recall the stock went up yesterday on a rather large acquisition. Looked very, very large, but yesterday the street celebrated. Today that stock did come in for some selling. A few stocks that were higher in trade. Bliss, GVS Pharma, stock locked upper circuit, up 20% in trade today. Remember, that's where Anupam Rasayan will be taking over the company. Today, the street reacted phenomenally, actually. Yesterday, the street gave it a bit of a thumbs up, but today, bombastic move. Well, on that note, we'll wrap up on this edition of Closing Bell. You stay with us. The team of Markets Forward comes up next. Don't go anywhere.
Markets failed to hold on to early gains and end largely in the red. The Nifty ends below the mark of 23,950. Weakness in IT and telecom along with consumer-facing stocks weigh on sentiments.
Tata Sons board in a huddle at Bombay House. The question of whether to list the Tata Group's parent company set to top the agenda. The board is also expected to review the performance of 5 key businesses, including Air India, Tata Digital, Tata Electronics and Tejas Networks.
Vedanta chairman Anil Agarwal announces listing of 4 new demerged entities in June, remains very bullish on copper, aluminum, oil and gas, and projects a combined EBITDA of $10 billion in the coming years. That is a CNBC TV 18 exclusive. You're with us here on Markets Forward, your go-to show where we get you all the action from the day gone by and also prepare you for the day ahead. I'm Hormuz Fatakia, with me Sonal Bhutra. Sonal, well, after the day that we had yesterday, some profit-taking seen at higher levels. But of course, we managed to hold on to an important support at 23,900. The bulls would not be complaining too much.
They won't be, and that was an important level, right? As you pointed out, 23,900. We've been able to sustain above those levels today. Overall, of course, it was quite volatile from the word go, but we ended in the red, 118 points lower, while the broader markets did well in trade today. So 0.5% higher on the mid-cap index. Small caps did well as well, and metals and energy were the top gainers in trade today. So we'll discuss all that and a lot more. But first, let's tell you what we do have for you as a lineup on the show today. First up, of course, we'll start with top movers and shakers of the day with Vivek. And the big headlines of the day, including Tata Sons board meeting outcome, key remarks from Vedanta chairman Anil Agarwal, and other stocks and news as well. Last but not the least, we will delve into the key market events to watch out for tomorrow's trading session.
And as promised, here's Vivek at the big wall to tell you about all the big movers of the trading session today. Vivek.
Well, thank you so much for that. A volatile trading session, like you just mentioned, expiry session. So along expected lines, individual names, individual stocks reacted largely to earnings as well as news flow. First on the list has to be Suprajit Engineering. Very good Q4. Along with that, the outlook and guidance that the company gave on our channel earlier today was very, very strong. Astra Microwave came out with results midday, and it's a strong beat against what was very limited estimates for this particular name. Stock ended higher by close to 10%. The entire Tata Group stocks were in focus. The Tata Sons meeting is ongoing, and on the back of that, most of these names did see a pop-up coming by. So names like Tejas Networks, Tata Motors Passenger Vehicle, Tata Chem, Tata Tech, all of these stocks up anywhere between 3 to 7%. Campus Activewear, again, a very good set of numbers as far as Q4 is concerned. Kotak, in fact, went ahead and upgraded this particular stock. So that stock ended high by 6% today. And JSW Energy, QIP, concluding successfully. Very strong anchor names coming in there. That stock ended high by another 3% today. On the other hand, quite a few laggards as well. Pine Labs, remember, it's been a significant underperformer in the last 10 to 15 trading sessions, down by another 5% post Q4. Concord, again, an all-round miss as far as Q4 is concerned. The FY27 guidance too is slightly underwhelming, and on the back of that, that particular stock lower by another 7% today. RVNL ended near the day's lowest point. Q4 PAT plunging by almost 60%. And when you're talking about Techno Electric, that particular stock to one of the top laggards on the broader end of the market, down by 12%. And Poly Medicure, even though the top line was quite strong over here, margin compression was something that the company faced. That stock ended lower by over 5% today.
Vivek, thank you for summarizing the big movers of the day for us. Plenty of earnings reactions as we count down to the end of this earnings season. But of course, the big headline from the day has been the ongoing Tata Sons board meeting, where a whole host of issues are being discussed right now, from governance to operational matters. Madhya Mujawar is now joining us from the Bombay House on the key agenda for the Tata Sons board meeting. Madhya.
Well, right, we are outside the Bombay House, the headquarters of the Tata Group. At the meeting, the board meeting of the Tata Sons has been underway since 10:30. It's been 5 hours now. In attendance are Tata Sons Chairman N. Chandrasekaran, Vice Chairman Noel Tata, CFO Saurabh Agrawal, along with Venu Srinivasan, Anita George, and there are 5 companies, the CEOs of 5 companies: Air India, Tata Digital, Tata Electronics. There is a EV company, Agratas, and there is another company called Tejas Networks. So CEOs of all 5 companies are also in attendance, and we are understanding that the CEOs are presenting the business plans and the challenges that they are facing to the board members. So this is what we're understanding, and this is what even Shireen has been reporting, that the board members are hearing out these CEOs to understand their challenges and what is the road ahead. The board members are asking tough questions like, how much more capital is required in these companies, and when will these companies turn profitable, and when will they start giving returns. So these are the issues that are being discussed. Another important issue is also the listing of Tata Sons, though the board is divided on that matter, but that issue is also being discussed. We understand that, Tata Digital is investing a lot in the consumer business. Tata Electronics is investing billions of dollars in semiconductor projects in Assam and Gujarat. Air India, as we all know, has posted losses worth $2.5 billion. So the outgoing CEO, Campbell Wilson, is also a part of the board meet, and he's also briefing the board members on the challenges that Air India has been facing due to the West Asia crisis, the high jet fuel price and the high cost of operations. So how to navigate that while taking care of the fleet expansion and the transformation that Air India has promised to passengers. So all these issues are being discussed. We understand that there is not going to be any decision by the board members. The board members are only listening to the CEOs today. But even then, whatever is being discussed will be reshaping the strategy for these companies going ahead. So a very important day for Tata Sons and some of the top companies of the Tata Group. And we will keep getting you all the updates from the Bombay House.
Okay, Madiha, thank you so much for bringing us all those important details. It's an updating story, a story which we'll keep getting you more updates on as and when we do get them. Let's move on now. In an exclusive conversation with CNBC TV 18, Vedanta chairman Anil Agrawal pitched for large-scale privatization of public sector undertaking, saying employees would not lose jobs in the process. He also announced listing of 4 new demerged entities in June. Let's listen in.
All the share will be in the process of issuing. By next month, all these 4 companies will trade by themselves. It will have a very strong management, and this will be company which is what we require in natural resources in India. $20 billion we spend. Fund will never come on the way. Government is with us, and this all will be India. And by this, I'm looking forward at least 5,000 downstream industry to come in with our product. I'm very bullish on aluminium, copper, oil and gas. All 3 critical metal, very, very important. And 4th is, we can be the largest producer of arm and ammunition. The kind of factory we have, massive. If they can be modernized and privatized, we will be the largest producer of today's digital technology given. But we have to be, Parliament has to be together. Everybody has to be together, one way, one goal, to make sure that we will produce arm and ammunition here. And we run our, whatever strength we have, we leverage that 100%.
To take this discussion forward, we are now being joined by Jay Bala from Cash the Chaos and Sudeep Bandyopadhyay from IndiTrade. Gentlemen, good afternoon. Thank you for joining in. Jay, we managed to hold on to 23,900 on the downside, but how important is that 23,800 level on a closing basis for the index? Your call here.
Yeah, hi. See, the markets had been consolidating between 23,600 and 23,700 for seven consecutive sessions, and then it gapped up higher. So the 23,800 level isn't that significant, but the fact that the markets gapped up after a sideways consolidation after 7 session, what we call as the NR7 pattern, that's an important signature that the markets are trying to move to the next leg higher. And from the April lows, the markets have moved in a 5-step fashion and pulled back to important support, and then this breakout is occurring. So I think the market's consolidation here is quite bullish, and from a medium-term perspective, I'm expecting record highs to come through for the Nifty. So short-term pullbacks aren't that significant for me.
Okay, short-term pullbacks not that significant, considering that we do have the new, this was an expiry day, of course, the monthly expiry, so we'll watch out for moves on the Nifty going forward. But May is shaping up to be a stronger month for the auto sector, with Vahan data suggesting best May registration since 2018 and double-digit growth across most segments. Sudarshan joins us with all the details. Sudarshan, what are you picking up?
The month might be different, but one thing is common. The like previous few months, this month, that is May 2026, is also going to be very strong as far as Vahan auto registration data is concerned. And if the current trend holds, May 2026, as you said, is going to be the strongest May that we have seen since 2018. And so far, that is from May 1 to 25, majority of the auto companies have already crossed the registration numbers that they had seen in May 2025. And the numbers are being led by the segment that is passenger vehicle, which is expected to see a growth of at least 23 to 25%. Talking about the total vehicle registration growth, so far the growth is around 12%. For two-wheelers, the growth is around 9 to 10%. Passenger vehicle, as I told you, growth can be more than 20%. Commercial vehicle segment 2 is seeing a double-digit growth, with M&HCV segment continues to lead the growth. And for this month, they are expected to be more than 15%. And as far as three-wheelers are concerned, their growth can be as high as 20%. Talking about all the companies, starting with two-wheelers, two companies that are going to outperform and that are seen gaining market share this month. Those two companies are TVS Motor and Bajaj Auto. One company that continues to lose market share is Hero MotoCorp, and this month too they are expected to lose market share of around 100 basis points. And one surprising factor this month is Eicher Motor, that is Royal Enfield 2, is losing market share mainly because of the production loss. Now, if you talk about electric two-wheelers, for Ather Energy, it's going to be another strong month. For Ola Electric, for third straight month, their registration units or registration numbers can be more than 10,000 units. Talk about passenger vehicle segment, two companies that are gaining the market share. Those two companies this month are Maruti and Hyundai. Even Tata Motors PV and M&M Auto continue to do well, and they too are seeing very healthy growth. In the commercial vehicle segment, both major names, Ashok Leyland and Tata Motors commercial vehicles, registration numbers have already crossed the levels that they had seen in May 2025. Lastly, in the tractor segment, it's a mixed picture. M&M Tractor continues to outperform, while if you talk about the underperformers, and those are Eicher Tractors and Escorts Kubota. So still we have few more days to go, but if the current trend holds, we are expected to see another strong month for Vahan registration numbers.
Another strong month in the offing for the auto names. Sudeep, you just heard Sudarshan, there are plenty of talk regards to the auto space. Input costs are rising, prices are going up, fuel prices are going up, but the registrations are showing no signs of being let off. Where does your preference lie in the auto space? You stick to the larger players, or you stick to EV, or you prefer the EV plays like an Ather?
Really, almost, I think we do like Bajaj Auto quite a bit, and leave aside the buyback and related excitement. It's much beyond that. We feel fundamentally it's a good buy. And you talked about EV. They're one of the leading players in two-wheeler EV as well. And the potential, considering the export business they have and the currency depreciation. So P&L of Bajaj Auto should also continue to benefit because of what's happening around us. Apart from that, we do like Maruti at current levels as well. The Vahan data also suggests good progress. Apart from all this, we do like Eicher Motors. I think, Vahan data doesn't give anything great thing to cheer about, because particularly they have a production shutdown and things like that. But the performance in last quarter and the long-term plans, fantastic. And remember, they also export quite a bit, and currency depreciation does help them in a big way as well.
Okay, so that's about the auto space. Gentlemen, hold on, because there were a lot of earnings and news-driven action on D Street, including Container Corp, RVNL, IFB Infra. We have a lot of stocks on our radar. Ria is joining us with a wrap on that one. Ria.
Well, certainly a lot of stocks are on this list, and let's start off with IFB Industries first. The revenue went up by around 12% over the previous year, and they also saw double-digit growth across their business segments. But the gross margins did decline by around 152 basis points to around 36% due to an adverse product mix in this quarter. For Astra Microwaves, it was a very strong quarter and a full year for them this time around, with the net profit going up by around 44% compared to the previous year, revenue increasing by 20% and margins expanding by over 400 basis points to around 33.4% in Q4. For Concor, the net profit declined by around 12% compared to the previous year, and in the earnings call, the management did say that the capex amount of 945 crores has been approved for FY27, and this amount may increase going forward. And they have also mentioned that they are expecting good volumes from GAIL as well as Petronet LNG going forward. Moving on to RVNL, the net profit plunged about 60% compared to the previous year, 42% sequentially as well, to just around 188 crores in this quarter. They also saw lower other income and lower profitability of their JV and associate companies, and a higher OPEX impacted profitability in quarter 4 as well. However, the key positive for them remained that execution did see an improvement compared to the previous few quarters. The last stock that was reacting to its earnings today is Office Space Solutions. They did see good numbers in this quarter with their highest ever annual income as well. For the quarter, the revenue went up by around 21% compared to the previous year, and the net profit also saw an increase of 107%.
Priya, thank you for that update. Jay, I wanted to give you a quick chart check on RVNL. You know, the stock topped out somewhere in 2024, has done very little from there. From 650 levels, it's now down to 250. Is there a bottom in place for the stock?
Yeah, I think it's very close to a bottom. I would like to see the stock push one more time below the April lows. Once that's done, I think there is a good potential for the stock to reverse and resume its long-term trend, because the stock has been going up from 2020. That long-term uptrend is still intact, but the short-term structure that began from the June 2024 highs, that is due for completion, and that might be complete if it drops below the April 2026 low.
Okay, all right. Jay and Sudeep, a lot more questions, but we're out of time. But thank you so much for your time today and taking us through some of your sectoral picks and technical updates as well. With that, let's move on and we'll get into a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side. But before that, listen into these key market voices that we spoke to earlier in the day.
AI is a very important aspect, as you mentioned. There does not seem to be any letting of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out, anytime soon. India may underperform because of whatever AI, trade that's happening elsewhere, but it can still have a positive return year.
Yeah, I definitely think that the currency has corrected enough. Our analysis shows that barring the global financial crisis, as an example, the rupee has usually stayed stronger, or has usually kind of tended to bottom out at levels like these, and levels like 91 or 90, which is almost 9 to 10% undervaluation for the currency, definitely looks attractive. In the context of historically over the last 10 years or so, the rupee has actually on an average been at 105 level, meaning like 5% overvalued. So the rupee levels are looking attractive.
Welcome back, and to some top corporate voices from the day. The management of Suprajit Engineering told CNBC TV 18 that the international business margins are expected to improve from mid-single digits to nearly 10 to 11% going forward. Consolidated EBITDA margins are also expected to rise to nearly 12.5 to 13%.
Gokuldas Exports Management said that its Q4 results were impacted by US tariffs and price discounts, even as retail demand in the US remains strong. The company is targeting sequential growth in its Africa portfolio and is already fully booked for the first half of FY27.
Office Space Solutions is targeting occupancy levels to rise by 10% to 84% in FY27. Speaking to CNBC TV 18, the management guided for 20 to 25% revenue growth, with GCC demand continuing to drive growth and support up to 15% higher realizations.
And before we wrap, we bring you some key market events to watch out for. Ria Bhatia is standing by with the key events to focus for tomorrow's trading session. Ria.
Well, yeah, starting off with the economic data first from China, we have the industrial profits data, which will be on a year-to-date basis. That will be key to watch. In terms of the central banks, the ECB policy update will be another thing that will be tracked quite closely. And the EU foreign ministers will also be holding an informal meeting of foreign affairs, which will go on until the 28th of May. There's also a public holiday in Singapore, Malaysia, Philippines and Indonesia. And UAE financial markets will also remain closed for trading tomorrow. And back home in India, the result season continues. We have the likes of Cummins India, Bata India, Gillette, as well as ESAB that will be reporting their results tomorrow. And apart from this, the India-Canada trade roundtables will also be tracked closely.
We are continuing to say that the earnings season is coming to an end, but that does not mean that the results are any short of being important. Ria, thank you for summarizing that for us. Take your leave on this edition of Markets Forward. We move from one expiry to another on Wednesday. From Zola and me, thank you for watching. More news and updates continue on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Lal Street gives up early gains to end in the red. The Nifty and the Sensex fall 0.5%. Mid-caps and small caps end in the green. The rupee falls 45 paise after 3 straight sessions of gains, ends at 95.68 against the dollar. Oil prices and tensions in West Asia continue to weigh on the currency. The US termed strikes on Iranian missile launch sites and boats allegedly laying mines as self-defense. Both sides temper expectations of an imminent deal. Even as diplomatic talks continue, Tehran pushes back against claims by President Trump that Washington was exploring options like third country transfers or supervised dilution of Iran's enriched uranium stockpile. India and Quad partners agree to mobilize up to $20 billion to build secure critical mineral supply chains to reduce dependence on China, express concerns over what they call unilateral actions in the East. China and South China Sea also call for enhanced information sharing on the Indo-Pacific maritime region. Tata Sons board is in a huddle at Bombay House. Leaders of 5 group companies, including Air India, Tata Digital, Tata Electronics, Tejas Networks, have asked for a review of their plans. Board to also discuss the issue of listing Tata Sons. Vedanta chairman Anil Agarwal announces listing of 4 new demerged entities in June, remains bullish on copper, aluminum and oil and gas. Projects a combined EBITDA of $10 billion in the coming years. That's an exclusive. The High Court takes note of the government's undertaking that no forcible eviction will take place at the Delhi Gymkhana Club premises. The centre assures the court that any action taken will follow due process with prior notice. The court was hearing the club's challenge to the centre's order, asking it to vacate premises by the 5th of June. Russia asks foreigners and diplomats to leave Kyiv as it threatens more strikes on the Ukrainian capital. Kremlin says the new strikes will target decision-making centres and command posts. Ukraine calls Moscow's threat nothing short of shameless blackmail. 11 African nations considered to be at risk amidst the Ebola outbreak. Over 220 suspected deaths in Congo. The Indian aviation regulator issues a detailed SOP for flights ferrying passengers from Congo, and Uganda directs airlines to step up onboard surveillance and passenger screening. Eli Lilly reports encouraging early-stage trial results for a one-time treatment that could significantly lower what is known as bad cholesterol. Originally developed by Verve Therapeutics, the treatment targets a gene which helps regulate cholesterol levels in the body. Experts, however, caution that the results are preliminary, calling for larger and longer-term studies to establish safety and efficacy. The Pope warns against unchecked technological power and says AI must be disarmed, calls for stronger regulation of AI companies at the same event. Anthropic co-founder Chris Olah says AI could replace human labor at a massive scale. Well, straight to the day's market action. The Lal Street failed to hold on to the opening gains today and ended the day lower. Both the Sensex and the Nifty snapping that 2-day winning streak, ended with cuts of about 0.5%, 100 points lower on the Nifty. The Sensex down 480 points, 200 points lower on the Nifty Bank. The Midcap index, though, closed in positive territory, up by about 300 points today, so outperforming the broader markets. Rima standing by to wrap up the day's market action. Markets unable to hold on to their gains today, Rima.
Well, the start was okay. The end was a bit disappointing on the Nifty monthly expiry. We failed to hold on to that 24,000 mark. We even dipped below the 24,900 mark. And by the end of it, the Nifty and the Sensex, as you correctly said, ended with a cut of nearly about 0.5%. We're wrapping up the May series absolutely flat on the Nifty. The good part is the mid-cap outperformance today. The Nifty mid-cap 100 index hit an all-time high. It's gaining for the 3rd day in a row. The advanced decline ratio, though, ended even Steven. The auto stocks did pretty well. This was on the back of the May Vahan registration data. So you had Tata Motors, passenger vehicles, Bajaj Auto all doing well. And May 2026 for the automakers could be the best since May 2028. Most of the segments seeing a double-digit growth. But many other Nifty companies did well. So you had Adani Enterprises, that's been gaining now for the 3rd consecutive day, fresh 52-week high on that. ONGC ahead of numbers, Nestle, Eternal, these stocks did well. Under pressure were the banking names. So banks, the Nifty Bank had a phenomenal monster 1,200-point rally yesterday. So today there was a little bit of a give back, profit booking visible in an Axis Bank, HDFC Bank, ICICI Bank. The tech names also weakened. The rupee has been stable now for the 2nd, 3rd day in a row. So TCS under pressure. Wipro sees some little bit of a profit booking. But other drags include Apollo Hospitals. In fact, Max Healthcare, its peer, was also under pressure. Titan, Trent, NBFCs weakened, so Bajaj Finance, Shriram Finance and Bharti Airtel lost more than 1%.
All right, Rima, many thanks. That is the market action in the currency market. The rupee down 45 paise after 3 straight sessions of gains. It ended the day at 95.68 against the dollar. Rising oil prices, escalating tensions in West Asia continue to weigh on the currency. So that is where it closed for the day, 95.68. Prices of compressed natural gas, that's CNG, have been hiked by 2 rupees a litre. 2 rupees a kg, across Delhi NCR and parts of North India and Mumbai. This marks the 4th increase in less than 2 weeks. With the new hike, CNG will now cost 83 rupees per kg in Delhi and 84 rupees in Mumbai. Consumers in Noida, Ghaziabad and Greater Noida will pay over 91 rupees per kg for CNG, and Gurugram will see a revised price of 88 rupees, so CNG prices being hiked again today. The government has eased rules for consumers who need to surrender their domestic cooking gas connections after getting piped natural gas connections. Consumers with both LPG and PNG connections can now surrender their LPG connection within 30 days of obtaining PNG supply. Under the earlier rules, consumers had to immediately surrender their LPG cylinders. Consumers can also retain the option of restoring their connection if they move to areas without PNG infrastructure. The top story this evening, tensions in West Asia intensifying as the US targeted Iranian sites near the Strait of Hormuz in what it called self-defense strikes. Meanwhile, Trump's promised peace deal remains elusive. Here are the latest developments. The US Central Command has said it launched strikes to protect its troops from threats posed by Iranian forces. The US military said its attacks targeted missile launch strikes and Iranian boats attempting to put in place mines. Iranian Revolutionary Guards have also claimed that a US drone has been intercepted as it attempted to enter the Iranian airspace. Just hours after the strikes, President Trump had laid out plans for destroying Iran's enriched uranium. In a post on social media, Trump said, and I quote, that it will either be transported to the US, dealt with in Iran, or taken to another location with Tehran's coordination. Trump told reporters in the Oval Office last week that the US would not bend on recovering Iran's enriched uranium. Iran's Revolutionary Guard has said it will retaliate against violations of the ongoing ceasefire. The country's supreme leader said America will no longer have a safe haven in the Middle East in a message to mark the Hajj. Tehran also maintains that sovereignty over the Strait of Hormuz is essential to a peace deal. Brent crude climbed closer to the $100 mark after the escalation in tensions. In Lebanon, the Israeli military said it began a wave of strikes across the country. This after Israeli Prime Minister Netanyahu vowed to intensify attacks on Hezbollah, which is backed by Iran. Hezbollah said it retaliated with 22 drones and rocket attacks on Israel's military infrastructure. Meanwhile, U.S. Secretary of State Marco Rubio says a potential US-Iran deal could take a few days to finalize. An Iranian delegation has traveled to Qatar for talks aimed at finalizing a peace deal with Washington.
Something like this, and it's going to take a couple days to settle on, even down to the disagreements over a word, sentence. So we'll have to work through that.
The straits have to be open. They're going to be open one way or the other. So they need to be open. What's happening there is unlawful, it's illegal, it's unsustainable for the world.
One of the fundamental pillars of these victories by our great nation is our geopolitics, the Strait of Hormuz. We will never take this into negotiations the way we did with the nuclear issue. What is currently envisaged is that if the American blockade is lifted, then transit through the strait will take place under arrangements determined by Iran and only for non-military and non-hostile traffic. In principle, we never needed anyone to recognize it. These are our territorial waters. These are our legitimate rights.
Now, foreign ministers from India, the US, Japan and Australia, collectively called the Quad, came together in New Delhi for discussions focused on the Indo-Pacific cooperation and regional security. India's External Affairs Minister S. Jaishankar hosted the meeting. India and its Quad partners established a $20 billion framework to secure critical mineral supply chains across the Indo-Pacific in a bid to reduce dependence on China. The 4 countries also called for enhanced information sharing and deeper maritime coordination. They also reaffirmed their commitment to a free, open and rules-based regional order amidst rising geopolitical tensions.
Understandably, much of the discussions and indeed the bilateral exchanges were devoted to the current state of the world. We spent some time on the question of safe and unimpeded maritime commerce, and reaffirmed the significance of scrupulously observing international law. Our 4 nations are also market economies. We believe strongly that economic resilience should be promoted, that supply chains should be strengthened, trusted and secure technologies diffused, and production capacities enhanced. Our deliberations touched on the current energy and fertilizer availability, as well as that of critical minerals and resources.
First is the launch of the Indo-Pacific Maritime Surveillance Corporation initiative, which is going to leverage each of our country's maritime surveillance capabilities in the Indo-Pacific to enhance information sharing. Related to that, of course, is also the expansion of the Indo-Pacific Maritime Domain Awareness Initiative, which provides and can provide near real-time commercial maritime domain awareness data to countries throughout the Indo-Pacific.
Concluding, our colleague Abhimanyu joins us now. Take us through the outcome at the end of this Quad meeting, Abhimanyu.
Member countries of the Quad on issues like maritime security, on economic assistance, on humanitarian assistance, and for cooperation on critical minerals and emerging technologies. Now, several outcomes have been listed in the joint statement, which mention support for a free and open Indo-Pacific as far as maritime trade is concerned, as far as safety of seafarers and vessels are concerned in the high seas. Also, all the countries agreed upon a larger framework for energy, and the Quad critical minerals framework was announced to leverage economic policy tools and coordinate. India and the US also signed a strategic critical minerals cooperation framework, apart from the fact that all the countries had expressed concerns over several issues like economic coercion as well as unavailability of several critical technologies. Issues like export controls on critical minerals were also taken up as part of the address which was given by several foreign ministers. Also, the countries stated that they remain seriously concerned about the situation in the East China Sea and the South China Sea. They also said that the importance of international law needs to be emphasized as per the UN law of the sea, and it needs to be upheld at all costs in all parts of the world. They also indicated that there are plans to partner with countries like Fiji to advance port infrastructure in the Pacific region to ensure that maritime capability is leveraged to the fullest. Also, the US Department of Energy is also going to host Quad partners in 2026 for a fuel security forum. So several issues ranging from fuel security, maritime security, economic assistance, as well as humanitarian issues were taken up, apart from the fact that the joint statement clearly mentioned and condemned all forms of terrorism, and also took serious concern to the fact that emerging technologies should not fall into the hands of terrorist forces. Terror activities should be curtailed at all costs, and Quad partners should collaborate more in this direction.
All right, Abhimanyu, many thanks for joining us. Now, Commerce Minister Piyush Goyal has said that India and Canada are looking to conclude negotiations for a free trade agreement by the end of the year. He is currently in Canada on a 3-day official visit. Speaking at a joint press conference alongside Canadian Commerce Minister, Goyal said this deal has the potential to triple trade between the two nations from $17 billion to $50 billion by 2030. In a social media post, Canadian Prime Minister Mark Carney has said that free trade deal will unlock massive new market. He also called the deal a game changer. Remember, 2 rounds of trade talks have concluded and the third one is currently ongoing in Ottawa. The board of Tata Sons meeting in Mumbai today. Sources say the meeting will address pressing governance and operational matters, including the resolution of concerns raised by Noel Tata during the board's previous gathering. Madhiya is standing by now, and our colleague Rachna Dhanrajani also from the Bombay House, the Tata Sons headquarters. Rachna, to you first, what are you picking up in terms of the 5 businesses that are presenting their growth plans as well as their investment plans to the board today?
That's right. We've been here since almost 9 a.m. We saw the board meet started around 10:30. That's when the board members came in. It's been about 6 hours that the meeting has been underway, and inside the room we understand are some of the most powerful figures from the Tata Group. The financial stakes are also enormous on the agenda because the companies that are being discussed, the combined losses of all these companies is extremely high. So that's on the agenda. Now, what we understand is that chairing this meeting is Mr. N. Chandra, the executive chairman of Tata Sons. He's presenting a turnaround plan of all these companies that they're discussing. Now, questioning the capital deployment is Noel Nawal Tata, vice chairman of the board, he is also representing Tata Trust that owns about 66% in Tata Sons and majorly relies on the dividend for the philanthropic activities. Apart from these two, there's also Saurabh Agarwal, the group CFO. The members of the board, that is Venu Srinivasan, Harish Manwani and Anita George. Though sometime back, just like 10-15 minutes ago, we saw Mr. Venu Srinivasan exit the Bombay house, and just before him was the Agratas CEO. Agratas is one of the companies that is being spoken about on the agenda. But Madiha, Air India is one of the companies that they're talking about. What do you think? What are you picking?
So apart from the 6 board members, as Rachna said, there are CEOs of 5 companies: Air India, Tata Digital, Tata Electronics, the EV company Agratas, and Tejas Networks. So the CEOs of these 5 companies are presenting their business plans to the board members. Let me talk about Air India first, because outgoing CEO Campbell Wilson is also inside. He's speaking to the board members about the challenges that Air India is facing and what the turnaround plan should look like or should be. We know that Air India has posted losses worth $2.5 billion, becoming the biggest loss maker for the Tata Group. Challenges have been rising due to the high operating cost due to the West Asia tensions, high jet fuel prices, and in parallel, the Tata Group has to implement the transformation plan and upgrade its fleet. So how to navigate these challenges, that plan we understand is being discussed, and Campbell Wilson is presenting this plan to the board members. We also understand that Tata Electronics is talking about their investment. They're investing over 1 lakh crore in building semiconductor projects in Assam and Gujarat. So what we understand is the board is also asking tough questions to these CEOs. How much more capital is required into these companies? When will they turn profitable? And when will they start giving returns to the group? These are some tough questions that are being discussed. And another important matter is the listing of Tata Sons. Shireen, you have also been reporting that this matter is also being discussed, though the board is divided, but they are going to discuss, is what we understand. Rachna.
There's also Tata Digital. That has been one big spot for Tata Sons to focus on. It has a very sprawling portfolio. It includes Big Basket, which was their quick commerce bet and one of the first runners in the industry. But somehow over time it has not been able to catch up with the competition scene increasing. There's also 1MG, again one of the front runners when it came to online pharmacy, but hasn't picked up in a while. There's Chroma for electronics, Tata Click for fashion, all under discussion for a turnaround. There are hardly any options left for it because there was earlier a discussion of a $1 billion fundraise for Tata Digital. We've seen 3 CEOs leave in about 3 years. So turnaround is the theme that we might be able to see with Tata Digital. The new thing that they're betting on is Tata New, which was supposed to be the super app. But we understand that the dreams of a super app have not really been successful so far. So what's going to be the next step is something that is being decided. Apart from that, there's also Tejas Networks, which is another business that's getting scrutinized because Tejas Network, the optical networking and the 5G equipment company, once profitable, is now facing pressure. That's on the agenda. Apart from that, there's also Agratas. We saw Agratas CEO Tom Flack leave some time back. But again, global EV demand has been struggling globally. So EV battery business is naturally supposed to come up on the board. That's what we saw rolling out for today. Now, as we see that the board's been about for 6 hours, we're seeing one by one CEOs leave, which means that the presentations are now coming to an end. And because there's no voting, this is going to be it from today.
So today is going to be a day where the board members are going to listen to the CEOs and no major decisions are expected. So they're just going to listen to the CEOs about their business plans and how to turn around their businesses. No major decision is expected today, but whatever is being discussed could be reshaping the future strategies of these 5 Tata Group companies. This is what we understand so far.
All right, Madhya, Rachna, many thanks for joining us there. And Staying on top of things outside of the Bombay House, the Tata Sons board meeting has been underway through the day today. As they pointed out, no decisions expected. On to a CNBC TV 18 exclusive, Vedanta Chairman Anil Agarwal has announced the listing of 4 new demerged entities in June. Speaking with my colleague Ashmit Kumar, Agarwal says he remains bullish on copper, aluminum and oil and gas. He also projected a combined EBITDA of $10 billion in the coming years. Take a look.
All the share will be in the process of issuing. By next month, all these 4 companies will trade by themselves. It will have a very strong management, and this will be company which is what we require in natural resources in India. $20 billion we spend. Fund will never come on the way. Government is with us, and this all will be India. And by this, I'm looking forward at least 5,000 downstream industry to come in with our product.
Anil Agarwal, our newsmaker tonight. Up next, Eli Lilly reports encouraging early-stage trial results for a one-time treatment that could significantly lower what is known as bad cholesterol. That and more when we return. You're watching Business 360. A quick check of the global headlines. Russia has warned that it will launch a series of systematic strikes on defense industrial facilities in Kyiv. Moscow has urged foreign citizens to leave the Ukrainian capital. The Ministry of Defense said the strikes are in response to a Ukrainian drone attack that killed 18 people. This comes a day after Russia launched its heaviest attack on Kyiv, in which a hypersonic missile was used. Pope Leo has issued a warning against the risks of artificial intelligence. In a 43,000-word document, the Pope argued that the rapid rise of AI has concentrated enormous powers in the hands of private tech giants. He warned that such powers have the risk of creating massive manipulation and inequalities. Eli Lilly has reported encouraging early-stage trial results for a one-time treatment that could significantly lower what is commonly called bad cholesterol. Originally developed by Verve Therapeutics, the treatment targets a gene which helps regulate cholesterol levels in the body. Ekta joins us now with more. Ekta, a very interesting and possibly very significant breakthrough. What do we know about this?
In an important development, US pharma giant Eli Lilly's backed gene editing therapy Verve 102 has shown early signs that a one-time treatment could dramatically lower bad cholesterol for months and potentially longer. In an early stage trial involving 35 high-risk patients, LDL or bad cholesterol fell by up to 62% after a single infusion of the drug, with the effect lasting up to 18 months so far. The treatment, originally developed by Verve Therapeutics and now owned by Eli Lilly, works by targeting a gene called PCSK9. This gene helps regulate cholesterol levels in the body. When it is highly active, it prevents the liver from efficiently clearing bad cholesterol from the blood. Scientists became interested in this gene after discovering that some people naturally inherit less active versions of it. These individuals tend to have very low LDL cholesterol throughout their life and a significantly lower risk of heart disease. Researchers have been trying to replicate that natural protection using gene editing technology. Verve 102 is designed to make a permanent edit to this particular gene inside liver cells after a single IV infusion. The aim is to provide long-lasting cholesterol reduction without the need for lifelong daily pills or treatment. The therapy has received fast-track designation from the US FDA, a status which is meant to accelerate development and review of promising treatments for serious diseases. While the news is positive, experts caution that the results are still very early. Only a small number of patients have been treated so far, and follow-ups have been limited to 18 months. Larger studies across broader populations will be needed before the treatment could become widely available. Still, if future trials are successful, therapies like Verve 102 could potentially change the way high cholesterol and heart disease are treated.
A significant development, and as you pointed out, it is going to be important to see how this progresses through the various trial stages. Luxury sports car maker Ferrari has unveiled its first fully electric car called the Luce. The Italian brand's first ever five-seater will be priced at $640,000. It was created in collaboration with Love From Agency, founded by former Apple design chief Sir John Ive. And before we wrap, we leave you with visuals of Tata Sons chairman N. Chandrasekaran leaving Bombay House. The Tata Sons board meeting has just concluded. That is the chairman N. Chandra leaving the headquarters of the Tata Group. No decisions have been taken at that meeting today. It was essentially a meeting that has reviewed 5 of the key businesses where Noel Tata had raised concerns over capital deployment, capital allocation, as well as performance. So some of those issues being taken up by the Tata Sons board today. Well, that's it then on this edition of Business 360. The news will continue on CNBC TV 18. Stay tuned. We're back in a minute with more.
Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the whole world clearly is watching out for what's happening in West Asia conflict. There is an expectation of a peace negotiation coming in very soon. But what it has led to really is the crude oil prices surging by nearly 70 to 80% in 2026. And that has led to countries getting introspective, looking into renewables and self-sufficiency when it comes to energy. Energy security clearly is top of everybody, on top of mind for everybody. And that's exactly what we're going to be discussing with our guest today. Joining me now is Siddharth Bhatia, who's MD and CEO at Oyster Renewables, and Sandesh Naik is CFO at AB Energy. Gentlemen, hi, thank you so much for joining in. Siddharth, to you first. And there's plenty happening in sense of investments, capacity scaling up. What is the latest that you have at Oyster Renewables happening for the country?
Hi, Manisha. Thank you so much for having us on this. At Oyster today, we are building capacities which are both wind and solar hybridized to power up the industry and commercial users in the country. We have achieved critical mass of almost 1 gigawatt, and we are scaling up our way to 3.5 gigawatts. And I think very correctly, you have pointed out that while the conflict in West Asia has escalated to the degree it has, every country around the world is looking for energy security, and renewables plays an extremely important part to ensure that there is a layer of energy security with wind, solar plants coming up soon. We look at a target that the government has set for us by 2030, which is close to about 500 gigawatts, and being a net zero country by 2070. We at Oyster are ensuring that we work tirelessly to achieve these targets and scale up the capacity available within the country.
Siddharth, you have big numbers planned for investment by 2030. How are you looking to raise that money? Are you getting in strategic investors, looking to tap debt markets, equity? What is the plan from here?
While we currently are well funded to achieve our vision of 3.5 gigawatts, we are constantly working a lot with institutions, financial institutions that would play a very important role in providing the debt for these projects. We also are looking at various options to ensure that we get in the best rate, whether it is international funding or funds coming in from overseas, looking at the green energy space within India. So a good mixed bag of opportunity as far as the finance is concerned. And we explore everything to ensure that we are the most efficient business out there.
Sandesh, getting you in this conversation as well. And clean energy is yet another thing that the 2047 Viksit Bharat roadmap does talk about very clearly and loudly. How are you looking at that one, and how are you aligning yourself with that?
Yeah, so basically, India is the world's fastest growing renewable energy sector right now. And considering the current situation right now, where there is a huge energy demand, whether it's on because of this data centers, we're talking about AI or EV, the hybrid projects which are right now going on, the battery energy storage which is coming into. So yeah, we look as a great opportunity for EPC players to tie up with many of developers like right now, as Siddharth Bhatia was also talking about the same growth which they have the targets around 1 gigawatt. Similarly, there are several developers with whom we can get into tap. We can tap to the market, and we can see that growth opportunity over here in this market at this point of time.
Sandesh, you're working closely, especially with those orders coming in from Uttar Pradesh. Do share on what exactly is that? How are you scaling that up? Are you in conversation with various other states too?
Yeah, so if we talk about the numbers, last year by March 26th, we were able to commission around 125 megawatt of projects. This year for 26-27, we plan to achieve around 225 megawatt projects, which are right now under execution. And by next, in third and fourth quarter, we should be able to add more 200 megawatt of projects in this year. And it will be mostly from Uttar Pradesh and Madhya Pradesh, of course.
Siddharth, the West Asia conflict has hit people in various different ways. So when it comes to managing the supply chain volatilities, whether it's about solar modules or wind turbines, how much of that currently is imported, and what kind of concerns are rising from there?
No, so I think while the West Asia problems have escalated, all commodity prices across the board have increased, whether it is sourcing from within the country or outside the country. I'd like to pause here and also give a massive applause to the government for starting a Make in India movement almost about 10 years ago, which has allowed for this sector to thrive as far as the manufacturing facilities are concerned, right from wind players that existed for many years within the country to developing an entire new market when it came to solar panel manufacturers and all the other allied equipment. So while there is a bit of a pushback in terms of supply chains being disrupted, we relatively have our supplies protected from some of the local manufacturers as well. This does, however, impact some of the costs due to the commodity prices going up. But we at Oyster had gone ahead just before this crisis and had locked in most of our supply contracts. Hence, the volatility has not hit us as yet, but only for projects that we are looking at in the near future. Some of that volatility would be a part of our entire capex plan.
Sandesh, a similar question to you. With how are you looking to deliver cost-effective, power or solutions to your clients? And the other thing really is about on how you have the larger corporates and PSUs now entering the space as well. Is that making the competition difficult?
The market is so big that right now there is no feeling of a competition, or there is a shortage of the work with an EPC contractors. So as what we try to do is we keep adding our services. So we add value to the services. We are not like a traditional EPC contractors, and that's where our USP is. So like just to give an example, we add land aggregation as part of the EPC services, which was never the part of an EPC contract in their services. Robotic installations, which we are getting into, base installations and commissioning, which we are getting into. So all these services and make us more competitive in the market. And of course, we are very much ready right now to cater to the demand which we are getting from the developers and the large-scale utility projects as well.
Sandesh, maybe not a competition really that you've been dealing with that.
So you're absolutely right. Between the center and the state, there is a gap. Usually the state takes some time before it catches up to what the policy has been set by the center. And there is a time lapse usually, which causes a delay within our projects. So what we have done is we have gone ahead and chosen states that have a favorable policy. Not only do they have a favorable policy, but they ensure that they have a one window clearance as far as the renewable energy sector is concerned. So we are aggressively working in states like Madhya Pradesh, Gujarat, Andhra Pradesh, and now one of our biggest states that we are focusing on is in Maharashtra as well, now that their new renewable energy policy has been announced. So what we ensure to do is that we work in a favorable environment. We are a part of various groups where we have a voice on policy advocacy, where we ensure that we are able to at least put in our issues up to the correct stakeholders, so that some of that is taken into consideration.
A final question to you, Sandesh, and how are you looking at scaling up going forward with the kind of solar demand that we seem to be getting into the country, with the kind of subsidies, push, maybe more awareness that seems to be seeping in?
Yeah, so if see, we have already some more verticals in our kitty. Like earlier when we were into an only a solar EPC contractor, we have now entering into B2C as well, where we have our own subsidiary catering to rooftop solars and all. And the policies really support very well for the rooftop projects as far as residential projects are concerned. In addition to that, we are also getting into this best, like for an example, in Maharashtra, the projects are permissible only along with the best. And now we are ready to get into it, and that's where the best will come into the picture. We strongly believe the best is the future for this commercial CNIs and large-scale utility projects, and we are very much ready for that.
All right, so growth absolutely coming in for the sectors, whether it's about solar and renewables. Thank you so much, Siddharth and Sandesh as well, for joining in and introducing our viewers to what really is happening and what the companies like yours doing into that space as well. We will, of course, speak soon yet again, but appreciate your time today on CNBC TV 18. Thank you so much. And with that, we'll go for a very short break. When we come back, I will get you a conversation that I have had with Merix on the shipping and, of course, the West Asia conflict that has had on imports and exports from India into various countries, especially the Middle East. Do stay tuned in for that conversation. Welcome back to Commodity Champions. There's been so much happening, first in the Red Sea and then in the Strait of Hormuz. To understand how shipping giant AP Moller Maersk is navigating these uncertainties, I spoke earlier with Bhavik Mota, who's Director and Head of Markets, West and Central Asia at AP Moller Maersk. Here's a slice of that conversation.
Yeah, I remember last time we met in January, I was pretty optimistic for 2026. And I said, let Red Sea be behind us and we'll see the change. But of course, world is very different. So if you look at the India trade performance right now, for especially the quarter that's just gone by, reflects two simultaneous reality. One, of course, on one hand, we have this disruption, as you rightly mentioned, new kid on the block, the Middle East crisis that we are faced with, creating clear pressure on the Gulf flows and some of the associated flows which are going via the Gulf. On the other hand, when you look at India's trade fundamentals, they continue to remain very resilient, diversified, but are becoming more increasingly adaptive to these changes. In reality, we are not seeing a drop in demand. So we are seeing good, robust demand to the markets we've been discussing, Latin America, Africa, North America, Far East, the new kid on the block, showing good growth. But when you look at the data, it's a bit skewed now when the March data is populated in Q1, all thanks to Middle East crisis. But overall, fundamental-wise, India is looking quite good.
So let's break it one by one and let's talk about exports first. And we have seen a definite decline into that one. If we take the Middle East market out, are we still looking at exports growing? And what is the whole data looking like?
Yes. So if you take the Middle East component out and you normalize the rest of the flow on exports, is looking quite strong. Of course, there are trade dynamics, what is changing and what we are seeing a bit of a reshaping of trade corridors and strategic adaptation, and some of them is also tactical adaptation. Case in point, at least the cargo which was moving into the Middle East, now the biggest reefer commodity that moves is meat. Now, meat is not moving to the extent because it's very costly right now to move it into the Middle East because a lot of cargo now has to move on the land and it's not cheap to move cargo on land in Middle East. So part of that meat is now going to Far East. So we are seeing a bit of shift of volumes that is happening. If you look at some of the other commodities which are must-have in Middle East, like rice, which is the staple, it's needed, it's moving in spite of the cost being high. So it's a mixed bag from a Middle East. Apart from that, if you look at North America, quite stable growth, especially into the retail segment. The only question now is that, and thanks to also the Russian waiver on the oil import, we are seeing a normal flow of retail cargo moving into North America. So very difficult to predict, but all things being equal, if Middle East crisis ends and also if we see that no new tariffs are coming in, we'll see a good peak coming into North America again. So stable, expected also to improve. We're seeing very good growth on the segments if you go by on pharma. Phenomenal growth. Again, lot to do with westbound trade into North America and Europe. And of course, two-wheelers continues to grow very strong within the auto segment into Latin America and Africa. So very, very robust export outlook minus the Middle East. And some of these Middle East commodities have made their ways into the new corridors. So they're diversifying rightfully so to also realize their earnings.
But have the freight costs gone a lot higher? Because I was talking to some of these perishable commodity exporters, rice, for example, mango, for example, grapes, etc. And they said what the price were earlier and what the commodity is now available to Middle East is at a much higher price.
100%. So it's absolutely right. There is no denying the cost has gone up because compared to your full-fledged operations in Middle East, now you're completely isolated from the Persian Gulf. So you have only limited 2 or 3 ports, one in Saudi Arabia, one in UAE, where you do your export and import. That creates congestion. All of this crisis, the fuel prices have gone up significantly high. So the costs have gone up. So your ocean freight, the bunker element of the ocean freight has significantly gone up. That reflects into the ocean freight. And on top of it, because you're not accessing the Persian Gulf, and majority of the cargo is going to the Iran and Bahrain and Kuwait of the world, you need to do a road bridging. And they don't have enough capacity, supply, demand, and it's a very expensive value proposition to move cargo on road, and that adds extra pressure on the cost. So 100% right, the costs are going up, and it's not cheap right now to move
So
it.
that is about exports, of course. So when it comes to imports in India, that number seems to be fine, especially when it comes to raw materials, etc. What are we looking at in sense of categories when it comes to imports, and how has that number stood out?
Yeah, so import for us, Q1, very, very, very good. Double-digit growth, and it continues to be quite resilient from that perspective. And it's pure reflection of India's manufacturing, expansion that is happening and the pure consumption that we still have in this part of the world. Of course, now we have to see how the future inflationary pressures, whether the consumer demand and the buying criteria changes, very difficult to predict, remains to be seen. But we are seeing a lot of impetus from Far East. So we are seeing a lot of appliances, electronics moving in big numbers. We are also seeing a lot of PTAs, polyfibers moving from that part of the world. And of course, from the likes of North America and Europe, we see a strong surge of recyclables. Part of it is, of course, because Middle East is shut again for them as a market. So they also find alternative market on imports into India. And we are seeing a little bit of influx, more than the usual, on the recyclables coming into India.
You mentioned about Europe, you mentioned about Asia. How is India's trade with US right now? And the fact that we're looking at so many FTAs, tariffs is something that's taken a bit of a backseat, but then again, we do understand a lot of countries are restarting those negotiations with India. Has that already seen an impact?
Yeah, so to be very, very honest, the real impact of FTA yet to be seen. So a lot of discussions and a lot of narratives around that, but in reality, as I said before, the demand is quite stable, and the waiver on the Russian oil import tariff has really helped to normalize that outlook. The key is now, if the Middle East crisis gets over at some point of time, fingers crossed, and there are no new tariffs coming in, July, August is generally the peak. And when you talk to most of the big retailers, they're pretty confident that the peak looks quite good because they need to restock. Again, inflationary cost, if it goes very high, would be a different story. Buying criteria in US again can change, whether the big size retailer or mid-size retailers will win. But we are pretty optimistic that all things being equal, things normalizing, we'll see good growth coming in Q2 and Q3 of this year.
How are you also looking at India's exports on how they stand right now? Middle East is a concern. Yes. Is a lot of cargo going west or eastwards? Or do you think the trade within Asia seems to be picking up even more stronger?
It's both. I think Middle East, the good part about Middle East is when it really started the crisis in March, there were not too many acceptance points. So slowly and steadily, we're also finding new solutions for our customers to find a way to get into the Middle East. Not perfect given all the complexities that I mentioned, but the Middle East cargo itself compared to March is showing a little bit of increase, from India. Apart from that, as I said, alternative markets is mainly Far East. That's where the meat is moving. That's where a lot of these petchem volumes are moving, and so on and so forth. So definitely alternative demand into Far East, and a little bit going into Africa, not so much. Some of the commodities like rice have found the alternative market, but rest all, it's pure demand coming out of those markets, which are Europe and US.
Let's talk about the Maersk presence in India as well. And I remember last time we had a conversation, there's a big amount that has been committed into India. What is it that you're looking at from the government when it comes to whether it's about accelerating port automation or workforce deployment here?
I think the biggest issue right now, and it's also the ripple effect of some part of it, is because of the Middle East crisis, right? Because a lot of the cargo which cannot go into the Middle East, they have found a safe storage in Indian ports.
All right.
And with the demand in India growing, especially on the west coast of India, we are seeing a bit of congestion coming in. That is now compounded by also the trucking driver shortage that is compounding the overall issue on of that. So the biggest task is how do we resolve this issue? Because not only the costs are going up, but it is also creating inefficiency in the system. So one of the things that we need to really resolve is how do we create a bit more space, and a couple of ports are coming up in the next couple of years that should ease the pressure on overall the port infrastructure, but we also have to resolve the issue around this whole drivers and trucking shortage that we are facing on the West Coast.
Bhavik, in your initial comments, you said when we met last in January, you were very, very optimistic. As we look at or stand as the end of the May, how is the next quarter or the rest of 2026 looking to you?
Yeah, so next quarter, we are already into the second quarter, so to say. Middle East is, as I said, not back to normal. It will take a while before it
But as you pencil in a lot of things, are you penciling in normalization by fourth quarter of this year or not yet?
We are assuming that, but as I said, your guess is good as mine. So very, very difficult to predict. We are assuming hopefully it will end soon, and hopefully in the next couple of months. But yeah, we see quite robust demand, as I said. Even on imports, what we are doing, because we do expect demand to continue very strong from Far East. We are launching in a new service starting next month because customers are asking for that capacity because they want a lot of the cargo from east and the south of China to move into the west coast of India. So that will really create a bit more capacity. That's been the need of the hour. So really there is a demand on import. That's where we are investing. North America and in Europe with the Gemini and the Meckel, what we discussed last time, continues to be strong. With the extra capacity, we've been able to fill the cargo. The demand continues to be strong. So all in all, very optimistic that we will see a good quarter 3 and quarter 4. Only disclaimer is, inflationary costs should not be beyond a point where it becomes unviable, and then hopefully, and the Middle East crisis should come to an end.
On that high hope, thank you so much, Bhavik Mota, for joining in for this conversation. Really appreciate your time here at CNBC TV 18.
Thank you so much.
And with that, we'll go for a short break. Come back with more conversations.
Hello and welcome. You're watching News Center with me, Ashmit Kumar. Now, a peace deal between Iran and the U.S. remains elusive. The U.S. launched fresh strikes on Iranian missile launch sites and both allegedly attempting to lay mines. It termed them defensive strikes to protect American troops. President Donald Trump then posted on social media that Iran's enriched uranium will either be immediately turned over to the U.S. or destroyed in coordination with Iran and with the Atomic Energy Agency or its equivalent as a witness. However, Tehran denies Trump's claims. Meanwhile, Iran's Revolutionary Guard said that it reserved the right for legitimate and definite retaliation against any ceasefire violations. They claimed to have intercepted an American drone near the Iranian airspace. Tehran also maintained that sovereignty over the Strait of Hormuz is essential to a peace deal. U.S. Secretary of State Marco Rubio said that a potential deal could take a few days to finalize.
Something like this, it's going to take a couple days to settle on, even down to the disagreements over a word, sentence. So we'll have to work through that.
The straits have to be open. They're going to be open one way or the other. So they need to be open. What's happening there is unlawful, it's illegal, it's unsustainable for the world.
Meanwhile, Quad foreign ministers, including Rubio, met in New Delhi and discussed the situation in West Asia, among other issues. They reaffirmed support for ongoing diplomatic efforts in the region. Without naming Iran, the grouping condemned attacks on commercial shipping vessels and opposed the imposition of tolls on the strait. The ministers also expressed concerns over what they called unilateral actions in the East and South China Seas and called for enhanced information sharing in the Indo-Pacific maritime region. India and its Quad partners agreed to mobilize up to $20 billion to build secure critical mineral supply chains to reduce dependence on China. Separately, India and the US signed a bilateral critical minerals framework covering the mining and processing of critical minerals and rare earths. Now, this comes as Chinese President Xi Jinping hosted Pakistani Prime Minister Shehbaz Sharif in Beijing. Now, the two leaders reaffirmed their commitment to deepen their strategic partnership. Xi Jinping also praised Pakistan for taking the initiative to play a mediating role in restoring peace in West Asia. Now, before we discuss this further, let's listen in to what External Affairs Minister S. Jaishankar said about the India-US Critical Minerals Framework.
This particular framework aims to deepen our cooperation across the entire critical minerals and rare earth supply chain, including mining, processing, recycling and related investments. It will certainly strengthen resilient and diversified supply chains. It will help us to collaborate in financing and in the effective management of critical minerals and rare earth scrap.
Well, joining us now to discuss this further is with us Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group. Also with us, Raymond Vickery, Senior Associate of the Wadhwani Chair in US-India Policy Studies at CSIS and a former US Assistant Secretary of Commerce. Also with us is Tanvi Ratna, columnist with Fox News. To all of our panelists, thank you so much for joining us. Mr. Chaudhary, coming to you first. We're seeing a lot of work being put in as far as the Quad is concerned when it comes to critical minerals, to supply chains, to ensuring energy security. What I want to ask is that, are we increasingly seeing an evolution of the role of Quad from a geopolitical coalition to more that's aligned with technology, with economic interests of the member states?
Well, I would argue that the Quad was always about strategic technology. If you go back to its original, when it was recreated, it was rebuilt as a strategic technology grouping. 28 of its original subgroups and working groups, I think 24 were about technology. What we've now seen, especially after the Washington Foreign Ministers meeting last year, it's been slimmed down into 4 core areas. But increasingly, yes, it's about the minerals, it's about supply chains, but it's also about connectivity. In other words, ports, infrastructure, logistics infrastructure, and continues to have a remnant of the old humanitarian disaster response part that was what it originated from the Asian tsunami. But what we're seeing now, that given what we've seen in West Asia, given what we're seeing in terms of weaponization of supply chains by China, is an increasing focus on critical minerals, on supply chains. And what we're also seeing is, I think, the Quad increasingly becoming a coordinating body, that rather than trying to get the 4 countries to work together, which is quite difficult, you're seeing already a fair amount of bilateral action taking place, maybe even trilateral action taking place within the Quad. India and Japan, for example, India and the United States just signing. But there's also agreements between Japan and America, Australia and Japan that need to be coordinated because they have a common posture of trying to ensure that they do not fall victim to China or to geopolitical uncertainties in regions like West Asia.
Sure. Mr. Vickery, coming to you, of course, the common agenda as far as the 4 member states are concerned, of course, all of it closely aligned to being focused on China. What happens when US, again, one of the leaders as far as Quad is concerned, starts courting Xi Jinping, starts courting Beijing? What happens to the relevance of Quad?
Well, thanks very much for having me. I think you've put your finger on the key issue, and that is the Quad was really put together after its initial foray into disaster relief as a counterweight to China. The recent visit by President Trump with Xi seems to have taken some of the focus off of the Quad as a counterweight. Indeed, President Trump himself has talked about the G2 as opposed to a Quad. And the Quad meeting itself was to have occurred some time ago and in advance of the Xi meeting. That didn't happen. So there is a real question, I think, raised particularly in the minds of other Quad partners, India, Japan, and Australia, as to just how relevant the Quad is going to be going forward in regard to balancing China. That having been said, it is encouraging that for the first time there is an infrastructure project which is taking place under the auspices of the Quad, and the sharing of information, maritime information, the emphasis on security, freedom of the seas in regard to the Indo-Pacific are all to the good. But make no mistake about it, the Quad is now playing catch up in regard to what happens between the United States and China.
It's interesting you mentioned about how Quad is trying to play catch up. And let me actually get Ms. Ratna in on that. Ms. Ratna, coming to you again, you follow very closely the leaders, the decision makers in Washington. Help us with that perspective. When you look at the fact that the Quad Leaders Summit was scheduled for 2025, that did not happen. It's not happened in 2026 as yet. When Marco Rubio was questioned on his latest visit to New Delhi, the answer that he gave was that he doesn't have a timeline with him. He said it might even happen. The leaders may have to meet on the sidelines of some other summit. What does that tell you about where Quad sits on the priority list of Washington decision makers?
Hi, Ashma. Thanks for having me. I think in the words of Washington, I think that means it's pretty high priority because if you know, it's the January National Defense Strategy that actually puts the Indo-Pacific region front and center in American strategy. And it's till now, if you are aware, I mean, there's been a lot of reordering with NATO. There's been a lot of resetting of old alliances. And now, after the question of Hormuz is settled, hopefully the Ukraine war has some kind of settlement, in sight. Then, very much the focus is going to be on the Indo-Pacific from a Washington perspective.
Sure. Let me just take that up with Mr. Pramitpal Chaudhary. Mr. Chaudhary, again, what I want to ask is that the concerns that have been voiced, like Mr. Vikri was pointing out, is that with an increasing amount of engagement that we are seeing between Trump and Xi, President Xi is likely to visit Washington later this year. The conversation is increasingly steering towards how Quad could perhaps just be reduced to a secretariat for techno-economic measures when it comes to supply chain management.
I'd have to disagree with Mr. Vikri here. I actually saw the Xi, and my company definitely did, saw the Xi-Trump summit as a failure. There was not a single deliverable that was produced by this. Trump had gone in expecting China to make concessions on soya, beef imports in return for concessions on chips and purchases of U.S. aircraft. The Chinese committed onto absolutely nothing. It may happen later on, it's true, but Xi was basically very clear. China said, we don't need your chips. They acknowledged they would buy some Boeing aircraft. So few aircraft that Boeing stock actually fell after the summit. And from what I've heard in the meetings that have taken place at the Quad foreign ministers here, the Americans have indicated that one of the reasons we're taking the Quad and the need to rewarm our relationship with India is because our China relationship is not working out the way Trump had expected it to. Trump tends to over-personalize foreign policy. He had problems with Modi last year, and then he thought he could charm Xi, and I don't think that's worked out very well for him. And the overwhelming, I think, view of most governments was that at the Xi and Trump summit, Xi came out looking extremely dominant. And it was America that came out looking subservient. And that's something that Trump is not particularly happy about. That doesn't mean that the US and China will not interact. Of course they will. Even when, for example, George Bush was the president, and he was in many ways the most enthusiastic about the Indo-US relationship. He visited China repeatedly, and he worked with the Chinese. But that didn't necessarily affect the Quad. I think for Trump, it's a slightly different story. He's not a multilateralist by nature. He doesn't like NATO. He doesn't like organizations in which America binds itself with other countries, even if they're allies. He's very much a unilateralist by nature. And therefore, for him, organizations, whether it's the NATO, the Quad, or APEC, and so on, WTO, not his kind of thing at all. What we have seen, however, is that within his administration, whether it's a Hegseth, a Rubio, a Vance, all of them are great enthusiasts for the Quad. And many ways that once Trump got over his anger with India, I would say, over the trade negotiations, which ran through most of last year and really resolved itself only about in January, February, we see him being more receptive to organizations like the Quad. But remember, Quad has no secretariat. It is a very loose coalition, and it's, as I said, about coordination. It's not about mandates.
Right. Let me, in fact, just bring in some of the comments that we heard from Marco Rubio. He talked about how India is the centerpiece of America's Indo-Pacific approach. We also heard from President Trump in the course of the dinner that was hosted by Sergio Gore, when he talked about how India can count on the United States. We've also seen more recently India align itself very closely with Pax Silica when it comes to critical minerals, semiconductor technologies. Does that indicate to you, coming to you, Mr. Vickery, that there may be a balancing act that Donald Trump may be doing? He may be transactional, but he's still indulging parties and powers like India.
Well, I think that it's very much the case that he has to recalibrate, because there is no issue worldwide that can't benefit, particularly from a close cooperation between India and the United States, and indeed the other great democracies of the Indo-Pacific, Japan and Australia. That having been said, it seems to me that the remarks that Trump is not interested particularly in organizations, that there is no commitment from President Trump in regard to a summit meeting of the Quad leaders, all indicates that he is still in a bilateral transactional mode vis-a-vis China. The summit was a failure, but there is no question in my mind that he is not attuned to an organization really like the Quad, no matter what Secretary Rubio or others in the administration may say. And when it comes to actual policy, Secretary Rubio, if President Trump says sit down, he doesn't even look for a chair. He's an opportunist, and he is not going to be able to carry the day against Trump's predilections for a bilateral transactional approach.
Right. Right, Mr. Vickery, this is an engaging discussion. We'll continue that with the help of our panelists on the other side. We're slipping into a very short break, but don't go anywhere. The discussion, this conversation will continue on the other side of this short break. Welcome back to News Center with me, Ashmit Kumar. Still with us are Pramit Pal Chaudhary, Raymond Vikri, and Tanvi Ratna. Ms. Ratna, let me come to you again. Looking at this entire Quad Summit that we've seen from the lens of the West Asia crisis, there has been no outright mention of Iran, but there has been a condemnation of how there can be no toll as far as Hormuz going forward is concerned. Will Marco Rubio take that back, a happy camper from this Quad Summit?
Yes, I think on the issue of Hormuz, it actually was discussed at the summit. It's they haven't put out a statement on it because this is not the forum for any kind of military security serving alliance over Hormuz. But I do think in terms of if I could respond to your previous question on the contours of the Quad at the moment, you will see that they are quite aligned with the way U.S. is laying out its larger policy, whether it's around PAC Silica or it's around the various critical minerals initiatives. You will see also a lot of mention of new next-gen standard-setting initiatives, so around AI, around telecom, around digital identity. So very much the Quad is, it is aligning on what is actually the foreign policy priority for us, which is economic security. And why it looks incoherent compared to what was there previously is because the entire basis of American foreign policy has been rejected with this administration. But it is aligned with what they have been talking about from the start, which is secure supply chains, economic security, preparation for the new economic track, future technology, and things like that. So that reflected, I think a lot of initiatives were announced today, and there was much more activity than what.
Right. Let me take that ahead and let me add another dynamic to that. Mr. Chaudhary, let me come to you. The new dynamic I want to bring in is the Pakistani Prime Minister visiting President Xi Jinping in Beijing. How important is it? What is the significance of the Pakistani Prime Minister meeting President Xi in Beijing at the time that India is hosting the Quad foreign ministers, including Marco Rubio?
I don't think there's a particular strong connection. Pakistani leaders visit China regularly. China is by far their most important overseas partner. And in many ways, Pakistan can almost be said to be the only ally or one of the 2 or 3 allies that China has, and not even a formal ally. But as the Chinese said, I think it's called an all-weather friend. So that the fact that Shahbaz Sharif has gone there, in fact, he's gone there. He and Munir, Field Marshal Munir, actually controls the country, have gone there a number of times just over the present Iran conflict negotiations. But I think the real problem for Pakistan is twofold. One is that in this Iran conflict, while the diplomatic profile has been massively increased by their role in the mediation talks, what they really desperately need is money. They're not getting any out of this conflict. Their economy is in tatters. Their per capita income, according to the IMF, is now poorer than Nepal, making them the poorest country in South Asia, and their poverty levels have risen to 44% of the population. They were hoping to get some economic benefits, especially after they signed up a defense pact with Saudi Arabia. But whatever money Saudi Arabia has given to them has been matched by the withdrawal of funds by the United Arab Emirates, which has been extremely angry at the Pakistanis. But it is the UAE which in many ways is almost the closest economic partner, at least matches Saudi Arabia as an economic partner for Pakistan. And notably, Munir has not been able to visit Abu Dhabi or Dubai. MBZ, the leader of the UAE, has refused to take any of his phone calls. So the Pakistanis have to be nervous. China, curiously enough, has also given them no additional money. Has just basically said, please go to the IMF and do whatever they require. So for Pakistan is that, yes, I need diplomatic profile, I need photo ops, but what I'm not getting is the economic backing that I desperately need to keep my economy afloat.
So not getting economic support, but at least in diplomatic terms, would you say that Pakistan is punching above its weight class? It's being courted by Donald Trump. It's being courted by Beijing as well. And at the same time, when we ask the question, has India missed the bus perhaps when it comes to diplomatic maneuvering, especially vis-a-vis Pakistan?
I would say that the game is that, yes, Pakistan is definitely getting headlines because of their actions, though I noticed that Trump's recent call upon them to recognize Israel and sign the Abraham Accords had to be rejected openly by Islamabad. But I think the Indian government's point of view, from what I understand, is that you don't do mediation unless you have a pretty reasonable chance of success. And in their view, that this was going to be tricky, given that the relationship between Iran and the United States was so hostile. India has had quiet talks with almost all the major parties in the Gulf, but it has really focused on basically ensuring India's interests. So we have gotten more shiploads of cargoes through the Straits of Hormuz have been cleared by Iran for India than any other country. We've been able to double down our relationship with the United Arab Emirates and still maintain what is an extremely strong military and strategic relationship with Israel. And as for the United States, that's a relationship that runs on its own track, because I think one thing is reasonably clear about President Trump. You may help him diplomatically, but he does not show he has no concept of gratitude and will give you no special concessions afterwards.
Fair enough. That just brings me to Mr. Vikri for one final question. Again, during a part of this Marco Rubio visit and in the build-up to that, we've seen consistent pitch by the US for its energy assets, saying that India should buy more. If this situation towards Iran is nearing an end, we heard only a few days away now, well, we've heard that plenty of times before as well. But if it does near an end, will India be incentivized for purchasing American oil, gas? Do you see that happening?
Yes, I do. I think that the bilateral transactional approach of President Trump is very much attuned to doing a deal on energy. He is a real estate developer by background, in addition to being a reality TV star. What he wants is a transaction which shows that the United States has been able to come out on top, and energy is one of his chosen areas. So I think that whether it be Venezuelan oil, which India is able to process, or whether it be strictly from the United States, that oil and gas is a part of the remit which Secretary Rubio has had, and I would expect that there would be progress on that front. But make no mistake about it, that is no substitute for opening the Straits of Hormuz and dealing with what is, if you will, the elephant in the room, and that's what's going on between the U.S. and Iran.
Right. Ms. Ratna, just quick 30 seconds coming to you. We're completely out of time. How critical is India buying energy from the U.S. for the trade agreement to go through? Will that be a stumbling block? Can that be a stumbling block?
Yes, I do believe it could be, and it probably will be. I do think also with energy that, the U.S. has had success in this period with the Hormuz crisis, and also pushing back Russian energy, whether it's from Europe or also from India. I think that is an unstated but very important role for the administration. So I do think those deals will be very critical for India.
Right. I'd like to thank all of our panelists for joining us with their precious insight. Mr. Chaudhary, Mr. Vikri, as well as Ms. Ratna for joining us. But we're completely out of time. It's a wrap on this edition of News Center. More news and updates will continue right here.
Hello and welcome. UBS is holding its Asian Investment Conference 2026 in Hong Kong. It kicks off today and runs for the next 3 days. Joining us now are Divya Nagarajan, Head of India Research UBS, and Sunil Thirumalai, who is the Executive Director, GEM Equity Strategist at UBS. Divya and Sunil, great to be speaking with the both of you as we kick off. I think 3 days of pretty interesting conversation. And of course, this is the first in a series of conversations we'll have with many from your teams. Well, there is so much ground to cover with respect to what is going on in the investment world. But let me just sort of start by getting a FII temperature check, if I can call it that, with respect to Indian markets. The temperature surely isn't running high, but how far below normal are we right now? Divya, why don't you go first?
I would say about 45 to 50. I think what we are beginning to see is that the earnings season has been pretty good so far. And I think people who have stayed away are now trying to see, can we look at some bottom-up ideas? So we are definitely seeing pockets of interest emerge, especially from an FII perspective. They're looking at value bottom-up stories that can be earnings compounders over a long period of time. So it's still early days, but I would say I would put it at an optimistic 45 to 50 compared to where we've been in the last couple of months.
Sorry, I said the range was 90 to 100. When I heard 45, I had a mini heart attack. I think you meant it in. You're saying it's picking up. That's basically what trajectory.
I would have put it lower a couple of months ago, but I think with the strong earnings season coming through, we're definitely seeing more incoming requests from foreign investors.
Yeah. And, guys, we're speaking to you on a morning when Taiwan has overtaken India's market capitalization. So we just looked at the live numbers, 4.95 trillion, and we're at about 4.92 or so. So it's quite incredible, right? But there's one stock there, and TSMC, which is outsized part of the index. Same thing with Korea as well. Actually, both a few weeks ago, both Korea and Taiwan were within 10% of India's market cap range. And Taiwan, of course, has now bridged that. Sunil, so come in there. Is that the main challenge? This entire AI trade and all these large stocks like TSMC, which feed into the big AI boom in the US. And so far, we don't have a foot in the door there, at least in the listed universe.
Yes, so I think just to take a step back and get a broader perspective, for the last 2 to 3 months, we've actually seen meaningful outflows of foreign money from all of EM, all of Asia, not just India. It's, Korea has seen big outflows, Taiwan has seen big outflows as well. But the drivers for those outcomes, in spite of that, we've seen, as you mentioned, Korea and Taiwan have done well, and India has, kind of underperformed. So there are a few, angles to that. AI is a very important aspect, as you mentioned. There does not seem to be any letting of demand from the US hyperscalers in terms of their capex, and hence the demand for the upstream companies in North Asia. And yeah, of course, India is kind of missing out on that. And added to that is also the oil price spike and then the Iran conflict. While even the two markets in the North Asian markets that we are discussing are also dependent on imported energy. They're not energy surplus economies. They are importers. They've been able to manage it probably a bit better, and for sure for these specific industries, they are being considered as strategically important, and a lot of support being given to those. So yes, I think AI trade is pretty important for this divergence where India has underperformed. We're not sure if that's dying out anytime soon.
Sunil, the reason why there have been large outflows, actually, out of markets like Korea, Taiwan, etc., is it? I read that for large active EM investors, there is like a 10% limit on a single stock, and because these are essentially, such large trades, TSMCs, right? So is that the reason why perhaps there has been some selling out of those? So occasionally we see these kind of sharp outflow numbers, and then they come right back.
Yeah. So absolutely right. It's not that. I think it's because of the single stock limits. TSMC is beyond 10%. and Samsung is less than 10% for an EM investor, but it's catching up pretty soon. So there would be some funds which are above who would have been overweight Samsung, for instance, and they are being forced to sell. So I mean, I think that is definitely there. So it's not that. So which also means that if there is any correction for some reason in some of those stocks, you could see some buying coming back immediately. So that would also provide some floor to those stocks. So there is this technical factor at play as well.
Sunil, can India have a bull market in the absence of an AI play or the AI ecosystem? What is your own view?
Well, okay. So I think a bull market for India is an absolute return concept. It's not a relative return. So it's possible that EMs do well. India may underperform because of whatever AI trade that's happening elsewhere, but it can still have a positive return year, right? So I think the two are not really mutually exclusive. If you have decent earnings, if you have it is a domestic story for India given the way the index is. So if you have decent earnings growth, if you have you're beginning to see banks pick up on credit growth after a while, they're gaining market share against the bond market. And if they are, able to, manage their margins to, and probably see some increase in margins in a rising rate environment, all of that is good, right? You have other themes like defense, renewable energy, etc., that are picking up across the market. So I don't think, and importantly, keep in mind that after COVID, the foreign investor, the impact of the foreign investor in determining the direction of the market has kind of reduced a bit. It's not gone away, but it has reduced a bit. And if the domestic money is supportive and if the earnings start recovering, there's no doubt why India can't have a positive return year. And outperformance versus underperformance versus the rest of EM can be for various other factors.
Okay. Divya, you said that the foreign interest in India is picking up, albeit slowly, but it's still picking up. There are certain themes, bottom-up ideas that they're looking at. Do you want to tell us a little bit what is catching their interest? Are there any sectors or themes?
I think as Sunil spoke, Rima, I think financials is definitely an area we're seeing a lot more interest, both on the banking and non-banking side, surprisingly. And again, it's for the reasons that he mentioned earlier. I think the credit growth is picking up. We were also, I think, just coming out of a few years of cleanup on the NPA side. So the sector is actually in a good place and in a much better place, I would have said, than if this crisis had happened a year ago. It would have been a different story. But now the sector is actually in a much better fundamental space. So I think banking financials is definitely a place that we're seeing interest. But also smaller mid-cap names, which have been, again, out of favor from a foreign perspective for a while, where there are compounding stories, sustainable earning stories. We're definitely seeing interest. There's a lot of questions around what's going to happen around energy security. What is India doing on renewables? Will you fire up thermal? Will you fire up nuclear? So there's definitely a lot of interest around energy security as a theme and renewables as a theme. So definitely in areas of interest there.
Divya, you'll also believe as a house that the AI theme has still a lot more legs to go. How long do you think this can run? Can it run for another 1 year? We're talking about 3 years, because that in a way determines India's relative performance. What is your own view, or the emerging market view at UBS? Divya?
Yeah, so let me sure, let me take that. So I think the way we would look at it is that the timeline or looking at when this trade ends essentially depends on when the revenue monetization hope for the US hyperscalers disappears, right? I think there is some level of monetization that's happening today. Not a whole lot, but it is picking up. Every new model release that comes out and disrupts a particular industry, like we've seen the legal industry being disrupted, consulting industry, and so on. Every new model release that comes out is basically a motivation for those model developers and the infrastructure providers behind them that there is revenue to be made. As long as that hope is there, I think money will continue to flow into those markets. Now, at the end of the day, keep in mind that the entire AI value chain from the hyperscalers to the providers at the semiconductor providers on the upstream, they're actually making, as a group, a lot of free cash flow. So they're not burning money in the traditional sense. They're not. It's very different from the .com period when the cable make companies were investing a lot of money, getting into a lot of debt, and so on. That's not the situation. So that basically means that this could have some room to go. The opposite scenario, which would be relatively positive from the Indian market's perspective, would be if the very quickly these companies realize that the revenue upside is just not there. People are not willing to pay, and the token budgets are getting exhausted, but the token costs are not coming down. The unit costs are not coming down, just like technology costs normally fall, and hence there is a big challenge in revenue monetization. I think that's what I would watch out for. Right now, it seems like they are making decent FCF as an ecosystem, and that should give them some room to continue with this.
Well, interesting point there. Hold that thought. We're going to take a quick commercial break here. Come right back and continue this discussion. Welcome back. We are in conversation with Divya Nagarajan and Sunil Thirumalai of UBS. The UBS Asian Investment Conference kicked off in Hong Kong today, and we are talking to them about all things investing, particularly with regards to where India finds its place in this big AI boom, which is underway globally. AI boom in India is not a prerequisite for markets to do well. But let me flip that. Is a AI sell-off elsewhere a prerequisite for foreigners to come back in a large way to India?
So to a large extent, global equities are kind of geared up and leveraged to this AI trade. So if you're talking about a serious unwind, that would be bad for equities globally, right? So you could see a relative outperformance of India, but I'm not sure we can be very confident of India having big upside.
It's not my case that we see a global sell-off in India is up, but generally, relatively, we'll stop talking about this for a bit. We'll start talking about, the good old, all the sectors that there are top sectors here. That's what I meant.
But I would just add at the starting of the of this question you mentioned about the AI trade not being there in India. India can still benefit if AI diffusion and adoption happens 100%. At an economy level. It's a very solid 5-year story. And hence those things will start showing up in our market in other sectors over time. But I just want to point that out.
Yeah, no, 100%. Divya, so run us through, so banks is one, right? You said that energy security comes up, and I think you've got positive views on names like ONGC and some of the others there. So just talk to us about where to which are pockets you'd pick out and sort of look deeper, study more for ideas.
So I think there are two parts of this conversation, right? The here and now versus what happens if the conflict drags on. So let's leave the conflict dragging on situation aside for now. So I think banks we've talked about, energy security we've talked about. Actually, if you look at the consumption stories, I think consumption's also been picking up. I think if you look at the consumer sector, especially the big staples names have actually done pretty well compared to our expectations. So that's another bright spot right now, assuming that story doesn't get derailed. But I would argue that if inflation comes back, then some of these big, large consumer names could be a little bit more resilient. We also like the short cycle industrials because there's been inventory replenishment, and I think we're seeing that inventory ordering pick up. And that's, I think, a place that we like as well. Long cycle capex could get pushed out more because we have uncertainty going on, but I think the short cycle industrial capex is where we expect to see continued positivity. The last place I would also say is defense. I think we are in an increasingly uncertain multipolar world, so I think that continues to be a secular area of spend for governments across the world, and the Indian government, I think, is no different there.
And Divya, on IT, not in the near term. In the near term, the market narrative is very simply put that Indian IT is an AI loser. But we've seen the Indian IT industry navigate through various technological changes. And if, as Sunil said, that AI diffusion takes place, then and AI adoption picks up, maybe the Indian IT companies do have a role to play. Which side would you bet on, Indian IT over the medium term, valuations aside, just purely on the basis of a business case, on the kind of growth numbers that we have on account of AI 3 to 5 years down the line? Would you be bullish or bearish on IT?
That's essentially taking a call on whether generative AI succeeds on its promise or not and how it plays out. But I think taking a balanced view here, I would say that the companies are much more faster this time around in preparing themselves and disrupting themselves. So you have many large companies have already started reporting AI revenues. So you can see how they're investing in it, how those revenues have started to grow. We're seeing very healthy double-digit QOQ growth in what these companies report as AI revenue. That being said, there will be some disruption on the existing base, which I think will have some impact over the near term. But overall, I think the companies are definitely preparing themselves to see how they can stave off being disrupted to the extent that they can. The caveat here is the technology itself, because the technology, as I said to you when I was there last, is still very young. And as the technology evolves, I think its capabilities seem to be evolving by leaps and bounds. And that, I think, adds a little bit of uncertainty to the level of preparedness that the industry can have on this. So net-net, I would say we are slightly cautious and we like the smaller names because I think they're a little bit more nimble and agile compared to the large caps.
Sunil, say the same. I mean, I just wanted feedback from foreigners on IT. What do you hear? IT services in India.
I think that's a uniformly negative view right now from a foreign investor perspective. Sorry, Sunil, go ahead.
Yeah, I would agree. It's generally negative, and I think there's also a lot of people are looking forward to just the IT companies themselves messaging and clarifying what their strategy is better. And I think that would really help if over the next, let's say, 1 or 2 quarters, their own strategies are more clearer and put out there. But yeah, I mean, I think there is a lot of skepticism.
Divya, at a slightly high level, I mean, if you pull back a little bit, right, with if AI really is going to change the world, I mean, we thought technology will change the world, now AI will change the world. AI technology did change the world. So if, there's generally, we don't know, right? I mean, it's a debate. Will it create more well-paying jobs? Will it sort of, create, what will it do to effective demand, right? Demand at a certain price point in countries like India. Is that a question which comes up at all? I mean, it's a question which everyone is there somewhere, but no one is really sure how to answer it or how to frame it. Divya, if you can take that.
So let's look at the bull case, right? The bull case is that the IT outsourcing exports. It's not just the Indian companies anymore. We have these big global GCCs that also export IT services from India. If that story remains intact, we don't have to worry about consumption. The sector adjusts. There's a short-term blip, and then we move on. And then the India story, the consumption story, everything continues. If you go to the other end, the scenario there is that if it disrupts jobs, and the white-collar jobs in India are largely concentrated around some of these sectors, then what happens to the ripple effect on the overall economy? Then you could have second-order, third-order impact. So I would say these are the two ends of the outcome. We would hope that we end up towards the positive end of the spectrum, where the industry and the export services adjust, and therefore we find some way. Sunil, I think, please feel free to jump in. But we've also seen how India's leapfrogged technological advances and moved. Like, for instance, I never had a landline because we moved around a lot, and then we went straight into mobile phones and mobile payments and everything else. Could we have something like that benefit India? Could AI actually end up being a benefit for India, where we leapfrog certain parts of our evolution?
Yeah.
I think that's an interesting question as well.
No, I think that's Sunil, if you want to come in. I was talking to someone in a top consulting firm who consults in the digital AI kind of adoption thing. His perspective was there's a lot of FOMO right now as well, especially if you're listed. What is your AI strategy? What are you doing? So maybe that, but it's real, but there's also some level of FOMO. But yeah, Sunil, jump in if you want to.
I mean, if I may quickly add, I don't think we have the kind of confidence or visibility that we'll get into a situation where large corporations suddenly come around and say, I'm firing 90% of my staff. No, I don't think that's so that economic disaster where there are no jobs and companies are just focusing on cutting down staff. I mean, that's a very, very far away, low probability event where we stand right now. What is more likely is that companies use the available AI tools and the upcoming AI tools to become slightly more productive. Cost of delivery of products or services to their customers comes down, and hence their addressable markets go up. That's how I'm thinking about it, at the moment, because that's what is visible right now. That's what we are seeing, within the companies that we study or within our own organization. But I don't think we should, start factoring in situations where, 90% of white collar staff in India will get fired and, it'll all be done by AI. No, I don't think that level of confidence we have on the technology right now today.
The way you just briefly spoke about consumption, I wanted to understand about how you approach gold as an asset class, and also in terms of theme. Some of the jewelry stocks, they pulled back because of those duties that were imposed. But otherwise, the gold appeal seems to be quite strong. So your take?
Well, I don't claim to be an expert on gold. I think India has always been a gold-hungry country. But I think the gold is also, as long as there is uncertainty around what the Fed is going to do, I think the gold prices will remain volatile. That's our house view. I think Bhanu Bhaveja, our strategist, when he was here, and I will quote him, he said gold could have, we've seen a lot of volatility and a spike up in the last few months on gold on all these concerns. But we do think there's some upside left, but in the short term, I think the uncertainty around interest rate hikes in the US will keep gold volatile as well.
So, Divya, my question was on the jewelry stocks. Do you believe that they fall well into this consumption basket? Some of them are not very, very cheap. The largest player in there, which is Titan. And the other ones, at some point of time, they're given a bit of a heartache. So, your view on the stocks?
So I think it's, as you correctly said, very stock specific. There are some that are well-managed companies and have navigated gold prices very well. And there are others who are still kind of finding their feet in terms of managing those idiosyncrasies. So I think it's going to be very company specific then.
Sunil, if the war comes to an end tomorrow, do you think the Indian markets rally hard? Will foreign investors, because energy security is one of India's vulnerable points. So if the war comes to an end, what kind of upside do you see immediately in the markets?
There will be an upside, yes, of course. But I would go back and see how much has the market actually fallen since February 26th. When we had no clue that this war is going to happen, right? So I'm not sure if anything beyond a 4-5% kind of a upside, based on this. Then you come back to fundamentals. Then you come back to relative earnings growth. India versus other markets, and within India which sectors and so on. So it is definitely a good sentiment positive, but I don't think. Just like tariffs last year, which was a big headline news, but the markets largely shrugged it off. I think that's been, what we've seen in the markets across global markets when it comes to oil price impact as well. So yeah, that will be a positive, movement, of course, but I don't think it'll be a whole lot.
Divya and Sunil, when are we seeing the first AI agent sectoral researcher? At one of the sell-side firms? Will it be in UBS? At UBS, I'm sure there is one already somewhere. Divya?
Well, I think the way I would think about it, not to alarm any of our population or sell-side brethren, I think it is definitely a good helper. I think it can definitely help us kind of get to the market faster. And I think we do at UBS have a lot of programs that help analysts kind of publish faster, respond to market reactions faster. And we also have AI avatars. So the next time, hopefully, my avatar is speaking to you and not me. But that being said, I think for regulatory and for whatever logical reasons, I think I would like to hope that human brains don't get replaced. And therefore, our analyst community and our sell-side brethren, I think, can rest in peace that there is the human value and the logic that we bring that still continues to be accelerated by AI rather than replaced by AI.
When I heard that rest in peace, no, but point taken. I hope we're all here, a year from now, and you sort of join us for the next leg of the conference next year. Thank you very much. Great start, and wish you all the best of luck at the UBS Asia Investor Conference. Thank you for joining us.
Thank you.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Lal Street gives up early gains to end in the red. The Nifty and the Sensex fall 0.5%. Mid-caps and small caps end in the green. The rupee falls 45 paise after 3 straight sessions of gains, ends at 95.68 against the dollar. Oil prices and tensions in West Asia continue to weigh on the currency. The U.S. termed strikes on Iranian missile launch sites and boats allegedly laying mines as self-defense. Both sides temper expectations of an imminent deal. Even as diplomatic talks continue, Tehran pushes back against claims by President Trump that Washington was exploring options like third country transfers or supervised dilution of Iran's enriched uranium stockpile. India and Quad partners agree to mobilize up to $20 billion to build secure critical mineral supply chains to reduce dependence on China, express concerns over what they call unilateral actions in the East. China and South China Sea also call for enhanced information sharing on the Indo-Pacific maritime region. Tata Sons board is in a huddle at Bombay House. Leaders of 5 group companies, including Air India, Tata Digital, Tata Electronics, Tejas Networks, have asked for a review of their plans. Board to also discuss the issue of listing Tata Sons. Vedanta Chairman Anil Agarwal announces listing of 4 new demerged entities in June, remains bullish on copper, aluminum and oil and gas. Projects a combined EBITDA of $10 billion in the coming years. That's an exclusive. The High Court takes note of the government's undertaking that no forcible eviction will take place at the Delhi Gymkhana Club premises. The centre assures the court that any action taken will follow due process with prior notice. The court was hearing the club's challenge to the centre's order, asking it to vacate premises by the 5th of June. Russia asks foreigners and diplomats to leave Kyiv as it threatens more strikes on the Ukrainian capital. Kremlin says the new strikes will target decision-making centres and command posts. Ukraine calls Moscow's threat nothing short of shameless blackmail. 11 African nations considered to be at risk amidst the Ebola outbreak. Over 220 suspected deaths in Congo. The Indian aviation regulator issues a detailed SOP for flights ferrying passengers from Congo, and Uganda directs airlines to step up onboard surveillance and passenger screening. Eli Lilly reports encouraging early-stage trial results for a one-time treatment that could significantly lower what is known as bad cholesterol. Originally developed by Verve Therapeutics, the treatment targets a gene which helps regulate cholesterol levels in the body. Experts, however, caution that the results are preliminary, calling for larger and longer-term studies to establish safety and efficacy. The Pope warns against unchecked technological power and says AI must be disarmed, calls for stronger regulation of AI companies at the same event. Anthropic co-founder Chris Olah says AI could replace human labor at a massive scale. Well, straight to the day's market action. The Lal Street failed to hold on to the opening gains today and ended the day lower. Both the Sensex and the Nifty snapping that 2-day winning streak, ended with cuts of about 0.5%, 100 points lower on the Nifty. The Sensex down 480 points, 200 points lower on the Nifty Bank. The Midcap index, though, closed in positive territory, up by about 300 points today, so outperforming the broader markets. Rima standing by to wrap up the day's market action. Markets unable to hold on to their gains today, Rima.
Well, the start was okay. The end was a bit disappointing on the Nifty monthly expiry. We failed to hold on to the 24,000 mark. We even dipped below the 24,900 mark. And by the end of it, the Nifty and the Sensex, as you correctly said, ended with a cut of nearly about 0.5%. We're wrapping up the May series absolutely flat on the Nifty. The good part is the mid-cap outperformance today. The Nifty Mid-Cap 100 index hit an all-time high. It's gaining for the 3rd day in a row. The advanced decline ratio, though, ended even Steven. The auto stocks did pretty well. This was on the back of the May Vahan registration data. So you had Tata Motors, passenger vehicles, Bajaj Auto all doing well. And May 2026 for the automakers could be the best since May 2028. Most of the segments seeing a double-digit growth. But many other Nifty companies did well. So you had Adani Enterprises, that's been gaining now for the 3rd consecutive day, fresh 52-week high on that. ONGC ahead of numbers, Nestle, Eternal, these stocks did well. Under pressure were the banking names. So banks, the Nifty Bank had a phenomenal monster 1,200-point rally yesterday. So today there was a little bit of a give back, profit booking visible in an Axis Bank, HDFC Bank, ICICI Bank. The tech names also weakened. The rupee has been stable now for the 2nd, 3rd day in a row. So TCS under pressure. Wipro sees some little bit of a profit booking. But other drags include Apollo Hospitals. In fact, Max Healthcare, its peer, was also under pressure. Titan, Trent, NBFCs weakened, so Bajaj Finance, Shriram Finance and Bharti Airtel lost more than 1%.
All right, Rima, many thanks. That is the market action. In the currency market, the rupee down 45 paise after 3 straight sessions of gains. It ended the day at 95.68 against the dollar. Rising oil prices, escalating tensions in West Asia continue to weigh on the currency. So that is where it closed for the day, 95.68. Prices of compressed natural gas, that's CNG, have been hiked by 2 rupees a litre. 2 rupees a kg, across Delhi NCR and parts of North India and Mumbai. This marks the 4th increase in less than 2 weeks. With the new hike, CNG will now cost 83 rupees per kg in Delhi and 84 rupees in Mumbai. Consumers in Noida, Ghaziabad and Greater Noida will pay over 91 rupees per kg for CNG, and Gurugram will see a revised price of 88 rupees, so CNG prices being hiked again today. The government has eased rules for consumers who need to surrender their domestic cooking gas connections after getting piped natural gas connections. Consumers with both LPG and PNG connections can now surrender their LPG connection within 30 days of obtaining PNG supply. Under the earlier rules, consumers had to immediately surrender their LPG cylinders. Consumers can also retain the option of restoring their connection if they move to areas without PNG infrastructure. The top story this evening, tensions in West Asia intensifying as the US targeted Iranian sites near the Strait of Hormuz in what it called self-defense strikes. Meanwhile, Trump's promised peace deal remains elusive. Here are the latest developments. The US Central Command has said it launched strikes to protect its troops from threats posed by Iranian forces. The US military said its attacks targeted missile launch strikes and Iranian boats attempting to put in place mines. Iranian Revolutionary Guards have also claimed that a US drone has been intercepted as it attempted to enter the Iranian airspace. Just hours after the strikes, President Trump had laid out plans for destroying Iran's enriched uranium. In a post on social media, Trump said, and I quote, that it will either be transported to the US, dealt with in Iran, or taken to another location with Tehran's coordination. Trump told reporters in the Oval Office last week that the US would not bend on recovering Iran's enriched uranium. Iran's Revolutionary Guard has said it will retaliate against violations of the ongoing ceasefire. The country's supreme leader said America will no longer have a safe haven in the Middle East in a message to mark the Hajj. Tehran also maintains that sovereignty over the Strait of Hormuz is essential to a peace deal. Brent crude climbed closer to the $100 mark after the escalation in tensions. In Lebanon, the Israeli military said it began a wave of strikes across the country. This after Israeli Prime Minister Netanyahu vowed to intensify attacks on Hezbollah, which is backed by Iran. Hezbollah said it retaliated with 22 drones and rocket attacks on Israel's military infrastructure. Meanwhile, U.S. Secretary of State Marco Rubio says a potential U.S.-Iran deal could take a few days to finalize. An Iranian delegation has traveled to Qatar for talks aimed at finalizing a peace deal with Washington.
Something like this, it's going to take a couple days to settle on, even down to the disagreements over a word, sentence. So we'll have to work through that.
The straits have to be open. They're going to be open one way or the other. So they need to be open. What's happening there is unlawful, it's illegal, it's unsustainable for the world.
One of the fundamental pillars of these victories by our great nation is our geopolitics, the Strait of Hormuz. We will never take this into negotiations the way we did with the nuclear issue. What is currently envisaged is that if the American blockade is lifted, then transit through the strait will take place under arrangements determined by Iran and only for non-military and non-hostile traffic. In principle, we never needed anyone to recognize it. These are our territorial waters. These are our legitimate rights.
Now, foreign ministers from India, the US, Japan and Australia, collectively called the Quad, came together in New Delhi for discussions focused on the Indo-Pacific cooperation and regional security. India's External Affairs Minister S. Jaishankar hosted the meeting. India and its Quad partners established a $20 billion framework to secure critical mineral supply chains across the Indo-Pacific in a bid to reduce dependence on China. The 4 countries also called for enhanced information sharing and deeper maritime coordination. They also reaffirmed their commitment to a free, open and rules-based regional order amidst rising geopolitical tensions.
Understandably, much of the discussions and indeed the bilateral exchanges were devoted to the current state of the world. We spent some time on the question of safe and unimpeded maritime commerce, and reaffirmed the significance of scrupulously observing international law. Our 4 nations are also market economies. We believe strongly that economic resilience should be promoted, that supply chains should be strengthened, trusted and secure technologies diffused, and production capacities enhanced. Our deliberations touched on the current energy and fertilizer availability, as well as that of critical minerals and resources.
First is the launch of the Indo-Pacific Maritime Surveillance Corporation initiative, which is going to leverage each of our country's maritime surveillance capabilities in the Indo-Pacific to enhance information sharing. Related to that, of course, is also the expansion of the Indo-Pacific Maritime Domain Awareness Initiative, which provides and can provide near real-time commercial maritime domain awareness data to countries throughout the Indo-Pacific.
Concluding, our colleague Abhimanyu joins us now. Take us through the outcome at the end of this Quad meeting, Abhimanyu.
Member countries of the Quad on issues like maritime security, on economic assistance, on humanitarian assistance, and for cooperation on critical minerals and emerging technologies. Now, several outcomes have been listed in the joint statement, which mention support for a free and open Indo-Pacific as far as maritime trade is concerned, as far as safety of seafarers and vessels are concerned in the high seas. Also, all the countries agreed upon a larger framework for energy, and the Quad Critical Minerals Framework was announced to leverage economic policy tools and coordinate. India and the US also signed a strategic critical minerals cooperation framework, apart from the fact that all the countries had expressed concerns over several issues like economic coercion as well as unavailability of several critical technologies. Issues like export controls on critical minerals were also taken up as part of the address which was given by several foreign ministers. Also, the countries stated that they remain seriously concerned about the situation in the East China Sea and the South China Sea. They also said that the importance of international law needs to be emphasized as per the UN law of the sea, and it needs to be upheld at all costs in all parts of the world. They also indicated that there are plans to partner with countries like Fiji to advance port infrastructure in the Pacific region to ensure that maritime capability is leveraged to the fullest. Also, the US Department of Energy is also going to host Quad partners in 2026 for a fuel security forum. So several issues ranging from fuel security, maritime security, economic assistance, as well as humanitarian issues were taken up, apart from the fact that the joint statement clearly mentioned and condemned all forms of terrorism, and also took serious concern to the fact that emerging technologies should not fall into the hands of terrorist forces. Terrorist activities should be curtailed at all costs, and Quad partners should collaborate more in this direction.
All right, Abhimanyu, many thanks for joining us. Now, Commerce Minister Piyush Goyal has said that India and Canada are looking to conclude negotiations for a free trade agreement by the end of the year. He is currently in Canada on a 3-day official visit. Speaking at a joint press conference alongside Canadian Commerce Minister, Goyal said this deal has the potential to triple trade between the two nations from $17 billion to $50 billion by 2030. In a social media post, Canadian Prime Minister Mark Carney has said that free trade deal will unlock massive new market. He also called the deal a game changer. Remember, 2 rounds of trade talks have concluded and the third one is currently ongoing in Ottawa. The board of Tata Sons meeting in Mumbai today. Sources say the meeting will address pressing governance and operational matters, including the resolution of concerns raised by Noel Tata during the board's previous gathering. Madhiya is standing by now, and our colleague Rachna Dhanrajani also from the Bombay House, the Tata Sons headquarters. Rachna, to you first, what are you picking up in terms of the 5 businesses that are presenting their growth plans as well as their investment plans to the board today?
That's right. We've been here since almost 9 a.m. We saw the board meet started around 10:30. That's when the board members came in. It's been about 6 hours that the meeting has been underway, and inside the room we understand are some of the most powerful figures from the Tata Group. The financial stakes are also enormous on the agenda because the companies that are being discussed, the combined losses of all these companies is extremely high. So that's on the agenda. Now what we understand is that chairing this meeting is Mr. N. Chandra, the executive chairman of Tata Sons. He's presenting a turnaround plan of all these companies that they're discussing. Now, questioning the capital deployment is Noel Nawal Tata, vice chairman of the board, he is also representing Tata Trust that owns about 66% in Tata Sons and majorly relies on the dividend for the philanthropic activities. Apart from these two, there's also Saurabh Agarwal, the group CFO, the members of the board, that is Venu Srinivasan, Harish Manwani and Anita George. Though sometime back, just like 10-15 minutes ago, we saw Mr. Venu Srinivasan exit the Bombay house, and just before him was the Agratas CEO. Agratas is one of the companies that is being spoken about on the agenda. But Madiha, Air India is one of the companies that they're talking about. What do you think? What are you picking?
So apart from the 6 board members, as Rachna said, there are CEOs of 5 companies, Air India, Tata Digital, Tata Electronics, the EV company, Agratas, and Tejas Networks. So the CEOs of these 5 companies are presenting their business plans to the board members. Let me talk about Air India first, because outgoing CEO Campbell Wilson is also inside. He's speaking to the board members about the challenges that Air India is facing and what the turnaround plan should look like or should be. We know that Air India has posted losses worth $2.5 billion, becoming the biggest loss maker for the Tata Group. Challenges have been rising due to the high operating cost due to the West Asia tensions, high jet fuel prices, and in parallel, the Tata Group has to implement the transformation plan and upgrade its fleet. So how to navigate these challenges, that plan we understand is being discussed, and Campbell Wilson is presenting this plan to the board members. We also understand that Tata Electronics is talking about their investment. They're investing over 1 lakh crore in building semiconductor projects in Assam and Gujarat. So what we understand is the board is also asking tough questions to these CEOs. How much more capital is required into these companies? When will they turn profitable? And when will they start giving returns to the group? These are some tough questions that are being discussed. And another important matter is the listing of Tata Sons. Shireen, you have also been reporting that this matter is also being discussed, though the board is divided, but they are going to discuss, is what we understand. Rachna.
There's also Tata Digital that has been one big spot for Tata Sons to focus on. It has a very sprawling portfolio. It includes Big Basket, which was their quick commerce bet and one of the first runners in the industry. But somehow over time, it has not been able to catch up with the competition scene increasing. There's also 1MG, again, one of the front runners when it came to online pharmacy, but hasn't picked up in a while. There's Chroma for electronics, Tata Click for fashion, all under discussion for a turnaround. There are hardly any options left for it because there was earlier a discussion of a $1 billion fundraise for Tata Digital. We've seen 3 CEOs leave in about 3 years. So turnaround is the theme that we might be able to see with Tata Digital. The new thing that they're betting on is Tata New, which was supposed to be the super app. But we understand that the dreams of a super app have not really been successful so far. So what's going to be the next step is something that is being decided. Apart from that, there's also Tejas Networks, which is another business that's getting scrutinized because Tejas Network, the optical networking and the 5G equipment company, once profitable, is now facing pressure. That's on the agenda. Apart from that, there's also Agratas. We saw Agratas CEO Tom Flack leave some time back. But again, global EV demand has been struggling globally. So EV battery business is naturally supposed to come up on the board. That's what we saw rolling out for today. Now, as we see that the board's been about for 6 hours, we're seeing one by one CEOs leave, which means that the presentations are now coming to an end. And because there's no voting, this is going to be it from today.
So today is going to be a day where the board members are going to listen to the CEOs and no major decisions are expected. So they're just going to listen to the CEOs about their business plans and how to turn around their businesses. No major decision is expected today, but whatever is being discussed could be reshaping the future strategies of these 5 Tata Group companies. This is what we understand so far.
All right, Madiha, Rachna, many thanks for joining us there. And staying on top of things outside of the Bombay House. The Tata Sons board meeting has been underway through the day today. As they pointed out, no decisions expected. On to a CNBC TV 18 exclusive. Vedanta chairman Anil Agarwal has announced the listing of 4 new demerged entities in June. Speaking with my colleague Ashmit Kumar, Agarwal says he remains bullish on copper, aluminum and oil and gas. He also projected a combined EBITDA of $10 billion in the coming years. Take a look.
All the share will be in the process of issuing. By next month, all these 4 companies will trade by themselves. It will have a very strong management, and this will be company which is what we require in natural resources in India. $20 billion we spend. Fund will never come on the way. Government is with us, and this all will be India. And by this, I'm looking forward at least 5,000 downstream industry to come in with our product.
Anil Agarwal, our newsmaker tonight. Up next, Eli Lilly reports encouraging early-stage trial results for a one-time treatment that could significantly lower what is known as bad cholesterol. That and more when we return. You're watching Business 360. A quick check of the global headlines. Russia has warned that it will launch series of systematic strikes on defense industrial facilities in Kyiv. Moscow has urged foreign citizens to leave the Ukrainian capital. The Ministry of Defense said the strikes are in response to a Ukrainian drone attack that killed 18 people. This comes a day after Russia launched its heaviest attack on Kyiv, in which a hypersonic missile was used. Pope Leo has issued a warning against the risks of artificial intelligence in a 43,000-word document. The Pope argued that the rapid rise of AI has concentrated enormous powers in the hands of private tech giants. He warned that such powers have the risk of creating massive manipulation and inequalities. Eli Lilly has reported encouraging early-stage trial results for a one-time treatment that could significantly lower what is commonly called bad cholesterol. Originally developed by Verve Therapeutics, the treatment targets a gene which helps regulate cholesterol levels in the body. Ekta joins us now with more. Ekta, a very interesting and possibly very significant breakthrough. What do we know about this?
In an important development, US pharma giant Eli Lilly's backed gene editing therapy Verve 102 has shown early signs that a one-time treatment could dramatically lower bad cholesterol for months and potentially longer. In an early stage trial involving 35 high-risk patients, LDL or bad cholesterol fell by up to 62% after a single infusion of the drug, with the effect lasting up to 18 months so far. The treatment, originally developed by Verve Therapeutics and now owned by Eli Lilly, works by targeting a gene called PCSK9. This gene helps regulate cholesterol levels in the body. When it is highly active, it prevents the liver from efficiently clearing bad cholesterol from the blood. Scientists became interested in this gene after discovering that some people naturally inherit less active versions of it. These individuals tend to have very low LDL cholesterol throughout their life and a significantly lower risk of heart disease. Researchers have been trying to replicate that natural protection using gene editing technology. Verve 102 is designed to make a permanent edit to this particular gene inside liver cells after a single IV infusion. The aim is to provide long-lasting cholesterol reduction without the need for lifelong daily pills or treatment. The therapy has received fast-track designation from the US FDA, a status which is meant to accelerate development and review of promising treatments for serious diseases. While the news is positive, experts caution that the results are still very early. Only a small number of patients have been treated so far, and follow-ups have been limited to 18 months. Larger studies across broader populations will be needed before the treatment could become widely available. Still, if future trials are successful, therapies like Verve 102 could potentially change the way high cholesterol and heart disease are treated.
A significant development, and as you pointed out, it is going to be important to see how this progresses through the various trial stages. Luxury sports car maker Ferrari has unveiled its first fully electric car called the Luce. The Italian brand's first ever five-seater will be priced at $640,000. It was created in collaboration with Love From Agency, founded by former Apple design chief Sir John Ive. And before we wrap, we leave you with visuals of Tata Sons chairman N. Chandrasekaran leaving Bombay House. The Tata Sons board meeting has just concluded. That is the chairman N. Chandra leaving the headquarters of the Tata Group. No decisions have been taken at that meeting today. It was essentially a meeting that has reviewed 5 of the key businesses where Noel Tata had raised concerns over capital deployment, capital allocation, as well as performance of some of those issues being taken up by the Tata Sons board today. Well, that's it then on this edition of Business 360. The news will continue on CNBC TV 18. Stay tuned. We're back in a minute with more.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and joining me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. B2B quick commerce platform FairDeal.Market gets $15 million in a Series A round led by Bertelsmann India Investments. Proceeds will be used to scale dark store operations, strengthen its tech infra, and expand last-mile delivery capabilities.
Slice turns profitable in its first full fiscal year as a bank. The profits come in at 40 crore rupees in FY26 versus a loss for the same period last year. Revenues at over 1,400 crore rupees was a 132% jump on a year-on-year basis.
FlexPrice raises $1.5 million in a seed round, co-led by Shastra VC and Shaadi.com founder Anupam Mittal. The fresh funds will be used for global expansion across the US and Europe and building new products.
At-home salon and wellness startup Yes Madam raises 50 crore rupees at a funding round that was led by InfoEdge Growth Fund. The fresh capital is going to be used to accelerate expansion across cities, strengthen operations, and improve customer experience. Founded in 2016, Yes Madam operates across more than 55 cities and offers salon spa services at home through trained professionals.
The Pope warns against unchecked technological power and says AI must be disarmed, calls for stronger regulation of AI companies. At the same event, Anthropic co-founder Chris Olah says AI could replace human labor at a massive scale.
Okay, those are the headlines that we're tracking for you today on Startup Street. Now, Cash-Free Payments, which is an AI-native payment company, today reported that it has achieved EBITDA profitability in March 26, and it is on track for full-year EBITDA profitability for FY27. It also clocked in about 1,000 crore rupees in revenue for FY26, while its GTV grew by about 78% on a year-on-year basis. It also plans to raise a significant funding round to deepen payment innovations and scale its cross-border business, as well as expand into international markets. So let's bring in Riju Datta, the co-founder of the company, for more on their plans. Riju, welcome here to Startup Street. Thanks for your time here. Nearly 1,000 crores in revenue, monthly EBITDA profitability in March. What were the biggest operating levers behind the turnaround? And the key question, do you sustain this profitability from here on? When do you turn fully profitable, not just on an EBITDA level?
Yeah, I think thanks for having me. I think we turned EBITDA profitable at a monthly level during the last quarter of the last month of the last financial year, which would imply that we are on track for a profitable quarter. This quarter, and over the year, I think we'll probably see an entire year that will be profitable. Large drivers, I think both SMBs, growth of SMBs. I think a lot of startups prefer to use us. Almost 20% of all the new companies that get registered in India, they sign up on cash-free. So our merchant base actually ended up growing by around 50% over the last year. And in addition to that, we also saw a lot of growth in enterprises. So, if you look at the top 10 or 20 internet companies in India, or companies in India that use a payment gateway, I think we are there in most of the big names. So these are, I think, two of the major factors. And apart from that, we saw a lot of growth in the cross-border business, which grew by almost 7x over the year. Largely driven by tailwinds in AI growth, right? So if you, let's say, use a UPI, for instance, to pay at an entity like OpenAI, right? Or a lot of the major AI-related companies, even let's say X for that matter, and a lot of the famous ones. So you will be probably using cash-free. And these businesses itself, they grew at a very fast pace. So those, I think, are the three operating levers that helped us, get to 1,000 crores. But yeah, I think it's been I would say, continuous process. If you look at the long term, and maybe the fruits are maybe just coming now.
What about profit after tax, PAT profitability for the full year? What is the guidance?
Yeah, I think we'll look forward to achieve that. During this financial year, I think the focus will still be on growth. So maybe PAT is not that much of a priority right now. I think we might expect something over this year. But again, the priority remains, gaining more market share, deepening our penetration in the domestic market. taking ourselves to Middle East. We acquired a company called Teller there. We hold the payment aggregator license there as well. So yeah, I think so deepen our play penetration in the Indian market, take us to the Middle East, and deepen the AI integration, that I think, we keep talking about. So I think those are the priorities. So I think, Pat, we'll see how that plans out, I think, during this year, but growth is a priority.
But speaking of priorities, we also hear you're looking at a significant fundraise sometime during the fiscal year. What is the size you're looking at? How soon would you be raising it? And who are the investors you're in talks with?
Yeah, so we're looking at something north of 100 million that we are raising right now. I think the idea is to maybe grow the company to 3,000, 4,000 crores of revenue from the current 1,000 crores, in the next 2 or 3 years, and then go for an IPO, right? That's the rough plan, I think. And proceeds, I think, bunch of cross-border AI and deepening penetration in the domestic market, right? That's the purpose. Yeah, so I think that's the idea.
But you're also looking at international market expansion. What exactly is the plan there? Because you also have this cross-border, license as well for payment aggregator.
Correct. Yeah. So I think it's 3 parts of it. Like there is payment aggregation for money going out, which is foreign companies accepting UPI payments, largely AI companies as of today. But we are looking to expand the market scope beyond AI to travel, hospitality, and wealth management. Gift City is something that is coming up. So that is largely money going out. And then there is Indian companies, which are typically exporters, or Indian internet companies looking to accept foreign cards or foreign payment methods and sell globally. So access to global markets for Indian companies and access to UPI and domestic markets for foreign companies, right? That is the theme of cross-border. And above that, you have the local acquiring piece, which is our play in the Middle East through our acquisition in Teller, which is a regulated entity in the Middle East, in the UAE. So those are the rough contours of the cross-border play, which would be a significant contributor. We expect, I think currently it's 10 to 15% of our revenues. We would be looking to grow that to 25%, over the course of the next 1 or 2 financial years. Yeah, so that's a critical component of the growth.
Okay, we'll hold you to that and hope to have you back soon with those updates. Thanks very much, Riju, for your time here today.
Moving on, Track, an investment platform built for Gen Z investors, has raised $3.7 million in a seed funding round led by Lightspeed, with participation from InfoEdge Ventures and angel investors including Gaurav Munjal, Roman Saini, Tanmay Bhatt, Varun Maya and Gaurav Kapoor. Now, the company will use the fresh capital to strengthen its broking infrastructure, expand product capabilities, accelerate user acquisition and customer onboarding, growing its team across key functions and building additional financial products aimed at younger Indian investors. Let's bring in Vedant Gupte, co-founder and CEO of Track, to discuss this further. Vedant, thank you so much for joining us on the show today. Your platform is positioning itself as this investing platform built specifically for Gen Z users, right? So what did you sort of feel was wrong with the traditional broking and wealth platforms when it came to targeting these younger investors? And how are you sort of redesigning that experience differently for them?
Firstly, thank you for having me on the show. It was a problem statement that we felt while we were starting out our trading and investing journeys 4 years back. We felt that almost all of the players out there today are trying to solve for people who have been there in the markets, not somebody who wants to enter the markets right now. So essentially, people are trying to solve for execution. But the problem right now lies in discovery, which is essentially the first layer when the user wants to start their trading or investing journey.
Right.
And that's when we thought of solving for discovery first and then kept on building the layers.
Absolutely. Your platform leans heavily on AI-led stock discovery and personalized investing journeys, right? How exactly does the product work for a first-time investor? And how do you sort of balance, simplification with responsible investing in a market where speculation is rising rapidly? And obviously, you don't want new investors to take a route that doesn't serve them, right? So if you could sort of take us through what you have on offer.
So for the investors, what we essentially do is we start by risk profiling the user on basis of asking them simple questions. And by the end of it, we risk profile the user and understand their user type. And on basis of that, we help them out with discovery. But in terms of how we are trying to help, let's say, a person who wants to start with option trading, in the user journey, which is designed where they have to answer these set of questions, we make sure they are put in their targets and stop losses. So very early on to their journey, they understand why it is important to set up a stop loss and why it is important to set up a target, which helps in better user behavior on the platform.
Absolutely. And you've sort of also said that the ambition is to build this larger multi-asset financial platform for young India. So beyond equities, what are the next big product categories that you plan to launch?
I think we have been very laser focused since the very start. We feel investing or stocks for these users would be the entry point. And we want to keep on building multiple assets for the same user base as and when they keep growing in their life cycle. So probably the next thing that we would be looking at is mutual funds. And thereon we'll be focusing on different asset classes.
All right. So the next thing that we'll see is mutual funds as an option. You've raised this round to sort of fund your operations and to scale them, right? Can you take us through how you plan to spend these funds and what's on top of the agenda?
I think firstly, it's more of team building, getting in the right folks on the team. Then it comes down to how we're a very product first company. So how deeper we could get with our product. And then comes the growth part, right? How we could scale and penetrate more.
Absolutely. And can you sort of walk us through your current scale in terms of accounts, assets, or even transaction volumes? And what does the path to monetization and sustainable revenues look like from here?
So we recently launched our full-fledged broking platform. It's been a weekly rollout for a certain number of users that we have done. And we have seen great bottom funnel metrics that have followed, which is 18 to 20x better than the industry standards. At the moment, almost all of the users that are coming on the platform are almost all organic directly from colleges. They are discovering us through Instagram, social media, and word of mouth. In terms of monetization, we have been very clear that we only want to charge the user while they are placing the order on the platform. Rest, all of the insights that we provide or the discovery that we help with is completely kept free. And the idea is that as and when we keep scaling, the revenue that we would be generating is directly from the orders that go through the platform.
All right. Any targets that you set for yourself for this year that you want to sort of reach?
I think by next year, March, we would ideally want to be at 500,000 Demat accounts, 500,000 to 1 million Demat accounts.
All right, 500,000 to 1 million Demat accounts. There are also reports suggesting that you're eyeing another fundraise, right? Take us through your fundraising plans. Are you looking to raise more funds in the near future?
We aren't explicitly looking to raise funds. We have gotten some inbound interest and it's too early to comment on that. So I think when the time is right, we would come out with it.
All right, Vedant. Thank you so much for taking time out and joining us on the show today. And we wish you all the best on this journey going forward.
Thank you so much. Thank you.
Okay, let's take a short break on that note. But up next, Sirona Hygiene's founder buys back the company after Good Clam Group deal. A special conversation on rebuilding that brand on the other side.
Welcome back. You're still with us on Startup Street. Home services startup Pronto is under scrutiny after reports suggested that the company has been using household data collected inside customers' house to train its AI models. Now, the move has raised concerns about humans training the AI that could likely replace them. Rachna Dhanrajani joins us now with more details. Rachna, tell us what these reports are suggesting.
Well, across India, workers are being put in front of cameras to generate training data for artificial intelligence systems designed to automate their own jobs. In textile factories, workers wear head-mounted cameras during shifts. The footage captures hand movements, stitching techniques, quality control decisions, and this data trains robots that will eventually do their jobs. Workers don't own the footage, they're not compensated for it, and many don't even understand that they're training their own replacement. Pronto's camera pilot exposed this. The home services startup had workers carry cameras during service delivery. Pronto says it's opt-in, less than 0.01% of customers enroll, but Snabbit, Pronto's main competitor, is doing something different. Snabbit firstly publicly rejected Pronto's camera model. The founder said his company was approached, they studied the technology and rejected it. And Snabbit positioned itself as privacy first, but Snabbit has tied up with Human Archives, a physical AI data company, and the partnership collects detailed worker movement data without visible cameras. Workers on Snabbit don't know they're feeding Human Archives. They don't know their movements trained robots. Snabbit rejected the visible camera while implementing an invisible one. This pattern extends across sectors. Textile factories in Tirupur and Surat, warehouses in Bengaluru and Delhi, electronics manufacturing in Pune and Chennai. Workers everywhere are generating training data for systems replacing them. A garment worker in Surat said she was asked to wear a camera for quality assurance. 6 months later, robots were installed doing her job. She was laid off. I trained that machine, took my job, she said. Pronto's camera pilot seemed like a privacy story. It's actually an employment story. Companies are using workers to train their own replacement, and some are doing it invisibly. So we will have to see how these physical AI data centers come about. We will be keeping an eye out for more.
Yes, we will be, Rachna. Concerning developments there. Thanks very much for bringing us that update. But moving on, at a time when D2C founders are rethinking scale, exits, and profitability, one founder has done something that's almost unheard of. He sold his company for 450 crore rupees and then bought it back. Now, on the sidelines of the TIA Delhi NCR India Innovation Day, Aishwarya Anand spoke to Deep Bajaj, the refounder of Sirona Hygiene, about rebuilding the brand after the Good Glam deal. Take a look.
You sold Sirona to Good Glam for 450 crore, right? Which is one of the biggest D2C exits in Femtech. Now, then you bought it back for 150 crore rupees. Now, today you call yourself a refounder. Not just a founder, not CEO, but a refounder. That's a very deliberate word. So when you walked back in March 2025, what did you actually find? A brand or a wreckage?
Wow, that's a loaded question. I think I found my people who were still at the helm of affairs. I found a brand which needed a little bit of attention again. So I found my team and I found a brand that needed a little bit of attention. I won't say a wreckage, but yes, I would say that it did need some work to bring it back to where it was during our peak era.
You sold the company for a reason. Where did you think you made a mistake?
At the time when the deal came in, I thought customers were also going to benefit a lot from the deal because Good Glam had a lot of distribution and traffic in terms of customers, our customers, Popexo, Scoop Whoop, Miss Malini. These are washed by Sirona consumers.
Correct.
So they had the traffic and they had offline distribution. So I thought my consumers will win. So it was a check, like a tick on that box. I also thought for the team members, initially when we had built on very little funding. And Good Glam was a unicorn. I thought it was a great home for even team members because they would go to a very well-funded house. Then for our investors, the early investors were getting a very good exit. So I thought that fiduciary responsibility would also be taken care of. And as founders, I would like to believe that I'm a good 0 to 1 to 10 operator. And that journey was also coming to an end. And in the bargain, we would have also made some money. So I thought it was a good deal. But to answer your question on where do I think things went wrong, I think Darpan has also spoken about this publicly, that I think they were trying to do a lot of things too fast, too soon.
We have seen Thrasio model fail and how?
Everywhere, correct.
Right? The US-based Thrasio that absolutely crashed.
Yeah.
India where are the names now today?
Yeah,
There
correct.
was a time when we would hear back-to-back
Correct.
funding stories,
Correct.
acquisition stories, but where does it exist? So what's the fundamental problem that exists in a model like this?
I think it was just that in the assumption that operationally we'll be able to bring the back end for all the brands would come together. I think that didn't happen at scale. And I also feel that the founder energy in some of these brands was required to continue with innovations, to continue with some of the basics that brought the brand where they were. And I also think brands were yet to get matured for them to run on autopilot.
Now, revenue was at 130 to 140 crore when you sold. It fell to 77 crores in FY25, which is nearly a 23% drop in 1 year. Now you're claiming a run rate of 325 to 350 crore, and you're targeting 500 crores in the next 2 years. So help me understand that it's nearly a 5x jump from the bottom. So is that real revenue or GMV?
Today, about 5 million women are on Sirona menstrual cups, while in 2017, we used to sell only 1,000 a year. We've just entered into menopause, so we say that we are a puberty to menopause journey for women. We've just entered into perimenopausal stage with some of the products. That's a huge market waiting for solutions. We've almost tripled in terms of from what the revenue was then to now. And that's why optimism towards 500 at least, that'll be the goalpost.
Okay. So, since it's like Sirona 2.0 for you right now, right? What is the kind of revamp we have seen in terms of your SKUs, the product line, the categories? Give us a sense of that.
So product-wise, if we introduced period panties way back in 2022, today there are teens, so period panties for teens.
Correct.
If period panties are all white, we introduce colors to ensure that why are they only white. So at every product level, we've gone it. So product upgradation. Back then, content used to be, we had doctor-led content, we are adding more elements to it. We're going more research now that we're talking about menopause and perimenopause. In terms of team-wise, we are bringing in younger lot again who understands AI better than we do. So trying to up that game. And in tech-wise, again, we had launched India's first period tracker back then. We are reintroducing it. We had launched vending machines at key locations. We are expanding that network.
The panel that you're just talking about is called From Instagram to IPO, right?
Yes.
Now you've taken the acquisition route, you know how that ends. What's the honest answer here? What's the honest answer here? Is Sirona building towards an IPO, or is this a brand that eventually finds a better strategic alignment going forward? Also, what's your path to profitability going to look like?
We believe within the next 1 year, we'd hit at least break even that we are targeting. But we're investing right now in awareness, so we might lose a little bit. Are we looking to exit this time through a strategic? Are we looking to IPO? I think right now we're just focusing on hitting our numbers in the next couple of years.
Correct.
And then we will see how well do we do it.
Correct.
To define what is going to be the next chapter.
For that, help me understand, do you have enough money in the bank right now? Will you be looking at a fundraise?
Well, I think, do we need money to survive? I think no, that we've taken care of. Do we need money to do a few blue sky gazing projects that I think will change the way femtech is perceived in the country?
With that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.
Do you need more workforce at work, or the work from home conversation is back? It's back after the pandemic because the Prime Minister has put out a nationwide appeal asking companies to consider work from home. It is not mandatory just yet, but we've seen many state governments now issuing their own advisories as well. If this were to translate into, at least for a period of a year, because that's the broad number that he's speaking of mandating work from home, or at least nudging, encouraging people to work from home, what could that potentially in the short term mean?
Yeah, so again, we have to differentiate what happened 6 years ago with the pandemic to what the appeal was made. This was in response to what's happened in the geopolitical arena with
fuel prices
and shortage and the impact of all of that. And as I said, it will come to a head soon. We all went through a period of time where there was work from home. That was needed because of the pandemic. You needed to create social distancing, but almost all corporations today realize the benefits of working in an office setting. New models are being created. Businesses have been incubated. People have to work together. The way people worked in the past might have changed a little bit. In fact, I would say most organizations today need more square footage per person than they needed pre-pandemic. You have more dependence on social interactions in office today than they did pre-pandemic. So by and large, work from home, even if it was to be mandated in certain cases or encouraged, is a response to a very different aspect, which is about fuel, and that's specific to India again, because of the way our energy markets are today, and that will resolve itself.
So you're not seeing any nervousness at this point in time on account of that?
Absolutely not.
And as far as the hospitality business is concerned, assuming that your conviction pays off?
We are now in the Leela business itself, more than 20 hotels, more than 10 in the pipeline. So we're going to probably be more than 30 hotels, and across the board, I would say we will do a lot more should the opportunities be available to us.
M&A there as well?
We are a large investor and developer, so M&A is always a way for us to grow, by step functions.
Let's talk about the REIT market as well, and of course that's been something that you've been championing. And 2025 was actually quite an inflection point as far as the REIT market in itself was concerned. What's the story, and how is that playing out, not just for you but as an industry as well?
Look. Our REIT is now more than 35 million square feet, a large enterprise. The regulations in REITs are very, very good in India. And we've always said it that they've taken the best from the world and implemented them in India. The fundamentals are very good. SEBI introduced the classification of REITs into equity, which was always the right thing to do. That led to an expansion of investor universe. We've raised more than $1 billion in our REIT in the last 12 months or so. And I think that program will continue. We'll probably raise capital because capital is the raw material for REITs.
How much are you looking to raise, and when?
We just raised about $300 million this month, early part of this month, or late last month. And as I said, the opportunity for the REITs for our REIT is immense. So the raw material is capital, and we look to either raise capital or issue units to expand. But the program will continue for decades. US established REITs in the 70s and 80s, and it continued for 4 decades, and we are in the first decade of the REIT market. I just characterize the market size. The size of global commercial real estate space, the rent producing real estate space, is $60 trillion. In the US is $30 trillion, which is 1:1 their GDP. In India, our GDP is $4 trillion, and our commercial real estate space is probably $400 billion. So we are a tenth of our fair share of GDP. Our GDP will double and double again over the next 10 years, which means we have to first make up 10x and then double and double again. And that's the market potential that we see. We've only seen office REITs and retail come through. We're going to see hotels, either IPOs or through REIT channels. You're going to see more office REITs. You're going to see apartments, industrial. You're going to see warehousing, business parks, so on. And it's a big market. We can open up the market to talk about mortgage REITs as well, to create more financing sources for the real economy. So it's early days, very, very bullish on the REIT business. We've seen early days the government is thinking about creating sovereign programs for asset monetization or creation of holding companies which can become REITs in future. So I think the market just started off.
Specifically, since you brought up the government and the government's asset monetization plan, and I think, again, the pushback there has been that there's been a lot of talk but little action. We've seen some action, at least as far as the InvIT side is concerned, but, it could have been a lot faster, it could have been a lot more. What's the ask there, and what's the hope there, more importantly?
The ask is that we are here to help.
Have they asked for help?
In terms of policy matters, in terms of how to do the right things, I think the engagement with industry is very good. I can say about Brookfield and most of the government agencies are supporting the growth of our business, and as a result, supporting the growth of the country. And in that ecosystem, when they have their own programs to launch, it just widens the scope. How we can be helpful, that they have to decide. But I don't look at the past, whether the monetization could have been faster or quicker. That's they're running a country. They have a lot more considerations to take. We are running a small corporation. So whenever they are ready, we are here to support.
With just a couple of hundreds of billions in asset under management, just a small corporation. But, we're also talking at a time where we've got Trump and President Xi in China, along with a whole host of top US CEOs. And since we're talking about comparisons and where India is and the potential for growth, let's talk about this India-China comparison, because very often we see long sort of, comparisons being made, and some of them perhaps don't even hold true in the form of the comparisons being made. But how do you look at the India-China story and how you expect them to play out?
I look at it like the interstellar model, where you have to almost change the time scale and then look at it. Why compare a more maturing demography with a younger country today? Let's look at what happened maybe 20 years ago in China. And that is more exciting. That can we be part of that journey for 20 years in India? Or if you take it back 20 years in the US. So, economies go through their maturity cycle. So what we sometimes do mistakenly is compare today's India with today's China, or today's India with today's US. I don't think it's a fair comparison. Free market came to India later than many of these countries. And whatever the reasons might be, as I said, I don't look back. The opportunity for us to replicate a China model, or any model that works for India, I don't think we should be replicating or copying models, but we can learn from these economies. US, China, you talked about the large engagement that we are seeing this week play out. I think India can only take inspiration from some of these things and fasten our reforms if we need to reform, and look at what the potential is, because we have a case study of almost eradication of poverty in China over the last 3 decades, creating a massive infrastructure push, lots and lots of cities, opportunities for business to flourish, industrial and manufacturing becoming world class. So all these are inspirations that we can take while keeping the virtues of India intact: democracy, federalism, etc. I think all of these are important, and we'll find our own way to grow. Hopefully we'll the terminal value of that growth for a young country is probably higher.
So for somebody who is putting long-term capital to work here in India, what is the most exciting thing?
The compounding of growth. We are a young country. The terminal value of that growth, once compounded, is also very high, and it's a multi-asset, multi-sector, multi-pronged story. As I mentioned, we have so many things going right for India. We're not only a resource country. In fact, we probably are a net importer of resources, but we have 10 million college graduates a year. Most countries don't provide that ecosystem in the world. We are an established consumer story, established technology story. The world thinks India is still it's not the easiest place to do business, but once you establish our ecosystem, it's a very robust place to do your business.
What does that mean in terms of returns?
In terms of, again, it all depends on benchmarks. I would say in the real estate business, India has been a top market for us for the last decade. We believe in this story a lot. India has been a top market overall for us compared to, but again, it's all dollars invested, and we love to invest a lot more. and hopefully maintain our returns and do even better.
You know, we talked about all the stuff that's good and all the stuff that's exciting and gives you hope and reason to be optimistic. The few things that you believe are constraints and are holding back growth that require intervention.
I would say pace of deployment, both of government projects, private projects, capital deployment. I think that's something which we have to just make sure that everybody's motivated, because time is the biggest factor in terms of, look, the same growth, if it happens over 3 years versus 1 year, has a very different meaning. So I think if we can just push the timing of our execution as a country, and all of us, not just the government or the agencies in the government, etc. The world is rooting for our success.
Yes, we hope that more and more will root for our success as well. But Ankur, before I let you go, so, you know, almost the middle half of 2026, how do you see this year closing? And more importantly, as far as the next year is concerned, because you did say very specifically that you believe this is an opportunity to press the pedal, what can we expect from Brookfield in India?
No, part of being a long-term investor is actually being really bad at short-term. So if I were to guess what we'll be doing tomorrow, I'll probably be very, very wrong. But our target for doubling our business and making it more than $100 billion, I think the conviction today is bigger than ever before, and I'll just stick to that.
Well, all right, we wish you the very best of luck with that and look forward to having more conversations with you. Thanks very much for joining us here on The Record. Well, that is Brookfield continues to be as bullish on India as they were. In fact, perhaps even more is the message coming in from Ankur Gupta. $100 billion in assets under management, perhaps even earlier than the earlier estimate of 2030. That's the big headline coming in. From all of us here, for now, we'll take a break. There's a lot more coming up for you on CNBC TV 18. Stay tuned. We're back in a minute. Do you need more workforce at work, or the work from home conversation is back? It's back after the pandemic, because the Prime Minister has put out a nationwide appeal asking companies to consider work from home. It is not mandatory just yet, but we've seen many state governments now issuing their own advisories as well. If this were to translate into, at least for a period of a year, because that's the broad number that he's speaking of mandating work from home, or at least nudging, encouraging people to work from home, what could that potentially in the short term mean?
Yeah, so again, we have to differentiate what happened 6 years ago with the pandemic to what the appeal was made. This was in response to what's happened in the geopolitical arena with
fuel prices
and shortage and the impact of all of that. And as I said, it will come to a head soon. We all went through a period of time where there was work from home. That was needed because of the pandemic. You needed to create social distancing, but almost all